India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first.
The conflict between US and Iran witnesses another escalation with strikes from both sides. US launches a fresh wave of strikes against Tehran, triggering explosions across several places, while claiming that the strikes meant toward efforts to keep the Strait of Hormuz open to commercial traffic. US futures, meanwhile, edge lower as investors prepare for a busy week of corporate earnings while keeping a close watch on escalating tensions in the Middle East. Crude climbs more than 3% after the US and Iran exchanged fresh missile strikes over the weekend. Meanwhile, the Wall Street ends in green on Friday, but fresh global developments over the weekend continue to cloud the upcoming week's performance. With an eye on earnings and oil prices, it needs to be seen if Nifty is able to maintain its support level. GIFT Nifty hints at a slow start. Results start pouring in as the earnings season begins. In line first quarter for LTM, with margins beating estimates, while the company reported its first AI-related revenue in-line numbers when it comes to Avenue Supermarts as well. But the company sees weak operational metrics. Metro, SSG as well hit due to the quick commerce competition. And the Securities and Exchange Board of India overhauls its employee code of conduct, requiring staff to exit, freeze, or lay out a plan to dispose of investments that are not permitted under the regulator's ethics framework. Good morning. You're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the handover coming in when it comes to Tehran as well as Washington, and you're seeing a fresh escalation really build up. The Middle East conflict has escalated again. The US has launched fresh strikes on southern Iran, with explosions also reported in Bandar Abbas or even Jaskan Keshma Island as well. So that's something that you're looking at as an important major update. The attacks are coming in as Iran moves to close the Strait of Hormuz. That's a vital global oil route that we've been talking about. But you do have Energy markets reacting swiftly. In fact, Brent crude climbed near $79 a barrel thereabout, and WTI also rising sharply. And we'll talk about that in just a bit. But the escalation is really casting fresh doubts over the fragile US-Iran truce as well, and raising the risk of disrupted oil supplies, higher energy prices, as well as a broader regional conflict. So that's the major update that you're looking at. That said and done, let's also talk about the entire market picture as well. Now, when you talk about US markets, a decent close is what you had coming in on Friday. So a decent sort of picture that you're looking at least as far as Friday is concerned, across the board, as you can very clearly see, not very decisively higher, but no bad news is in fact good news when you talk about a market like this one. When you talk about US futures, a little bit of tepidness is something that you see building up when you talk about the futures pictures, about 0.8% lower for the Nasdaq, S&P 500 as well as Dow Jones about 0.5% lower for US futures. When you talk about Asian markets as well, it's quite interesting to see how that picture is also playing out, because it's also going to be affecting us as well. Now, you do have Shanghai as well as Nikkei decisively lower, about 1.5% downtick coming in for the Nikkei, and Shanghai was also about 0.7% lower as we speak. It's Hang Seng that's standing out with that 0.5% gain, also holding resilient amid an otherwise sort of tepid handover really building up. But you know, when you talk about us as well, we're expecting a downtick at the very start as well when you talk about the Nifty implied. So that largely is the kind of picture that you have. And let's talk about one important factor as well when you talk about this, and I've mentioned this already, but you do have oil prices in terms of WTI as well as Brent as well that are holding up with that 4.5% gain for WTI. And when you talk about Brent, that gain is about 4.5% uptick also. So somewhere close to $79 a barrel when you talk about Brent, and $75 a barrel thereabout. That's going to definitely be building up some pressure when it comes to markets as well. So that's something that you're looking at in terms of an important update. But speaking of important, let's talk about HDFC Bank in terms of the commentary coming in on governance as well. So the bank has asked external legal firms to review the chairman's allegations as well. External firms found that you do have Atanu Chakraborty's claims that were unsubstantiated, and that's something that's quite important to talk about. You do have the review process that is meticulous with some of those voluminous minutes as well, and materials exchange as well. That's also something that they're parsing through right now. And the CEO is saying that they remain committed to some of the highest standards of corporate governance as well, and enhance some of their internal frameworks, refresh some of those key control processes. So definitely important commentary coming in from them. And CEO also saying that the bank is using tech for growth, enhanced customer service and AI as well. So that's the important alert really coming in. Let's also move on and talk to you about what the FNOQs are indicating. And Puneet, it is largely a really troubling handover, especially in terms of oil prices.
Well, most certainly, and continues to be what's happened over the weekend, having an impact on our markets as well. So we ended the last week close to the 24,200 mark. Of course, on Wednesday last week, you had that impact at 24,400. Those comments coming from President Trump on the Iran ceasefire largely being extinct now. And since then, we haven't been able to recover. Yet again, a 200-point downtick will make us face that 24,000 back on the Nifty, and it's something that we'll watch and monitor if we can hold on to that in the near term as well. The Bank Nifty has been the other key factor, has been an area of growth, to be honest. That 58,000 mark, 58,200 continues to be an important level on the upside. 57,700, 57,200 are the other important levels. And looking at the implied open of the Nifty 50, you could see some testing today of this metric as well. It's going to be an important week with results from HDFC Bank as well as ICICI on Saturday. So you will have an impact of those starting next week, but continue to monitor this index into this week as well. In the cash markets, largely seeing 2 to 3 days of buying and then a couple of days of selling by foreign investors, but that reversed on Friday. So 2,600 crores in the cash market being bought at. When you look at the index long though, that continues to be, at the lower end of the spectrum at just 10.6%, indicating that they still are 89% short in the F&O market, and that continues to be one of the key factors over the last few weeks. The open interest distribution though has been the other key factor. Now, as we're moving back to the 24,000 mark, all of those levels at 24,200 as well as 24,500 will become important yet again. You've already seen the open interest spike at 24,500, but for the puts, you've seen 24,000 actually see a deceleration or reduction in put contracts. maybe you start to activate those levels yet again at 24,000 as well as 23,800. Not visible as of now, might be after today's session as well. But for stock specific action, there's been plenty of earnings that came through on Saturday as well as on Friday. So you will see an impact on those on stocks like DMart. But Paytm continues to be one where you saw build up of long. So was on CDSL. But for the losers, open interest losers side, you did see a couple of key stocks come and mention. Amber Enterprises largely continues to be in focus. This time, you saw covering of shorts on this counter. LTM was one where short covering was visible, and there was selling pressure essentially on Dixon. Like it started off well, then came into some selling at the higher point of the day. But that stock will also continue to be in focus on the back of the Vivo joint venture. So all of these counters, Kalyan Jewellers of course has been the biggest gainer last week, saw covering of shorts as well, but continue to monitor these individual movers yet again. But an impact seen on the benchmarks today at the start at least.
No, absolutely, and thank you so much, Puneet, for joining us with that entire update as well. So there you go, that's something to pencil in when it comes to the entire picture of FNOQs. But like Puneet mentioned, one stock to really watch out for is going to be Avenue Supermarts, and you do have a largely inline set of numbers. What's really happening is that there's a weak operational metric that you're looking at, and competition also seems to be building up, and that's also something in terms of that stern commentary coming in from the brokerages. Let's discuss the entire bit, Mahima, in terms of the earnings fine print and also the brokerage commentary, which is quite stern here.
Right, so Shreyansi, yes, numbers of course were largely in line with what the street was expecting, but operationally they seem to be weak because overall the metro same-store sales growth, if you take a look at the number that has come out, is slightly lower, and this is on account of the competition that the quick commerce has been posing in the metro cities. You also have profit growth which has lagged 10 out of last 13 odd quarters. There is also DMart Ready overall, where overall performance got contracted at that 5.5% mark versus that of 20% earlier. So that's also concerning. In terms of financial highlights, I think employee expenses did go up by around 31 odd percent, and this is on account of the aggressive store expansion that happened last quarter. We'll have to see this impact in the next quarters as well because the store expansion is going to be pacey. The growth in other expenses also went up by around 18 odd percent. Gross margins did improve a tad bit, but overall overhead expenses going up has negated that impact because EBITDA margin was just up by about 10 basis points. In terms of operational highlights, around 19% of growth in terms of store addition happened, just 1.5% addition in terms of bill size, 5.4% contraction in bill cut happened, which is not a very positive sign, and revenue per square feet also contracted by around 3%. Now, of course, this is on account of the aggressive store expansion that's also happening, and but this is a very important metric that generally investors track, and it's on a negative side, which is not very comforting. In terms of other highlights, they've approved a fundraising of around 1,000 crores via NCDs. This just confirms the fact that in the next couple of quarters, the expansion in terms of store is going to be very pacey. They've also appointed Lalit Ahuja as the Chief Operating Officer, and management commentary is alluding to the fact that quick commerce is posing a lot of pressure in terms of competition. So it is intensifying. In terms of where brokerages stand, Morgan Stanley has maintained overweight with a target price of 5083. Weak top line growth could limit near-term upside is what they believe, and they remain overweight because of the large total addressable market and business model that Avenue Supermarts has. Bernstein, on the other hand, has given it a target price of 5,000, again maintained an overweight, but what they're saying is that averaging Q4 and Q1, that is kind of more representative of what the near-term performance of Avenue Supermarts is going to look like. They're expecting store expansion to remain at 80 plus, albeit there of course it will be fueled by debt because they're raising fund via NCD of 1,000 odd crore. They expect cost curve to become supportive over the next 2 to 3 years, and DMart Ready is where what they say is that it's a distraction and not a distinction. They suggest investors to avoid trying to solve a problem the company has not solved for itself. And lastly, Citi has maintained sell. They've cut the target price to 3,400 versus that of 3,650 earlier. They've also cut the estimates of revenue for FY27 to 29 by 4 to 6% and EPS estimates by around 5 to 7 odd percent, and they seek better entry point and valuation, and what they're saying is that the risks to reward right now seems very unfavorable. So this is the overall view of how things have panned out for Avenue Supermarts in Q1.
Absolutely. Thank you so much, Mahima, for joining us with that bit. And there you go. That's the commentary as well. That's quite interesting when it comes to brokerage as well. But let's also talk about LTI Mindtree that's in focus. Largely an inline set of numbers that you're looking at, but the margins really exceeding estimates. And that's despite subdued revenue growth that you're looking at. In fact, Jasmeet joining in with some more details on this one, as well as the brokerage fine print here as well. And Jasmeet, let's go through first the earnings fine print and then the brokerage commentary.
Well, Shriyanshi, very good morning and thank you for that. As rightly said, the numbers have come in line with the estimates, but the margins have been a beat. We were estimating a flattish margin growth, but the margins have come up at a growth of 40 odd BPS. We look at the second key highlight is the CC growth. Well, the CC growth for this quarter is at 0.3 odd % on QOQ basis, which is the lowest in last 4 quarters, which shows the continued slowdown for the particular management. Now, third one will be the overall AI revenue. While the company reports its AI revenue for the first time, which is at $150 million, which roughly forms 12.2% of the quarterly revenue for the company. It is seeing a good growth compared to other peers in the industry. The third metric is the growth, which was particularly led by the tech and the financial services division, which are up over 3%, while on the other hand, we also had the consumer production segment, which is down about 5.7 odd % in CC terms. While lastly, if we look at the deal wins, they have come in at $1.68 billion, which is again in line with the estimates. Now, if we look at the key numbers, the revenue saw an uptick of roughly 2.4 odd %, while the overall EBIT has remained flat and margins saw an uptick of 40 BPS, while the net profit is something that will be to focus on given the management has seen a decent to flattish growth that's up nearly 5 odd %. Now, in terms of the other key highlights, we do make a note that overall client bucket has something that has grown well for the company, and also the segments like financial services and tech segment has grown well for the company, given tech is the biggest part of the company's distribution. Now, in terms of the brokerages, both brokerages have remained bullish to flattish on this particular counter. Something like a Morgan Stanley on LTM, they maintain equity with a target price of rupees 4,000. While they sit a note that the revenue has come in line with the estimates, while the margins are ahead of what they were estimating. While the key verticals and top client buckets have performed well as per this brokerage, and also they state that the management reiterates FY27 will be better than FY26. Now, I also have Citi on LTM, which maintain sell on this particular counter, and they've also cut target price to rupees 3,450 from earlier 3,455. Now, what this state is the Q1 was largely in line, while the subcontracting cost is something that led the growth in this particular quarter. While management commentary shows that they're confident that the Q2 and the H2 of this year will be better than Q1 and the past year as well. Further, they also note that they expect LTM to deliver a 5% compounded growth over the next couple of years.
Absolutely, Jasmeet, and a lot of brokerages that you're looking at apart from these as well. We'll come to that in a bit, but thank you so much for joining us with that entire picture. Before we come to the bit on brokerages as well, let's also talk about some of the other earnings that are going to be in focus. Something like a Just Dial, Avantil, or even a Fino Payments Bank is going to be in focus. In fact, Varsha is standing by with an update in terms of the earnings fine print when it comes to all of those counters, Varsha.
Well, let me start with Just Dial, wherein they've seen core business execution, which has improved across platform, but traffic, if you see, was essentially flat year on year. Mobile traffic declined though year on year, and one of the important thing is the founder and CEO VSS Mani is stepping down on July 31st, ending its 33-year leadership tenure. So overall, a mixed set of numbers when it comes to Just Dial. Then you have Avantil, wherein overall good set of numbers. I would say the communication business grew 35% year on year. Healthcare, if you see, segment remained though loss making, but overall revenue, if you see, is up almost 36%. EBITDA is up almost 67%. There's a good uptick in margin as well at 24% versus 28%. Also, we've seen the operating leverage playing out for the company, and net profit is up almost 67%. So overall, a good set of numbers when it comes to this counter. You have Fino Payments Bank, wherein overall, if you see the June 2026 new accounts increased 31%, so that's a positive thing. Average deposits rose 11%. Fino Pay active users grew 36%, and loan deferral, if you see, disbursal surged 253% year on year. So overall, again, a good set of numbers when it comes to this counter as well. Lastly, on to the L&T Finance, they've recorded highest ever consolidated PAT. Robust growth was seen in retail book and disbursements year on year. Achieves highest ever consolidated book, which is up 27% year on year. Then NIMs plus fees improved to 10.4% versus 10.2% in last year, that is Q1 FY26, and credit cost has also improved to 2.54%.
No, absolutely, and thank you so much, Varsha, for joining us with that entire update as well. So there you go, L&T Finance as well. Decent set of numbers that you're looking at, but moving away from the entire world of earnings as well, let's talk about some of the other counters that are going to be in focus. In fact, Parth is standing by with an update in terms of the counters that will be in focus on the back of news flow, Parth.
Yeah, so it's going to be a great start for the week, starting with the names that will have a positive sentiment going forward. The first one is HEG, where the company has announced a restructuring in which the graphite business will be listed as a separate entity and renamed as HEG Ltd, and the remaining business will be listed by the name of HEG Greentech. Next, we have some companies on the back of order win. The first one is Space Digitech, which has signed 2 MOUs for the supply of battery energy storage systems. The next is Powerica, which has won a 50 megawatt wind power project. Then also we have JSW Energy, which has won a 443 crore battery energy storage systems order. The next one is Lux Industries, which will be doing a capex of around 600 crores in West Bengal to set up the Asia's largest garment manufacturing plant with a capacity of 20 crore pieces. Next one is Good Luck India, which has approved a bonus in the 2:1 ratio. Also Sambhav Steel Tubes, which will whose board will be meeting on the 15th of July to consider a fundraise for the company. The next one is the next ones are ONGC and Oil India, which will see a positive sentiment as crude prices have jumped on the back of fresh US and Iran strikes. Ethos, where Quant Mutual Fund has acquired additional 7 lakh shares. Now some companies on the back of ratings upgrade. These are companies like Himadri Speciality, GMR Airports, and Aster DM Quality Care as well. Lastly, Sterlite Technologies, which has won a European patent dispute against Fujikara. Now moving on to the stocks with a negative sentiment. The first one is Tata Steel, which has received a summon from the Dutch Public Prosecution Office over alleged pollution in its plants. The next one is Anthony Waste, where 9 people have lost their lives after landfill wastage collapsed on the company's facility after heavy rains. And lastly, Jildan Steel and Power, where the CEO of the company has tendered his resignation. So these are the key counters that you should keep on your watch list for today.
No, absolutely, and thank you so much, Parth, for joining us with that entire update also coming in. Let's also talk about some of those brokerages that I was mentioning earlier as well. Something like a UBS note coming in on car trade, Macquarie on Aurobindo Pharma. A bunch of those counters are going to be in focus. In fact, Jasmeet is joining in with just that update also.
Well, Shreyanshi, thank you for that. Now, if you look at this particular counter, we have 3 brokerages focusing on the overall different various segment. Well, the first one is a UBS note. Well, this UBS note is on car trade, where they initiate a buy call in this particular counter with a target price of ₹4,000. They call the entire asset-light model as quite attractive for the company, given it operates and leverage going ahead. Further, they also note that they expect margins to expand from 33% in FY26 up until 47% in FY30, given the growth of the leverage. Further, they also state that they expect this to be driven by significant top-line growth from here on. Now, if you look at the other brokers, I also have Macquarie and Aurobindo Pharma, where they reiterate underperform with a target price of ₹1,300. Well, they state that the street as well as the management are expecting the overall EBITDA margin to cross the 15% mark because of the recent acquisition, but they say that is optimistic for the company, given there has been no product launch in FY23 nor any much launches in FY25 or 26. They expect this to be much optimistic for the company. Further, they also state that a meaningful profitability inflection appears to be unlikely from this current points. Well, the last one is Morgan Stanley on L&T Finance, where they maintain underperformance for this particular counter with a target price of ₹185. Well, they state that the PAT is 3% above the estimates, while L&T Finance is executing well for this particular counter. Further, they also note that they believe the valuations have already priced in a lot of growth, but is underestimating the risk that this counter has. Lastly, they also state that the peers offer significant more attractive valuation compared to this particular counter.
Absolutely, and thank you so much, Jasmeet, for joining us with that entire picture as well in terms of what the brokerages are talking about. Let's also move on and talk to you about one very interesting update. And this one's coming in from the world of sports as well. Let's also put the spotlight very much on that as well, because you do have Jannik Sinner, who successfully defended his Wimbledon crown, beating Alexander in a gripping 4-set final. The world #1 recovered after losing the opening set to win the rest of the sets, claiming his 2nd straight Wimbledon title as well and 5th Grand Slam crown. Sinner's powerful serving, in fact, and composure under pressure is quite remarkable because it proved decisive as he took control from the 2nd set. Tiebreak onwards, the victory also further cements the Italian's place at the top of men's tennis and extends its dominance, of course, on the biggest stage as well. So that's a very important and a very interesting update that you have coming in from the world of sports. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us. For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. We can hope and pray it's going to be a better morning than what the screen shows us. It's like a weekend episode of the Strait of Hormuz that we see. And not to make light of very serious matter, but yeah, the attacks have begun again on both sides, tit for tat.
And crude oil, yeah, crude oil up to $80 again.
Yeah, just
have you touched 80? I saw 78, 79
Very
last.
close to 80.
I don't think we've touched 80 yet, but maybe nearly there.
79.
Yeah.
So no surprise that there's a risk off, and unfortunately, the unpredictability continues.
Yeah, I just want to quickly go through what's been happening on the whole global front, and if you can just pull up those updates that I have given on what has been happening there. So the weekend tit-for-tat strikes have resumed between US and Iran. Attacks have escalated as Iran and US are now tussling over the control of the Strait of Hormuz. Now, here's the interesting bit. Iran wants ships to use a northern route through its territorial waters, which is close to where its border is. US wants ships to use a southern route through Oman's waters, and when either party does not get its way, that's when the attack starts. So that's the long and short of it. I mean, one would think that just the Strait of Hormuz is so narrow that you pass through, but here there are also two different routes in the Strait of Hormuz, which is the bone of contention at the end of the day, and two different interpretations of that 15-point MOU and how it's being implemented. So it's going to get more complicated.
Yeah, and I think I read a piece on Gavikal which said that is that one supreme leader who was absent, of course, in his father's funeral, really in command, or are there multiple chains of command, and therefore is reaching a conclusion on this 15-point agenda as well almost impossible? And frankly, who knows the answer to that?
Yeah, I mean, is it clear about the one supreme leader on the other side?
Well, there is clarity. He's calling the shots here.
Yeah.
Nobody knows who's calling the shots.
Calling the shots. That's true. Here's what's happening globally. US stocks rose in Friday's trade as tech regained momentum. If you pull up the indices, you had in these Friday's trade. Remember, this is pre all of the fighting in the Strait of Hormuz escalated once again. 140 attacks were done or by CENTCOM, US CENTCOM on Saturday, and followed by more on Sunday. But this is, of course, the picture before that. The S&P 500 about 0.5% up. Let's pull up futures this morning, and it's going to show some of that stress coming in, especially on the Nasdaq. 264 points down on the Nasdaq futures. A new entry to the Nasdaq. South Korean chip maker SK Hynix has made its US debut on Friday, opening at $170 on the Nasdaq and last trading up roughly 13%. So that's exciting. Another bet, at least for those investing in the Nasdaq, if they want an AI trade. US Treasury yields, meanwhile, meanwhile, inched higher as uneasiness around the US-Iran relations grew, 10-year at 4.56%, and crude prices expectedly have spiked as US-Iran tussle over control of the Strait of Hormuz. Brent right now at $79, $79.20, so not yet 80. That would be a psychological mark, but up about 4%. You're seeing Asian markets open weak as expected. The Kospi down 4%, Nikkei down 1.5%. It's just a Hang Seng which is doing okay relatively. I want to pull up the implied open for India and take a look at what's happening there. You're looking at a 200-point cut when we open. So everything else is going to recede into the background, whether it's results, outlook, etc., in face of this pain. Seth R. Freeman, Senior Managing Director, Glass Ratner Advisory and Capital Group, joining us this morning. Seth, we saw redux of this last week and exactly this, where there was a concern that you're going back to kinetic warfare. There's firing on both sides, and typically the US fires on Iran, Iran fires on US bases in the region, which include nations Bahrain, Kuwait, all of them at the receiving end. And then it subsided. Can we hope for the same this time round?
Well, I've been fairly skeptical, as you know, ever since the MOU was signed, and this just bears it out. The most confusing part is here we've been told that we wiped out Iran's navy, we've wiped out its missile capability, but I was reading this afternoon here that Iran shot 110 missiles at various U.S. Bases. So it's very hard, and at the same time, we're told that the Strait of Hormuz is open, and the Iranian government says no, it's closed. So we're getting a lot of contradictory information.
Seth, morning. Just some perspective from what the political climate is in the US and what the general feeling is with regard to the continuance of the war. Do you anticipate that that will be a deciding factor in the near to medium term that can bring, for example, the US administration to the table and say they need to end this war sooner rather than later, or it's going to lose them additional power or support in the US?
I think it's a real challenge for Trump to disengage and save face. And this is really where the problem is. Over the weekend, he announced that he is the #1 target by Iran and that he was leaving instructions, if he was to be assassinated, to decimate the country. So at the same time, he says, let's continue talking. A big piece of news here is that Senator Graham died, and it was very sudden. And he was quite a war hawk and had the president's ear, both for Iran, but also for Ukraine. And I think this is going to pose some political push and pull this week here in the U.S.
Could you explain that for the benefit of our viewers here, because they probably do not understand the nuance of the politics that you're talking about. Senator Lindsey Graham has been a very strong advocate of military action outside of the US. He was an advocate of the Iraq war, of the Afghanistan war. He spoke against the withdrawal of troops in 2021 from that region. And so, can you explain the significance of his passing?
It's very significant. He has been in the government for a very long time. I think he's been a senator for over 20 years. And also, sort of coincidentally, Senator McConnell has been missing for a few weeks, and there was speculation that he had died. And he reappeared this afternoon saying he's over 80 years old, saying that he fell. And I think any of us with elderly parents or grandparents understand what happens when a senior citizen falls, and that he's still in the hospital. But there was some speculation that the Republican majority was going to be whittled away by as many as 2 senators, leaving only a 51 senator majority Republican. And I raise this because we still don't have a war declaration. Trump is calling what's going on in Iran a special operation, kind of the way Putin refers to over 4 years, 5 years in Ukraine. So Lindsey Graham was very important, and he at one time was very anti-Trump, and then shifted 180 degrees and has really had the president's ear. And there's going to be some different kinds of pressures, I think, this week, particularly if the Strait of Hormuz stuff keeps continuing.
I just have a follow-up on that, Seth. Are we attaching a little too much weight to Lindsey Graham's influence on what happens next in the war or Trump's actions so far? Are you taking it so far as to say that Trump has less reasons to be aggressive now? I'm just trying to understand the conclusion of that connection you're drawing.
Yeah, so I don't want to overstate the case, but he was definitely a hawk, and he's gone. And it seems that from ever since Trump, when he was president the first time, and particularly this first year, he seems to react to the advice he received from the last advisor who gave him that advice. And I think Lindsey Graham just got back from Ukraine and had said he had had a long telephone call with the president and then died 24 hours later. So I don't want to overstate it, but there's a lot of uncertainty. I think we have Hegseth, we have just many advisors that frankly don't have the experience that Graham has had.
Yeah, that's a fair point. All right, Seth, thanks so much for joining us this morning and for speaking to us. Pleasure speaking with you as always.
I'm a little conflicted with that assessment. I have a bit of a different view, which is I think there are enough hawks out there. It's not like there aren't any, and rest in peace, Lindsey Graham. I mean, we were speaking about the impact of him not being there without really acknowledging that he is gone. But I think it's not going to make too much of a difference one way or the other.
So, okay, that's fair. In that, advice going to the president may not have too much of a bearing. What I think will have make a difference is the influence of advocacy on the rest of the Senate, right? So, if he was an influential member of the Republican Party and the ability to influence the other senators, if it comes to votes, the margins through which certain things have taken place in the Senate have been very, very, very small. So 2 or 3 Republicans voting in favor of a motion that was brought by the Democrats and pushing it in the favor of Democrats to end the war or to end warlike activity by the US. Without 2 major senators participating in that who are advocates of military action in the US, I think that can have a bearing on political direction or the direction of the war.
Well, it eventually leads to peace. Let's hope for the best.
I hope so.
I mean, does it delay the any possible peace in Ukraine, Russia? That's the other piece, because for Ukraine it was such an important, staunch supporter of the
He was in
defense.
Ukraine just before he
so that is the other big thing. I mean, we're talking about Iran, US, but even the Ukraine-Russia thing, Lindsey Graham had a far-reaching
absolutely. Let's move on with Indian equity markets and talk about what happened last week. You had gains on Thursday and Friday that helped recoup some of the losses that the benchmark faced on Wednesday. The benchmark ending with cuts of just about 0.33% last week, but the broader markets actually gained ground. You had the mid-cap index that ended with gains of 1.2%, small cap index ending with gains of about 0.7%, and on Friday, foreign institutions buying equity to the extent of over 2,600 crore rupees and domestic institutions buying to the extent of 2,020 crore rupees. Foreign institutions have now net bought equity in 4 out of the last 5 sessions, that is last week, and in fact on Friday as well of the previous week they did end up buying. Indian equity markets have actually gained across the board on Friday, and those benchmarks gained about 1% or so, with 40 constituents of the Nifty 50 gaining, among them JFS, Geo Financial Services, HDFC Life, Adani Enterprises, Reliance Industries were the top gainers. In fact, Reliance Industries over 2% move was something that was a big contributor to the benchmark's performance, and the broader markets actually outperformed, gaining about 1.4% or thereabouts. The Nifty Bank also gaining 1.4%, and the IT index gaining as much as 2%. Realty was a top gainer once again. It outperformed, gaining as much as 3.5%. PSU banks were another significant outperformer on the back of results, and that pack actually is one to watch going forward as well. Most other sectors gained, but FMCG and pharma were laggards. My thinking though, Neeraj, I guess this morning is that earnings front and center, and apart from that overarching negative sentiment with crude going back to close to 80.
Yeah, unfortunately, because I think the last week, the good part was that from every intraday drawdown, the market displayed really quick recovery, which was a big positive. So the trending nature was very good. I remember that, people were talking about how the mid caps and the small caps had come off the preceding few weeks, right? And last week we actually saw mid caps hitting new high with multiple stocks actually in multiple pockets showing a lot of strength, which was commendable. Now, does this become therefore a one day corrective move, or does it last? I think it is anybody's guess, but yeah, it does kind of spoil the party as it was turning out to be. Real estate stocks were very, very strong, and therefore starting today or for the better part of the week, don't be surprised if there's a bit of profit booking there, simply because people would want to take some chips off the shoulder. Also remember, and not a very large number, but nearly 10,000 crores worth of IPO paper will hit the market this week. So in some sense, if indeed people allocate some bit of that fresh capital to SBI funds and a couple of other smaller ones, and if those get oversubscribed, then that's that bit of domestic capital or maybe even global capital that gets allocated to primary paper versus secondary paper. So that also plays its part. So could it be tricky? Maybe. Could IT save the day if the other IT majors put in a favorable commentary around this week, and there is a clutch of them coming out with the results this week? So that could be interesting. I think it'll be also interesting to see what the US banks do, because tomorrow and day after a slew of those come out with the results, and if they have a bearing on US markets, who knows? So lots of factors this week. It's a really, really busy week.
Yeah, an important one as well. I mean, I reckon if there are any kind of positive signs coming out of the US, you have the bare bones of a sharp recovery from a 200-point gap down. But that's again an if and a but. Indian markets could of course see a highly volatile opening today. Technical indicators point towards a sharp short-term recovery, but US-Iran issues could put the markets rebound under intense pressure. The Nifty needs to decisively clear the 24,400 mark to establish a sustainable path towards 24,600 and 24,800. Immediate resistance levels are at 24,250 and 24,295. Broad resistance sits in the 24,280 to 24,320 zone. Immediate support levels 24,145 followed by 24,120 and 24,080. The psychological support sits firm at 24,000 with a major floor at 23,800. For the Bank Nifty, it's recovered nearly 90% of the midweek losses. Immediate resistance levels are at 58,215, followed by 58,375 and 58,635. Extended technical targets sit at 59,195. Immediate support levels 57,700, followed by 57,540 and 57,285. Just an interesting note from Goldman Sachs by Amorita Goel that I wanted to put out, which notwithstanding what's happened over the last couple of days, they do say that India's outlook has improved in recent weeks. Lower commodity prices, stabilized currency, resilient domestic growth, healthy earning expectations in Q2, and potential recovery in selective domestic pockets. With ultra-light foreign positioning, they see ample room for flows to return, and there have been about 15,000 crore of inflows from FIIs this month so far in the first 15 days. So renewed geopolitical tensions in the Middle East may fuel near-term volatility. They see room for the Nifty to recover towards June 2027 target of 26,500, implying a 10% upside. They expect rotation to value large caps and most solid foreign pockets. Key events to monitor: Q2 earnings, bond inflows, and Super El Nino. Recommend going long on banks, tourism and energy refiners. Favor large caps over mid, value over growth, power utilities over rural agricultural stocks as well. So a pretty I think positive view coming in from Goldman Sachs, if we can take heart from that on a morning which is looking like it's going to be pretty tough. Puneet joining in with the F&O setup.
Well, thank you for that. As you rightly mentioned, we did recover quite a bit of those losses that we got impacted on Wednesday. But at 24,200 odd, you're seeing an implied open of almost 196 points downtick. So we'll be back again at that 24,000 mark and very close to that level where we started off the month of July. So even with this move, we will be of course away from those 24,300 levels and that momentum that we just started to build on at the start of last week. So the impact is going to be visible across a bunch of key stocks today. The Bank Nifty as well, while it has held up a few of its gains, it's still down about 500 to 600 points before that move on Wednesday. So this week, of course, we'll go into the earnings week at the end on Saturday, where you have the major private banks coming through. So Bank Nifty continues to be at a very important position yet again. 58,200 is one of those levels to watch, while on the downside, you will have to look at all the way down to 57,200, 57,700 as some of those key levels. For cash market though, we had a good buying number coming in for foreign investors after minuscule selling of a lower amount for the majority of the week, and the index long though is not yet reflecting that. So most of those positions still continue to be short at this point of time for investors at 89%, while the put call ratio has increased materially at 1.3 compared to the call. So they are holding quite a bit of short positions. That's visible both in the put call ratio as well as the index long number as well. For the open interest distribution though, you see an active buying of that 24,500 number for the calls at this point of time. Now as we move back to that 24,000 level, you will start to see all those levels get activated on the lower side as well, while you are actually seeing puts being reduced at 24,000 on over the last couple of days on Thursday and Friday as well. So maybe as we go across and seeing some volatility, you will see those red candlesticks bar being formed yet again at this point of time. But watch out for that as we go across this week. And for stock specific action, just a couple of names over there. You had CDSL, which are longs being built up. Paytm was another one where build-up of longs was visible, and Amber Enterprises on the open interest losing side was some which was in focus as well. You had Dixon as well continue to be in focus on Friday, saw a good reaction on that Vivo JV and then sell off on that. So all those EMS counters will also be in focus, but important to see how we start off this week and hopefully a recovery in the second half given the implied open.
Yeah, one more point to note, which apart from anything else happening can be a bit of a downer for markets, is the fact that after we saw the rainfall deficit come down to 14%, it's again widened to 18% because after that one burst of rainfall in some parts of the country, it's gone dry. So the last word on whether we have relief from the monsoons or not is still out there. But in terms of stocks on our watch list, I'm starting off with LTM. LT Mindtree, it's a thumbs up on the results, and IT is going to be in focus. The numbers are in line with estimates in a flat quarter. Constant currency growth is at 0.3%. Q-on-Q lowest in last 4 quarters. Tech and financial services grew the most, up over 3%, and production is down 5.7% QOQ. This is all constant currency. Deal total contract value size is at $1.68 billion, down 0.5 Q-on-Q in line with estimates. Headcount declined 64 net, and attrition was stable at 13.3%. Here are the core numbers. Revenue up 2.8% to 11,608 crores versus 11,292 crores. EBIT up 5.3% to 1,799 crores. EBIT margin at 15.5% versus 15.1%. Net profit up 5.3% at 1,466 crores. Here's what Morgan Stanley is saying on the company. They've maintained an equal weight with a target price of 4,000 rupees. They're saying lack of revenue growth downgrades are positive, but already priced in. Revenue is in line and margins are ahead of expectation, hence the thumbs up. Key verticals and top client buckets have performed well. Management reiterated an expectation of FY27 revenue growth exceeding FY26. That's also why maybe a positive skew on the stock today. The CBDT deal, the one they have with the Indian Central Bureau of Direct Tax, is expected to ramp ramp up in Q2, and that is actually a key monitorable for LTM. L&T Finance is the other one that I'm looking at. It's recorded its highest ever consolidated PAT of 902 crores for the first quarter, achieved highest ever consolidated book as well, which is up 27% year on year. Net interest margin plus fees for first quarter have improved to 10.47% versus 10.2% in quarter one FY26. Credit costs have also improved to 2.54% versus 2.64%. Rural business finances exhibited strong growth of 24% and net profit at 28.7% increase. Morgan Stanley has maintained an underweight with a target price of 185. PAT 3% above estimates. L&T Finance is executing well. They believe valuation is already priced in too much future improvement while underestimating key risks, which is why, while on the face of it the results are good, one has to wait and see what happens with the stock today. Peers offer significantly more attractive valuations as per Morgan Stanley, and they see risks to loan growth given exposure to MFI, tractor and two-wheelers given El Nino. See limited scope for NIM expansion, especially as MFI share moderates. See risk to fee income from potential regulatory changes with respect to insurance commissions. I'm looking at NMDC as the third one on my watch list. They've increased iron ore prices effective July 10th with the Baila lump priced at 5,450 rupees per ton and Baila fines priced at 4,700 rupees per ton. Morgan Stanley has a view on India Materials and talks about NMDC. They're saying they've disclosed revised iron prices effective July 10th. They've cut prices by 250 per ton for lumps and 150 for fines. Not surprising as seaborne iron ore prices have moderated. Recently, seaborne supply has risen coupled with a relatively softer Chinese demand. They note a seasonally weak demand period in the domestic market. So those are the top three on my list.
Interesting. All right. First stock on my list is Lux Industries, and this is on the back of an announcement that has come through. I'll first tell you about it, and then I'd love to hear from Neeraj and Tamanna what they think about it. The company has said that it plans to invest 600 crore rupees to set up a manufacturing facility in West Bengal. That expansion will take place at a place called Dankuni, which is in West Bengal, where they have an existing facility. They plan to expand that existing facility or 8 lakh square foot by a further 12 lakh square foot. So it's a more than doubling that will take place. The company will add capacity of an additional 20 crore pieces to the existing facility's 12 crore pieces. So they're going to end up with practically 3 times the capacity that they currently have. Now, no timelines have been discussed, but this is a very significant expansion that they have announced. So what do you think about it?
Courtesy FTAs, I reckon. Right?
I would think so.
It has to be that. And the scene is favorable for almost all exporters, especially the ones that are competing with Bangladesh and the others. So no surprise that this has happened. If they execute it well, I'm guessing they are undertaking it because they believe that exports
There's
will go
going to be
up.
demand.
And the Reebok deal was big. This is why the stock was up. I actually was not aware Reebok was in this segment of intimate garments. Hosiery as well. But the tie-up with Lux, that was anyway a big deal.
Yeah.
So I think more and more coming in for the stock.
Certainly, and competition to Page Industries. Let's see how that goes. All right, good luck, India. I'm not really giving it a rating because it's just a standard corporate action that has been announced. The tendency, though, is for stocks to react to announcements like this. The company has approved a 2:1 bonus issue. It has to that extent reduced its dividend payout. I think it was 3 rupees per share. It's dropped down to 1 rupee per share or thereabouts. Not too much of a material impact. And remember, these corporate actions don't really move the needle too much. They're not really very significant, but keep an eye on that stock. Cartrade is an interesting one because UBS has weighed in. It's initiated coverage with a buy rating and a target price of 4,000. Take a look at that upside. The stock is currently just above 2,800. It says that there are scaling network effects as well as hidden value in the current valuations right now. Asset light model offers significant operating leverage is what they think, and they expect that the margins will improve significantly over the course of the next 3 financial years up to FY30. It'll move to
47% from the 33% right now. So 47% by 30 compared with 33% as of now, and it was 9% in FY23. They also expect this to be driven by significant top-line growth. They say the current revenue across its platforms representing only 3 to 4% of the addressable market. An analysis that they've done shows that there is significant growth potential in OLX, which is its dominantly used C2C platform, or customer-to-customer platform. The growth potential, according to them, is underappreciated, and they see scope for a 15 to 20% upside in consensus earnings for FY27 to 29. So basically, the economies of scale for this company, because the cost structure remains the same, and then they widen the base or they increase the top line, would be significant.
And frankly, one platform company which has actually yielded some very good returns to investors since its listing as well. So yeah, pretty good one. A slightly longer list today, guys. As in, the number of stocks are the same, but Avenue Supermarts, while a lot of it is known, there are some very interesting details in those numbers. So I'm starting off with that. And very likely the stock could react a bit more negatively, despite the fact that in the Q1 update, a lot of people penciled in some bit of issues, right? So revenues are up 15%, which is okay. EBITDA was up 16%, which is okay. Margins at 8.3 versus 8.2, also very, very okay. And therefore, just a 12% uptick in net profits. But the minutiae leads to some details which aren't necessarily the healthiest. So stores older than 2 years grew only 5.5%. They had grown about 7.1% in Q1 FY26. So YOY, that mature store growth rate has come off. The maturing store base plus quick commerce competition in urban areas is slowing the LFL growth for the company. Think of this, DMart Ready's momentum suddenly contracted to 5.5% YOY growth from a 20% growth profile earlier. So it's not been a very great quarter for Avenue Supermarts, and the detailing isn't looking that great either. So won't be surprised. Anyways, the market is looking slightly soft. Don't be surprised if Avenue Supermarts also looks a bit soft in trade today. So that's the first one.
Just on Avenue, what Bernstein has said about it, I found very interesting, where they say DMart Ready, which is their offering of quick commerce, is a distraction, not a distinction. Suggest investors avoid trying to solve a problem the company has not solved for itself. Because very optimistic investors keep saying, but they also have DMart Ready, they could scale it up. They're saying it's a distraction, don't think about it. That's not in the offing at all.
Yeah, clearly they are not able to do it the way some of the others are. Some of the native or AI or tech native companies, tech first companies are doing it. So right, and this one could react negatively today. Keystone as well. I mean, MMR didn't have a bad last 2-3 months, but Keystone somehow hasn't quite performed well. So Q1 FY27 pre-sales declined 42%. Collections increased just about 4% YOY. The commentary seems to suggest that Q1 was impacted due to lower launch activity, and this could correct itself in Q2 or Q3. So maybe it is, and we know pre-sales are volatile depending on launch, etc. But considering that this quarter wasn't the strongest, maybe Keystone 2 has a bit of an issue this time. So watch out for that one. Last but not the least is Aventil. Now, revenues were up 35.7% at 70 crores versus a 51.9 crores. EBITDA grew 66% at 17 crores versus 10.5 crores. EBITDA margin 24.7 versus 20.1%. In net profit was up 67.4% at 5.4 crores versus 3.2 crores. I mean, spectacular numbers, isn't it? And what led to this? Healthy execution of defense and satellite communication orders. The management has highlighted to a healthy 1,000 crore order book as well. And they've traditionally been guiding for a 25% compounded annual growth rate over the next 3 years. These quarterly numbers easily beat. So the ask for the 25% is fairly low for the rest of the year, if you will, which is actually a good news. Remember, it's a niche player in high-end satellite communications, HF communications, electronic warfare, radar systems. So it is in the right bucket in terms of where the spend is happening of the company. DRDO, ISRO, etc. are all clients. So very good quarter, could react positively even on a day like this. These are my top 3. And guys, I wonder if either of you have a thought on Jindal Steel, right? Because yet again, there is a CEO who's resigned. I mean, this company's been hit by several top level exits, right? CEO, CFO, product head, plant head, etc. Yet again, a CEO has resigned out of the blue, so very likely could be sentimentally negative.
Yeah, I think that becomes a huge factor after a point, even if the fundamentals of the sector are fine. Or not. Okay, focus on Aurobindo Pharma, and there are a couple of notes which are not too excited about their Lanet acquisition today, whether it's Citi or whether it's Macquarie. Both of them looking at Lanet's acquisition in terms of valuations and whether it was overpaid. Varsha joining in with more on Aurobindo Pharma. We're putting the spotlight on it. Varsha, so there is one view which is pretty negative. What is the counter from what the management has said so far in con calls and in the public domain?
Well, I think it's the best time to put a spotlight on Aurobindo Pharma, considering a lot of data revolving around this counter. And we do have, sources which are telling us some of the positive points on Aurobindo as well. But let me start with what brokerages are saying. They're expecting US sales to be stagnant, or rather they say that the US sales have been stagnant despite market share gain. But one point to notice is the other markets to offset US generic pricing pressure, number one. And in fact, Aurobindo has 888 ANDA filings, which is the broadest portfolio when it comes to industry. But again, brokerages are actually pointing out on Lanet sales, which is the key highlighting factor. They say that Lanet sales is down 30% according to IQVIA, but the controlled substance are not fully captured by IQVIA. Now, this is one of the things that sources are telling us, and of course, the injectables peptides pipeline execution is uneven according to brokerages. But one has to also understand that the growth engines have entered commercialization. When I say this, that means respiratory, injectables, PenG, biosimilars, and CDMO are all nearing commercializations. But brokerages are also highlighting that biosimilars is a commodity business and is a competition for Aurobindo's pipeline, as many pharma companies are entering into this space. But Aurobindo's growth story is not about only biosimilars. The growth extends beyond biosimilars. Biosimilars are only part of the multi-engine growth story that the Aurobindo has. While brokerages have also highlighted about their respiratory portfolio, which may take time, to contribute meaningfully for the company. But the global partners have been backed respiratory portfolio with $90 million each. That's the key highlighting factor over here. They've also entered into biologics contract manufacturing segment, and hence brokerages say that the Merck CMO is unlikely to fully offset pressure, but the Merck CDMO will actually validate the biologic manufacturing capabilities according to the sources. And historical earnings growth, if you see, remain weak according to brokerages, but 10,000 crore investments have seen nearing monetization, and which will contribute meaningfully. Then also lastly, the new businesses, if you see, are yet to meaningful contribute according to brokerages. But US sales, if you see, are nearing at $2 billion, which is a highlighting point. A company will also see a lower PenG losses. This is actually an important growth trigger for the company, and which will help company to grow moving forward. Lastly, according to brokerages, the stock is 30% above historical average. Valuations are stretched. That's the key point that the brokerages have made. But we need to understand that the new investments warrant higher structural valuations, and the Aurobindo's next leg of story is of course the PenG, then the respiratory portfolio, of course biosimilars and CDMO. So overall, we might see Aurobindo 2.0 maybe in the next 2 to 3 years.
Okay, so interesting outlook over there. Before we get into that break, I don't know if you folks saw the Satya Nadella post that he put out a short while ago. So you will remember that the Palantir CEO, Alex Karp, a few days ago talked about how CEOs are worried about the reverse information flow from AI models that they're applying on their business. And Satya Nadella has now weighed in. He's put out a very lengthy post talking about it. And I'm just going to give you the few points that he's talking about. He's calling it the reverse information paradox, where he's saying AI users risk giving away proprietary knowledge. Enterprises need control over their AI learning, and this is I think the short version of everything he's saying. He's saying in the AI age, the buyer risks giving away knowledge just to use what they bought. Companies effectively pay for intelligence twice, once when you pay for the model and once by giving away the information you have. The better you want the model to perform, the more of that knowledge you have to feed it. And AI models learn intelligence exhaust. In consuming intelligence, you are creating intelligence, and what you create should belong to you. And this is something Alex Karp had also said. I thought it's interesting that heads of very large companies who would be at the forefront of using some of these models are saying that, hey, to actually use your models, I have to feed it with all my proprietary information about how I run my business.
Yeah. I mean, but frankly, I mean, there is no other way, right? I mean, if you want the model to work for you, you will have to feed the model with everything that is proprietary. How else do you get the right answer per se?
No, unless you fix it, you are risking destroying your entire business and leaking everything you do, which is your moat to competition.
Agreed.
And put it out there. More and more the question is going to be, how do you make sure everything that you feed your AI, if you have an enterprise license, stays within your servers, and are you sure that it can't go out?
Which is why I think the next wave of AI models will be, what is it? The two terms, which is that exposed to outside versus within your laptop, right? I'm forgetting the term for it, but I think we will see the advent of that for sure. I mean, it will evolve. It has to evolve.
Yeah, so the interesting debate over AI continues. Very short break. No debate about how markets are going to open today, though. If you look at the implied open, it's going to be tough. The question only is what the recovery is going to look like over 200 points down. We're coming right back with what your strategy for the morning should be. Stay tuned.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why.
Back with India Market Open right here on NDTV Profit. We are grappling with a global market which is slightly weak on account of what's happened over the weekend. Can that disrupt that intermittent recovery that we showed the whole of last week? And what about individual pockets? Let's get in our experts. Kush Bora, Parag Thakkar with us on the show. Gentlemen, thanks so much for joining in. Very good morning to both of you. Kush, let me start with you. And this 200-point down take, assuming that that's how we start off, does it negate the positives of last week, or would you use this as an opportunity, or would you want to wait on the sidelines?
Why wait?
Okay, that's a good answer.
Why wait?
Build on that.
Yeah, absolutely. No, so see, anyway, last week we spoke of one thing, 24,300 and 23,700 is a pivotal level for a very simple reason. 24,000 पे straddle फिर से build हो रहा था, correct? And if you'll recall that brief conversation that we had on Friday, PCR, remains a very key indicator that was already at 1.25. तो यहाँ पे क्या ही long करते, बराबर? So I think this 200-point downtick is a healthy one. I don't see an immediate, big up move on the Nifty again, but yeah, this range will perhaps be respected. But 23,700, 23,800 on the downside and about 24,200 to 24,300 on the upside will be respected. You can play this range very well. If you have a long position, you could continue to hold, perhaps even create fresh ones with 23,800 as your stop loss. The more interesting one is actually the Bank Nifty. The outperformance on Bank Nifty continues. For the last 2 days, the recovery on the Bank Nifty has been smarter, has been sharper, of course, led by HDFC Bank and ICICI. PSUs also doing their bit. But, this week, by the way, could be a positive biased consolidation for banks for one very interesting reason. I don't know, if you guys already know, but this Saturday, the 4 big private banks will be declaring the results, right? So Monday is going to be a bumper move for Bank Nifty, which way time will tell. I am in the positive camp though, right? So this could be positive biased consolidation up until that result, the result announcement is out for all 4 of them. 57,300 still remains a strong support. Just below 56,500, that remains a strong support. So I remain constructive. If we do get a dip close to these levels, go long on Bank Nifty. And I'll pick from one interesting thread that Neeraj mentioned just a while ago in his opening comment, which is ye jo mids mein move aaya, is it like a one-day wonder or flash in a pan kind of a thing? I don't think so. No, you didn't say that, but that was more of a question whether that would happen or not.
No, my question was that we had started to see a recovery with mid caps at highs and small caps close to those highs. Can that get derailed because of this?
Again, unlikely. You recall again 2 weeks prior, we said कि बहुत अच्छा चल गया है, अब थोड़ा consolidation आना चाहिए. We saw that. I mean, largely because of the announcements and whatever happened in the in crude. But if you see a lot of stocks, just under the radar, if you see a lot of stocks on the verge of breakouts, on the verge of up moves, volume accumulation very healthy. So I'm actually very positive on this mid segment from here on as well. So keep an eye out on that. Of course, it's a big universe, so you can always ask here, isme kya chalega? Whatever has been working so far, healthcare and auto banks, we've been speaking about those consistently. So maybe if you get some names on these in these sectors, these could be your picks from the mid space. But again, very constructive.
So you are not worrying at all about 200 points down on the Nifty today?
Why worry? I mean, वो तो pivot ठीक है ना, चिंता किधर है?
No. So why worry means you're coming from a don't worry, be happy philosophy in life, or are you seeing a bounce back over here?
Yeah, that's a good question.
Okay, because you're saying why worry?
No, because Monday,
is this a Kush vibe, or are you seeing something on the charts?
कि Monday है, don't worry, be happy types ऐसे.
वो Monday को तो उल्टा होता है normally, the Monday blues and all.
So be specific what you're saying.
See, that's exactly what I started with. Last week when we fell, 24,000 again became that pivotal level जहाँ पे हम consolidate कर रहे थे और वो straddle फिर से play out हुआ 300 points का range. So 24,300 and 23,700 on the downside. PCR was at 1.25. 1.25 के PCR पे क्या fresh long करोगे? तो ये cool off healthy है.
Okay, stocks.
Yeah, Monday weekly pick JG Chemicals again. Ended at the high point of the day, ended at the high point of the week. Very healthy volume accumulation, irrespective of whatever's happening in the market. This one's done its thing for the last week. 4 days of good closing, healthy accumulation. So this is definitely a pick that you should keep on your radar. 480, 505. These are your targets. 435 is where you keep that stop loss. From the pharma pack, Abbott India is starting to make the right noises. There's a major long-term falling trend line resistance breakout that has come on this, again on the back of very healthy volumes. So 27,930 and 28,745, these are your targets. 26,300 is where you keep that stop loss. And because of the texture of the market, one short call, that's on VBL. an intermittent recovery, but seems to be fizzling out for now. So short call on this, 474, 469 targets, 484 is where you keep that stop loss.
Okay. Parag bhai, quick view on the big tech result over the weekend. HCL Tech going to come. And then, of course, we had TCS last week. So the entire tech pack, because that's something that you have a very clear view on. I wouldn't say contrarian, but you have a clear view when a lot of the street is confused.
Yes, yes. No, so basically what TCS I have already given a thumping the table buy. It's a lifetime opportunity in my view, by the way. 13 PE, 6% dividend yield, 7.5% free cash flow yield, 60% ROC business, and now Mr. Chandra coming to the fore and now driving the entire AI strategy for the company. So I would say that it's a multi-decade opportunity in my view. LTI Mindtree, now the common thread between TCS and LTM, both have said BFSI has recovered. For both, BFSI actually recovered in this quarter. BFSI is a very large vertical for both of them. In LTM, they said high-tech is also recovering. Their largest customer, as we know, is Microsoft. So that is also recovering. Both have shown about 3% QOQ growth, BFSI and high-tech. Other businesses like manufacturing, life sciences, all TCS has said they will recover from Q2. So from Q2, 79% of the TCS customer segments are going to show growth according to them. From Q2. LTI Mindtree has also said they have also surprised on margins, 15.5% EBIT margin. They have guided for better margins ahead and they have guided for better growth from Q2 onwards. So I would say their top 5, top 10 clients, by the way, has grown at above 4% QOQ. So I would say that all the trends are positive and market is completely ignoring it. And P multiples, for example, TCS is 13 times FY28, LTI Mindtree is 18 times FY28. But I would say that these are great buying opportunities and one should stagger their buying because you are buying against the tide. But slowly and gradually build up your position. HCL Tech result is today. They have recently announced that very large order, which mostly is from Mercedes-Benz, $1.15 billion. So I will be happy if they don't cut their upper end of the guidance. And margins also, they should not cut their guidance at least. Otherwise, valuations are again very attractive and so it offers a great buying opportunity. But let's see now, HCL Tech results, we have to see.
Staggered buying in what? So very quick answer here because I would go to Somit on heard on the street, but in what order of priority? HCL Tech is the top of the pack?
TCS is the top buy.
Okay, and then followed by?
Because TCS has already said that we are going to see recovery from sometime in Q2 and valuations are absolutely in your favor, 13 PE.
And no mid-cap companies?
So basically, let's go result by result what happens. In most of the companies, we know for example, Coforge has said that organic growth will be flat. Infosys, we know that organic growth will be flat. Let's see result by result and guidance by guidance. But at least TCS on this valuations, given their outlook and their management commentary, looks like a no-brainer.
Got it. All right. Somit Sarkar waiting by to tell us what he's hearing from the dealing rooms, and it's going to be an interesting week. Somit, earnings obviously front and center. Lots happening on the external front as well. What are you hearing?
Well, Alex, the first stock on the list is Ellenberry. Now, this stock had hit an upper circuit of around 10% on Friday. Now, dealers are indicating that a well-renowned PMS has been buying this counter in trade. So, keep an eye out for Ellenberry. For C Infosystem, there are buy flows on HNI desk. There's a buzz of a potential acquisition announcement that could come in along with the earnings. For Bajaj Auto, OFSS and Bajaj Consumer, there are buy flows on institutional desk. Dealers are indicating that the first quarter earnings are expected to be quite strong. And on the flip side, for Angel One, there are sell flows on the HNI desk. Dealers are expecting a weak first quarter earnings to come in from Angel One. And when it comes to HEG, that was part of a segment on 10th of July where we did indicate that the dealing rooms are quite bullish on the demerger plans of the company, and the company came out with a presentation post-market where the targets that they've given for the demerged entity looks to be quite bullish. So keep an eye out for HEG as well.
Yeah, well, most certainly looking out for all of these names. And HEG, remember that green tech company in which Singularity AMC and maybe a few others invested money way back in March, and could be interesting. I mean, because while graphite, while the electrodes business is one thing, can they diversify the business and do something else is the other key thing. You know, some of these names, Parag Bhai, HEG Graphite India, or for that matter even then extending the name to the metals and the non-JSW steel names, right? So HEG Graphite or JSPL, which has got news today that the CEO has resigned yet again? Any thoughts?
So basically, as you all know, JSW Steel is my core buy, and followed by Hindalco.
Yeah. So leave those two out.
Leave those two out. Okay. So then.
What about these three?
So then, you see, it depends on the graphite electrode cycle, right? It is a highly cyclical business. Of course, when steel industry moves towards electric arc furnace route, the use of these electrodes go up. So and that is environment friendly route. So I think future is there. So in that way, broadly, I agree with HEG and graphite thesis, but I have not done enough work on it. So I'll not be able to tell you that whether it is a buy or not.
Okay, and no thoughts on this green tech business either, right?
No.
Okay. Okay, let's go across to my colleague Piyush now. HDFC Bank is in focus. It has been in focus for various reasons, but the latest is that the management has reiterated its commitment to high standards of corporate governance in its latest annual report. Let's go across to Piyush Shukla to find out what exactly they've said. Piyush, interesting statements both by the chairman as well as the head of the bank.
That is right. Every year, the bank comes out with its annual report where they talk about the investments being made in tech, the people force that they are building up, the business plans that the bank has. But this time, what caught the eye of us watchers was that there was a separate subhead, corporate event, it was termed as. And under that subhead, Mr. Shashidhar Jagdishan, who's the MD and CEO, reiterated, how the whole process went through after former chairman of the bank, Mr. Atanu Chakraborty, resigned, citing certain differences between the business practices at the bank and his own personal values. HDFC Bank, Mr. Jagdishan said, took immediate note of his action, immediately appointed an two external legal firm to assess whether the statement that he has made in his resignation letter were substantiated. The bank also formed a committee of independent directors to assess, to review the overall findings that these external firms give to them. And eventually, when the report came out, the report did not find, that Mr. Chakraborty's allegations were substantiated. This whole process, Mr. Jagdishan said, was meticulous with voluminous minutes that were reviewed. The exchange of information that happened. He himself, along with head of several departments, were interviewed by these law firms. So the whole process was very meticulous. Mr. Jagdishan mentioned, and he said that the corporate governance standard, like you mentioned, remain highest at HDFC Bank. The former interim chairman, Mr. K.K. Mistry, also alluded to the same, saying that in his capacity as interim part chair, he can guarantee that the corporate governance level at the bank were the highest. Other few noticeable factors in the
graphics on. Okay, thank you for that, Piyush. All right, so HDFC Bank has its results coming out shortly, and that is something we will look at. But so much happening beyond the scenes and behind the scenes with this company. How are you looking at the banking pack? I know we've been speaking about IT in such detail, but is there a setup for banking stocks ahead of their results?
Yeah. So
apart from just HDFC Bank.
No, that is true. So I think ICICI always keeps saying will be the best result in the banking season, in my view. In banking results with least compression of NIMs. Of course, Indian Bank reported excellent numbers. QOQ NIM expanded, which was
Indian
a very
Bank
good
was
surprise.
Awesome, right?
Indian Bank
10% it gained on that.
Great asset quality.
6 bips QOQ margin expansion, very good asset quality, very good commentary.
Improvement in
commentary as well?
Improvement in gross NPAs and
it is one of the PSU bank which is always maintained very good asset quality.
Net NPA 0.15%.
They are building contingent provisioning also for West Asia war conflict. So it is a behavior like private sector banks actually.
Interesting.
So I would say that I am expecting Axis also to grow. Already business update was out, right? 18-19% growth in advances. HDFC Bank 15% growth in advances against the expectation of 12-13%. So I feel that ICICI, Axis, HDFC, Kotak, all four who are delivering results on Saturday 18th, now all four will deliver decent results.
What did you think of Bank of Maharashtra?
So there the NIMs have contracted by 12-13 bips QOQ. So I would say, and the stock had rallied significantly. We have discussed it earlier also. So I think, and it trades within the PSU pack, it is at the most expensive higher price to book. So it might correct a little bit more, but the loan book growth and all was good. So structural story remains intact. It is just that it is expensive stock, and on margin front it has not delivered.
By the way, PSU banking pack on Friday.
Koshi's made
That's
so
what
many expressions.
I'm going to him. I'm going to him.
Bank of Maharashtra.
No, not just Bank of Maharashtra. The entire PSU banking pack, right? 3% gains on Friday and recent outperformer.
So, where does my enthusiasm from for Bank Nifty come from? I'll give you 2-3 points. पहला तो PSU banks were massively oversold. So last week हमने वहाँ पे एक rebound आते हुए देखा. That could very well continue. I don't think anyone needs any more convincing on HDFC Bank and ICICI Bank. Correct? Parag Bhai has convinced all of us enough. Let me just add one small point. This month so far, FIIs are net buyers in cash. Okay. By the way, they are also net buyers in stock futures. सिर्फ index futures पे आपको 89% short दिख रहे हैं, ठीक है? And that too, the number of contracts are reducing, which means the pie is shrinking, right? अगर FII का selling stop होता है and the buying resumes, like we've seen, even if it's just a trickle, there is going to be a benefit for HDFCs, ICICI, SBIs, Axis of the world. You're already starting to see that. HDFC Bank might not look like it's done enough or too much, but it's had 6 weeks of positive closings, which is no mean feat. In fact, if you look at ICICI, even that too actually has run up quite a bit, has had 5 weeks of positive closing and 1 week just last week, right? A brief pause, but the momentum on this one's very strong. So again, adding to all of what Parag Bhai said, the FII buying also coming in, or at least the selling stopping, is another case in point for these banks to actually move higher from here, and thus the Bank Nifty too.
Okay, let's take a look at some of the other stocks which are in focus. Some results have come in, some action to talk about. Varsha joining in with all the details.
Well, let me start with Just Dial numbers, Q1 FY27 numbers, wherein core business execution, if you see, has improved across the platform, but the traffic was essentially flat year on year at 192.9 million users only. Mobile traffic, in fact, declined year on year, and also one of the key highlights is the founder and CEO, that is VSS Mani, is stepping down on July 31st, ending his 33-year leadership tenure. Keep that stock in watch. You also have Fino Payments Bank. Again, if I were to talk about their June 2026 new accounts, increased 31% year on year. Average deposits, if you see, rose 11% to 2,755 crore. Even their active users, FinoPay active users, grew 38% year on year, which is a good thing, and the loan referral disbursal also surged almost 253%. L&T Finance has recorded highest ever consolidated PAT, robust growth in retail book and disbursements year on year. They've achieved highest ever consolidated book, which is up 27% year on year. Their NIMs plus fees improved to 10.47% in Q1 FY27 versus 10.2% last year, and also credit cost improved to 2.54% versus 2.64% last year. So overall, these are 3 stocks which are on my radar as of today.
Okay, Kunal Rambia joining in this morning. He is founder at The Street. Kunal, very good morning to you. Clearly, we're going to have a deep cut when we open this morning. What is the outlook for the Nifty and the Bank Nifty?
Good morning. Thanks for having me on the show. So as far as Nifty is concerned, I think more or less it's been 2.5 months of sideways consolidation. Nifty has consistently taken support near 23,800 levels. So that's the positional support to watch out for. Any decline below 23,800 can create problem. Otherwise, this can be a buying opportunity. And as far as the Bank Nifty is concerned, again, it has actually outperformed. But so far, it's been in consolidation again for last 1 month. So the support is placed at around 57,150. Decline till around 57,500 kind of levels can be a good buying opportunity.
All right, and good morning to you as well, Kunal. Let me go across to my colleague Parth, who's joining in to talk about HEG, because interesting update coming through in an investor presentation that they shared that talked about the demerger and the plans to have a pivot in the business. Remember, they've been in the space of graphite electrodes and they're moving towards the clean energy space, and specifically certain plays in the battery energy storage space as well. Parth, what can you tell us?
Absolutely. So, well, first of all, HEG has announced a restructuring process, and this was actually a NDTV Profit khabar confirmed from the Heard on Street segment. So, let's first check out what's actually happening. So, HEG is demerging its graphite business into a separately listed company. The remaining business will be named as HEG Green Tech, while the graphite business will list separately as HEG Limited. The scheme has been announced, but it is still awaiting the final NCLT approval to go ahead with the process. Now let's understand how will this demerger work. So the current HEG shareholders will receive shares in both of the businesses, that is HEG Limited and HEG Green Tech as well. The graphite business will move into HEG Graphite, which will later be renamed as HEG Limited, while the current HEG will be renamed as HEG Green Tech going forward. Now let's understand what will each of these company do. So the first one will be HEG Limited, that will still manufacture the graphite electrodes used for the steel making purposes, while the other company, that is the HEG Green Tech, will own the clean energy and the sustainability businesses. Now this is all about the demerger, but let's understand why is the street excited for this demerger. Well, the combined value of both of the businesses stands at 20,000 crores, but if you look at the current market capitalization of HEG, it is around 10,000 crores, and if we imply a 20% holding, even if we imply a 20% holding discount to that 20,000 crore combined value, it stands at 16,000 crores. So compared with the current market cap of HEG, it actually implies a 60% value unlocking potential, and this is the reason why this demerger a big thing. Now let's understand the triggers for both of the businesses. Starting with the graphite businesses, well, it is the high entry barrier businesses because it has very high complexity and also really high quality requirements for an entry into the business. The next one is that EAF steel making, which is basically electric arc furnaces. They are gaining market share because they only produce 1/4 of emissions compared to the traditional method of blast furnaces and all. Also, another thing is that HEG operates the world's largest electrode plant, in one of the world's largest electrode plant, and the capacity will be increasing to 115 kilotons per annum by 2028. The triggers for Green Tech business is that they will be supplying anodes for both EV and energy storage systems. The capacity will increase from 3 TWh in 2026 to almost 8 by 2035. Chinese players are 95% of the world supply, but global players will be diversifying into India as well. Also, the company will be investing into graphene anodes, which is the strongest material in Earth's discovered so far. So these are the whole triggers that you should look out for the HEG demerger going forward.
All right. Thanks so much for that part. Keep an eye on that stock. Kunal Rambia, we did not take your picks. So what stocks are looking attractive even as the pre-open rates have started ticking on the screen?
So Alex, the first counter is the CDSL. Look at the behavior on the Friday. There was a clear bounce and the breakout happened on this counter. So with the stop loss of 1400, I think one can go ahead with buying CDSL. And the first minimum target can be 1500. And I would advise our viewers to keep trading the stop loss because I think the overall trend on the weekly chart remains very, very strong. And the second is MRPL. After a pretty long time of consolidation with sideways bias, this counter has given a very clear thumbs up. So with the stop loss of 155, one can go long on that also, and the target can be 170. Again, in this counter, the overall trend has been really very strong on the weekly chart. So prefer to keep the trailing stop loss and hold the position.
Kunal, just a quick follow-up there. You had given this call earlier. It has already rallied a bit. You're comfortable buying it right now as well? Good call, by the way, but you're comfortable buying it now as well? MRPL?
Good morning, Neeraj bhai. Yeah, so absolutely, this counter actually has come down from 210 levels to 155. And since May 2026, right, this counter was in sideways consolidation. On the daily chart, this is still forming double bottom formation. The breakout is yet to happen. So yes, the risk reward ratio is extremely favorable. So the positional stop loss actually can be 145, and this is the continuation of the longer term trend. So yeah, absolutely comfortable buying at the present level also.
Okay, let's go across to the big brokerage call of the morning. Car trade is in focus this morning. What do you have in mind, Sharad?
UBS has come out with a very important note on this. They have initiated a buy. The target price is set at almost 4,000 rupees per share. That's a significant upside potential from the current market price, and they have stated a very important point. They have stated that the scaling network effects is happening, and that augurs well for the stock. It's an asset light model, and looking at the numbers, the margins are expected to increase to 33% in FY26. and 9% in FY23. Now that expectation might go up to 47% by FY30. Now this will be of course driven by top line growth, and analysis is showing a significant growth potential in OLX. It is a dominant C2C platform, and a growth potential is still underappreciated as of now. Almost 15 to 20% of upside in consensus earnings is expected for the next 2 years.
Got it. Well, card trade, and certainly one stock that has actually done really well over a period of time. Thanks so much for that, Sharad. Parag bhai, any thoughts here on card trade fundamentally?
No, I think it's one of the new age kind of companies which is actually doing profits, doing cash. So I've always liked this company. Although I have not bought it, I've missed it, but I like this company.
On the charts, Kush Bora, is there a trade here on card trade even on a dull day like today?
In all likelihood, there is a couple of reasons for that. One, around June 25, similar time frame, the stock actually rallied from 1670, 1700 odd levels. The reason that is important is because now, from up until March to again, June, it consolidated near that level, and with massive volume accumulations on weekly and monthly setups, it's actually rallied quite a bit. Surprisingly, despite such a rally, it's not actually quite overheated. So yes, you could look at it from a near-term trade perspective as well. Positional one at that, 2500. That's your stop loss. On the way up, that recent swing high, close to 3300. That becomes your target. Once past that, 3600 plus levels also on the cards.
Okay. Just want to look at Avenue Supermarts and how it's opening this morning. I will take a view from you also, Parag bhai. On Avenue, 3.5% down, and this is something we highlighted. It was on Neeraj's watch list as well, that is going to be a negative outlook. Is this now a very fundamental issue that doesn't seem to be getting solved when it comes to the largest brick and mortar retail giant? I mean, their total addressable market is very much there. That doesn't go away.
Yes. But so basically my problem is, see, it's a great management. As you rightly said, the size of opportunity is immense. Unorganized to organized remains a phenomenal theme. It's a basic need, so it fits everything except valuations. And valuations at 87 times trailing, or you can say 60, 65 times 1 year forward earnings. So you have to have 30% growth, right, which is missing. It has just shown 15% growth, right? So for example, like Titan, right? Titan is also expensive, but Titan, you had this 39% growth. Even if, suppose if 39% is one-off, it is 20-25% growth. So there you can justify. Here the growth is missing. 15% growth, even 18% growth. I will not be comfortable buying 18% growth at 65 P. So that completely beats the fundamental logic.
Yeah. So while Parag bhai was talking, with some bit of circumspect around Avenue Supermarts. Is constructive Titan, not constructive Avenue Supermarts, simply because of the growth rate coming off for Avenue. And the stock has been stuck. Their upsides are capped. Maybe downsides could open up, maybe they don't, but upsides are certainly capped. Look at 5 years, I think, for Avenue Supermarts, and you probably won't see gains out there. Therein lies the problem for this big boy. Great company. We all love going and shopping there, but it is not creating wealth for investors, unfortunately. And which is why, look at that, 5 year gain is what, 17%.
Because the starting valuations were too expensive.
Too expensive.
That is the problem.
Just on the, we all love going and shopping there, quick poll around this table, not about Avenue, is how much of grocery shopping is being done in person in this manner? Just anyone over here?
Where the best...
Not just personally, just a poll on this table.
I don't.
Local vegetable vendors.
Yeah, but a big box store like this to buy your staples, are you still going?
Yeah. Not doing it online is the point I'm making.
You're not doing it online. You're not doing it online. You're going to a
week
store.
of every month,
You're going to the grocery store.
Why everything happens online, although I don't understand online.
Okay. Everything is online for me.
3 versus 2.
So 3 versus 2. So just a quick poll here. We're not saying this is the TAM, just to see what really is happening and where the pressure is. If you spot Neeraj Shah in a store buying dal atta
please
chawal,
let us know.
take a picture and send it to us. That's a claim that has been made over here. Kunal Ramdhya, a view on Avenue?
So more or less, it's been in sideways consolidation since 3.5-4 years and nothing much. So I will completely avoid this counter for now. But yeah, by any chance, if I see this counter coming down by 6-7%, I'll think of buying with favorable risk-reward ratio at least.
Okay, that's on Avenue Supermarts. By the way, Tamanna pointed out the other one, which could also have a slightly sluggish start, would be Keystone Realtors. I wonder if that stock is starting off weak. So pull that one up for our viewers and see if that is starting off weak. Yes, 2% lower. LTI Mindtree is the one, and the one which could actually do well. Two names maybe. Let's just see. Aventel Softtech and L&T Finance Holdings. Maybe L&T Finance doesn't or does, but Aventel 3.5% lower on a day like this, and L&T Finance, no, not too much. But Aventel Softtech, interesting start simply because of the way the numbers did. 24.7% margin versus 20.1. Really strong showing there.
You've seen the stock up as well. It's responding positively.
I wonder if there is a trade here, Kushbora.
As surprising as it might sound with a 3.5% opening, the momentum is actually missing on this one.
Yeah, which is fine.
Positionally, I think this is setting up very well because not just now, if you dial the clock back about 4 or 5 months, the volume accumulation, the delivery markup on this one seems to be very, very exciting. And perhaps the reason why the momentum is missing is because there's a resistance around the 190 mark. So yeah, if you look at a closing above that, the stock could gain momentum. If you have a position, I don't see a reason why you should come out of it. Maybe big purchase could perhaps be done after 190 is taken out, that resistance is taken out, and in the near term the stop loss for this one is at 175.
Parag, do you have an opinion on car trade?
So car trade we discussed. I don't own it, but it is one of the few stocks if this new age technology where actually you can see profits and cash flows in a meaningful manner.
Okay.
Yeah. You're seeing the bank Nifty close out weaker than you're seeing the Nifty IT. I wonder if Kunal Rambia has a list of stocks that are recovery candidates. If we are going to see some kind of pullback after a weak opening, because all things considered, the business updates and the results we've got over the weekend are not too negative. Anything that you have earmarked for a bounce back?
Not really. It's probably too early for the day. But yeah, I'll keep an eye on SBI as of now because I think this counter is more or less was in sideways consolidation for 15-20 days. So I think if I get the opportunity to buy somewhere near 1020, the opening is 1023, 1020, 1018, I think with the stop loss of just 5 to 6 rupees, one can definitely take intraday bet on it.
State Bank of India is in your list of good picks for banks?
Yes.
But where would it be in the pecking order?
My weights are like ICICI Bank is significantly overweight. Then comes, of course, Axis, SBI, Kotak, HDFC, all.
SBI over HDFC?
No. So I'm saying equal, but it's just. But I'm saying packing order wise, if you ask me, ICICI, HDFC, Axis, SBI, Kotak, kind of.
Okay. So some of the stocks that you're going to see weakness in, crude has spiked, touching the $79.80 mark for Brent. So you're going to see, and Indigo seeing a bit of a knock this morning. You're seeing ONGC doing fine. Obviously, all your oil marketing companies, as you're seeing them on the screen right now, are going to have some weakness coming in. I want to look at what Asian Paints is doing as well. I want to look at an Oil India. We'll pull up an ONGC as well. And you're going to see some impact there in Asian Paints, typically and expectedly down. Oil India typically up, but just about 1%. Even ONGC about 0.5%. The overall mood is going to be a little somber. I want to look at a Bank of Maharashtra. I want to look at an Indian bank as well. Both of these in focus on their results. Bank of Maharashtra a little weak. We talked about that compression in margins, which was a problem. Indian bank coming off as well. I want to look at RITES. They have a good order win coming in. Is there any excitement over there as far as the RITES is concerned? Yeah, about 0.8% up. Very few, I would say, positive pops today, Neeraj. They're going to be tough to find.
Yeah, tough morning. Let's see if the afternoon is any different. Could it be a tweet or a post on Truth Social that changes the sentiment? I think, well, we hope that it does happen for the positive side. Let's wait and watch if it does. But the start will be weak, and we'll see a start in the red, about 190 odd points at open, so no surprise there. About 1% lower, weakish market breadth as well, no surprise there. And all indices would participate. Maybe IT does something slightly different, but I would reckon that banks, IT, etc., everything will be between 0.5% to 1% down. Don't be surprised. Banks down about 1%, no surprise there. Nifty, IT will come up on your screen. Actually flattish, so just kind of doing slightly different, but still sluggish, if you will. And mid caps and the small caps too, looking weak because 0.77% for the mid cap index, 0.83% for the small cap index. Bring out the deep gash of red, maybe a little bit of green in ONGC and a few others. Very likely ONGC up about 1%. TCS is holding on, and Parag Bhai said it's a multi-decadal opportunity in the offing. The top gainer currently, HCL Tech, Apollo, Dr. Reddy, NTPC, a defensive bent for the market for sure. What is not doing well? Indigo 3% lower. Crude higher, Indigo naturally will get beaten down. Maruti will get beaten down. Both of them are down. Nifty is down. Shriram Finance gets beaten down. Tata Steel is lower. Eternal is lower. But I no point dissecting. It's effectively a sluggish market which is carried all of these lower. Actually, the highlights are the ones which are holding out. And yes, ONGC would, but TCS doing that is also fairly impressive. So tech is holding on. People clearly like what TCS said, and the fact that there was some bit of cooling off on Friday helps the cause as well, because it's not that it's coming off a 7-8% rally. It was a soft Friday and building on from there.
Yeah, and also Parag Bhai says it's a lifetime opportunity to buy TCS. IT holding on but by the skin of its teeth. Pull up the India VIX and you will see that 8-9% uptick, 8% uptick on the fear gauge. So clearly that concern is like an overhang that we will continue to see. 13.27 on the India VIX. The declines versus advances is showing you fear on the street. Let's pull up the mid cap and the small cap where you'll get a clearer picture. About 0.5% down on the Nifty mid cap, actually not doing as bad as the Sensex and the Nifty. Small cap 250 also 0.5% down. Let's pull up the sectoral indices, and if you have a green, it may just be IT. There you go. Nifty IT 0.13%, just holding on to its green. Everything else is in the red. Nifty auto worst hit. So all of these are high crude price impact kind of stocks and stories that you're seeing. So Nifty auto about % up. Maybe Nifty consumption. We told you that the monsoon deficit has actually gone back to 18% from 14%. After that great rush of rain, you've had some stoppage of that rain coming in. You're seeing of course defense also about 1% down right now. Let's go to individual stocks and you'll get a clearer picture of some of the winners maybe coming in today more than anything. I've got the crude sensitives up there and you might have seen some of them on the Nifty chart, but we'll re-look at all of those crude sensitives together. Asian Paints about 1.5% down. Indigo worst hit about 2.5% down. Double whammy really, because if once again there are bombs raining on some of these Middle East nations, then the flights there get impacted. Plus you have the crude prices, so bad on both ends. ONGC should spike, but it's barely a 0.6% spike. IOC for marketing companies, oil marketing companies, high Brent prices is a bad idea and bad news, and you're seeing that on those stocks. HPCL, BPCL about 2% down as well throughout. A lot of results have come over the weekend, so we're capturing some of them. Avenue Supermarts, we told you, not so exciting. Stock getting punished, 3.65% down. LDI Mindtree was actually a good set of numbers, decent, but what is working is already priced in. We have to see whether their business with CBDT actually ramps up. Stock is flat right now. L&T Finance is the other one that we're seeing. Good set of numbers. We gave it a thumbs up, % up. Avantel, good set of numbers, 8% up. One of the few, I would say, sparklers of this morning. Keystone had business updates which weren't that exciting, about 3% down on the stock. Car Trade had a positive brokerage view and was our big brokerage call of the day. Barely 0.75% up. Wrights had a good order win and NMDC has cut iron ore prices. Nothing much happening in either case. Negative for NMDC, so that's why 1% down. So you have, these are some of the key movers this morning, Alex, but overall the mood is a bit grim.
Having said that, Tamanna, there are a couple of stocks in the broader markets that are looking reasonably good at the start, and a pair of them, actually MRPL and Chennai Petro, both doing okay. Particularly MRPL, which is gaining over 3% at the start today. You have C-Info Systems that's gaining about 2.7%, building on some of the gains from last week. It was one of the top gainers on one of the days, either Friday or Thursday. I think it was Thursday. Signature Global gaining about 2.5% or thereabouts. So there's still a few winners. I want to know from Kush Bora though, whether the Chennai Petro and MRPL should be bought into at this point.
Oh, I think you should give Kunal Rambia credit for this. MRPL was his call.
Let me go across to him then. Kunal, what's the view on MRPL? Up 3.2%. Would you revise your targets?
Yeah, Alex, the way it has opened up and the way the volumes are picking up, I think this counter has the potential to show us double bottom breakout, which is placed at 170. That was our first target. So any take above 170 over the closing basis can open the doors for 185 to 190. So yeah, it's a very clear thumbs up on MRPL. Even the CPCL, that counter was in complete positive trend since pretty long period of time. Today it has picked up. So with the stop of 1180, one can definitely buy that with the target of 1250.
Okay, so that's the view on MRPL as well as Chennai Petrol. Let me throw in CE Info Systems because it was a top gainer on Thursday, one of them. Friday was a little lackluster if I remember correctly, but what's the view today?
I'd wait up on this. You're spot on. Thursday was a big move on CE Info Systems. I think it was up about 14-15% on the back of very good volumes. By the way, there is a breakout as well because the 1050 level, 1060 level was a resistance zone. But now it's coming close to resistance levels. The volumes are starting to thin, so it might just consolidate here. So at this point, no point, buying afresh. You could hold with that resistance level. Now the support at 1050 as your trailing stop loss. Signature Global is setting up well. 3 sessions of gains, volumes also very healthy. Continues to shine. I think for levels of 875 and about 900 plus, I think Signature Global is setting up well. On the downside, you could have your stop losses close to the 825 mark.
Parag bhai, one of the questions that I had in the financial space, and I know that you've described the stocks that you like, but specifically those that are microfinance led. In the fourth quarter and in the business updates that came through in the first quarter, indications are that they've turned the corner, right? So, but having said that, would you hold off on putting money into some of these stocks? Why? Because you have question marks about the monsoon, you have various other issues that could come through. What would you say?
Yeah, so I have been, I strongly believe that lending is a very high risk business. You have to be very prudent. You have to back very prudent lenders. And you have to back very prudent segments, right? Because and microfinance is not one of the segments which I like, even though I completely agree that this is a great cycle for them right now. The collection efficiency is improving, the growth is back, everything is good. The yield on advances are highest in this segment, so it is very juicy for a lender to go and lend to microfinance in microfinance segment because your names, your spreads, your everything looks fantastic. But then someday some accident happens in future. So I would not buy into that segment. Even for example, in L&T Finance, you said the results were fantastic, but they also have a considerable portion, I think around 20% in microfinance.
MFI and plus monsoon. We don't know what the impact is going to be.
So I would stay with the lenders who lend to affordable housing, say within NBFC segment. Compared to microfinance.
But Kush, you have an opinion on some of these names.
Very interesting spot, Alex. The price movement in a lot of these names, Ujjivan, Equitas, even Suryoday, the likes of these, very encouraging moves from a technical standpoint. Now, maybe because of the fundamental reasons Parag bhai and you've mentioned, there could be a pause, but definitely something that I'll keep on my radar. Any kind of pullbacks of 3 to 5%, I think could be a buying opportunity on some of these names. So very interesting moves. At least technically, they're making the right noise.
I want to quickly look at what's happening to Aurobindo before we get to a deep dive on Avenue Supermarts. Negative brokerage reports from Macquarie and Citi. We put out our profit intelligence on what sources are telling us about what the company has been doing, and you're actually seeing it in the green right now on another dismal day. Oro Pharma, any view there, Parag Thakkar, very quickly?
So I was positive on 1200, but now I have sold it out of the portfolio and now I don't want to comment anything.
So it's a valuation question on the stock.
Yeah.
No, but on the Lanet acquisition seems to be the bugbear.
Plus the business is US generics, right? And this business you cannot give very high multiple. There is always a price erosion in US generics. And so you have to keep developing new products and launching new products. And you have to keep doing capex. So it will not get a very high P multiple.
Okay. All right. But let's talk about Avenue Supermarts. Clearly under pressure this morning after an operationally weak first quarter. Mahima joining in to tell us what's not working for the company. Mahima.
Right. So Tamanna, as you rightly mentioned, right, overall when we saw the numbers, they were largely in line with what the street was expecting. But I think the fine print tells us as to how operationally weak this quarter has been, because management commentary is suggesting that overall in metro cities, the same store sales growth has been impacted because of competition which is coming in from quick commerce. Plus this is the trend that has been observed, that profit has lagged revenue growth 10 out of the last 13 odd quarters, which is not a good sign. In terms of DMart Ready, this was also, this is also something that came in as a surprise, because last couple of quarters, DMart Ready top line growth had been in double digits, but this time it has come in at 5.5%. Q4 itself, it was at 20%. So that is something that's not worked very well. Store expansion is happening. They're going very aggressive. Plus they've announced a fundraise of around 1,000 odd crore, but this is going to be via NCD. So it's going to be via debt, which probably probably is one of the concerns of the street as well. And plus the management commentary is suggesting that higher quick commerce competition in metros is overall impacting their performance. So all of these things combined together is what is weighing on the stock today.
Okay, so tough time for Avenue Supermarts this morning. Thank you so much, Kunal, Kush, and Parag Bhai for joining us this morning, where you know we wrap this part of the show, but we move on to all of our exciting conversations coming up ahead as well. Chetan Ahya, Managing Director and Chief Asia Economist, Morgan Stanley, with us this morning. Chetan, a very good morning to you, and thank you so much for your time to us here at NDTV Profit. I want to start understanding from you first how you're looking at this one day hot, one day cold situation when it comes to Brent prices and the Strait of Hormuz. This is clearly extremely unpredictable. Does it put India as an economy at great risk consistently, or is there some resilience building in that you're seeing?
Look, I think for now, our global commodities team does believe that oil prices will remain low. One of the big reasons is that there has been a significant oversupply in the oil market underlying. So the underlying fundamentals of the oil market are such that oil prices are likely to remain under check. As far as the Strait of Hormuz is concerned, we'll have to see a full-fledged hot war to begin to be worried about it. Right now, as you know, it is still trying to have some challenges in terms of the Strait of Hormuz working. But as long as we don't see a full-blown hot war, we think oil prices will still be at manageable levels.
Right. Is monsoon going to be a bigger worry from the Indian perspective, medium to long term?
Well, I think from India risk perspective, I agree with you that oil looks like less of a risk, and now we have to watch out for what happens to monsoons and therefore what happens to agri output. But look, we also think that, to the extent to which, underlying material prices, all the global commodity prices are coming down, it might be less of a concern for inflation. It might just be that there will be some downside to agri GDP growth in India, which we right now are assuming to be growing at 2.5%. So there's definitely some downside risk to that on account of the way the monsoons are tracking over the last 3-4 days. Again, there has been a slippage in the increase in shortfall that has happened in rainfall. That poses some risk to the agri output. Look, but I think both these risks are manageable. In our view, the bigger story that is going around in the region as well as in India is a start of a capex super cycle. And so we think that capex cycle ensures that the risk that you see on account of higher oil prices or this agri production lost will be more than outweighed by the super cycle of capex.
Chetan, Neeraj here, and sorry, I don't know where you are, but good morning or good evening, depending on the geography that you are in. But traditionally the capex cycles in India at least have been powered mainly by the government, and the private sector has been kind of lethargic to participate, say, for select sectors. I heard you speak about an Asian capex super cycle. Is this largely government funded, or do you think the private sector will participate with gusto?
No, I think it's going to be across the board. Well, the government provides incentives, but private sector is a big participant in this, and we will see funding happening across the board, from banking system as well as from the foreign investment and the institutional investments in private equity. So it's going to be across the board. But look, we have already seen a big pickup in credit growth momentum, and we do think that there is a capex cycle that has already begun, and we can see that from the capital goods production data that comes out in the industrial production growth numbers. And so, yeah, I think the capex cycle has already begun, and there is a lot more coming up over the next few years.
Okay. Chetan, the other piece is your report. It was way back in June, but it spoke about how there was a necessity for the Indian government to try and focus on manufacturing. to some extent, we've seen signs of that happening, that even some of the Chinese JVs have gotten the approval. Some other Chinese companies have gotten the approval, the capital goods space as well, to try and work in India, and select permissions have been given. Do you reckon that जो कहते हैं वो आसार सही हैं, that do you reckon that things are moving in the right direction there, or significantly more needs to be done?
So I think the answer to your question is yes. A lot has been done by the government so far, but the ask is quite huge. So we had done another report, not the report that you're referring to, but another report sometime back, where we had sort of analyzed what is the amount of what is the kind of GDP growth that India needs to achieve to take care of the new addition to workforce, and that will be at least around 9-10% GDP growth is needed. And then if you want to take care of the backlog, i.e. that whatever population growth, working age population growth we had in the past, and to employ them as well, the backlog of workforce, which I would describe it as, then India needs to have 14% GDP growth. So if you think from the ask, from the way India's demographics are evolving in terms of working age population, there is a lot to be done. And what we are therefore recommending is that the government needs to have a concerted strategy. And my suggestion was to have like a 500 people workforce in the Prime Minister's office to strategize and plan this, and then have a 10,000 people workforce to get it executed with the state governments. And we need to, in that planning stage, identify what are the high growth sectors coming up in the next 10 years, and then plan the whole supply chain together with that. To be fair, the government is already doing it in the segment of electronics, but this needs to be done in like every segment that is going to come up as high growth sector going forward. So yeah, I think there's a lot which is being done, but there's a lot which still needs to be done as well.
Very good points that you're raising, and actually, to a certain extent, depending on your perspective, you might be a little worried when you listen to that kind of growth that is required and for the job creation to take place. But to add to that, what do you think about the advent of artificial intelligence, in that more companies are veering towards utilizing this technology, which will lead to productivity gains, but at least in the near term would lead to job losses, or at least not significant increase to the workforce? Have you thought of the implications in the near term to demand, to growth, etc.?
So I think India is in that sense okay, because what we have seen is that the penetration of AI tends to be high in the economies which have higher per capita income. The logic of it is very simple, is that AI is substituting labor or improving labor's efficiency. There's a greater application in places like US and developed countries. And that is where we are seeing, if you look at AI penetration per capita GDP, then India is relatively low. So in the near term, India will sort of get the benefit of the fact that, that it will not be as rapid an AI penetration that you will see in the DMs. But going forward in future, yes, that's the reason why, I was mentioning earlier that we need to push more for manufacturing, because AI's impact primarily for India, the way it will be important is how it affects India's services exports. India has so far kind of succeeded alongside East Asian countries, kind of following their own model of boosting exports with the help of services exports. And it's accounting for almost 45% of India's exports. So you do need to have manufacturing sector to offset the downside potentially coming in from service sector growth rates slowing down because of advent of AI.
Chetan, in the second half of 2026 and in the remainder of FY27, do you anticipate that demand will continue to remain robust? Because it has, for the first quarter, seemed like it has remained pretty decent, right? Despite the external shocks and the increase in the cost in certain categories. What do you think will happen in the second half?
So we think second half should actually see a further improvement. This quarter ending June 2026, we expect GDP growth to be at 6.5. Albeit the high frequency data points are indicating that things have been better than what we had originally assumed. But to the extent to which all the high frequency data points, if you look at, I think the auto sales is the prime example. But we are seeing improvement in economic activity across the board, both in the area of consumption as well as investment. And so we are expecting acceleration in the second half, building up in terms of momentum on growth rates.
Chetan, I wonder how you're looking at what the central bank in India will do from here on. Is there a case for a further pause on rates going ahead? What is the trajectory you see? Because the full effect of inflation from the 3 months of turmoil we saw and high crude prices not yet flowed through.
So we don't expect RBI to move in this calendar year. We expect them to move in early next year with a 25 basis points rate hike, followed up by another 25 basis points. So 50 bips of hike coming up in 2027. In the next 6 months, effectively, the RBI will stay put because so far the inflation pickup that we have seen has been largely driven by oil prices and commodity prices, and within that, actually, oil prices is the biggest culprit. And so, yeah, we think that inflation will settle back down, and therefore RBI doesn't have to take up a rate hike immediately. But the upside risk to growth does bring the risk of rate hikes being moved forward. And we'll have to see how much of this credit growth acceleration that we've seen in the last 3-4 months is because of higher commodity prices, i.e. WPI inflation actually going to above 9, could have been one of the contributors. But credit growth above 18% does tell you that things are pretty strong. And so if even after commodity prices come down and WPI comes down, credit growth remains strong, that would imply that the underlying growth momentum is strong enough that RBI should start to think about lifting rates earlier than what we are expecting.
Interesting. Chetan, do you reckon the next 12 months will distinctly be the ones of economic recovery with green shoots per se for India after this 3-month period of there being some bit of constraints? Or is it difficult to project that right now? I'm just trying to understand whether this optimism that the equity experts have on what the markets will do in the next 12 months, will it be backed by strong economic fundamentals on the ground over the next 12 to 18 months?
Well, I think if you're talking about the equity markets, that's a different implication, and there's a different angle to that. Is that equity markets have been held back because of the alternative markets like Korea, Taiwan doing better.
That's true.
But yeah, I think from India's own earnings trajectory and growth trajectory perspective, we think that the optimism is well placed because of the factors that I mentioned earlier. I think the most important driver to any country's growth would be the investment trend. And we do see pickup of investment to GDP, which is currently around 34.5%. Going up to 37.5% by 2030. And all the actions that the government is taking, we think will deliver that acceleration in investment growth. And mind you, there are a few drivers which are structural in nature. So the 4 components of our CapEx cycle are AI and AI-related digital infrastructure, energy, defense, and onshoring of industrial supply chain. If you then look into each of these factors, they're more structural in nature. They are going to be taken up irrespective of the business cycle. And then the other factor that we keep in mind is that corporate credit to GDP is relatively low, not only in India but across the region. And so therefore we do think that this cycle is going to be a long-lasting cycle driven by CapEx.
Chetan, just a last point, and the tendency by long-term bulls in India in particular in the equity market is to say you look for the silver lining, right? And you have inflation going up. They'll say nominal GDP is heading up now significantly above 11%, and that means corporate earnings will go up. Is there a one-to-one correlation?
Yes, of course. Nominal earnings growth will have a link to nominal GDP growth. And so to the extent to which, you have seen WPI pick up, there will be an improvement in nominal GDP growth. And therefore, if you just think about the banking sector, like credit growth has improved, it will help banking sector's profit growth. So yeah, the linkage is one-to-one, but that's nominal earnings, not real earnings. So what we would want to see is some higher contribution of real earnings as well, and which we think will happen.
Forward to that. Chetan, as always, it's a pleasure speaking with you. Thank you so much for the insights you've shared, and look forward to the next chat.
My pleasure. Thank you.
Let's focus in on Aeroflex Industries. It's in focus on account of the recently announced expansion of its capacity as data center demand continues to drive growth. And we're going to be speaking with the management, Asad Daud, who is the managing director of the company. Parth, though, joining in before we do speak to Asad about the path ahead. Parth, what can you tell us about the key data points here, specifically to do with the expansion?
Sure. So the most interesting thing about Aeroflex is that they have increased their liquid cooling SFN skid assembly capacity from 6,000 units earlier to almost 9,000 units now. And the production for this increased capacity has already begun from the 1st of July 2026. Now they further plan to increase this capacity to over 15,000 units by the second quarter of FY27. So a lot of capacity increase is what we are seeing from the company in this product. Now let's understand what are these skid assemblies. So they are basically used in data centers as they enable heat removal from the high density servers. They reduce the downtime risk for these data centers and provide scalable deployment for the hyperscalers. Now Aeroflex has seen an increase in the volumes of these skid assemblies from just 46 in the third quarter of FY26 to over 1,000 in the first quarter of FY27. However, there's one caveat that the price of per unit sold has come down from almost 5 lakhs in the third quarter of FY26 to just 3.3 lakhs per unit in the fourth quarter of FY26. So this is something that you need to watch out for, that the volumes are increasing, but there is maybe a little bit of pressure in the prices.
Okay. Thanks for that, Parth. And Asad Daud, who's the managing director of Aeroflex Industries, joins us right now on the show. Asad, thank you so much. Am I pronouncing your name correctly, please?
Yes, that's correct.
Okay, great. Good morning. This is Neeraj here. Thank you so much for joining in. And when one looks at what you've done ever since you listed, and I believe the IPO was at 100 rupees, but the price notwithstanding, the fact that you've nearly upped your profit about 10x in the last 6 years, revenues have grown about 5x, your margins have expanded from 15% to 23%, shows that you've done very well in the first phase of your listed journey. My questions would be now, or our questions would be like to try and figure out what we'll do near term and over the next 3 to 5 years. Now, are you deliberately moving towards a business which is a lot more value added versus doing what you have been doing? And does that therefore have a potential to increase your revenues as well as margins over the course of FY27 and beyond? Let's start with that first.
So if you see over the past 3 to 4 years, our focus has always been to go into more value-added products. These value-added products help us to increase not only the top line but also the bottom line as well. So that has been the focus of the company over the past 3 to 4 years, and that will continue to remain the focus of the company over at least the next foreseeable future. And if you see the growth that we have had over the past 5 years, we want to replicate and even have a much higher growth, both in terms of the top line as also in terms of the bottom line over the next 3 to 4 years.
So Asad, here's the question, right? I mean, you have mentioned on the calls that you are targeting about 30-35% growth for FY27 or FY26. Now, did you pencil in skids becoming as strong a piece for you when you gave that 35% guidance? Or do you reckon that now that skids are doing so well for you, you might be comfortable upping the guidance as well?
No, so our guidance of between 30 to 35% growth was considering the expansion in capacity that we are having in the skid assemblies, because that's a sector which last year we just started at the end of Q3, and we believe that over the next couple of years, the liquid cooling SFN skid assemblies, as we call it, will contribute at least 30 to 40% of the sales of the company over the next 2 to 3 years. So that will be a very important driver for our growth. But also we are also seeing significant growth and business increase in our core business as well. So a combination of both of them will help us to achieve this high revenue growth and also the bottom line growth.
Hi, Asad, Alex here. I'm just trying to understand this SFN skid assemblies. How much is it going to contribute in FY27? If you say that in 2 to 3 years, that is FY29, one would assume it would go up to 30 to 40% of the top line?
Yeah, so we expect that in the current financial year, it will contribute about 15 to 20% of our overall sales. And then, going forward in the next few years, ultimately it should contribute between 30 to 40% of sales.
And can you give us a sense of the margin profile in this specific business versus the traditional business?
So in terms of the margin, the overall blended margin for this business is in the same lines as our core business. So in terms of the margin, it's almost at the same level. However, we have not yet focused our attention on improving efficiencies, because right now the focus is more on supply rather than efficiency. But we feel that over a period of the next few years, as also competition would also come in, and there will be some pressure on pricing going forward, we also have to work on efficiencies to not only maintain but also improve our margins.
Absolutely. So you said it, Asad, but just as of now, you would obviously have charted this course to FY29, FY30, and at the capacity, peak capacity that you expect to reach, that is 40% of total revenue. What do you expect economies of scale to bring, efficiencies to bring, and obviously the negative impact, as you've said, of pricing pressure?
Yeah. So over the next 3 years, the idea is to to increase our overall margins from about 23% right now to about 25% over the next 3 to 4 years. So that's the plan, and that is where we are focusing our efforts towards. So more value-added products, more economies of scale coming in. So that's the target that we have over the next few years.
Mr. Daud, good morning. This is Tamanna here. It seems like, and correct me if I'm wrong, the SFN skid assembly segment is the big driver of the business. The volumes have been increasing. That's pushing your order book as well, and that's the big bet from your end. Am I understanding that correctly?
Yes, it's partly correct that SFN skid assemblies will be a very important driver. But we are also seeing a significant growth also coming in from our core business as well, which we are seeing high demand coming in now, especially from US and Europe. And after especially the tariffs being removed from the month of February, we are seeing increasing demand coming in from the US economy as well. So both the core business is growing, and obviously the SFN skid assemblies, which is a new business, also contributing. So that's why we are expecting that this year would be one of the best years for the company.
Great. One of the best years of the company. What's the proportion of revenue right now for SFN skids, and where do you see it going?
So as of last financial year, it was barely 5% of the overall sales. And like I said, for this financial year, we expect it to be around 15 to 20% of the overall sales.
Big jump there. Is it a problem then that your price per unit has come down?
So just wanted to clarify on that. So the price of an SFN skid assemblies actually depends on the layout of the data center, on the layout of every floor. So that may vary, ranging from about 1.5 lakh rupees to almost about 5-6 lakh rupees. So it's a range. So because a smaller skid assembly will obviously have a lower price, and a bigger skid assemblies will have a higher price. So generally we work on an average. Our focus is, so the average remains somewhere around 3 to 3.5. Obviously, the Q3 was the first, quarter where we just started the, this business. And over there, the skid assemblies that we made, although there were only few, they were the large assemblies. But over a period of time, as the demand for data center, because every data center design is different, hence the value for skid assemblies for every
Understood. So
data
if
center
you're
will also be different.
understood, Mr. Daud. So it depends on what the requirement is. If the average right now is 3.31 lakh per assembly or per unit, do you expect it to stay there, or that average price go down?
Well, this average price, like I said, will vary. It may go to 3, it may go to 4 also. So sometimes it may come to 2.5. But we take an average of 3 for our understanding.
What is the current picture looking like? Because obviously in the last 2 quarters you've had a dip down, and you're saying that's because of the kind of business that came in. So correlate that for us. As per the current kind of requirements that you have, what is the average price looking like? Is it still in that 3.5 range?
Yeah, it's in the 3 to 3.5 range.
Okay, so it could dip down from 3.5 to 3 and a little below.
Well, see, like I said, it depends on the design. So if the design changes, the price can go up and down.
Okay. Is there any way you can have more pricing stability in this segment, which by your description is a very fast growing segment? What are the margins like as well over here when you compare to your core business?
So like I said, the margins are in line with our core business right now in terms of the blended margins. But yes, the idea has been, the focus has been on supply right now rather than efficiency. So over a period of the next few years, we'll be focusing on improving the margins in this business as well.
The target margin for the skids business?
Well, right now will be difficult to give a specific number, because right now we're working with one customer which we have exclusive contracts. So it'll be difficult to give specific numbers on that particular. But I would say the overall for the company, we're expecting the margins to increase to about 25% over the next few years.
That's the blended margin. You have just one customer for the skids business right now?
Yeah, right now we are working with this US-based multinational company with which we have an exclusive arrangement, if that is for the India market. And then obviously right now focus is on the India market, but over the next year or so, we'll be focusing internationally as well.
Okay, thank you so much, Mr. Daud, for joining in and answering all of our questions in such detail. Aeroflex in focus this morning. The stock about 0.5% up. Walchand Nagar is the other company that we're talking about. Walchand Nagar Industries plans to boost manufacturing capacity and that boost is coming from the Shanti Bill as well as a custom waiver from the government. Before we get Chirag Doshi in, who's the MD and CEO of the company, Parth is back to set that conversation up for us.
Sure. So let's start with the revenue breakup for Walchand Nagar. Around 39% of the revenue comes from defense, nuclear and aerospace. These are the fast growing segments, while the next 61% comes from their other businesses. The two triggers that you mentioned here are, number one, the Shanti Bill, which has now allowed private companies to build and operate nuclear power plants in India going forward. Now this also has protected the equipment suppliers by restricting their liability for nuclear damages. It has unlocked orders for specialized forgings, heat exchangers and spent fuel systems as well, which benefits companies like Walchand Nagar. Also the custom duty waive off in which the government has waived off the custom duties on all the goods that are imported for nuclear power generation. In February actually government had already extended this exemption for the nuclear power equipment plants until 2035. This policy will boost order visibility for nuclear equipment suppliers. So these are the two main triggers for Walchand Nagar that are triggering that outlook on the company.
Got it. All right. Thanks so much for giving us that update. And Chirag Doshi, Managing Director and Chief Executive Officer of Walchand Nagar Industries, joining us now. Mr. Doshi, as always, thank you so much for taking the time. And you've spoken to us in the recent past when we've tried to highlight the changes that the government is bringing on the policy front. Give us a sense, though, in the near term, what my colleague just highlighted, those are significant tailwinds. Will you see the effects in the financials in the near term, though?
Yeah, good morning, and thank you for having me again on your show. Yeah, I think as far as recent policy changes are concerned, and as far as our financials are concerned, you'll see a short-term uptake, not because of these policy changes, because a lot of the equipment that we've imported for the execution of our orders that we are currently executing have already come with a customs duty exemption. But going forward, I think it's going to have a very big impact and allow us to give better pricing to the independent power producers who want to now get into this business from the private sector.
Okay, what is the so when you say that it's going to improve your costing, right, and so therefore you will pass that on, are you not going to keep any of it? Are you going to pass the entire thing on?
No, of course not. We will. That's a decision that has to be taken once we negotiate with the customers at hand. But I mean, the idea here is, of course, for everyone in the ecosystem to have a win-win situation. I think we have to ensure that the cost of building a nuclear power plant in India continues to go down. We get the benefit as equipment manufacturers of economies of scale, which allow us to then offer better pricing to the end user and the producer of the power. So as long as everyone benefits in the value chain, I think that's the win-win that we all work towards so that the country gets its 100 gigawatt going forward.
Mr. Doshi, good morning. Neeraj here. Is there a sense that this whole nuclear ecosystem in India is at the inflection point of that J curve with a very long steadying period, or trying to proving the metal period and now getting ready to move higher? Do you get that sense, or is it still some time away?
No, I think we're ready. I think there's been enough interactions between all stakeholders in the industry over the last 2-3 months. I think the government has done an incredible job of building the entire ecosystem for us to all scale up. I think Prime Minister Modi's recent visit to Australia, the uranium fuel mining agreement with Australia. I mean, you all know Australia is 28% of the world's uranium mining industry. And for us to lock that in gives every part of the risk mitigation plan to ensure that the industry is ready to scale up, I think has now been fulfilled. We should see that the Shanti rules will be released most definitely in the year 2026. And I think that's exactly what we've been waiting for the now scale up of the industry and private sector getting into it in a large way. So I think we're ready now.
Okay. So, the next question is, therefore, if the capacities within the private sector and select companies like yours are ready to deliver, will the opportunity to deliver come in now? Because when one looks at, for example, it's not just you, but any company per se, there has been a steadiness or a flattish growth curve, right, on top line ever since, let's say, FY17 or sorts, right? It's kind of flat line. So the last 10 years have been flat. Can the next 2 years, 3 years, 5 years, I don't know how much you can foresee and how much time do you need, but can the next 5 years or next 10 years be materially different than what the last 10 years have been, both on the capacity as well as in terms of delivery of financials?
Yeah, it's going to happen. So you're right. And let's look at this at a sort of a 2-year horizon and a 7-8 year horizon. As far as 2-3 years is concerned, you'll see a definite uptake in Valchandaga's performance purely on the nuclear front, purely based on the fact that we are now completing the orders that we got in 2020, 2021, 2022. So 26, 27, 28, you will anyway see a large revenue and profit increase just on the completion of those orders. And as I mentioned, I think on your channel a few months ago, we are anyway doing a fundraise and investing in a brand new nuclear facility that will cater to the orders that we will get over the next 18 months, which should then see an even more incrementally larger revenue and profit from nuclear once the private sector orders kick in over the next 18 to 20 months and our new facility gets built out, I would say around 2028.
How much capital would you raise, Mr. Doshi? And because I also see that the promoters are 31.5%, so you'd be mindful of the dilution that you would have to do as well, right?
Yeah, of course. I think the new plant will cost us about 250 to 300 crores to build out. So we expect to raise about 400 crores in the next fundraise. yes, we are a 32% ownership of the business. How we raise the money is still being discussed, whether the promoters will probably put in some money. But I think while we will continue to be mindful of our shareholding in the business, the larger piece of this play is to ensure that the money comes in and our facilities are ready to cater to the highly increased opportunity that comes from nuclear.
Sorry, by when would you do the fundraise, Mr. Doshi?
We're hoping to do it over the next 3 to 6 months. By December 2026, we should have the money in into the company.
400 crores. Okay, on 1800 crores pre-money, let's say 2200 crores post-money, that's about a 20% dilution you were looking at. Okay, great. Sorry, I just have one follow-up to my earlier questions, then hand it over to Alex. I did hear you say, excuse me, I did hear you say that you believe that both revenues as well as profitability are returning to black and then increasing the profitability. We'll see a meaningful uptick from FY27 to 29. Is there some number in mind, or either an internal target or a CAGR growth number that you would be laying out?
Yeah, we don't give any forward earnings generally, so I won't give you any numbers. But it
how
will
am I
be.
to assume what significant is? Is it 15%? Is it 50%? Is it 75%?
It'll be significant. Let's put it that way. I think let's have this conversation again once March 27 is done, which will give and some capex is in play. It'll give me a much better way to discuss with you once we're kind of back in the black.
Well noted, well noted. Well, we wish you, Mr. Doshi, all the best for that. You've been candid enough. Wishing you all the best for that. Look forward to talking to you post your fundraise and maybe post the capacities coming on stream. All the best.
Great. Thanks for your time.
All right, that's Walchand Nagar Industries. We need to slip into a very quick break. On the other side, a conversation with Tahir Badshah. Stay tuned. You don't want to miss this.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. we are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation.
All right, welcome back. Just look at the recovery in markets. Want to just mark that before we go ahead. And the Nifty definitely off its lows, about 0.4% down right now, but at least above the 24,100 mark right now. What is moving the markets? Look at the Nifty IT. Let's pull up Bank Nifty and let's pull up the mid cap and small cap as well very quickly before we go to specific updates. It's IT that's powering the Nifty, and TCS a big part of that. The Bank Nifty a little muted, but again off its lows of the day and showing a decent recovery there as well. The mid caps as well in the same suit. Just pull up the TCS stock and then let's pull up Adani Green very quickly. Small cap 250 actually dipped into the green, which was great news. TCS about 2.5% up. Like we said, it's powering that Nifty up move and recovery today. Good business updates coming in from an Adani Green. Tahir Badshah, CIO of Invesco Mutual Funds, joining us this morning. Tahir, great to speak with you as always. Are you feeling
as always,
slightly...
good to be on your show as well.
Likewise, I think the feeling's mutual. Are you feeling a little more optimistic right now, considering that we've had a resumption of attacks and warfare, etc., in the Strait of Hormuz since that peace deal and that MOU was signed, but there hasn't been a sharp reaction to it? Is that giving you some comfort?
Well, Tamanna, to begin with, actually, so unfortunately, we've not had a chance to speak in a while, but I think we've been maintaining a positive outlook over the last month or two, especially after the first ceasefire was announced. And we have been of the view that, this is probably going to be somewhat, quick to resolve in some manner or the other. And more importantly, I think from an India standpoint, the West Asia conflict, basically from a crude standpoint, seems to now is now probably behind us. I think during the course of this conflict, it is a couple of things have been probably proven. One is that beyond a particular point, I think the oil market is somewhat fundamentally weak. I mean, when we look at it from a supply demand standpoint, there is a fair bit of supply in the market available, and then there are other avenues of supply which can come about, probably from the OPEC bloc, or maybe even from the point of view of US's ability to pump in more oil. So supply is relatively easy, and then perhaps the oil industry or the oil market has not been able to kind of come to grips with the fact that China can be a fairly important lever in terms of controlling demand. And I think they have probably been on this course of adopting more and more of electric and reducing the consumption of oil over the years. So I think from an India standpoint, therefore, if oil supply demand balance remains positive, then by and large, I think we don't need to worry as much about the West Asia conflict as we probably had to before. So I think that was one level of confidence that we were holding, apart from the fact that for India, incrementally, a few things could start getting better in terms of things like earnings, probably flows, the rupee having meaningfully depreciated now, foreign investors having significantly sold off, and last but not the least, probably a little bit of the slowing as far as the AI trade in the US is concerned. So the mix of all this would probably start being beneficial for India. That is how we had been thinking about things, and I think that is how it has panned out.
Is it giving you confidence to deploy? Have you been a buyer in recent dips, Tahir? And where has that interest come? Which sectors have you found most exciting?
Yes. So I think we've been amongst the flows. That's been the good part of it over the last few months, despite the fact that the markets have been somewhat on the weaker curve. And I think by and large, our deployment strategy has probably not changed meaningfully over the last some time. we've acknowledged the fact that in India at this stage we are still in a somewhat bottom-up market or a somewhat narrower market, which I of course expect will broaden as we go along. But for the next some quarters, it is still going to be somewhat narrow in nature, and markets focus and our focus has been on pockets where we believe relative growth is better. So I think we've been focusing on areas like industrials, especially the power segment. Select consumer discretionary, consumer tech. Healthcare is another area where we have been very positive, and real estate. I think these are some of the domains where we have been incrementally deploying money.
Tahir, hi. Morning, Alex here. So,
morning, Alex.
I'm just wondering specifically your view on financials, because this is a pocket which has borne the brunt of selling, obviously, because they are the most liquid stocks and they have traditionally been held by foreign institutions. But if that is set to dissipate and if the needle moves the other way, or even if it doesn't move, based on what you're seeing in the health of some of these banks and lenders, what is your opinion on the prospects of the sector in the rest of FY27?
So, Alex, so there's one of the sectors which I probably forgot to mention. There's another one where we have been deploying incremental money. And I think one thing, obviously, that is giving us a lot of confidence and where we can pivot around is the fact that credit growth in the system has started to pick up both on the retail as well as on the wholesale side. So that's something which is very encouraging, as we know that the number is gone up to as high as 16, 17 odd percent. We were kind of languishing at single digits credit growth for a fairly a decent period of time. So that's clearly something that is encouraging. And I think alongside which, and that basically, of course, will benefit almost the whole of the banking spectrum. I think some of the banks, particularly some of the regional ones, are probably making the best of it. And also some of the larger private sector banks are also demonstrating fairly strong growth. We are not, at least I would probably not place a lot of, money on the fact that, margins for banks will expand at this stage. We still see deposits being a little bit of an issue. But with the FCNR deposits coming through, if at all that turns out to be a reasonably good number, then I think it will assuage margins. And I think we are looking forward to some decent double-digit earnings growth, mid-double-digit earnings growth, as far as a good crop of the banks is concerned. And last but not the least, I think valuations are still supportive. So to that extent, yes, that's another play that we have been able to kind of put money to work at.
I think that's reflected, Tahir, in the holdings in your FlexiCap fund as well, right? 2 out of the 5 top holdings are the large private sector banks. There's also an aviation company in there. And I'm just wondering, this entire West Asia conflict and the volatility that you've seen in crude oil prices, it's had a bearing on aviation stocks. Not too many, of course, in India to speak about, and so most people know what we're speaking about. But why is this ranking among the top 5? What is your thesis here?
So like we've been positive on aviation through thick and thin, and this has been a positive. If you kind of go back a few pages on the last few months, you will find that even before the conflict, this happened to be one of our important holdings within quite a number of our strategies, including the FlexiCap fund. And this is primarily bearing out of the fact that one, at an aggregate level, we are positive as far as travel and tourism is concerned, and that's part of the discretionary spends, as we all know. I think the other being that obviously the industry structure the way it is, and we're banking on a structure which is fairly consolidated, and I think the position that we have in question has been in a position to kind of hold on to its leadership position despite all the constraints that it has faced over the last some months or quarters. So I think that has been a fundamental thesis that this is something which is a fairly strong moat, and while it has its own bit of volatilities along the way, but I think those are also receding, and that has essentially been our positive stance as far as that position is concerned.
Tahir, Good morning, Neeraj here. Great
Morning,
talking to you,
Neeraj.
obviously.
Same here.
Your tactical calls have been blowout, really. My question really is, as a non-tactical but a slightly more fundamental, longer-term call, is services and services-led businesses looking more sanguine to you, or are you betting on manufacturing in a bigger way? And if so, what within either of those two cohorts looks better to you?
Well, if I were to just do a mental addition of both the services as well as the manufacturing side, I think we are fairly equally balanced between the two of them. I mean, if I were to probably take the whole cohort of banks, which is obviously services, and then if I were to probably sprinkle a little bit of consumer tech, which is also at some level services, healthcare, which is once again services dominant, is obviously a fairly large part of our portfolio and significantly overweight. If I square it off with manufacturing and industrials, I think we have a fairly large position out there as well. We have been overweight, at least a few hundred basis points throughout much of the last 2-3 years. So at one level, I would say that we've not really necessarily moved the tilt from one way to another in the last some time. I don't think we have even thought of it in that manner. If I were to probably in a couple of strategies, even bring in IT services to bear, then I think uh, uh, maybe in a couple of strategies we might probably have a somewhat higher quotient as far as services is concerned. But otherwise, I would like to think that uh, the pockets of I think at one level the way I would answer your question is that it's not just industrials or services black and white. I think for us, we are happy to be in part of industrials which are showing growth, and we are also equally happy to be part of services segments which are demonstrating ahead of system rate of growth. So that's how I would probably kind of think about it.
Got it. The other question, therefore, Tahir, would be, and this is a question that is befuddling everybody, so I don't know what the right answer might be to this, but IT services, right? And whether there is now both valuation comfort as well as, and is that good enough to wager a bet on a sector which has always come out of the doldrums, or do you believe that this time is slightly different, and therefore you want to be underweight, if you will? I don't know whether you're underweight or overweight. I'm just asking, how are you looking at IT services, and especially after the TCS commentary wherein they are actually talking of growth Q2 onwards?
So I think I would say that even I've been fairly befuddled by the sector, as you said, for a long period of time. But I've finally made peace with myself, and what I probably kind of come to think about is that this is at this stage of value proposition, and it needs to fit into that strategy where value is predominant. I think we can't deny the value as far as this sector is concerned. Clearly, from a sector which is relatively less cyclical. I mean, it has its own tendencies, but it still operates in a reasonably narrow band of growth. But more importantly, I think cash flows are very stable and less cyclical, and that is something that we can take comfort in from a valuation standpoint. I think, like as I've highlighted before, we all know that on free cash flow yields, etc., these many of the large enterprises and some of the medium-sized enterprises also are trading at very attractive yields, somewhere in the vicinity of 7 to 8%, and that's something which is a level at which you can take a bet. I think there will always be in value propositions many things which are probably not fully answered. I think we have to live with that, but it's worth taking a bet, especially when cash flows are reasonably visible, strong, and those cash flows are kind of reasonably committed to our shareholders, either in the form of buybacks or dividends. So I think that's how we're playing it. But incrementally, to answer your question, I think you are right that we're also seeing some of the things probably coming to that bend where the narrative will probably become more favorable as like as I said, as the AI narrative kind of becomes a little easier. We all know what the cash flow position is as far as the hyperscalers is concerned. Um, and I think we come into that stage where eventually AI infrastructure will translate to IT services, and that should open up the doors for a somewhat better growth, more towards the higher end of the band compared to earlier. So I think you have to kind of give it time, and hopefully should work out.
So what is the call then, Tahir? Since you've made peace with yourself and you say that eventually it is going to be positive, is now the time to go out and, put that positive outlook in practice when it comes to IT?
Yes. So we, we have, at least like as I said, for our value strategies, we have been overweight the space by about 150 to 100 basis points over the last 4 to 6 months. Not exactly that it has worked out for us for now, but that's how value needs to be played and thought about. So there we are as far as that fund is concerned or that strategy is concerned. So the growth strategies are still, I would say, neutral. And that's the behavior of growth strategies. Obviously, they would look for some more evidence as far as growth is concerned. And I think maybe we are a quarter or two away from that eventuality coming up, either through a combination of the services market itself starting to kind of once again expand and a combination of even base effect as we go along. So I think it's a matter of time as far as adoption of those strategies is concerned. But even there, too, incrementally, I think we are reducing our underweights.
Okay, so that's a clear call. Tahir, thank you so much for coming in and speaking with us. We hope to have you back sooner next time and not have so much gap between our conversations. Tahir Badshah there of Invesco Mutual Funds. Some news coming in. Finance Minister Nirmala Sitharaman is set to meet heads of public sector banks in a short while from now to review mobilization of foreign currency deposits and banks' forex position. Shmi Chaudhary bringing in more details.
Absolutely, the Finance Minister Nirmala Sitharaman will convene a meeting with the heads of public sector banks and financial institutions shortly to review the progress of foreign currency deposit mobilization following the Reserve Bank of India's recent measures to boost the forex inflows. Now, sources tells NDTV Profit that Finance Minister will take stock of banks' foreign exchange position and also review the mobilization of FCNR bank deposit. The meeting will also cover overseas foreign currency bonds as well as external commercial borrowing status with senior official from PSB and financial institution including IDBI Bank expected to attend this crucial meeting. Now, meeting will assess how much traction June 5th measures have received so far and whether they have helped improve the foreign currency mobilization. Now, discussion may also include whether the RBI measure should be extended beyond the September 30th deadline is also very crucial. Review is, of course, we know that comes after a month RBI unveiling a special package aiming at attracting foreign currency inflows. The central bank removed the interest rate ceiling on fresh FCNR deposit with maturity of 3 to 5 years until September 30th. It also introduced a concessional foreign exchange swap facility for bank, lowering the cost of hedging these deposits. Finance Minister is expected to also urge bank to maintain adequate credit flow to productive sector of the economy while reviewing the progress of the forex mobilization initiative. So it's a very, very crucial meeting and we are keeping a close watch and will keep you updated.
Yes, absolutely. Shrimi, thanks so much for getting us those details. And of course, we'll go back to Shrimi to get details of what came through in that meeting once it's done. Let me head across now to my colleague Piyush, who's joining in to tell you what the banking chief executive officers are earning. Of course, they're earning the big bucks, but who earned the biggest bucks? That's the question. Piyush?
Ashok Vaswani, the MD and CEO of Kotak Mahindra Bank, continued being the highest paying domestic banker for the second year in a row. In FY26, Mr. Vaswani earned rupees 17.23 crore in annual pay versus 12.95 crore in the last fiscal. Mr. Vaswani was also granted 3.55 lakh bank stock options for FY26. On the other hand, Mr. Sashidhar Jagdishan, the CEO of country's largest private bank, HDFC Bank, earned around 15.12 crore rupees as annual pay in FY26, which is 19% higher than the last year. Jagdishan also got around 4.28 lakh bank stock option. Very interestingly, Deputy MD of HDFC Bank, Mr. Kaizad Barucha, actually ended up earning more than Mr. Jagdishan. He took home around 17.13 crore rupees for FY26 and was granted around 6.5 lakh bank stock options. Axis Bank MD and CEO Mr. Amitabh Chaudhary, on the other hand, earned around 8.5 crore rupees in FY26, excluding, of course, the bonuses. Among the PSU banks, country's largest, the public sector bank and the largest bank, in fact, State Bank of India chairman earned only rupees 43 lakh in FY26, whereas Bank of Baroda's MD and CEO, Mr. Devadatta Chand, earned around 73 lakh rupees in FY26. PSU Bank, this has been an issue at PSU Bank where the top management does not come anywhere when it's compared with the private peers in terms of annual compensation.
All right, that's nice to know, Piyush. So that's what the top bankers get paid. We're always giving you information that you can use and information that you want to know one way or the other. So markets are looking good as we're wrapping off. I wouldn't say looking great, but at least off its lows. That's important, and hopefully we will see some more improvement as we go through the day. If it does, then at least our analyst from the morning can say we called it, that you will see an improvement. Akush Bora can definitely call it, where he said there's nothing to worry about. Good resilience, I would say, compared to all of the negative news flow over the last couple of days before markets opened this Monday.
Yeah, sticking to the template of last week, which is great news. Let's see. Let's hope this lasts. Let's hope we end in the green. Who knows? But with that, it's a wrap on this leg of India Markets Open. So from Tamanna, Alex and me and the team that put this show together, thanks so much for tuning in. Stay tuned though. Ask Profit is up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबां केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT. respected names, chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin near the $63,000 mark as geopolitical tensions rise. Bitmain chairman Tom Lee predicts Ethereum will unite Wall Street and crypto. Hyundai introduces internal stablecoin transfers. Hyperscale data raises Bitcoin holdings above 1,000 Bitcoins. Well, the Bitcoin is near that $63,000 level mark as the geopolitical tensions rise. But remember, for the long-term crypto investors, Bitcoin and Ether ETFs have snapped their 8-week outflow streak with almost $282 million combined inflows, showing a strong institutional interest. Bitmain chairman Tom Lee has predicted Ethereum will unite Wall Street and crypto. Tom Lee has reaffirmed that Ethereum will play a central role as traditional finance and crypto converge into a single market. Hyundai becomes the first major South Korean company to introduce internal stablecoin transfers, and this initiative builds on a broader shift by companies exploring stablecoins to move money between international operations more efficiently. And lastly, Hyperscale Data, which is a US-listed Bitcoin treasury and an AI data center company, has increased its Bitcoin holdings again, bringing its total reserves to more than 1,000 Bitcoins. And before we wrap, here's a quick check to the changes to crypto prices over the last 24 hours. Largely, we see a little bit of sell-off coming in Bitcoin and Ethereum. Tron is the 5th largest traded crypto. That is doing well. It's up 0.5%, but definitely the support and the resistance ranges have come down for majority of the cryptos. And now time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. Overall, the market outlook, if you look at it, is still cautiously neutral. We can expect a little bit of consolidation at the key levels. And remember that 62,000 to 63,000 level becomes the immediate support range for Bitcoin. But two important things to notice: geopolitical and macro developments, they are remaining the key triggers going ahead. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharjani, and with me as always is Puneet Zaveri, and this is a show that gets all your stock related queries answered. For viewers who are tuning in, just a gentle reminder, you can either give us a call or send us your query on the WhatsApp number that's flashing on your screen up there. While you send us your queries, let's take a quick look as to how the markets are doing. The Nifty 50 right now is hovering around the 24,100 levels. A downtick of around 0.2% is what we're seeing on the Nifty 50, but it's also important to pull up the India VIX because volatility is the answer of the hour, because it's up almost 9%, and that suggests volatility in trade. You also have Bank Nifty, which has come down to those 58,000 levels. Completely flat in trade today, but we'll have to track the levels from here on if it slides below the 58,000 levels. Let's also try to pull up the sector. In fact, let's try to pull up the Nifty 50 heat map first and see as to what are the counters there doing well and what are the counters that continue to be under red. You have TCS topping that chart up 2.7%. So a lot of IT names doing fairly well. HCL Tech also up by about 1.8%. HDFC Life, Power Grid, ONGC are some of the other names that are in the green. But on the flip side, you have Tata Steel, which is taking a knockdown by about 2%. Interglobe Aviation, of course, on the back of rising crude prices. Nestle, Bajaj Finserv, as well as Asian Paints, Sun Pharma, HUL, BEL are some of the other names that are tanking in that range of 1% each. Let's quickly pull up the sectoral heat map and see as to what sectors are doing in trade right now. And a lot of them in the red. You have consumer durable, IT and media, which is slightly in the green. PSU banks also slightly in the green, but FMCG down by about 0.8%. Metal is down by about 0.8% as well. Metal, defense also, and pharma also down by about 0.8 to 0.5% is the range. So the range is also pretty much range bound. Let's also try to pull up the advanced decline ratio and see as to what the broader end of spectrum is doing, because while the mid cap 150 is in the red, the small cap 250 is at least in the green. There you go, and it's been diverging in the last 2 odd hours. We've seen in the last 1 odd hour we've seen it diverged at least thrice now. And that suggests the volatility in the broader end of spectrum as well. The mid cap 150, if you can try to pull that up, down by about 0.14%, and the small cap 250 down by up by about 0.23% at the day's high point. So I think small cap index is something where there is some enthusiasm as we speak. But that's with regards to where the markets go. But let me welcome in our guest for the day, who will be answering all your stock related questions. We're joined by Sameer Dalal of Natwarlal and Sons Stockbrokers and Gaurav Sharma, Vice President and Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start with the first question, which is coming in from Ravi, who's writing us from Mumbai. He's asking about Inox Wind. He's got around he's bought it at the price of 120 rupees, and he wants to know whether to continue to hold this from a long-term perspective or exit this counter. He's bought it at elevated levels. Sameer, what would you recommend him?
Yeah, so I think hold on to the stock. Look, the wind energy space, and especially, the setup that's going to happen over the next few years is going to lead to a great opportunity. There are large players in the space. Yes, he bought it at a little higher level, but if you look at the high the stock has made, it was even higher than that, right? So you're getting it at a decent. Today, if anything, I would say tell them to average on and hold the stock. We have a target price of about 150 in about 18 months period. So that is a good upside. But from 120 to 150, which is his purchase price, the returns are not that phenomenal. So I would suggest averaging out and buying some more because we remain very constructive.
Got that view, Sameer, and welcome to the show. But the next question, between South Indian Bank as well as IDFC First, our viewer Shankar from Bengaluru wants to enter either of those counters right now. Gaurav, good morning, welcome to the show. Would you recommend that on either? Because of course on the fundamental side, you've seen South Indian Bank have a new CEO appointment, and you saw in the last week a run up on that stock. Is the gain still good to enter at this point of time? And either of between South Indian Bank and IDFC First, what's a better stock to enter?
Hi Puneet, very good morning to you. When a comparison in these two stocks has to be done, then I think I'll prefer IDFC First at the moment. The stop loss level is very much suitable from here. From a trading standpoint, somewhere closer to 3 to 6 months. Stop loss of 74 is what is needed. And on the higher side, I'm expecting the stock to give us a breakout and head towards 92, 95 zones.
Okay, all right. So that's the view coming in on IDFC First Bank. I think we've got our first caller for the day. Sanjay is calling us from New Delhi. Sanjay, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning to you, all of you. My question is on Equitas Small Finance Bank. I bought it at 81 rupees 50 paisa, and more than 1.5 years it has been lying over there, no returns. Now it is coming somewhere near to that. So I wanted to know whether we should quit or we can expect some 10-15% gain from here or not.
Okay, Sanjay, just want to get a sense. Did you see the charts while buying it? Did you see the fundamentals? What is it that you saw and bought the stock?
It's more than 1.5 years back. I don't remember now much what did carried me to buy this stock.
No worries. And how long do you have the patience to hold it there?
Another 3 months max.
Another 3 months.
3 months. Another 3 months. Not more than that. Already 1.5 years has been passed away.
Fair. Okay, got your question. Then I'll take this up with Gaurav. Then Gaurav, what are the charts suggesting for Equitas Small Finance Bank? Because it has given a good breakout. Do you think the rally will continue from here on?
Rightly pointed out, Mahima. First of all, very good morning to you. So yes, a breakout is there, and the stock is also holding around and above the breakout point very comfortably. We remain constructive. I see the stock heading towards 90-91 odd zones. So the viewer should hold on to the position to take a stop at 76.
Sorry, because we generally don't take two views on each stock, but Sanjay had a good point, right? He'd been holding for the last 18 months. I think then you started to see those concerns coming in on microfinance, and hence the stock, I think, corrected all the way down till 56 and has recovered back to that level. Should he just hold on because Q1 update was also very strong for the company?
I think he can hold on. But look, the price to book value is trading at about 1.5, which is not so bad. There always remains a risk given the fact that they have a very large exposure to the microfinance side. So track the monsoon. If the monsoon, which has caught up quite nicely, continues this trajectory, I think the microfinance side will not go through more pain. And then you could see a recovery. But if the monsoon wanes off and again you start seeing a deficit, be a little cautious because the agri side, which is the side which does a lot of this microfinancing, could get affected. So keep a watch on that. But fundamentally, I mean, they are in a better position right now than they were about, say, 6-8 months ago. And the stock has already rallied a bit. I think it was about 50-60, somewhere around those levels. But it's already rallied quite a bit.
Fair point, and hopefully, Sanjay, that answers your questions, give you more perspective as to what you could do. But let's stick with the banking space. Canara Bank as well as Union Bank. What's a better pick to enter for the next 1 year? Samir, I think Union had a very weak Q1 update, but Canara, are you feeling good about it because it's corrected also from those highs? What's your view?
Yeah, so Canara is a preferred bet. I didn't think the Union guidance was, the numbers that they gave were that bad. Yes, the street took it a little badly on the chin, but I didn't think they were so bad. But having said that, between them, Canara Bank remains a preferred pick, and the stock has corrected back from 150 odd levels down to this 126, 27 odd levels. It's trading at price to book of about 1. Which is not so bad. And we still believe that given the size of the balance sheet and the growth that remains, plus the expanding NIMs that will start happening now, given the fact that we are not in an interest reduction cycle. So as their borrowings get repriced down, because earlier they cut their lending rates, but the borrowing doesn't get repriced immediately. It takes anywhere between 6 months to 18 months or 2 years for the full repricing to happen. So they'll start benefiting from that. So I think Canara Bank is a good candidate to buy at this point of time.
Okay, Canara Bank is a good candidate to buy at this point, is the view coming in from Sachin. The next one that we have, sorry, so bad. Samir, the next one, in fact, I was reading the viewer query which said Sachin and it came up as Sachin. So sorry, Samir. The next one is coming in, and this is from Ramesh, who's writing us from Bengaluru. He's asking about KPI Green Energy. He's bought 10 shares at the levels of 393 and wants to know whether he can continue to hold or exit. Gaurav, I'll come to you on this one. Very tiny amounts of profit is what he's making. Would you recommend him to continue to hold? Do you think the charts are looking attractive enough, or should he exit?
But the stock is trading in a very narrow range from almost 3 months now. The range is as narrow as 392 on the downside, 410, 414 on the higher side. Uh, Overall, the chart structure is not too great, not too bad either. From a medium to longer term perspective, also the stock has remained in a broader range of say about 15, 20 odd percent. Okay, one can hold on to the position as of now because we don't see a breakdown coming in this stock, at least for now. Take a stop at 380 and hold. Breakout point would be 430. If that stock is able to surpass that mark, then further upwards towards 460, 470 odd levels can be seen in the next couple of months. But as of now, it is clearly sideways.
Got the view, Gaurav. But let's go across to another caller now from Chennai. And Shankar has a stock-related query for us. Shankar, very good morning. Welcome to the show. What's your query?
Very good morning, sir. I bought NTPC shares, 500 shares, at the rate of 377 rupees in 3 months, 3 months back. After my purchase, it went up to 415 rupees. But my target is 470. I expected target is 470. But suddenly it came down for the past 1 month. Still it only trading around 345 to 350 levels. Shall I wait to target for the target of 470 in coming 3 months or 6 months time frame? What is the technical outlook for medium term?
Well, got that view, Shankar. But Gaurav, NTPC as a counter, we don't see too many wild moves, right, in a shorter time period. Would you also recommend that? And what's the 6-month target for the counter, if any?
Rightly said. It is some stock which actually trades in a very subtle manner, not too huge moves witnessed. But of late we have seen reasonable profit taking coming in from 400 plus levels to currently around slightly below 350. As of now, my sense is the stock can further slip towards 335 odd levels. So if that point the viewer, if that level suits, then do maintain a stop at 330, slightly below the support levels, and maintain your position.
Okay, all right. The next one that we have is coming in on Titan. Kanti Bhai said has told that he wants to invest in this counter from a short-term perspective, and he wants your opinion on this, Gaurav. He has around 50,000 rupees to invest into this counter. Would you recommend? Because one, of course, the earnings are going to come soon. Business update was very strong. The stock is also trading above all its key moving averages. But do you think this is the right point to make an entry?
So firstly, maybe I want to start with a disclaimer here. We have recently released a report on Titan with a buy rating on the stock. So therefore, our clients can have position in it. Our bias is clearly on the buy side, especially from a long-term perspective. Since this query is for a short-term perspective, still the stock looks upbeat. The business update have been good. We remain constructive on the stock, so one can consider it for short-term as well.
Any target prices in place?
See, in the immediate near term, say 1 to 2 months, a level close to 4,900, 4,800 odd levels can be seen.
Got that view, Gaurav. But the next one coming in, this one's on Sun Pharma. Viewer, Mana from Mumbai is holding 75 shares at 1729. So currently he's sitting in gains, but he has a very long-term thesis. He wants to hold this counter for the next 5 years. Asking if he wishes to add more, is this a good level? What would you recommend here, Samir? Because we've seen, of course, that the big acquisition announced by the company that will have some impact on increasing the interest cost, I think, over the next few quarters. But do you feel it's a good pick for him, and should he continue to hold for the next few years?
Okay, so from a 5-year perspective, it is definitely a buy, right? Now, the problem is, should he buy at these current levels? I would say wait a little. And why am I saying that is what you rightfully said. The acquisition that they have done is going to mean big amount of funding, which is going to be taken on the balance sheet. Debt is going to go up. Interest, what you rightfully said, is going to go up. Plus the, the merger is not going to be like the easiest thing for them to do. It's going to take a bit of time. But if anything, Dilip Sangvi has proved over the years is that he is excellent at doing these mergers and takeovers and, stabilizing the business and doing well. So I think it will go through a bit of a lull for a little short period, maybe the next 6 months to a year. If you get this stock closer to 1800, it is definitely a buy. But wait a little, just for the simple reason that this acquisition is going to take a bit of time to digest, and you don't want to be getting in a rush, because the upside from 1900 to 2500 or the upside from 1800 to 2500 does make a difference in return percentages. And also the time, if you buy 6 months later, that changes the return percentage. So wait, buy closer to 1800.
Got that view, Samir. But let's go across and take another caller from Hyderabad. And Murli has a stock query for us. Murli, good morning. Welcome to the show. What's your query?
Good morning. Good morning to all the panelists. My question is to Samir sir on SW Solar. I have started buying that since the day I heard that it is moving up, and it has moved up a little bit. I have 12 shares at the present average of 218.
Okay.
So should I add at the current level a little bit more for another couple of years?
Got it. Well,
I had this shares earlier. I sold it with a little profit and I exited totally. Then it started going down. Now I see some momentum in this, and I see that this industry is coming up again.
Got your question, Murli, and a fair one at that as well. But Samir, it's taken about 21 minutes for this question to come through with you as a fundamental guest. So I think it's taken a while. But just on SW Solar, right? I think it's been a while since we've discussed the stock. I think we have also been talking on this show, me and you specifically in the morning edition after a really long time. But on SW Solar, you mentioned that you're positive earlier. You're waiting for some orders to come through. Some of them have, but the stock's not moved too much. Are you still constructive on SW Solar at this point of time?
Yes, Puneet, 21 minutes, so very, very constructive still. In the middle, they got an order which was from overseas, which is not the orders that we've been waiting for, right? Those definitely help the company, because the more they execute based on what they currently have, it kind of helps their operating leverage work out, because they have operating cost of about 320 crores at the head office. And for every project that they do, EPC project, they get a 10% spread. So now they've got a 6,000 crore order. So you're talking of a 600 crore EBITDA getting added onto their profitability over a 2-year period. Of course, not going to happen immediately. It takes a while for these executions, 18 months to happen. But once the Reliance orders come through, which are going to be very sizable. Now, if you remember hearing the Reliance AGM, they talked about setting up 10 gigawatts of capacity every single year. I'm saying even if Sterling and Wilson, which is held 40% by Reliance Industries, or 34 or 35 now because they did a QIP, 35% they get even 25% of those orders. You have the next 5 years where this company really doesn't need to go to the market to get fresh orders. If they get a higher number, the profitability will just look ridiculously high. So it's very constructive, very positive. We are just waiting for Reliance to place its orders. Once we get the clarity on that, I think you'll get a much faster move.
Got it. Okay. Thanks for that comprehensive answer. And now you know, Samir, that we don't make up these queries. So, jokes apart, it's time for a rapid fire round. Try to keep your answers as short as possible. The first one that we have is on VST Industries. Raghunandan Iyer is holding 160 odd shares at the levels of 275. Continue to hold, Gaurav?
No, better to exit right away.
The next one's Sumitomo Chemicals and Lalita from Bengaluru is holding shares at 504. Gaurav, what's your view on the stock?
Looking very good. Hold with a stop at 510. Keep trading the stop loss. Look for targets close to 560, 570 odd levels in the coming 1 to 2 months.
Okay, the next one is on Tamil Nadu Mercantile Bank. Raghav from Hyderabad wants to know if this is a good time to enter for the next 2 years. Samir?
Don't have this bank under coverage, sorry. But banking very positive overall.
Okay. The next one's on from Harsha from Vijayawada on Vari Energies, bought at 3150. Wants to know if it's a good time to continue holding the stock or adding more as well. Gaurav, would you recommend that?
Yes, one can consider this decline is a good opportunity. Keep a little medium to longer term viewpoint and hold on to the stock.
Okay, NTPC Green bought at the levels of 108. 138 shares is what Pawan from Bengaluru is holding. He wants to know, is it a good time to sell? Continue to hold a long-term view on this, Samir?
I would say add on something.
On IOL Chemicals, Gaurav, Mr. Rao from Bengaluru wants to add at the current price for a slightly more longer term. It's seen some wild moves. Would you recommend that?
No, I'll prefer to wait for a dip towards 144, 145 zone to take a fresh entry. Stock has skyrocketed in a very short time.
Okay, ITC from a long-term perspective, is this the right time to enter? Samir, Mahalakshmi is asking this question.
Yeah, so I'm holding the stock and I'm very bullish, but it's been a bit of a disappointment, but my recommendation still remains the fine.
Next one's from Ansh from Australia. He's holding Patanjali at 470. Should he continue to hold for the next 6 months to 12 months, Gaurav?
Not very constructed, better to avoid.
Got it. Well, that was the last question of the rapid fire. Gaurav, we know we have to let you go at this point of time, but thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But Samir, stay on. A lot more stock related queries on the other side after this very short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and the jury lineup, you are truly giving it the right weightage. I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed internally We challenged ourselves, etc. And we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and as we go across and take your stock related queries, if you haven't sent them, you can now on numbers that are flashing on the top of your screen. Also call us for those stock related queries and speak to our guests about them as well. But the recovery on the markets continues. So now we are at above that 24,120 odd mark. It's been a good recovery of almost 100 points from the lows, as we grapple through the geopolitical tensions that have been impacting our markets as well. We are still yet to go back to those highs of 24,400 from where the correction started off last Wednesday. But also pull up the advanced decline ratio to show you that impact as well, because it's been a last couple of weeks about the benchmarks as well, and the advanced decline ratio keeps having that fight between themselves at this point of time. But also the BSE 500 to show some of those gainers today, because there have been a few just died on the back of results, as well as change in management is now up almost 15%. And Kalyan Jewellers just continues to be up. Last week I think up about 30 to 35%. Starting off this week yet again with 8%, and Zensar Tech is the other one. Another very, very strong stock mover at this point of time as well. But we still have Sameer Dalal. Let me also welcome in Ajit Mishra, SVP Research at Religare Broking on the technical side of things. Ajit, very good morning to you, and thanks so much for joining in. Let me go across and take the next question, and this one's a very interesting one coming in from Bipin. His question is on Syrma SGS. He's bought these shares at 242, and he was smart enough to buy 10,000 shares of the counter. So with an investment of 24 lakh rupees, his profit stands at almost 1.19 crore rupees. So Bipin, firstly, good on you. Also, let us know, give us a call, let us know when you bought the stock, what were you looking at. But Sameer, just in terms of such a massive good investment, right? I mean, you need one of those just in like 5 to 10 year time frame, and you're good at this point of time. How are you looking at Syrma? Should Bipin, given the attractive buy price, still continue to hold this counter?
So first of all, congratulations to the person who's bought it. He's done a fantastic job. You've identified a stock better than most of us can. Maybe you can come take our seats. But anyways, having said that, this is one of the few stocks that unfortunately we did not end up covering, and we still don't have under coverage. But I am looking at it, and what I don't like is purely the valuation. Now, yes, you cater to certain sectors that are growing extremely well, but at 80 times there is always a risk. But I don't cover it, so I don't want to tell you what to do. Just keep an eye on the valuation is my advice at the moment.
Also, Sameer, because we've discussed the EMS space in the past, and that almost that 67% return for Syrma in the last 3 months. But you've spoken about the valuations earlier as well. I think you have coverage on Dixon. That's also seen a good move. But just in terms of the space, do you think that the growth is back again? Because I think the Vivo JV also got approved, so a lot of estimates being built in over the next couple of years, 3 years. But do you feel that that high growth area across the space now, for each player, is now back on the anvil?
So in the EMS space, growth has never been an issue, right? The point is the growth rates have come down. So when these companies were much smaller, In size, they were growing all at about 50, 60. I think Dixon has had a couple years of 100% top line growth. The problem is now on these larger sizes, the growth rates will come down. And when growth rates come down, then you can't maintain the same PE ratios because the PEG, which is the second factor that people look at, starts looking elevated. So from that perspective, I'm not denying the fact that the growth will remain, but I just feel valuations will start tapering. So we had a buy on Dixon at about 10,000, 11,000 and had fallen. At 13,500 now it's become a hold. It's not a buy because my returns are not going to be there. Because the growth numbers are not going to be as exceptional as everyone thinks. So that is the only risk that exists in this space.
Okay, all right. That's an interesting take coming on the entire space. And I mean, Bipin should give us a class as to how and when should we choose the stock at the right price. I mean, 1 crore of a profit, more than 1 crore of a profit is not a joke for sure. So kudos most certainly to that, Bipin. The next question that we have is coming in on Vikram Solar. This is a query. Do we have the name? Okay, we don't have the name of the viewer, but he wants to know that from a long-term perspective, is this a good hold? He's got around 189 in quantity, and the 189 is the buying price, and the quantity is 4,000 rupees. Samir, I'll stick with you for this one as well. Vikram Solar, what's the view?
Yeah, I think hold on. You've got it at a very good price. It's trading at about 17 times trailing earnings. And I think if you look at the projections, it's closer to about 14, 15 1 year forward, which is not expensive in any which way. We are very positive on the entire renewable energy space. They cater to from solar panels all the way up to the EPC projects and all of that all told together. We think the opportunity is very good. And Vikram Solar will be one of the other players who will do well in the space. Although I think it's not a very long, it's had a recent listing, but I think the listing came in at a much higher price. So you're getting at 185, you bought it at a damn good price.
Got that view, but let me take another query now, and this one's on Motherson. Our viewers holding shares at 88 rupees and holding almost 1,000 of them, so sitting on good gains yet again. Venkat Ramini wants to know what to do with this counter. Ajit, very good morning to you. How are you looking at, and this one I'm talking about the other Samvardhana Motherson, so let's pull up that counter as well. But how are you looking at it, Ajit, on the chart? Since he's bought at 88, should he continue to hold?
Yeah, good morning, Puneet. So, Puneet, yes, when it comes to the auto ancillary space, some of these stocks, they have done pretty well. And Samvardhana Motherson is quoting closer to its record highs. So, trend looks positive. We are at multi-year highs. Overall, the buoyancy means even during the down days, even during the market correction, we are not seeing any kind of major reaction in the price wise. It's just more of time-wise consolidation that we are seeing at the record highs. Since he has bought it at very lower levels, and in case if the view is, let's say, short to medium term, he can continue to trail his stop losses on rise. Maybe around 120-25 zone is where we have the immediate base for medium term. So with that as a stop loss, he can continue to hold his position.
Got it. Well, let's go across to Bengaluru now, and Mr. Rao, who's dialing in for a stock-related query. Mr. Rao, very good morning to you. What's your query?
Hi, Puneet. This is Rao from Bangalore. And first of all, I want to thanks to the entire NDTV Profit for such a big program you are taking, and you are taking so many questions in 1 hour time. So my question is regarding the Laurus Labs. I am holding 1,200 shares at the rate of 340 from last 4 years. Is it good to hold another 1 to 2 years, or is it good to book the profit?
Well, firstly, Mr. Rao, thanks so much for acknowledging it as well, and we love hearing stock-related queries like this, including yours. You made a massive gain. But just a quick question before I go to Samir on this as well, because you bought it at 340. It was languishing there for quite a bit, and then I've seen handsome gains. What did you see in the counter, sir, at that time?
No, actually, I followed the Chava Sachinarayana's interviews. And actually, it went down to 290 and 280. At the time, again, I followed their phone calls, and I'm pretty much impressed with their CDMO business. So I thought that, okay, let's hold this company. So after that, once it is crosses 700 or 800, I'm very comfortable to hold. So now it is up to almost 1,500. So is it good to hold now, or is it good to put the profit?
Well, Mr. Rao, again, congratulations, because I think that's the correct approach, right, to fundamental investing as well. And Samir, I think you would agree, right, because he looked at the con call, looked at it at an attractive price point, and then has made some handsome gains. Should he still continue to hold? Is the CDMO story yet here to continue?
So the CDMO story is going to continue. I think Laurus will continue to do well. But what's happened is, in this run up, the valuation multiple has gone up far more than what the profits have gone up. So if you look at the historical multiple valuations, it used to trade around I think 16 or 18, and that has moved up to now close to 70 or 72, if I'm not mistaken. Look, I'm not denying the fact that this company will grow at maybe 25-30% on top line, maybe 40% on bottom line for 2 more years. But even if we project that, which we are taking into consideration, and this is on the higher end, so that's not our estimate at this point of time, but let's assume they are able to achieve these numbers, it'll still trade at about 28 or 29 times earnings. And at 28, 29, there's very little room for upside again, because then the growth rates will start tapering down a bit. So from that perspective, I think this is a great time to take some money off the table. If it comes down closer to 1,000 odd levels, then you can probably look at re-entry, buying some more. I'm not saying exit totally, but definitely book some amount of profit, maybe even 50% up to the value of what you're holding.
Okay, all right. So that's the view coming in on Laurus Labs, and of course, significant profits is what Mr. Rao is sitting at. So kudos to that once again. The next one that we have is on the stock that has seen no stopping in the last so many days, right? Kalyan Jewellers is what I'm talking about. We've got 2 queries on Kalyan Jewellers itself. Ajit, I'll take this up with you first. We have Suresh Nair, who's also written us from Hyderabad. His buying price is around 502. The other one that we have, we don't have the name, I think, but his buying price, okay, this is from Saurabh Jain, and his Saurabh Shah, and his buying price is around 343. Both of them, are sitting on profits. Of course, for Saurabh Shah, the profits are quite significant. Considering the charts right now, because we've talked about this, we've seen big buyers entering this counter. Do you think there's more steam left? Of course, there was also a breakout, but from here on, should somebody be cautious, book partial profits, or do you think the rally will continue?
So Mahima, as you've rightly mentioned, that the rise is almost vertical, means 33% in this month so far, and means the way we have seen this recovery happen, maybe close around this previous swing high, 537, 540, the stock might take a breather. And it is going to be a healthy consolidation in case the stock takes a pause. So at least partial profit booking around 530 area is definitely recommended. In the interim, do maintain a trailing stop at 500, since he is already at a decent profit. And otherwise also, in case if it manages to cross that hurdle close around 535, 540 area, then we are set for 600 plus zone. So keep on trading your stop losses on rise, since there's hardly any pause or moment, this consolidation in the stock of late. So there's a possibility that we might see a breather. So 500 on the closing basis should be a strict stop loss, and around 535, 540 partial booking is recommended.
Got that view, Ajit. But the next caller from Hyderabad, and Sai has a stock query for us. Sai, good morning. Welcome back to NDTV Profit. What's your query?
Yeah, good morning. I am willing to buy Sun TV shares for long term. And,
okay.
May I know the targets, and if not, some other company in the same sector.
Okay, got it. Well, Samir, I think there have been a couple of names, right? Sun TV as well as Z that are largely the spaces that you can get exposure to. But would you recommend an entry into either of those?
We've liked Sun TV for a while, given the fact that we think the recent deals that happened in the IPL, where Sun TV has a direct investment in, kind of unlocks value. This is a debt-free company. The TV business continues to grow. But unfortunately, over the last 2 years, if you see, the stock has been more of a value trap in the sense, even though we think that the opportunity for growth is still there in the television space, plus the sports entertainment that they've gotten into, the stock has been a real underperformer. So unless you start seeing traction in the stock, I don't want to go out and say buy. But yes, do we like the company fundamentally? Yes. Do we think valuations are attractive? Yes. It's just that we've been disappointed for quite some time. So I'm going to say avoid Sun TV until you start seeing momentum. And that I think the technical analysts, when they see certain breakouts, might be able to give you the right time to buy into it. As for Z, for us at the moment, it's a avoid. Yes, they've got into the sports space, and that's a very exciting thing. Hopefully, the ad revenues increase. But there's too much going on with the corporate side where the management wants to increase its stake through these preference issues and warrants, and they control the company on 4%. We're not very happy with the way the company is being run, so avoid that one as well.
Okay, all right. The next one that we have is on Kitex Garments. This is from Chinesh, who's writing in, and he wants a technical view on this one, and he wants to know whether this is the right entry point or not. Ajit, what would you recommend on this one?
So Mahima, downside definitely looks capped because the stock has been not doing much from the last couple of months. Means we are hovering around the major averages on the weekly chart, close around 145.46 is where we have spot. But the upside is also missing, means on every uptick close around the medium to long term averages, the stock has been facing resistance. So even if, let's say, the stock prices are okay, but since the tone is still sideways to negative, I would recommend to wait and let the stock surpass this hurdle at 175, 180 decisively for any kind of meaningful up move towards 210, 220 levels. In the coming weeks. So as of now, it's a hold, but for fresh buying, wait for a close above 180 mark for a momentum trade.
Ajit got that view, but the next question, and this one's from Nalamuthu from Chennai, is holding on to L&T at 3477 and possibly bought it in that correction that we saw during the March as well as the war that started at that time. Our viewer and he wants to know about a 3-year view on the stock. Samir, actually, the stock has recovered to its pre-fall, pre-war era, but how are you looking at the next 1 year? A lot of exposure from the Middle East and the crisis continues as well. How are you looking at this year for the company? Because there will be some delays in execution. Will it be suffice to look at domestic growth at this point of time? How are you looking at this counter now?
So you can't look at L&T purely on the domestic growth because the hydrocarbon space, which is a large part of their overall book, is also coming from there, which is the higher. If you look at the margin profiles of the various businesses, hydrocarbon generates the highest margin for them, right? And that business could get affected from the Middle East in the short term. There are certain other infra projects also which they're doing in the Middle East which could get affected. But having said all of that, look, L&T is not purely an infra company. They have a lot of holdings in various other companies. So when you look at the entire sum of the parts, the tech space is going through a bit of a difficult period. The finance, L&T Finance is probably one of the engines that has really, really been firing for them. In fact, that is, I think, probably the lifetime high. LTI Mindtree numbers came in recently, which were not too bad, but nothing phenomenal, and till the tech sector remains in focus, I think. So if I add up all of those parts, plus I look at the construction arm of it, valuations are fair. We think the growth will rebound, not now, but over the next 6 months to a year. So he's got it at a good price of 3,400, which is great. Hold on to it. If it comes closer again to that price, I would say add on more. We remain long-term constructive, but short-term, next 6 months, very difficult to call what's going to happen.
Okay, all right. So that's the view coming in on L&T. The next one that we have is coming in, and this is, we don't get a query on this particular stock every day, but it's an interesting one for sure because it's seen a significant run up. I'm talking about Aditya Infotech. Rajesh from Bengaluru had bought it at the levels of 1500, so very attractive pricing. The stock has doubled from there for him, and he wants to know that he can hold this for another 3 years. Is this a good hold is what he wants to know. Samir, any view on Aditya Infotech?
Sorry, this one we don't have under coverage.
No worries. Ajit, I'll take this up with you. From the low levels, it's not stopped, right? Since what, August 25, it's been on an up move. Do you think the rally will continue from here on, or should he book partial profits?
So Mahima, the move has been almost vertical, and off late from last couple of months, we are seeing a bit of a breather. But while holding up the short-term averages, so that clearly indicates that bulls are still under control. So short-term bias definitely looks positive, and this area close to around 3500, 3520 is where we have the immediate base. So with that as a stop loss, you can continue to stay put. In the next leg, let's say above 3800 mark, 4200, 4300 is something the stock might test.
Got that view, Ajit. But let's go across, take another caller from Chennai, and Abhirami has a stock query for us. Abhirami, very good morning to you. What's your query? Hi, Abhirami, can you hear me? Yeah, I think some very feeble audio, but I'll take the stock-related query on Paradeep Phosphates. She's bought it at 130 odd, asking what she should do with the 50 shares. Ajit, a view?
So Paradeep, we are seeing recovery, Puneet, but it's not very strong or decisive. Though the stock has reclaimed the long-term averages, which is a good sign. We are trying to form a base above that area. So possibly a gradual up move towards 150-55 is there in the card. So with the 130 as a stop loss, he can continue to stay put. And around 155-160, he should review his position again.
Okay, all right. The next one that we have is on the real estate space. This is from Mohammed, who's writing us from Dubai. He says that he's got around 85 shares of Lodha at the levels of 1195 since October 25 and 300 shares of DLF at the levels of 778 since the October 25 times. And he wants to know whether he can continue to both of these and what's the overall outlook on the real estate space. Samir, if not a view on both of these or either of these, anything in particular that you're liking in the space, because it's picked up, right? The space as a whole is doing well.
Absolutely. The space is doing well. Stocks have started moving up again. I think the correction that happened is more so for the fact that the slowdown or the lack of purchase or demand that's happening in the mid-income market. And in fact, even if you look at it at the lower end also, now there's a bit of a slowdown. It's just the high end of the market. So many of these players who are catering to the very high property market deals like Godrej's, like your DLS, Lodhas, who cater to very high property priced projects, which are metro driven, are the ones that are seeing traction. We think that kind of traction will continue, and we believe that eventually even the mid market will start seeing an uptick. It's just a question of how quick can that rebound, or if prices come off a little bit and then suddenly get the rebound. On the stock basis, I think all of them are quite attractively priced. They've no doubt moved up, and there could be a small correction before the further leg rally up. But our top pick in that space at this point of time, purely on valuations, is Embassy Developers. The stock has got butchered out of shape like no one's business. It's like, I think 66 or 65 or something around those levels because of certain case against it. So that is there. Keystone Realities, which just announced its quarterly not numbers, but their preview have said that sales, the pre-sales have fallen a bit, but we believe they will bounce back. So that is another stock attractively priced. Those are the two which we are buying at this moment. And of course, Godrej Property is the one that we hold and we continue to like.
Got it. Let's now start the rapid fire round in this edition of the show. Samir as well as Ajit, you know the drill. First question on Fino Payments Bank. Sai Reddy has been holding these shares at 129. Ajit, is it a good time for him to book profits?
Yeah, at least book partial and trail stop loss at 140.
The next one that we have is on Castrol India. Our viewer has bought 500 shares at levels of 186 4 months back. Continue to hold. Sudhakar from Hyderabad wants to know, Ajit.
Yeah, it's a hold with stick stop at 180.
Next one's on Siemens Energy, bought at 3227 and this is by Dilip. He wants a 2-year view. Samir, stocks definitely run up quite a bit. What's your view?
So it's run up and come off also. 3,800 is down to 3,400. But anyway, having said that, hold on. I think it's a good attractive price. That's fine.
Okay, the next one's on Niva Bupa Insurance. Shrikant from Hyderabad has been holding around 200 shares since IPO. He wants a short-term target on this one. Enough data on the chart, Ajit, to give a view?
So short term looks 95, 96. So with stop at 85, we can continue to stay put.
Next one's on Force Motors. Ajit, our viewer bought shares at 19,950 and a considerable 40 shares. So down almost 2,000 rupees per share now. What's your view on the counter?
So looks oversold, but hardly seeing any sign of reversal yet. So hold with stop loss at 16,500 and review above 20,200 levels.
Okay, the next one is from Vijay, who's writing us from Chennai. He wants a short-term view on Coforge. What are the charts indicating, Ajit?
Possible up move if it crosses 1550. So maintain stop at 1450 and hold.
A smaller counter, Ajit, Jaro Institute of Tech, a recent listing as well, so not too much history, but viewers bought shares at 580. This is Murthy. Wants a view on the stock.
Sorry, I can't comment, Puneet. Don't have enough data to comment.
Okay, the next one's on Transray Lighting. Samir, your view on this one. Rajiv from Delhi has pointed the square for you.
I think one can continue to hold it at best, not a buy yet.
Got the next one between Raj Ratan as well as Walchand Nagar. What's a better pick, Ajit, for a viewer, Shri?
So both are underperforming stock, but Raj Ratan we are seeing the recovery. So in case if you view short term, you can continue to hold with 460 as a stop loss and around 520, 530. Look to book profits.
Okay, the next one is on healthcare stocks. Our viewer wants to know a fresh entry into Kim's or Dr. Reddy's from a long-term perspective makes sense. Either of these, none of these, Samir?
So Dr. Reddy's is something we would recommend if you want to take up between these two. But otherwise, you can look at Sun Pharma closer to 1800. We'll get a long conversation.
Okay.
Got it. The next one's on Okla India. Bought at 594. Of course, operates the well-known brand MTR. But Vikas from Pune wants to know if it's a good time to buy and continue to hold. It's trading at 52-week lows. Samir, any view?
Yeah, I think that you can buy this stock. Look, eventually we think there's going to be a revaluation in this entire space of consumerism, especially, which is this mass consumerism. Okla will do.
Okay, the next one that we have is coming in from Shankar, who's writing us from Bengaluru, asking about Jyoti Labs. 280 shares, bought at the levels of 198. Continue to hold. He's planning to add 250 more shares. Is that recommended for the next 2 months, Ajit?
Underperforming stock, please avoid adding, and for existing also maintain a stop at 190.
Next one's on KSB Pumps, bought by a viewer Rajesh, who's a regular viewer of the show, at 768. Wants a short to medium term outlook here, Ajit. What should he do?
So bias positive. In fact, a possible up move is likely. With stop at 900, he can continue to hold.
Okay, the next one is on Persistent Systems. A good time to buy the stock or wait and watch? Samir, any view?
Wait and watch. In fact, I think for me, it's a little expensive on valuation compared to the rest of the IT pack.
Samir, we took a technical view on Kalyan Jewellers, but I remember that you were very positive on it and you are smiling, so that's good to know. But Kumar from Chennai wants to know a 2-year time frame. Is it still a good buy?
Absolutely. It's still a buy from 2 years, but it's given the fact that it's run up so much, don't buy it right away. Let it come off a bit. I think it's overshot in the short term.
Correct. Well, that was the last query of the show, but Ajit as well as Samir, thanks so much for joining in and helping us solve 50 queries for today. We got quite a few ones as well, but thanks so much to both of you for helping us do that. But viewers, out of time in this edition of Fast Profit, thanks so much for joining in and calling in as well. Do stay tuned. We'll take a lot more stock related queries at 2 p.m. in the afternoon edition of the show.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the nominees.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also what the news is flowing and will it create alpha for your portfolio or not. Today also I have got a very interesting company for you, and the company has been recently announcing a lot of announcements. It's a Bengaluru based infra and energy solutions company. Of course they have BESS as well as telecom segment. That's where they are actually functioning, and they recently announced an MOU with Bondada Group for battery energy storage system. It's a recently listed company. It was listed last year, October 6th, and also from the March lows, if you look at the stock, it's up 53%. Now we're talking about BESS segment, and we have been hearing about these announcements for the last 2 weeks. I'm sure you must have guessed by now. The company in focus is Pace Digitech. This is the company which we are talking about, and everybody's talking about it. Is there a first mover advantage at play for this company? That's what we'll try to understand. But what are the key questions? Why are we getting this company? Recently, large announcements coming in. Street is very bullish on this theme, and this theme itself, including the ancillaries, have picked up. Let's look at the second key question. Why are we calling this company? It's the growth outlook for the lithium products. They have started, a lot of announcements and JVs coming up. Also, the telecom EPC business. Is there a structural change here, or is this a kind of a legacy business? That's what we'll try to understand. Also, important question to be asked to the management includes the progress on the capacity expansions, from that 2.5 gigawatt to 10 gigawatt of BESS. What's the timeline? Is it going in the right time frame or not? Apart from this, another question we will be asking the management would be, what are the risks associated with the BESS or the telecom segment? Because not everything can be rosy, and that's what at KYC we try to give you the other side. Also, international tie-up and JVs on the anvil. If there is any tech kind of or a IP kind of a JV, that is something which the street will be watching out for. And of course, the export potential. What's next? Is it Middle East? Is it Africa? We'll get you all those details in KYC. But these are the important questions to be asked, and Venugopal Rao Madisetti, the chairman and MD, will be answering our queries. But let's try to understand ये कंपनी करता क्या है. एक साल भी नहीं हुआ इसको IPO में आए हुए, लेकिन पेस डिजिटेक न्यूज़ पे न्यूज़ आ रही है. But what's the call company about? Bengaluru based integrated infra and energy solutions company. Now let's divide that into two parts. One is of course the telecom, other is in the energy segment. This is what we talk about, telecom and ICT and the energy segment. Also, let's get into much more details about what happens next. They undertake BESS, battery energy storage systems, design, integration and this deployment. यानी कि पूरे ecosystem पे जो है इनका काम होता है. They have an arm for it. It's called Lineage Power that has made over 260 BESS containers in the last 1 year. That was the recent filing which I picked up. And the telecom segment, they manufacture the telecom power systems, EPC services and O&M. O&M is operation and maintenance
for telecom infra, and yes, India's telecom infra is on a big uprise. But for India, let's look at the industry कितना बड़ा है. BSS additions to scale from 7 gigawatt in FY27 to almost 47 gigawatt by FY32. This is India's overall data, which we getting it from the reports, and also 90% decline is expected in the battery storage costs, which are driven by solar and BSS adoption. So you can understand how big this opportunity is in India. But of course, the company, if you look at the expansion plans, there are 3 important expansion plans. 2 BSS से हैं और एक जो है it's on the container. It's like a fabrication, basically backward integration, and these are the date lines. So FY27 is very much important. Q2, Q3, a lot of things are happening when it comes to Pace Digitech. How does the order book look like? 11,400 odd crore rupees is the order book. 78% comes from the energy segment, and the remaining 22% talk about it comes from the telecom and the ICT segment. Let's get to more details. Recent announcement, 3 of them coming in. MOU with Bondada Group for BSS, that's what we have been talking about. Also, let's pull out the second MOU which has been signed, and this is also from the BSS segment. This is from Onward Solar Power and Kalpa Power. This is what I'm talking about. And interestingly, for lithium, they have tied up with RG Tech. It's a Chinese company for lithium ion battery cells. So a lot of future forward sectors the company is pushing forward, and perhaps that's why there's a lot of interest in the counter, and that's why we have got you this in KYC. But moving on from the recent announcements, what are their key customers? Telecom के धंधे में देखिए BSNL है, Industar है, Bharti Airtel है, and we have all the major players also coming in. We have Reliance Jio, we have BL and Tata Teleservices as well. So one side telecom, other side energy. Look at the larger names. NTPC is there, L&T is there, Bondada Group is there. And if you look at the other key sectors or the companies, this includes Advait Energy, NLC India and Mahagenco as well, and these are large customers. So yeah, revenue visibility or order book visibility ज़्यादा दिखती है यहाँ से. But what may work for the company? That's very much important, and I have made it into 5 concise points so that you don't have to research so much. 10 gigawatt BSS manufacturing capacity they're expanding, and that is where Street is quite bullish on. Large order wins are expected, and it's a strong executable order book. Third important point should be in your radar: Saudi Arabia, Kenya and other African markets. That's where they're trying to expand, and this is of course having a big market potential if you talk about it. They are positioning themselves as a renewable energy platform, and remember, platforms at times do have premium valuations from the market perspective, and the structural demand coming in from renewables, grid, rail and digital infra. These are the key reasons, what it may work for Pace Digitech, but what may not work. Return ratios might be suppressed because you are expanding. तो आपके ROC number में गिरावट देखने वाली है, and I'm going to get you those numbers also in a while. The balance sheet may remain stressed despite IPO coming in. They're reducing their little bit of debt, but nevertheless the execution risk, खास करके EPC business में, that remains there. And of course, if that happens, the receivables might be rising. So that's a little bit of concern in my analysis for Pace Digitech. But nevertheless, right now the street is awarding this counter. But let's understand the KYC ratings on which we'll be judging Pace Digitech. Of course, this includes income statement, balance sheet, cash flow. These are the basics. Return ratio, we'll try to understand what's happening. Remember, companies under expansion, and shareholding street cred. Just from October 6 till now, 1 साल के नीचे इनका time period है, so take things with a pinch of salt. Valuation, we'll try to compare, is it cheap right now also, and the outlook, we'll try to understand what are the important guidances which the company is giving. Let's start with income statement to show you the entire picture, what's happening here, and very strong CAGR growth coming in for revenue, EBITDA, PAT, and this is what you can see on my left hand side, a good growth coming in. Q4 numbers also, if you pull it out, we see a good set of jump coming in, and remember, compare these numbers on a year-on-year basis. Let's look at the margin profile also. Is there any kind of moderation? And yes, there seems to be a little bit of moderation coming in. खर्चा बढ़ रहा है, finance cost भी थोड़ा है, और company expand कर 3. That is why we are seeing that margins actually getting compressed. So this is income statement, largely net I'll still give it positive if I'm looking at a long-term basis. But let's talk about the balance sheet also to give you the entire picture. And a little bit of concern for me definitely comes. Why? I'll tell you that because the borrowing levels, the way company is expanding into BSS, and also a lot of working capital is being used, and that is why a little bit of concern is coming in. So yes, the numbers might look stretched for a couple of years because the way they are expanding, there will be a little bit of stress on the balance sheet, but they try to negate it from the IPO proceeds. So it's a neutral rating right now. And let's move on to the cash flow segment. And remember, these type of businesses, at times the cash flows are lumpiness. There's a B2G exposure also, and that is why you need to take things with a pinch of salt. A big cash flow outflow coming in FY26, a cash flow from net operations 920 crores. EBITDA conversion was pretty decent. Net cash flow still on the positive. So let's take it with a pinch of salt, give it more time to judge the company, and I'm going to give this a neutral rating. Return ratio, that's where the concern is coming in. That's what I was talking about. Company expand करी तो return ratios में pressure तो आएगा. March 24 it's around 53%, and see the downtick coming in. 25 it's 41, and now another fall around that 21%. So this is something which, as per this parameter, is on the negative side. So I'm going to give this a neutral rating. Let's talk about shareholding. What's the story looking like? And remember, the story is very short as of now. Nothing major has changed. FIs, DIs still holding up their positions. DI is actually increasing it, while FI slight decrease coming in, but promoter stake and public stake largely unchanged. So let's give it this a neutral rating. But let's talk about the street cred. From the IPO prices, has the story moved? I mentioned you about the March lows momentum. The stock is up 53%, but to be honest, if you are there from the IPO, nothing much has changed. It's largely flattish or slightly dipping, be it IPO price or listing price. And this year itself around 15% growth has come in. So if people have entered in the dip, congratulations. The ones who are already there in the IPO, right now nothing much has happened, but you need to give it more time if you're a long-term investor. So it's a neutral rating as per my analysis. Valuations, let's have a look. The company is going into future right now. The lowest valuation was 13 times. The peak and current are coming at a 12-month P ratio of 16 times. Largely it seems the way the company is going at it, it's fairly priced right now. IPO के भाव पे जो है आया हुआ है, and valuations do seem attractive a bit if you compare that with the global peers. So I have given this a thumbs up. The last one, but not the least, is the outlook. This is where we look at the numbers, what the company wants. The larger orders is expected in BSS segment, more is expected. That's what the street is also factoring in right now. And looking at the guidance, it's around 3,200 to 3,400 crore rupees for FY27, and this number goes up for FY28. If you could show that number, it's between that 4,000 to 4,200 crore mark. And lastly, another important outlook would be the backward integration at play. Now, how much does that help the margins, and by when does that happen? That's the important question. But as of now, outlook is strong, so I've given this a thumbs up. Let's do a revision of the KYC ratings for Pace Digitech. Where does it stand? Largely, income statement has been good, but return ratios under pressure on expansion. These are neutral points which I'm talking about. On the other hand, if you look at the shareholding and street cred, it's neutral, but the valuations and outlook seem strong. So a total KYC rating finally comes to 5 out of 8. It's largely in line to slight positive for the average numbers which we generally give in KYC. But to take forward this conversation, we'll be joined in by the speaker of the company. He's the CMD, Venugopal Rao Madhisakti. He's the chairman and managing director at Pace Digitech, and he founded this company, the Pace Power Systems, in the year 2007. And interestingly, a very important acquisition was there from the GE Power in 2014, and this is where the BSS comes in, which is the wholly owned arm. So it'll be a very interesting conversation with the management, but stay put with us. This is coming in shortly after the break.
presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision, and a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
Welcome to KYC. We are joined in by Venugopal Rao Madisetti. He is the chairman and MD at Pace Digitech. Good afternoon, Venugopal sir. It's always a pleasure to have you with us at NDTV Profit, and of course, first time coming in KYC also this year. Just wanted to understand, sir, a lot of announcements coming in the BSS segment. How are these announcements looking like? Any key timelines for it? And yes, the order book outlook at least for this segment.
Yeah, good morning. Yes, a lot of announcements are coming because BESS is an evolving subject, and there's a lot of traction to it. And as late as last week, we had participated in India Energy Storage Week. It was an event and exhibition in Delhi. So we had the Minister for Power and the Minister of MOS for the MNRE. They had visited this event and they visited our stalls. And during their speech also, they mentioned that energy storage is very, very critical for the country. And out of that, battery energy storage system is gaining a lot of traction because of the faster implementation as well as the prices that have come down in the last 2-3 years. So that makes battery systems as the prime source of energy storage for the renewable energy now. So yes, we do have a lot of a lot of announcements, a lot of partnerships, a lot of MOUs getting signed. Yeah.
Right. So there is a bullish sentiment coming in, especially on the order outlook front for BSS segment. But I want to get a little bit more into the details about it. There's a lot of capacity expansion at play. Around 2.5 gigawatts of current capacity, it seems like it's there, and you're expanding. Each quarter there's an expansion coming in. I wanted to understand, the timelines which you have given. Are you sticking to that? The expansion will happen as per the timelines, and if yes, by the end of FY27 or beginning of FY28, what will be the overall capacity? And I'm talking about the BSS segment only.
Yeah, the capacity expansion is already in place now. From 2.5, we have expanded to 5, which is just getting commissioned probably in this month itself. And then we are already constructed the factory for the 5 to 10 gigawatt hour capacity. Equipments have been ordered, and the equipment is delivery is expected in October. So yes, before December itself will be 10 gigawatt hour capacity. That will be the biggest operational capacity in the country for the best systems.
So this market definitely becomes very big in the BSS segment, and the street is actually factoring in that you are a first mover advantage, and that's what the company is also claiming. I wanted to understand the lithium product angle also. There was a tie-up with a Chinese company, just after your earnings. I have been tracking that, but how big this market is, and can we expect more of these tie-ups in this segment as well?
Yes, we need that because the lithium is the prime, source or the prime input for this energy storage systems. And unfortunately, as of now, we do not have the cell manufactured in India. So we obviously depend upon the suppliers outside the country. And we need to have a strong supply chain built to have this kind of large capacities to be executed. So keeping that in mind, we are continuously working on strengthening our supply chain. As part of that, we had announced that 3 gigawatt hour from one good supplier after almost 6 months of evaluation by our technical teams and the supply chain teams. We have finalized that. So supply chain becomes very critical for the lithium-ion battery systems because we depend upon them. So obviously, we need to secure our supply chain as well. So we are in that direction, finalizing those partnerships with good suppliers for us.
Let's get our discussion on the telecom segment also. How are the EPC works looking like? How's the order book, client confidence coming in the telecom segment? I presume you also have your operation maintenance work as well. And there's a lot of announcements coming in the telecom infra for India as well. We are at a point of an inflection. But how does your company position yourself in this telecom segment?
In the telecom infrastructure, we are a quite strong player, and we have been in the telecom business right from the beginning. So that's our where I started my journey as an entrepreneur. We do have a healthy order book, and for us, telecom is ongoing. So we generally, we are in the telecom tower side as well as the telecom, the fiber optic cable network side, and we are the end-to-end, network builder. And then we also manage those networks under operations and maintenance contracts. So telecom is doing well, but then telecom cannot give us the kind of target, the plans what we have for our expansions or our revenues. So that's where the energy storage also will complement with telecom, so that both put together give us the required numbers for us. So that's what is we are driving both of them parallelly, and both of them are quite strongly in terms of the complete value chain. Right from the manufacturing of the products to the the projects and then the services. So we are in the complete value chain of these two business verticals.
And Venugopal sir, what about the international tie-ups? Because this requires a lot of IP, this requires a good tech support, and maybe you are also going after some new markets, the exports, especially in the Middle East or Africa. Wanted to understand the international angle to it, the export angle as well as the tie-up or a JV angle.
See, obviously, when we are building large capacity of 10 gigawatt hour capacity, so we do also need to secure the long-term businesses and partnerships. So that's where we are working with there's a good partner based in Saudi Arabia. We already got some sample orders. That market is also quite promising over the next 3 to 5 years. Similarly, we have our office based in Africa, that is Nairobi. So Africa also needs a lot of energy storage because it's again a power-starved continent. So we do look for these areas where we have been already there. The good thing about us is that we have already tasted these markets over the last 15 odd years because of the telecom. So for us, it's natural to expand into the energy sector as well in these regions. So that's where our teams are working in the energy storage as well.
Right, Venugopal sir, I just wanted to understand a little bit about the model of this front. Of course, you have two segments, you have BSS and telco, but what are the risks associated with it? If somebody wants to study, there are some risks like the execution risk, or you could say some technology risk. So if you could just give us that example, from your experience itself, what are the risks associated with this kind of businesses?
The telecom, it's for us it is our more than 20 odd years since we are in this game. So telecom, we do not see any challenge or the risks. We have already gone through this many number of cycles in that segment. Coming to the battery energy storage systems, the risks I would perceive it as that we are depending on China for most of our raw materials at the moment. While we are trying to localize this, other than the cell manufacturing, at least in this year itself, we are working in the direction towards localizing the most of the components. But the cell remains still, kind of, product that we depend upon China. That's a risk for us. So for us to mitigate that risk, obviously we have to get into the cell manufacturing as well. We are also waiting for the government to announce some, kind of incentives or some policy decisions towards, the cell manufacturing in India. For example, when I met the minister last week during this event, we were promised that PLA scheme for the energy storage, grid level energy storage is expected next 10 days. So we obviously will wait for those kind of schemes to come in. And that would encourage us to further do the investments in the cell manufacturing. So that is the most important critical. Today we depend upon somebody. So I think we will have to plug that. Even we seek government support in that direction.
Nicely stated. Thank you very much, Venugopal sir, for taking out your time and giving your views to NDTV Profit at KYC. It's always a pleasure to have you with us. So that's a very interesting take coming in from the management of Pace Digitech. A lot of BSS orders coming in. Of course, there's a B2G exposure also, but a little bit of concerns definitely are there on the execution risk. But the stock has moved up more than 50% from March lows. Interesting, right? For stories like this, keep watching NDTV Profit at KYC. Thank you.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Nifty recovers from opening lows as investors assess global cues, oil volatility and Q1 results. Nifty, though, still is in the red, trades above 24,100 with broader markets moving in tandem with the benchmarks. Avenue Supermarts trades under pressure after operationally weak Q1 results. Metro SSSG impacted due to the quick commerce competition. Company approves 1,000 crore rupees of fundraise via NCDs. Recovery in tech stocks continues as sector emerges as the highest gainer today. TCS leads the pack as Q1 momentum and AI-infused growth plans take center stage. All eyes on Finance Minister Nirmala Sitharaman's meeting with heads of public sector banks. Finance Minister is set to review the mobilization of foreign currency deposits and banks' forex position in the meeting. Hello and welcome. You've tuned into Markets at 12 on this Monday afternoon. I'm Nisha Poddar. And let's take a look at the market. Lots of global cues and weakness there is really weighing on the market when we talk about Nifty 50 as well. But there is quite a bit of recovery from the lows of the earlier part of the session and the opening. So 0.2% down, 24,150 odd levels is where Nifty 50 is really finding comfort in and gone. And in fact, elusive is the figure of 24,500, which it had achieved before the war worries resurfaced. In fact, taking a look at all the other aspects as well, the broader markets are also in tandem with the key indices today. So both Sensex and Nifty losing some sheen, and so is the broader market. When we talk about the overall market position, what is really impacting the market and the headline there, it is clearly coming out from the earnings with some of the big boys of the IT sector really giving out their numbers. There is some confidence building in that particular sector. So therefore, IT is the one sector which is showing huge amount of momentum. But remember, war worries, earnings, as well as monsoon season, all these three are important aspects to really watch out for. Let me welcome on the show Nishal Maheshwari, market expert. Nishal, what do you make of the market momentum and how with the war worries as well as crude prices really elevating once again slightly, both putting some pressure on Indian equity market?
Afternoon, Nisha. Afternoon to you and your viewers. So I think one thing is becoming clearer, basically, that repeated violations of the MOU are having lesser and lesser impact on the markets world over, basically both on the oil as well as on the stock markets. So if you really look at it, basically, I think there's been a serious violation in the last 2 or 3 days, but oil has not run away to $100. It's still at around 80. And world markets are down by 0.5% to 1% across the world. So I think market is world over are looking to digest this because at the core of it, I believe that the world market believes that both the parties involved basically doesn't have a stomach for long fights, and that's why they are all looking towards saying that there is going to be an early resolution. So I think that's the positive side you should look at from the market.
Right. Hold on to your thought, Nishchal. Naveen Mathur, the Director, Commodity Currency and Gift City IFSC of Anand Rathi, is also here to talk about the money market. Naveen, welcome to the show. So, of course, along with the equity market, there is pressure building on the rupee market as well. How do you sense the trajectory of rupee for today?
Thank you very much, Nisha, and good afternoon to you. Thank you for having me on this show. So we did saw rupee, I would say, depreciating to an extent of 96.96 on the 20th of May. That was the lowest level of the rupee against the dollar. Now, post that, there are certain developments which were kind of positive in terms of the Middle East crisis, which is continuing even today since the early, I would say, March or the last week of February onwards. I would say that the rupee, therefore, is getting pressure, building up the pressure again because of the uncertainties. At the same time, Nisha, the dollar index also has started gaining strength. So means if you see today, the dollar index is at around 101.1011. And the rupee currently, as you're showing on the screen itself, is 95.83 or so. So I think I agree to an extent that it is that now the effect on the war or the effect of the war on the rupee or particularly oil across the global markets not having too much of the bearing as it was a few weeks or a month earlier. But I think definitely the rupee would continue because of the dollar index would continue to be under pressure up till unless we don't see respite or the uncertainties which are looming across on this conflict, particularly somehow being settled. Even the yields have come up well, and means 0.34 on the upside. We are seeing 10 years bond yields. So I think the overall trend remains to an extent bearish for rupee, which is depreciation against the dollar. But I don't think so that the rupee would touch again those kind of levels which we saw in the third week of May when the rupee touched around 97 in the markets against the dollar. Nisha.
That's right. In fact, rupee depreciation will give a little more heft or at least some good news for the IT sector, which is coming out with its results in this particular season. And the market is now finding a little bit of confidence coming back in the IT sector. Nishchal, what will be your call from whatever we have heard of some of the results coming out so far?
So I think a few of these results are largely, I think IT results are out. And one thing is clear, basically, that the uncertainty continues. So nobody is clear, basically, how this whole thing is going to impact the AI thing. But yes, I think there has been a good recovery as far as IT is concerned. And I think that is because the stocks were beaten down quite a bit. And there is a good trading bounce which is happening. I wouldn't want to actually do a investment buying kind of a thing, basically, as far as IT is concerned. But I think a trading bet is definitely on.
All right, so trading bet is what, Nishal, very interesting, but a lot of market participants are calling it a trading bet on the IT sector with the kind of volatility that is being seen and not yet sure about the long-term potential. Probably this earnings will give us some sense. But Naveen Mathur, when we talk about the rupee movement, it's extremely critical at this point for our own economy, and government has taken several measures to arrest the fall of rupee. But as soon as the war worries creeped in and dollar got elevated by another $10 or so, soon enough rupee's sharp depreciation has been seen, and 96.35 is not way too far away with the kind of depreciation and softness we have taken in rupee. What is the in-house view? You earlier said that we won't reach the earlier levels, low levels of May, but what's the in-house view on the current softness of rupee and the levels?
Nisha, very great question. I think the government and the RBI have taken, I think, many steps in the last couple of months to hold on to the rupee depreciation. So the internal dynamics for the country as such are pretty much positive. But whatever is impacting the rupee is largely the external vulnerabilities, which includes the FPI outflow. So we have seen in 2025 calendar year, the FPI has actually took about $19 billion from the equity and the debt markets. At the same time, we also and we are just half a year on this particular 2026 on the calendar year side. And there's been about, I would say, around $23 to $24 billion worth of outflow from the markets on the equity and the debt by the FPIs. So that's one constraint area which is again continuing to put a pressure on the rupee. In spite that the RBI and the government has taken some kind of very strong measures, the big move, the big save was the FCNR incentives. All those things were quite positive, but it's just that the external vulnerabilities of the markets on rupee is holding up and not giving the respite. Even the RBI forex reserves, which touched, I think, for 728 on the week ending February 27th, $728 billion, are now at around 674 for the week ending 3rd of July. So I would say that the RBI has utilized the arsenal. The RBI has come out with strong moves to hold the rupee depreciation against the dollar. But I don't think so. The levels of 97 seem to be something happening in near future. So it means, as what Nishal was telling us, means we are kind of getting through with this Middle East tension. And I think the rupee would stabilize to around 95, 96 levels largely. And the forex reserves, as you're rightly showing on the screen itself, has jumped by around $7 billion. So I think we are in a good place to be where we are. And the rupee should not be beyond 96 at this particular point of time. 96.50 would be the outermost limit against the dollar for the rupee depreciation.
All right, 96.50 that is still a new low that will be created at that level, Naveen. Nishal, when we look at the overall market and the banking update also coming in, and a lot of churn when we talk about the banking leadership. As Naveen, you have something to say?
Yeah, Nisha, I have something. I'm saying the rupee did touch a low of 96.96, so almost 97. So 96.50 would not be a new low, Nisha. Means 96 was 20th of May when the rupee did touched an all-time low.
All right, so 97 levels is not what we are looking at, and way higher than that could be a level that could be seen in rupee depreciation at the current moment, but not touching the record lows. Thanks, Naveen, for that. Now, Nishal, when we talk about the overall banking sector, and you have in the past stated that whenever the markets are a little turbulent and little jittery, banks could be a good play for long-term investment. What's your view now in terms of a much shorter time horizon, given the kind of volatility that we are seeing?
So my view continues to remain the same, Nisha. Actually, after the recent updates which the banks have come out with, though none of them have declared results, but they have talked about their what kind of growth they have on the credit side and what kind of credit charges. I think it only reiterates what I've been saying, basically, that I think the next 2 quarters are going to be very good for banks. This quarter, I think it should be north of 14 to 15% kind of a credit growth across the industry, and some of the banks are going to do much better. And then next quarter, basically, the FCNR benefits will come. So I see at least for 2 quarters a very strong performance by the banks.
All right, so banks are one area which you are bullish on. Which are the other themes and sectors that you're looking at? And with the monsoon season play out, is there a change in the strategy or any new themes that you're identifying?
So, yes, I think with monsoon now spreading across the country, basically, I do understand basically it's going to be below expectation. But with this spread out, basically, I see that the consumption theme is coming back, and consumption stocks basically have been pretty low and lying. I think that way, basically, it could be a good trading bet as far as consumption stocks are concerned. And I think there you can look at both FMCG as well as autos. The other longer term bet still remains to be energy. And you can play it through various themes, basically, in case of energy, whether it is solar, whether it is battery, which is the EV theme, and through the transformer, which is again the electricity distribution. So I think energy as a theme is a very strong story, basically, for the next 2-3 years at least.
All right. So energy theme, yes, Nishal, and there are new sectors and new avenues also that could really crop up with different alternative sources of energy as well coming in. But when we talk about the overall market momentum, how do you see this particular trajectory with Nifty 50 being at subdued levels, not going back to 24,500 plus levels at this particular point?
So you are asking me basically the energy vis-a-vis Nifty 50?
No, the overall outlook on Nifty 50.
So I continue to believe basically that 24,500, 24,600 is where I think mostly the bottom is of this market. I do not see it going below 23 again, whatever happens in the Middle East. And upside could be obviously much higher from where we are today.
All right. Thank you so much, Nishal, for joining in and giving your views on the overall market. Market is a little under pressure in the trading session today. And of course, it's the crude movement as well as the rupee movement also on the softer side. But remember that earnings season is in a big swing right now, and Avenue Supermarts is under pressure today after operationally weak Q1 results. In fact, Mahima is here to explain what's not really working for the company and what are the brokerages really penciling in on their numbers. Tell us, Mahima.
Right, Nisha. So as you rightly mentioned, overall the numbers were largely in line with what the street was expecting, but operationally, they've been on a weaker front. In terms of Metro City same-store sales growth, that's been impacted on account of the competition that it's getting from quick commerce. Plus, the profit has lagged revenue growth in the last 10 out of 13 odd quarters. So that's not a very good sign. DMart Ready growth has also been surprising because the expectation, and in the last couple of quarters also it did a growth of around 20 odd percent, but this time it's just done a growth of around 5.5%. So that's concerning. Store expansion is going to happen rigorously from here on, but that's going to be on account of debt. 1,000 crore via NCD is what the company has announced, and management commentary also alludes to the fact that higher competition coming in from quick commerce is something that's impacting the overall performance as well. In terms of operational highlights, around 19% store addition happened. So growth in terms of store addition was at 19%, 1.5% growth in terms of bill size, but 5.4% contraction in bill cuts happened, and revenue per square feet contracted by around 3 odd percent, which again is not a very healthy metric. In terms of what brokerages are making of this, in terms of Morgan Stanley, they've maintained overweight with a target price of 5083. What they're saying is that weak top line growth could give a limited near-term upside, but they remain overweight due to its large total addressable market and the business model strengths. Bernstein has maintained outperform with a target price of 5,000. They're saying that they expect store expansion to remain 80 plus. They expect cost curve to become supportive over the next 2 to 3 quarters, and DMart ready, according to them, is a distraction and not a distinction, and that's how investors should view it as. And lastly, Citi has maintained sell and cut the target price to 3,400 from 3,650 earlier. What they're saying is that they've also cut down the revenue estimates and the EPS estimates for FY27 to 29, and they seek better entry point and valuation for a better risk to reward ratio, because it seems unfavorable right now. So this is the overall view coming in, of course, with regards to how the earnings fared for Avenue Supermarts and what the brokerage take is.
All right. Thank you so much, Mahima, for giving all those important details. And the stock of Avenue Supermarts is down 2%. Remember, a downgrade in some sense, looking at the quick commerce competition that is really coming in, which looks like has made Avenue Supermarts at these valuations look expensive. All right. Moving on, HDFC Bank, and that is also down by 0.67% in trade today, has reiterated that its commitment to high standards of corporate governance in its annual report. In fact, the bank said that independent external legal firms reviewed the allegations made by the former chairman and found them to be unsubstantiated after a detailed review. In fact, Piyush has all the details on what the company HDFC Bank has really communicated in their annual report about the leadership aspects and the change in the chairman. Piyush, tell us.
That is right. Every year, the bank comes out with its annual report where they talk about the investments being made in tech, the people force that they are building up, the business plans that the bank has. But this time, what caught the eye of us watchers was that there was a separate subhead, corporate event, it was termed as. And under that subhead, Mr. Shashidhar Jagdishan, who's the MD and CEO, reiterated, how the whole process went through after former chairman of the bank, Mr. Atanu Chakraborty, resigned, citing certain differences between the business practices at the bank and his own personal values. HDFC Bank, Mr. Jagdishan said, took immediate note of his action, immediately appointed an two external legal firm to assess whether the statement that he has made in his resignation letter were substantiated. The bank also formed a committee of independent directors to assess, to review the overall findings that these external firms give to them. And eventually, when the report came out, the report did not find, that Mr. Chakraborty's allegations were substantiated. This whole process, Mr. Jagdishan said, was meticulous with voluminous minutes that were reviewed. The exchange exchange of information that happened. He himself, along with head of several departments, were interviewed by these law firms. So the whole process was very meticulous. Mr. Jagdishan mentioned, and he said that the corporate governance standard, like you mentioned, remain highest at HDFC Bank. The former interim chairman, Mr. K.K. Mistry, also alluded to the same, saying that in his capacity as interim part chair, he can guarantee that the corporate governance level at the bank were the highest. Other few noticeable factors in the annual report.
All right. Thank you so much, Piyush, for all those details. Now, Finance Minister Nirmala Sitharaman is meeting the heads of public sector banks to review the mobilization of foreign currency deposits and banks' forex position. Now, the Finance Minister may also be deliberating on extending RBI's forex support measures beyond September 30th, along with reviewing the FCNRB deposit mobilization under RBI's special forex window. In fact, the banks are also expected to brief the finance minister on the traction in overseas foreign currency bonds, external commercial borrowings, and looking that the way rupee is again depreciating, this could be an important aspect to watch out from. So an important meeting there by Finance Minister and the heads of PSU banks. So keep an eye out on that. Let's take it straight to the IT sector. You know, earnings momentum really building. HCL Tech, the big boy in the IT space, is set to announce its Q1 numbers today. And Jasmeet is here on what the street is really penciling in terms of the numbers. The stock is exuberant ahead of the numbers, Jasmeet.
Nisha, thank you for that. As rightly said, we are expecting a slightly negative to a flattish quarter for HCL Tech. Now, in terms of the key number, we expect the revenue to see an uptick of 1.6%, while the margins could rise by about 40 basis points. And this uptick comes on the back of that low base which we saw in the previous quarter. Now, in terms of net profit, we are expecting an uptick of nearly 2.3%. If you look at the key things that will be in focus for this particular quarter is the CC growth. We are estimating a negative 1.5 to a positive 0.8% of CC growth in this quarter, while apart from that, the guidance becomes a key in this quarter as a lot of brokerages are expecting the company to cut its upper end of guidance on the back of that slowdown of the deal wins. Now, if you look at the overall commentary in the Q4, management did note the overall impact coming in from the slowing down of deals, and few of the client issues which it faced in Q4 could continue in the Q1 as well. So that's the reason why there might be some impact in terms of the guidance which the company gives in the Q1 for the entire year. If you look at the other key aspect, the focus would be on the margins, which are expected to improve on the back of that favorable Forex as well as lower restructuring cost in this quarter. And also on the deal win side will be something that will be in focus. We're estimating a deal win between $2.2 to $2.6 billion for this current quarter. If you look at the overall guidance, management has given a guidance of 1 to 4% in the Q4 of FY26 for the complete year of FY27. Now, in terms of few other commentaries or brokerages are penciling in for the guidance, where we see Nuvama expects an unchanged guidance for FY27 and expects the same range to stay, while JP Morgan expects company to cut its upper end of guidance from earlier 1.5 to 4.5 to a new range of 1 to 3.5.
All right, Jasmeet, all eyes would be on that big set of numbers today. So that was the heads up. And the entire IT pack is really doing well today in trade. In fact, the top performer in terms of contribution to Nifty 50. So let's take a look at the market trajectory also at this particular time. And while Nifty 50 has really found comfort above the 24,150 odd levels, that momentum is slightly gaining pace at the current moment. So the recovery has been very, very stable. IT is really helping the pack when it comes to Nifty 50. But if we really take a look at the mid-cap universe also, it is under pressure in the same momentum as the key indices today, 0.24% down when we talk about mid-cap 100. But some of the counters which are really adding the momentum and giving strength to the mid-cap universe are also coming in from consumption as well as tech sector with Kalyan Jewelry as well as Tata Technologies really as some of the top gainers. With that, out of time on this particular edition of Markets at 12, but keep it with NDTV Profit. Thank you so much for tuning in.
Superstar Stocks of the Day, presented by Tata Azura. Har Raaste Ka Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating and they are keen to create value. And to me, that gives me the optimism of what India can become.
Hello and welcome to NDTV Profit. You're watching trending stocks from NDTV Profit Suzlon Studio. I'm Hiral Datia and with me is Sharad Dubey. You know, an interesting day of trade because the kind of jitters that we are feeling when you're talking about the Strait of Hormuz, which is keeping the markets on a tender hook as well in terms of today's session. If you pull up Nifty 50 on the screens as well, along with Bank Nifty, you'll see what we're talking about right now. Let's just pull up that one on the screens and then we'll go to Shara to take us what's actually happening. The recovery that's coming from the opening lows right now. Spectacular. We're just now 30 points down in trade as we speak. 24,177 is what you're tracking. In fact, let's head across to Sharad to give us more in terms of factors that we should be watching out for and what are the kind of trends that he's picking up. Sharad, good afternoon. What are you picking up so far?
Good afternoon and welcome back, Hiral. And very nice kind of, gap down we had and a recovery. You look at it, we are almost there. We could say that we are about to turn green, but the question is, will it sustain or not? And I'll get you those points. FI buying is also good. Over last 6 sessions, 5 of them buying is there in the cash market. Let's just have a look at Nifty Bank also to see the good recovery coming in. Of course, the technical setup for Nifty looks a little bit better than Nifty Bank, but nevertheless, the recovery is at play after what we had seen in the gap down opening. Concerns are especially coming in on the Asian markets. But let's look at the key factors to watch. And yes, today is one of the most important news is the closure of the Strait of Hormuz. That's what Iran has stated. The recovery is being seen from the gap down opening, but the question remains is, will it sustain or not? Let's look at the key support levels right now. There's the range is, I've given a bit slightly larger range for both Nifty and Nifty Bank, if you could understand the entire support range coming in. And also let's look at the sectors, especially the IT sector. That is where we are seeing a good buying happening. Some brokerages are turning bullish. TCS is up almost 6 6% in the day's trade. So we'll definitely be looking at it. But yes, as of now, the risk on sentiment is still, kind of, prevailing. The crude has risen. So a little bit of concern is definitely there. A sharp cut in Kospi and Nikkei, and that's how they have ended. So concerns are definitely there. But India seems slightly insulated. Rupee has weakened. Yields have risen. That's an important point to track if you're getting the macros in between. India VIX remains elevated, so a little bit of concern is there, but nevertheless a recovery is at play today. Two important data to be tracked from the macro perspective will be very much important, and earnings also. Look at it, all three stocks are doing well. HCL Tech ahead of the earnings is up 5%, ICICI Pro MC up 3%, and Bajaj Consumer also, and this is a very important and a positive thing to see for the major earnings today. So we'll be focusing on the earnings today, Hiral, but nevertheless the benchmark indices are showing a good recovery.
Absolutely. In fact, let's understand which are the stocks which are actually pulling Nifty 50 higher. If we can just have the heat map on Nifty 50 up on the screens as well as we speak. And then we look at the sectoral heat map as well to understand the kind of sectors, because IT is seeing buying coming in at lower levels. There you go. TCS, you have HCL Tech ahead of numbers, Tech Mahindra, Infosys, Wipro, all of these counters which are trading in the positive. What's actually under pressure is a Tata Steel from the metal pack. Indigo, for obvious reasons, you have crude prices which have gone beyond that $79 per barrel mark, and that is what is having an impact. Or when you talk about an Indigo as well, JSW Steel, Tata Consumer, a few of the auto names like Maruti also under pressure, Reliance Industries, another one which is down in trade. Let's look at the sectoral heat map as we speak, because if you talk about individual sectors as well, what's holding up today? IT, consumer durables, media. These are the ones which are seeing some smart gains. In fact, IT 4.5% is the kind of up move, but there is profit booking coming in on real estate, and this is post the numbers that have started to come in for the first quarter. Apart from that, in terms of other sectors, metals we did speak about, consumer durables is another one. The PSU Bank Index also trading under pressure. But let's quickly look at the watch list at 12:30 p.m. on NDTV Profit. TCS stock is up in trade. Kotak has added TCS to its large cap model portfolio, and they've done a deal as well. Just Dial is another one which is in focus in today's session, and that is on the back of a strong Q1. The revenues have actually seen a growth of around 10% this time around. The stock seeing some smart moves as well. 63 Moons is another one, 9.5% up move coming in on a 63 Moons. It's on the strong Q1 update. The order book also now stands at around 288 odd crores. Epigrel, the biggest gains that stock has seen in the last 2 months. You have Rain Industries as well. The stock has hit a new 52-week high. Avenue Supermarts under pressure, and it's only because of the slower top line growth. LTM has reported numbers, but the constant currency growth is the lowest in 4 quarters. However, the first quarter has been in line, and that's what the street is reading into. L&T Finance as well as reported numbers, but the profits are above the street estimates, up almost 29%. Aurobindo Pharma continues to trade under pressure, and this is on the back of the reiteration by Macquarie as an underperform. The concerns that a city has also spotted. However, sources do tell NDTV Profit that things are on track basis the guidance that the management had given in the past conference calls, and we will get you an update on that. NMDC has gone ahead and cut iron ore prices, and that's the reason why you're seeing pressure and crude price impact coming in. And Indigo along with OMCs from your HPCL, BPCL, all of them slightly trading under pressure. In consonance to that, names like ONGC which are up in trade. Aptus Value Housing Finance, Morgan Stanley has an overweight, and they've gone ahead and hiked the target price, so that stock is in focus in terms of today's day of trade. Canfin Homes, that stock is up around 0.5% as we speak, and that's again on a Morgan Stanley overweight with a target price hike and a Home First Finance. Adani Green Energy, the operational capacity is up around 27% on a year-on-year basis. You have Avantel again on the back of the business update, the earnings 3% up move coming in there. Tata Steel trading under pressure, and that's because the Dutch unit is facing criminal summons, and that's the reason why you're seeing that kind of downtick coming in there. The restructuring announcement that has come in from an HEG, that stock is up, and a Balrampur Chini, where HDFC Securities has a target price of 622 to 650. The stock is up nearly 4 to 5% in trade. So that's what the watch list looking like at 12:30 p.m. However, Sharad, let's look at the rapid fire with our guest as well. We have Nilesh Jain from Centrum 5 joining in.
Thanks a lot, Hiral, for that. Good afternoon, Nilesh. It's always a pleasure to have you with us. We'll start a rapid fire round, and we're discussing Epigrel here. Very good move coming in, and the charts also good volumes coming in. It's a good time to have a trade in this counter, Nilesh.
Well, Sharad, I think it's too late. The counter has already surged today close to 12%, so the risk and reward is not looking favorable. It's an avoid taking any fresh entry. But yes, if somebody is already holding the long position, can drive this momentum up to 1140, 1200 by keeping a trading stop loss at 1065.
Right, Nilesh, your views on Rain Industries, at least on the monthly charts, how things looking like? Good up move already we have seen in this counter, but do you think this will sustain going ahead, or you suggest a little bit of profit booking?
Well, Sharad, if you see the broader structure, the counter has recently given a major breakout from a falling channel. So I think this is likely to be a sustainable move, and we may see a move towards 230, 250 on the upside. So by keeping a stop loss below 198, one can go long at current level and can be added on declines as well.
Right, and Street seems quite bullish on L&T Finance, especially on their numbers also. But what do the charts suggest? What level should one track?
This particular counter has been one of the outperformer within the NBFC space, and the structure still looks strong for 360, 370 levels on the upside. So by keeping a stop loss below 305, this particular counter can also be added on dip.
Right, let's get in two stocks, Canfin Homes and Home First Finance. Out of these two stocks, Nilesh, which one looks much more interesting, and if there is a trade to be made here?
Well, out of these two, Home First is comparatively looking better because the counter has today given a good breakout from a long consolidation zone, and yes, looks like it is heading towards 1300 to 1350 levels on the upside. So yes, out of these two, Home First can be bought on decline by keeping a stop loss below 1230.
Right, and just a question on NMDC. Is this a consolidation candidate, or is there a trade to be made?
Well, it is at a crucial level right now. If it breaks below 83, then I think it may fall further towards 81 and 79 on the lower side. So it's kind of a wait and watch for this particular counter. If you spot any reversal above 85, then yes, a pullback trade can be seen.
Right, the next stock is Adani Green Energy, a very strong operational update coming in the first quarter. Your views on it?
Well, it's a momentum play. We have already seen a very strong move in the last couple of months, all the way from 800 to almost 1600 kind of levels we have seen. So it has already doubled in last 2 months, but yes, there could be possibility we may see a follow-up on the upside towards 1600 to 1650.
Right, so of course there is a standard disclaimer also for Adani Green Energy, which we would like to point out and show it on the screen. And also I would like to point out another stock, that is Aventel. A very strong set of numbers coming in operationally, and it seems like a volume based buying has started in this counter. Nilesh, your views on that?
Well, good move we have seen today, but some bit of profit taking is also we are witnessing right now. But overall, the broader setup looks positive. By keeping a stop loss below 176, one can go long at current level for upside move towards 205 to 210 in the near term.
Alright, so that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Thanks for that, Sharad. Let's pull up that one on the screens and see what's actually trending on Google, because the names usually are absolutely very interesting to watch out for. If you can just have that one on the screens. Cupid, the stock is down. ONGC is up 1%, and that's on the back of crude climbing above that $79 per barrel mark. Dixon Technologies as well as trending, and this is on the back of an Investec note that has come in. So interesting names there. Nilesh, if you have to look at Cupid, ONGC, Dixon Tech, any strength that you see on the charts, and specifically, for an ONGC as well, would it be right to say that sell on rally could be a kind of cue that one should look at?
ONGC, as far as this particular counter is concerned, on the back of crude oil prices have started moving higher, so we are witnessing a kind of a replica in ONGC as well. A small positive development we have seen, the counter has reclaimed its 21-day moving average, and there could be possibility of a follow-up move towards 255 to 260. So it's a pullback candidate. It's too early to call it as a sell price kind of a structure, but yes, just in case if it breaks below 240, yes, then it can be a short candidate. But as of now, the pullback is likely to continue. And apart from that, other names that you have mentioned, QP, Dixon. So out of that, Dixon is comparatively looking better because EMS space have started performing in last couple of trading sessions. So Dixon, we may see a follow-up move towards 14,000 to 40,200 by keeping a stop loss below 30,000. Yes, this particular counter can be bought.
Okay, so that's with regards to the ones which are trending on Google. Stay with us, Nilesh, because markets right now are at the day's highest levels. Let's pull up Nifty 50 on the screens as well as we speak right now. And with that, let's also check the contributors. There you go. We've actually crossed that green mark right now, absolutely on the tender hooks. As Sharad was mentioning, sustainability is going to be the key. But names like Infosys, TCS, HCL Tech, Tech Mahindra, all your top 4 stocks coming in from the IT space. And in consonance to that, you have HDFC Bank, Reliance Industries. Again, 2 heavyweights which are trying to pull Nifty 50 lower. So it's a pretty much even Steven screen that we are seeing right now. Sustainability is going to be the key. So Nilesh, if you have to look at the markets in terms of closing today, what are the levels you should be tracking? Because we're absolutely on the borderline right now.
Hiral, we have already seen a positive development. We open on a gap down note with a close to 200 point down tick, but good part is that Nifty has found a very strong support at its 100-day moving average that is placed exactly at 24,000. And on derivative front as well, we have seen meaningful buy concentration on the put side at 24,000 put strike. So that's a kind of a strong support area for the Nifty. If it manages to close above 24,200, that should be considered as a positive close for the second straight session. Will be closing above 24,200. So we are likely to see a short covering then towards 24,300 to 24,400 on the upside. So overall, the setup looks positive. We have seen participation coming back from the IT space. So that's a big positive development for the markets. So yes, for the Nifty, as far as closing is concerned, a close above 24,200 is something that we are looking out for, and a move towards 24,400 to 24,500 that is likely to be followed.
Okay, so that's with regards to where Nifty 50 goes. But thank you, Nilesh, for that, for your views. We are 24,217 above the 24,200 mark on Nifty 50 as we speak. But moving on. TCS is one stock that we are focusing on in today's session, and this is from the overall IT pack. That sector itself is up a little over 4%, and TCS is one of the contributors as well. Jasmeet joins us to tell us what's really happening with the TCS, because we know it has been added to one of the brokerage's institutional model portfolio, a couple of packs that they have signed as well. Jasmeet, what are you picking up in terms of 4 or 5 key reasons that one should look at in terms of a TCS?
Well, Hero, thank you for that. The stock is up nearly 6%, the biggest single day gain in over a month. Now, here are the top 5 key reasons why stock is buzzing. Well, the first one, Kotak adds this particular counter into the model portfolio and sees an upside of 18%. And the reason why they have added is because of the valuation, which remains attractive and cheap compared to the 10-year level. The second reason is the company signs a multi-million AI-led deal, which is for global networks with ABB. We see company expanding its partnership with the particular counter. While the third reason is, as per media reports, company has done some internal restructuring where they have created 5 new business divisions to support AI-led initiatives by the company and to respond faster to the AI-led actions. The fourth one is the quarter update, which we had seen recently, the Q1 update, which has come in line with the estimate, and management remains quite bullish on the outlook, where they expect Q2 to see a turnaround quarter and the H2 should be better than H1. Well, lastly, if you look at the AI revenue, it's up nearly 13% in the Q1, as we have seen, and company hires over 9,000 employees, which is a key positive again, as it's the highest net headcount addition in over last 15 quarters. These are the 5 reasons the stock is buzzing in today's trade.
Okay, so that's with regards to where TCS goes. Thank you for that. Let me also get in Gaurang Shah, Senior Vice President at Geojit Investments. Gaurang, welcome to the show. Always a pleasure to speak to you. My question coming to you is for the IT pack as a whole and or TCS. Multiple reasons for a TCS. HCL Tech, yes, buzzing ahead of numbers as well. What do you make of this pack, and are you of the opinion that there is value now emerging at lower levels for IT as a sector? Or is this a space which needs to be avoided?
Thank you so much, Hiral, for having me on your show. Good afternoon to you and to all the viewers of NDTV Profit. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So, Hiral, when the going was tough for IT, we remain positive. We remain positive now and will remain positive going into the future. Having said that, couple of things. Gone are the years wherein you will get the kind of return which IT used to deliver maybe 10 years back or more. Challenges will be there in terms of innovations, modernization, launches of tools, platforms, etc. Capability to scale up will depend upon company to company. So you need to be very, very specific as to which opportunity you are identifying in the IT sector as an investment idea from a long-term point of view. And when you eventually get that, then your long-term investment horizon has to be at least 1.5 to 2 years, given the kind of challenges that IT sector has to face in terms of innovation and transformation.
Topic, Gaurang, in this space.
So I'll give you three: small cap, mid cap, large cap. From base of the pyramid, KPIT Tech or Cyient Limited. From the mid cap universe, again, Coforge or Persistent System. And from the large cap, TCS or HCL Tech.
Okay, so interesting names coming in there as well. Thank you for that. But moving on from the IT pack, your pharma as well. Now, Aurobindo Pharma is back in the spotlight, and this is after Citi and Macquarie have come out with a note with negative commentary. In fact, the stock is down nearly 1% in trade, and this is coming in post the Lennet deal. Now, these notes counter management's past commentary as well. Varsha is here to break down the negatives and the positives for Aurobindo Pharma, and an exclusive story that we have in terms of what sources are making of the company as well. Over to you, Varsha.
I think it's the best time to put a spotlight on Aurobindo Pharma, considering a lot of data revolving around this counter. And we do have, sources which are telling us some of the positive points on Aurobindo as well. But let me start with what brokerages are saying. They're expecting US sales to be stagnant, or rather they say that the US sales have been stagnant despite market share gain. But one point to notice is the other markets to offset US generic pricing pressure, number one. And in fact, Aurobindo has 888 ANDA filings, which is the broadest portfolio when it comes to industry. But again, brokerages are actually pointing out on Lannet sales, which is the key highlighting factor. They say that Lannet sales is down 30% according to IQVIA, but the controlled substance are not fully captured by IQVIA. Now, this is one of the things that sources are telling us, and of course, the injectables peptides pipeline execution is uneven according to brokerages. But one has to also understand that the growth engines have entered commercialization. When I say this, that means respiratory, injectables, PenG, biosimilars, and CDMO are all nearing commercializations. But brokerages are also highlighting that biosimilars is a commodity business and is a competition for Aurobindo's pipeline, as many pharma companies are entering into this space. But Aurobindo's growth story is not about only biosimilars. The growth extends beyond biosimilars. Biosimilars are only part of the multi-engine growth story that the Aurobindo has. While brokerages have also highlighted about the respiratory portfolio, which may take time, to contribute meaningfully for the company. But the global partners have been backed respiratory portfolio with $90 million each. That's the key highlighting factor over here. They've also entered into biologics contract manufacturing segment, and hence brokerages say that the Merck CMO is unlikely to fully offset pressure, but the Merck CDMO will actually validate the biologic manufacturing capabilities according to the sources. And historical earnings growth, if you see, remain weak according to brokerages, but 10,000 crore investments have seen nearing monetization and which will contribute meaningfully. Then also lastly, the new businesses, if you see, are yet to meaningful contribute according to brokerages, but US sales, if you see, are nearing at $2 billion, which is a highlighting point. A company will also see a lower PNG losses. This is actually an important growth trigger for the company and which will help company to grow moving forward. Lastly, according to brokerages, the stock is 30% above historical average. Valuations are stretched. That's the key point that the brokerages have made, but we need to understand that the new investments warrant higher structural valuations, and the Aurobindo's next leg of story is of course the PNG, then the respiratory portfolio, of course biosimilars and CDMO. So overall we might see Aurobindo 2.0 maybe in the next 2 to 3 years.
Thanks a lot, Varsha, for that detailed analysis on Aurobindo Pharma. Good afternoon, Gaurang sir. Sharad here. Your views on Aurobindo Pharma? It seems like it's at an inflection point.
Hi Sharad, good afternoon to you as well. So as a disclosure, we have a buy recommendation on Aurobindo Pharma. If I'm not mistaken, our targets are also reasonably placed. I think whatever your colleague Varsha elaborated in terms of the pros and cons, I think the pros are on the side of Aurobindo Pharma. And my sense is that if you're a long-term investor, you should stay invested. And if you get these kind of opportunities at lower level, you can definitely level a little bit more into the stock as well.
Aurobindo Pharma, but now we are out of time, and thanks a lot, Gaurang sir, for taking your time and talking about the stocks and the market ahead. But that's all, folks, from me, Hiral, and the entire team which put together Trending Stocks. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point.
Markets bounce back from early losses as investors assess global cues, oil volatility, and Q1 results. The Nifty trades above 24,200 at day's high, with the broader markets moving in tandem with the benchmarks. Avenue Supermarts trades under pressure after operationally weak Q1 results. The Metro same-store sales growth is impacted on account of quick commerce competition. The company approves 1,000 crore fundraise via non-convertible debentures. The recovery in tech stocks continues as the sector emerges as the biggest gainer in trade today, with the index gaining over 4% at this point. TCS leads the pack as Q1 momentum and the AI-influenced growth takes center stage. The Finance Minister Nirmala Sitharaman is meeting with heads of public sector banks today. The FM is reviewing mobilization of the foreign currency deposits and the bank's forex positions in that meeting. Hi, thanks so much for joining in. You're watching Lunchtime Trades and my name is Alex Matthew. This show gets you a roundup of everything that's happened in the first half of trade today. That includes in the world of commodities and everything else that you need to know in the world of markets. This is, of course, while you grab lunch. But let's take a look at the market first. You have equity markets that have bounced from the low point, currently trading very close to 24,200 and flat. But we started with cuts of about 7 to 0.8%, and that was on account of the restart of concerns that there will be aggression in the West Asia region. Of course, there were attacks by the US on several Iran assets, and that has led to an increase in crude oil prices. Of course, oil prices have in fact risen. They are very close to that $79 per barrel mark. They've come off from the high point today. They didn't quite hit that $80 per barrel mark. But take a look at the contributors to the Nifty 50 and see what's moving the needle. And just pull up the contributors chart. You have Infosys, TCS, HCL Tech and Tech Mahindra. This is going to be reflected when you pull up the heat map for the Nifty 50, because the IT stocks as a whole, that's a big talking point today. They're the ones that are gaining ground, and it's not as many gainers compared to the losers, so they're still outweighed. But look at that gain for TCS as well as HCL Tech. For a sector that is now significantly lower in terms of contribution to the Nifty 50, it's still moving the needle quite considerably. At the bottom end of the spectrum, of course, you have a couple of metal names. You have Indigo, that is sensitive, of course, to crude oil prices on the way up. That is losing ground. Grasim is also losing about 1.5% or 1.7% or thereabouts. Pull up the IT index, the Nifty IT. It's trading very close to the high point of the day and up as much as pull up the index, the intraday chart, if you don't mind, and let's talk about where it stands right now. It's at the high point of the day, 4.4%, and this is clearly by far and away the best performing sector. In fact, pull up the sectoral heat map and you will see what I'm talking about. This morning you had just this one index that was trading very close to Friday's close, and that picture has changed quite dramatically. It now leads the ranks with gains of about 4.4% at this point. Realty, which has been a significant outperformer in the recent past, is actually declining. It's the worst performer with cuts of about 1.2%. Finally, pull up the broader market indices, the mid-cap index and the small-cap index, the intraday charts of those two, and you will see that they're more or less keeping pace with the benchmark trading flat, but with a negative bias for the mid-cap index and with gains of about 0.2% for the small-cap index. Now, all of this has to do with the fulcrum that has decided the direction for Indian equity markets in the recent past, and that is crude oil prices. Crude oil prices, of course, surging after fresh geopolitical tensions in the West Asia region reignited concerns over supplies through the Strait of Hormuz, which according to Iran is closed as things stand right now. This is, of course, something that determines about 1/5 or more of crude oil supply in the world. And US President Donald Trump has said that the strait remains open to commercial shipping, and maritime traffic, though, has slowed quite considerably. Let's talk about some of these aspects, not just crude oil, but also the rest of the commodity pack. We're joined by Dinesh Somani, who's a founder at Pro IntelliTrade Services. Dinesh, thanks so much for taking the time. Let me ask you about this, because crude oil prices have in the past spiked on account of a rise in the geopolitical tension in the West Asia region, but they've more or less been capped around that $80 per barrel mark. What are the trends that you're witnessing in the near term?
That's a clear indication. From $120, prices have fallen down to $67, which is an indication that geopolitical tensions have eased out considerably. There is a spike of 4% on normal, usually on Mondays and Tuesdays, just to create that geopolitical event. So prices from $67 have bounced back. The WTI crude to $74. Max-to-max upside, which we expect, is around $78 to $79. That could be on another spike of this kind of things, or this kind of news, or this kind of tweets. But overall, I think tensions are going to ease out. Prices are going to stabilize, and we have that inflation data tomorrow that will give the further direction to the crude as well as to the bullions market as well.
Dinesh, but all of this is predicated on the supply of crude through that Strait of Hormuz. And in the recent past, there was news and data points emerging that the traffic had increased quite considerably, which was what caused the prices of crude to come off. But now if there is a claim by one side, that is Iran, that the strait is closed and from the other side that says that the strait is still open for commercial travel. Any increase in geopolitical tension, one would think, would have a bearing on the premium for insurance that is paid by shippers, and that would also have a bearing on traffic. Would you agree?
Yeah, definitely. I mean, earlier, prior to these weekend, the supply was immense, the supply was normal. Even when we heard that the Saudi countries, they were close to 90% of their usual supply. That was the pre-war level. Even the crude oil prices at $67 were at a pre-war level. So overall, the supply was good prior to this weekend, but the supply destruction came in as and when the Iran side said that there is a shutdown of the Hormuz and it could supply the crude oil further. So that created an escalation. But the other side, which is very strong and says the Hormuz is still open. There are uncertainties, but if I think if the commercial supplies resumes and the supply increases, overall the production, there is neither any issue with respect to the production, the demand is limited, but if I think only the supply destruction part is causing a spike in crude oil prices. Rest, if I look at the demand and supply part, the supply could be ample as and when the Hormuz opens, and the demand would be again limited, and the market would be flooded by crude oil. We don't expect prices to cross $80 as far as WTI crude is concerned.
WTI crude. Okay, so thanks for that clarification, because Brent crude is very close to $80, Dinesh. Let me ask you about metals, both precious metals as well as industrial metals. What are the factors that will determine the price trends in the near term? Is it primarily the direction that the dollar is taking?
Of course, the dollar index is moving past 101 mark. That's a thing that is pressurizing the bullion markets. Secondly, we have a CPI data tomorrow that will decide the further course of the Fed. Another thing is we have 2 days Fed meeting as well. We would look at the Fed chairman's statement and the further guidance on the interest rate part. There is a strong possibility that we could see one hike over the year end as far as the Fed rates are concerned. So that is all the factors that are creating pressure on the bullion market. But if I look at technical levels, I think 4020, 4030, that's a good support level as far as gold is concerned. And 4220 is a very crucial resistance. Prices are restricting themselves at around $4,200 mark. So overall, $180 to $200 range that could stick for a week. That is what I feel right now.
Okay. And for what about ferrous and non-ferrous? So if you look at the trends in those markets, specifically actually, let me ask you about the base metals. What are the trends that you're seeing in that pocket?
If I look at silver, it is reacting very sharply to the news and to the fundamentals. But as far as base metals are concerned, they are restricted themselves to a very narrow range. If I look at copper I say in the Indian market, 1275 to 1295, that's the narrow range as of now. But the strongest counter of all the base metal as of now is zinc. It is sustaining well above the previous highest level of 375. I think we could see a breakout and a spike in prices as far as zinc is concerned. 373, 374 is a good explanation level. Upside potential could be 390 levels, and that should be very soon. So overall, if I look at the base metal pack, copper is moving in a very narrow range, and zinc is trying to outperform.
Got it. All right. Thanks so much, Dinesh, for taking the time. Pleasure speaking with you.
Same here.
All right, let's talk about Avenue Supermarts. And the stock is under pressure today. Pull up the intraday chart because it's reacting to numbers that were posted post-market hours on Friday. The stock is down about 2% or thereabouts. And it's not the best Q1 results that have come through. And there are concerns, of course, that all is not well heading forward as well. Mahima joining in to tell you what you need to bear in mind and also what brokerages are saying. Mahima?
Overall, the numbers were largely in line with what the street was expecting, but operationally, they've been on a weaker front. In terms of Metro City same-store sales growth, that's been impacted on account of the competition that it's getting from quick commerce. Plus, the profit has lagged revenue growth in the last 10 out of 13 odd quarters. So that's not a very good sign. DMart Ready growth has also been surprising because the expectation, and in the last couple of quarters also it did a growth of around 20% but this time it's just done a growth of around 5.5%, so that's concerning. Store expansion is going to happen rigorously from here on, but that's going to be on account of debt. 1,000 crore via NCD is what the company has announced, and management commentary also alludes to the fact that higher competition coming in from quick commerce is something that's impacting the overall performance as well. In terms of operational highlights, around 19% store addition happened, so growth in terms of store addition was at 19%, 1.5% growth in terms of bill size, but 5.4% contraction in bill cuts happened, and revenue per square feet contracted by around 3%, which again is not a very healthy metric. In terms of what brokerages are making of this, in terms of Morgan Stanley, they've maintained overweight with a target price of 5083. What they're saying is that weak top line growth could give a limited near-term upside, but they remain overweight due to its large total addressable market and the business model strengths. Bernstein has maintained outperform with a target price of 5000. They're saying that they expect store expansion to remain 80+. They expect cost curve to become supportive over the next 2 to 3 quarters, and DMart Ready, according to them, is a distraction and not a distinction, and that's how investors should view it as. And lastly, Citi has maintained sell and cut the target price to 3,400 from 3,650 earlier. What they're saying is that they've also cut down the revenue estimates and the EPS estimates for FY27 to 29, and they seek better entry point and valuation for a better risk to reward ratio because it seems unfavorable right now. So this is the overall view coming in, of course, with regards to how the earnings fared for Avenue Supermarts and what the brokerage take is.
Got it. All right. Thanks so much, Mahima, for getting us those details. News in the legal space, and Zee Entertainment has at least gotten an interim win. That case is still ongoing, but what am I referring to? I'm talking about its copyright battle with Meta. The Delhi High Court has directed Facebook to take down specific URLs that allegedly host pirated Zee content. But the court has stopped short of blocking entire accounts for now and will take a call after hearing all parties. Nimit is joining in to tell you about what this case is about and what the update today is. Nimit?
So as copyright battles move into the digital realm, the real question is that these social platforms which Meta runs, for example, Facebook in this case, how responsible is a social media platform over content posted by anonymous people on its platform? That is the question before the court today, and Zee Media has moved against Meta, saying that there is a certain accounts and a bunch of different accounts which are posting copyrighted material from Zee's portfolio onto their platform, and these are multiple posts, and they've moved Meta, saying that Meta as a platform is liable for this. Now the court has not allowed the blocking of these accounts without hearing Meta and all these other account owners, but the court, as you rightly said, Alex, has shut down these URLs. It's asked Meta to intervene and step up and specific URLs be closed down, and a takedown order has been passed. The case is of course ongoing, and we're going to understand how much Meta is liable for illegal activity being done on its account. That has not yet been decided, but it's a question being run across forums and across these different social media intermediaries. It's in a very interesting space on the legal front.
Absolutely, and we'll keep coming back to you to hear what the updates in that case are. All right, let's move on now and talk about HCL Tech, which is gaining as much as 5.8% at this point, ahead of the presentation of its Q1 numbers. It's at the high point of the day and part of the pack really that's ruling the roost on Dalal Street today. But let's bring in Jasmeet to find out what the street is penciling and what could come through. Jasmeet?
Well, Alex, thank you for that. We are penciling in a slightly negative to a flattish quarter for HCL Tech. If you look at the revenue, we're expecting the revenue to see an uptick of 1.2%, while overall EBIT margin could expand by almost 40 to 50 BPS. And this expansion of margin is coming on the back of that lower restructuring cost in the Q1 and also low base which we saw in the Q4. When we look at the net profit, that could rise by 2.4%. Now, in terms of the key focus in this particular quarter, the first one is CC growth, which we are estimating between negative 1.5 to a positive 0.8%. The second one is the guidance. The guidance remains a key because a lot of brokerages are penciling in a guidance cut by HCL Tech after Accenture has cut its guidance in the global market. Now, HCL Tech had already given a broad band of guidance between 1 to 4%. So any cut on that would create a serious problem for the company going ahead. by the street. Now the third point would be the deal win. We are penciling in a deal win between 2.2 to 2.5 odd billion, and then lastly the overall focus remains on the AI based revenue of how that's ramping up for the counter. Now if you look at the brokerages, some brokerages like Nuvama is penciling in an unchanged guidance, while JP Morgan is penciling in a slight guidance cut from earlier 1.5 to 4 to now 1 to 3 odd %.
All right, so those are numbers to keep in mind. Of course, we'll bring you the updates as and when the company does post its numbers later today. HDFC Bank in focus on account of what's been said in its annual report, and this is actually statements that have been made by both the chairman as well as the chief executive officer. There's been a reiteration of the bank's commitment to high standards of corporate governance. The bank has said that independent external legal firms reviewed allegations made by the former chairman and found them to be unsubstantiated after detailed review. Piyush has this report.
That is right. Every year, the bank comes out with its annual report where they talk about the investments being made in tech, the people force that they are building up, the business plans that the bank has. But this time, what caught the eye of us watchers was that there was a separate subhead, corporate event, it was termed as. And under that subhead, Mr. Shashidhar Jagdishan, who's the MD and CEO, reiterated, how the whole process went through after former chairman of the bank, Mr. Atanu Chakraborty, resigned, citing certain differences between the business practices at the bank and his own personal values. HDFC Bank, Mr. Jagdishan said, took immediate note of his action, immediately appointed an two external legal firm to assess whether the statement that he has made in his resignation letter were substantiated. The bank also formed a committee of independent directors to assess, to review the overall findings that these external firms give to them. And eventually, when the report came out, the report did not find, that Mr. Chakraborty's allegations were substantiated. This whole process, Mr. Jagdishan said, was meticulous with voluminous minutes that were reviewed. The exchange of information that happened. He himself, along with head of, several departments were interviewed by these law firms. So the whole process was very meticulous. Mr. Jagdishan mentioned, and he, said that the corporate governance standard, like you mentioned, remain highest at HDFC Bank. The former interim chairman, Mr. K.K. Mistry, also alluded to the same, saying that, in his capacity as interim part chair, he can guarantee that the corporate governance level at the bank were the highest. Other few noticeable factors in the annual report.
Okay, all right. Well, Aurobindo Pharma is a stock that you should keep an eye on. It may not be doing too much in trade today. In fact, it's down just 0.75%. But it's in the spotlight because Citi and Macquarie have come out with a note with negative commentary on the company post their Lenit deal. These notes have countered management's comments post that deal. But Varsha has broken down both the negatives as well as the positives and what the management is saying about that deal and everything else that you need to know about Aurobindo Pharma. Take a look.
I think it's the best time to put a spotlight on Aurobindo Pharma, considering a lot of data revolving around this counter. And we do have, sources which are telling us some of the positive points on Aurobindo as well. But let me start with what brokerages are saying. They're expecting US sales to be stagnant, or rather they say that the US sales have been stagnant despite market share gain. But one point to notice is the other markets to offset US generic pricing pressure, number one. And in fact, Aurobindo has 888 ANDA filings, which is the broadest portfolio when it comes to industry. But again, brokerages are actually pointing out on Lanit sales, which is the key highlighting factor. They say that Lanit sales is down 30% according to IQVIA. But the controlled substance are not fully captured by IQVIA. Now, this is one of the things that sources are telling us, and of course, the injectables peptides pipeline execution is uneven according to brokerages. But one has to also understand that the growth engines have entered commercialization. When I say this, that means respiratory, injectables, Pen G, biosimilars, and CDMO are all nearing commercializations. But brokerages are also highlighting that biosimilars is a commodity business and is a competition for Aurobindo's pipeline, as many pharma companies are entering into this space. But Aurobindo's growth story is not about only biosimilars. The growth extends beyond biosimilars. Biosimilars are only part of the multi-engine growth story that the Aurobindo has. While brokerages have also highlighted about their respiratory portfolio, which may take time, to contribute meaningfully for the company. But the global partners have been backed respiratory portfolio with $90 million each. That's the key highlighting factor over here. They've also entered into biologics contract manufacturing segment, and hence brokerages say that the Merck CMO is unlikely to fully offset pressure, but the Merck CDMO will actually validate the biologic manufacturing capabilities according to the sources. And historical earnings growth, if you see, remain weak according to brokerages, but 10,000 crore investments have seen nearing monetization, and which will contribute meaningfully. Then also lastly, the new businesses, if you see, are yet to meaningful contribute according to brokerages, but US sales, if you see, are nearing at $2 billion, which is a highlighting point. A company will also see a lower PNG losses. This is actually an important growth trigger for the company, and which will help company to grow moving forward. Lastly, according to brokerages, the stock is 30% above historical average. Valuations are stretched. That's the key point that the brokerages have made, but we need to understand that the new investments warrant higher structural valuations, and the Aurobindo's next leg of story is of course the PNG, then the respiratory portfolio, of course biosimilars and CDMO. So overall, we might see Aurobindo 2.0 maybe in the next 2 to 3 years.
All right. Aurobindo 2.0, certainly something to look forward to. Varsha, thanks so much for joining us and giving us that perspective. All right, now we're wrapping up on this edition of Lunchtime Trades. It's been an absolute pleasure bringing it to you. But before we end, take a look at this conversation that we had with Tahir Badshah of Invesco Mutual Fund, where he's saying that the geopolitical situation is not something that should concern Indian investors for very long. Listen in.
Tahir Badshah, CIO of Invesco Mutual Funds, joining us this morning. Tahir, great to speak with you. As always, are you feeling
as always, good to be on your show as well.
Likewise, I think the feeling's mutual. Are you feeling a little more optimistic right now, considering that we've had a resumption of attacks and warfare, etc., in the Strait of Hormuz since that peace deal and that MOU was signed, but there hasn't been a sharp reaction to it? Is that giving you some comfort?
Well, Tamanna, to begin with, actually, so unfortunately, we've not had a chance to speak in a while, but I think we've been maintaining a positive outlook over the last month or two, especially after the first ceasefire was announced. And we have been of the view that this is probably going to be somewhat quick to resolve in some manner or the other. And more importantly, I think from an India standpoint, the West Asia conflict, basically from a crude standpoint, seems to now is now probably behind us. I think during the course of this conflict, it is a couple of things have been probably proven. One is that beyond a particular point, I think the oil market is somewhat fundamentally weak. I mean, when we look at it from a supply-demand standpoint, there is a fair bit of supply in the market available. And then there are other avenues of supply which can come about, probably from the OPEC bloc, or maybe even from the point of view of US's ability to pump in more oil. So supply is relatively easy, and then perhaps the oil industry or the oil market has not been able to kind of come to grips with the fact that China can be a fairly important lever in terms of controlling demand. And I think they have probably been on this course of adopting more and more of electric and reducing the consumption of oil over the years. So I think from an India standpoint, therefore, if oil supply-demand balance remains positive, then by and large, I think we don't need to worry as much about the West Asia conflict as we probably had to before. So I think that was one level of confidence that we were holding. Apart from the fact that for India, incrementally, a few things could start getting better in terms of things like earnings, probably flows. The rupee having meaningfully depreciated now, foreign investors having significantly sold off, and last but not the least, probably a little bit of the slowing as far as the AI trade in the US is concerned. So the mix of all this would probably start being beneficial for India. That is how we had been thinking about it. I think that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा, आप अपना देख लो।
सुपरस्टार स्टॉक्स ऑफ द डे प्रेजेंटेड बाय टाटा अजूरा, हर रास्ते का सुपरस्टार।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid, what will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who.
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा, आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933. सरसों से सरसों।
As in
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of Stallion India. Now, China has stopped helium exports due to the US-Iran tensions. So is this a big opportunity for Stallion going forward? Is something that we'll try to ask the management today on the show on the Small Cap Buzzers. Apart from that, we'll be talking about stocks like Fino Payments. Strong Q1 update clearly reflective on the share price move as well. The disbursements or the loan referral disbursals surged nearly 3.5x on a YY basis for Fino Payments. Apart from that, we'll be also talking about stocks like Hester Bioscience. The stock is trading at its highest level since December 2024, and the volumes are quite strong on this counter. Volumes are highest since April 2025. Then we'll be talking about a counter called Epigral. Now it's the move that we have seen in the share prices is the largest single day gains for the counter since May 2026, and volumes are nearly 5 times its 20-day average. And then we'll be talking about or highlighting a stock called Exacto Technologies. Now this is an SME companies, but in the last 5 days, the stock has moved up nearly 60% in trade, and a famous investor, Vijay Kedia, owns close to 5.5% stake, or used to own close to around 5.5% stake as of March 2026. So the June 2026 shareholding pattern would be something that will be important to track. But what is causing this move is something that we'll try to decode on the show today with our fundamental guest as well. Now if you look at the market, a stellar recovery is something that we have seen from the day's lowest point from 24,000, where we did find some support. That was the opening tick low. We are now trading around 24,200 level. We did manage to reach 24,250, but 24,200 is somewhere where Nifty is trying to find some support. On the sectoral indices side, it's the Nifty IT which has seen a stellar run in trade today. It's a top sectoral gainer as well, and that has also led the rally when it comes to the Nifty index. And on the losing side, most of them are trading largely flat to red in trade. But when it comes to the small cap index, that's trading largely flat. But Varsha, a lot of action, a lot of stock specific action is something that we are seeing.
Yes, absolutely. I would say a good day for some of the small cap counters. You have TTK Healthcare. The stock is up on the back of good volume, 7x of its 30-day average. You have BF Utilities as well, which is buzzing in trade on the back of strong volumes we are seeing on this counter as well. Novartis India is also buzzing in trade. You have Satin Credit Care, which is up almost around 3.5%. Novartis is up almost 8%. Satin Credit Care, if we can pull that chart up, they are actually diversifying beyond microfinance. They are actually becoming a hub when it comes to rural finance. So do keep a watch on Satin Credit Care. In fact, we also got business update from Satin few days back, and a strong one, I would say. Sangam India is also in focus. BL Kashyap and Sons is also in focus on the back of strong volumes. You have Gujarat Alkalis and Chemicals, which is also buzzing when it comes to small cap. Kolte Patil Developers India, Hume Pipes, Root Mobile. Gujarat Alkalis is up almost 5%. Kolte Patil is up almost 5.5%. Root Mobile is up almost 5%. So a lot of stocks in focus when it comes to this sector. But one stock which is in focus is Stallion India Fluorochemicals. The stock is up almost 14 to 15% in last 5 days. It's up almost 2% today. Now, one of the reasons is, of course, China has stopped helium export temporarily, and Stallion India is going into helium production as well. But to speak more about this and what's the opportunity for the company, to speak about that, we are here joined by Mr. Shehzad Rustamji, who is the CEO and Managing Director of Stallion India Fluorochemicals. Sir, welcome at NDTV Profit. Pleasure to have you. So on this China, has stopped helium export temporarily. Just wanted to understand the opportunity for Stallion India, and also if you could also update us on the prices of helium as well.
Basically, helium, as you know, is a natural product. It's not manufactured. It comes out from oil wells, select areas only. It's not widely available everywhere. It's not available in India. So necessarily it has to be imported. Reliance currently was on Middle East, China and Russia. China, the news that has come now that China has discontinued the exports of helium is a little distressing, more from the country level, where we would be worried about availability of helium for the Indian market. It's predominantly used in deep sea diving, in defense, in the oil and gas sector, in pharma, space research, semiconductors. So it's a critical component which availability would impact many industry. So as an opportunity, it's an excellent opportunity for the company, but we would be more concerned about availability for the country. And all our efforts are on to make sure that whatever the requirements are there, we are able to fulfill along with other suppliers.
And sir, also on prices of helium, if you could update us on that also.
The prices have risen sharply. They have gone up by over 300%.
Okay, got that view. And sir, you in the last con call you said that helium is the only entry point for you. What percentage of future semiconductor gases revenue would you expect to come from helium versus specialty gases?
Helium definitely will play a major role because the Indian market is huge. Basically, we would want a major percentage of the Indian market. So helium will be a growth driver, but along with helium, as India is moving ahead with semiconductor manufacturing, it's moving ahead with solar local manufacturing. All the other gases that go into these products, all the coolants, all the how to say cleaning agents, all the other products that are required, they would definitely play a major role. But initially, helium would be how to say a predominant part of that pie for us. But in 2 years, it would definitely come down.
Right, got that. And sir, your Khalapur was expected to start in June.
It is operational.
Okay, it is operational. And what utilization level do you need for the project to become financially meaningful?
We would need about 20%, 25%.
Okay. Okay. Now coming back to your original business or the business that is currently ongoing. For the first quarter, any impact on the cost side that you have seen because of the Middle East issue? Any impact on the margins that we could see? Because as I can see in fourth quarter only, you were able to revive your margins to 16%. So any risk to that?
There's definitely a price pressure due to the ongoing conflict. Again, the conflict has flared up. So you do have an impact coming in. But as I've always said, we had very much anticipated these issues much in time, and preemptive steps had been taken. So the impact to us as a company is pretty small. But there are impacts affecting the rest of industry, affecting us also. But in our case, it's been mitigated with preemptive steps.
Okay, and your margins would remain around the 15 to 16% band for the first half of this financial year?
Pretty much, we have not seen any major slide or anything. Currently, we are at the stage of releasing our results, so we are unable to share any details on it. But pretty much, we are on a constant stream.
And I wanted to understand on the refrigerant side specifically, the demand must have been quite strong in the first quarter because of elongated summer and delayed monsoon. Any sense on that front if you could give us?
Basically, because of the summer, we do see a pickup in the production. But basically, you have to understand production cycles are not moved by the summer or the demand in the market. It's the manufacturing cycle of the manufacturers. So if the manufacturers decide to take advantage of what they anticipate to be a good season, they start the manufacturing activity from October, November for the next year season. So it's not that because you have heat today, you will see a spurt in the sale. It's based on the manufacturing cycle.
Right. And sir, as you said that Q1 has not seen much impact for you at least. Are you on track when it comes to the guidance that you have given, which includes, your PAT guidance of 100 crore for FY27? So on track to achieve that?
We are on track.
Okay, understood. And also, on Sharjah Oxygen, can this partnership eventually extend beyond helium into specialty and semiconductor gases as well?
Our purpose of tying up with Sharjah Oxygen is not only to have a reach to all their products also, but also to have the reach to the Middle East using them as a partner. So when our production goes on stream in Bhilwara, they would definitely be a major player for us for accessing the Middle East market.
Okay. On the export side, just wanted to understand, I believe exports contribute around 40, 42, 45% of your total revenue. Any impact on the first quarter, and for the full year of FY27, what is your target? Where would this export as a contribution to the total revenue reach?
No, currently we have no exports. The export volumes would be when the new plant comes up. In that, the estimated volumes would be over 50% would be exports. But currently we do not have exports. All the demand is local.
Okay, and lastly, I wanted to check on the capital expenditure front. What is your capex plan for FY27, and any fundraise that you have in mind for this capex?
Hello.
Yeah, wanted to understand on your capital expenditure plan for FY27 and any fundraise that you have planned for this capital expenditure. Okay, I guess the line, there's some issue with the line of Stallion India. But yeah, that was the key takeaway coming in from the management. Quite optimistic, not seeing any impact, and helium. Right, we have the management back again with us. So I wanted to check with you on the capital expenditure. What's the plan for FY27 and any fundraise that we can expect for this capex plan?
Currently, we should our projected plan to come on stream for the Bhilwara plant is before December we should be on stream and in full production. Thereafter, we would wait 6 months for stabilization. We have 2 more plants in the pipeline. So once this stabilizes, immediately we would start construction of the next plant, and thereafter the third plant. Currently, we do not see any further dilution of fundraise because the PAT from the current business and the new business that will come in, the volumes and the turnover that will come in, we expect that should be sufficient for us to take the next plant ahead.
Okay. Well, thank you, sir. Thank you for joining us and giving us the way forward for Stallion India. Well, that was the management, quite optimistic on the growth and not seeing any much of an impact from the Middle East issue, and has seen a 300% rise when it comes to the helium prices. Let's welcome in our fundamental guest, Girish Sodani, Vice President of Choice India. Girish, you heard the management. At the current valuations, do you think it's a good buy, that is Stallion India?
As of now, we are talking about now Stallion India because the fundamentals look very, very strong. So if we talk about for the annual revenue, 434, net profits increases by 35%, and especially the high demanded industries we are belonging to, the semiconductor, defense, gases, as well as the refrigerations and the consumer durables. Many electronic items are required, these type of product lines they are using into it. So overall, the structure was very strong, but fresh allocations are not advisable as of now. Looking out, just expecting that some reservations should be there in the stock by the level of around 190 or 195. That would be the good points for the entry, especially for the longer period of time, obviously, because I don't think so that this particular counter or this specialization took a early stage of exit propositions. I think this required completely for the longer periods, because stallions are the next plants are going to be communised by the before this particular December itself. I'm just expecting that the revenue should be expected by second quarter to third quarter financial year 27-28. So the longer period should be required for the good stakes particularly.
All right, got that view. Well, small cap heat continues after this break. Stay tuned to NDTV Profit. Will be shot back.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जो
केसरी त्योहार विमल बोलो जुबां केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury.
Welcome back. You're watching Small Cap Puzzles. Well, Hester Biosciences, let's pull that chart up because the stock is up almost 20%, has seen highest level since December 2024, largest volume since April 2025. Now, the main triggers for this company is, of course, one is the main growth engine, which is poultry healthcare, was the standard performer in last quarter also, and strong vaccine demand have been supporting volume. Field execution improved significantly for the company. Now, they are actually operating beyond just vaccines. You have companies moving from product selling to solution selling. Also, they are also focusing on complete avian influenza management, offering vaccines, probiotics and disinfections together. They do have Africa opportunity as well, where they are focusing on Africa market. The strategy is to become more structured and selective, of course, and long-term PPR eradication programs remain a key opportunity when it comes to the African market. The stake sale in Texas, so recently the remaining 11% also they've sold in Texas Life Sciences, which generated other income, and the capital is been redirected towards core vaccine and biological business. Lastly, on to the FY27 priorities, they are expanding poultry and animal health portfolio. They're also increasing domestic and export market penetration and also improving product mix. So overall, a lot of things actually moving or working for this company, Hester Biosciences, and hence you're seeing the stock is seen a 20% upside in trade. Girish, what's your view when it comes to this counter? Seen a huge rally today. What should investors do at current point of time?
So, if we talk about the company fundamentals look very, very strong. Nearly a strong revenue jump by 30%. Financially turned around completely. The profit was improvised by the 16.5 crores. So, come to the fundamentals, it's a very strong fundamentals. Now, the company's capex plans are also very strongly built up. But if we talk about for the investors who are particularly hold for the more than 2 to 3 years, they are getting a very strong returns ROIs in their particularly investments. My suggestion is to just book some of your partial profit from here, but fresh entry is not very much advisable. Let's check it out. If we talk about the fundamentals very strong, but stock is completely run away heavy from 2100 to 2500. So fresh entry is not.
Well, the next stock is Epigrel. The stock is up nearly 10% in trade, the biggest move that we have seen in this counter for a very long time. Strong volumes here. What could be the potential reason behind this move? Let's get in part to understand the same.
Absolutely, Somit. So a really big move. The stock is up over 10% today, as you mentioned. Volumes are 8 times the 20-day average, and this comes after a 30% decline in the last 44 sessions. So it might be a relief rally as well. Now, if we first start with talking about the company, they are one of India's leading integrated chlor-alkali manufacturers. They make caustic soda, specialty chemicals, derivatives, and lots of other things as well. Apart from this, they even export their products to over 20 countries worldwide. Now, the interesting thing is that they are transitioning their business mix. The derivatives and specialty chemicals, which contributed to around 52% of their sales in FY26, is expected to go above 70% by FY28. On the other side, the chlor-alkali segment, which contributed to 48% of their sales in FY26, is expected to come below 30% by FY28. So that is a mix that the management is targeting in the longer run. Also, Epigrel has been doing a lot of capex lately. In FY26, they spent almost 400 crores in their capex purposes, and in the coming time as well, they are adding 75,000 tons per annum of CPVC resin, also 50,000 tons per annum of epichlorohydrin, both of which are expected to commission by the first half of this financial year. Lastly, on the management commentary side as well, management has said that the volumes in the month of April were a little bit weak, but they saw some recovery coming in from the month of May. According to the management, the first quarter of FY27 will reflect that war-linked price escalation impact, but moving on, the things are expected to improve, and they are expected to close the FY27 with a volume growth of 10 to 12%. So now the key monitorable will be how much of that war-linked price escalation puts an impact on the company's numbers, and if they are able to achieve their FY27 guidance.
Okay. Girish, any view on Epigrel here?
So my view is just hold this particular counters, not advise for any add-ons or fresh entries, but hold this particular counters. Let it just check it out that how the particularly margin should be impactable in the next 1 or 2 quarters. But the financials look very strong. The highly operational margin 23% looking expected, and the capex should be there approximately 500 to 600 crores annual capex plans, what they are already suggesting in the last financial results.
Well, thank you, Girish. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, moving on to our next stock in focus, that is Exatotech. Now, it's an SME company, so that should be the biggest disclaimer here. But the move that we have seen in this counter, it's nearly 60% in the last 5 trading sessions. What is there a potential reason behind this? Let's try and get the answer for that from Jasmeet.
Well, Samir, thank you for that. As rightly said, the company operates as an SME, and there's a quite interesting counter, to be honest. And apart from the stock, the way it's moving, we have a good, strong order book also. Let's quickly understand what does the company do. Well, the company operates as a consumer experience company where they provide and make tech tools for consumer experience platforms. Well, Vijay Kedia, the investor, holds roughly 5.4% stake in this particular counter. And if you look at the stock performance of this entity, stock got listed recently in the month of December, and since then the stock has gained about 117%, while the stock has rallied nearly 72% in last 5 days. Let's quickly understand the recent order wins and the key triggers why the stock might be buzzing in the trade. The first one is the overall aggregate order book as of the month of June stands at 10 odd crore. While if you look at the export order for the company, it has come in at nearly $479,000 in the recent times, where we have seen the order is for software services from one of the largest clients. Now, in terms of the other order, the company which receives the order, it spans across consumer experience, telephonic, voice recording, and managed services, and all the orders have an execution period of 3 to 5 odd years. Now, if we look at the FY26 figure for the company, we have seen a strong entire year coming up for the company, given that the revenue is an uptick of nearly 35% and has reached that 168 crore mark, crossing the 150 crore mark, while the PAT is up nearly 67%. If you look at the other key highlights, the company also states that the annual run rate for the company has increased from 60 to 65 crore up until 118 crore in FY26. That's nearly doubling of what they are seeing currently. And secondly, we've also seen that the company has secured billing of 120 to 125 crore over the next 3 years. If you look at the order book as of FY26, stands at 600 odd crores, and an executed order book, unexecuted order book stands at roughly 330, and management expects almost 30% of it to be executed in FY27, and the rest would be in next 2 to 3 years. If you look at the guidance, even management has strong set of guidance where they expect 50 to 60% growth in terms of revenue and PAT in the coming years. But they also state that the overall export mix will increase from current levels of 20 to 26% to a targeted level of 50 to 60% going ahead. Further, the consumer segment, the consumer customer count also expected to increase from current levels of 150 to 500 to 600. So we do see strong targets for the particular counter, and the stock is up nearly 72% in today's trade.
Thank you so much, Jasmeet, for all the details. Well, moving on, Fino Payments Bank, let's pull that chart up. The stock is buzzing on the back of June 2026 business update. Stock is up almost 13% in trade, and we have Shivam with us to give us more details on that update. Shivam, please.
Yes, the stock is buzzing on the back of the June 2026 business updates, and this stock has already snapped 3 sessions losing streak, and the volumes are up also around 20 times the average in this counter. Talking about the business updates, the new accounts has increased by 31% in this quarter, and also the digital and Fino Payments Bank's active customers have also increased substantially. In terms of loan referral disbursals, it has surged by 253%, which is a huge uptick compared to the past months updates. And also in terms of the transaction throughput, that has declined around 35%, and this is mainly due to the customers which are transitioning from making the cash payments to the UPI payments in other bank accounts. So this has led to a decrease in the throughput business. Overall, the pace of this decrease have declined in past few quarters also, and if we compare it to the past month also, there has been a decrease in the throughputs this growth. And also talking about the recent developments, the company has recently partnered with Easy.ai, and this strategic partnership will lead to the deployment of its AI-enabled loan origination system, and also the systems like business rule engine and collection management platform will also be deployed with this, and this will aid in building a lending ecosystem for the transitions of this Fino Payments Bank's transition to the small finance bank. Also talking about the quarter 4 FY26 financials, the revenue has saw a decline of around 31%, and in terms of EBITDA, that has also gone down by 12%, and in terms of revenue margin, that has improved by 40%, and that was due to the lower cost of product. And in terms of stock performance too, we have seen a positive performance overall.
Right, got that view. Well, thank you so much, Shivam, for all the details. And the stock is up almost 13 to 14% in trade. But with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.
Venu Lambu, who's the CEO and MD of LTM, joins in now. So good to have you on NDTV Profit. Good set of numbers when it comes to the market reaction, and a large part of it really comes in from the artificial intelligence revenue that has been stated for the first time by the company. Give us a sense on how this is going to grow and what is the aspect that the company is focusing on in the artificial intelligence revenue stream.
Firstly, thanks for having me here. Good to be here. Yes, our first quarter was a good start for the year. Especially if you look at in the context of two of our large industry segments, have navigated the AI productivity headwind. We were pretty much ahead of that topic. That's behind us now. So both these, large segments of ours reported more than 3% sequential growth. The softness on the other sectors predominantly came in because of the delayed ramp up in India and the impact on the Middle East conflict, that was pretty much there in Q1. And the most importantly, for the first quarter, we announced a baselining of the types of AI work we do. We do AI work in business AI, enterprise AI, creative AI, and industrial AI. And the three types of work within that four is what we call it as AI native revenue, and that came about $150 million on a quarterly run rate. And I expect that over a period of time, it will only grow faster. It will grow faster than the company average. And as part of our 5-year plan, we expect that the AI revenue to be 50% of our AI revenue mix. And in order to do that, we're doing a lot of things, right? Whether it's in talent and transformation, reimagining partner ecosystem, and so on.
Right. So you mentioned it will be 50% by which quarter and which financial year you are saying?
Yeah, we expect this 50% to be somewhere between 3 to 5 years of our plans. 50% of our overall revenue mix should be.
Good you mentioned that percentage mix as well, because yours is over 12% versus other industry leaders who are lower in terms of the overall contribution. So that's the path in 3 to 5 years. But a short-term view on this particular year, is the 12% run rate going to be maintained? And second, TCS has said that most of their deal wins in AI space are more on a quarter-to-quarter basis. Are yours more long-term in nature or short-term?
Firstly, on the quarterly run rate and 12% part of it, I expect that to continue for the year as well. If at all, I would expect that to get better, from quarter to quarter, because we have a very focused approach in terms of how do we go about for the three types of AI work. And the second is with regard to the nature of engagement cycle for the AI revenue. Yes, it has elements of the short-term projects, which is about 3 to 4 months types of work. But we're also seeing clients engaging with us by selecting as a strategic AI partner. We did announce that one of the leading manufacturing customer in US selected as a strategic AI partner. We also announced a very large deal in Q1 at the back of the vendor consolidation, where AI will be infused a lot. So when you look at these engagements, it gives us an opportunity to have a slightly longer term revenue visibility at the back of this engagement, because the AI adoption is not one switch approach. It's going to be iterative in nature. You engage with them as an AI partner, then you keep working on starting with one process, expanding into the second one and third one, and so on. So we're looking for that kind of an approach to accelerate our AI revenue.
All right. So mix of both short-term and long-term, and you're saying that 12% run rate, at least for this financial year, will be maintained in terms of contribution to the revenue. But when we talk about the margin contribution, how is this 12% piece of artificial intelligence really adding to the margin picture?
Firstly, we said about that we will continue to have the margin expansion even in Q2 and for the full year, even post the closure of our Randstad acquisition, the technology and consulting business that we announced. Post that as well, we will maintain the margin position as what we had planned at the beginning of this year. So that's the positive news of it. And that's being contributed with the New Horizon program, because we're reimagining quite a few things. We're reimagining how do we manage our overheads. We're reimagining, essentially we're redefining what I call as a cost of delivery through a program of New Horizon that we have launched, where it's all about changing the mindset of creating a new horizon for ourselves on the cost of delivery. So that's going to contribute to that. And second is the AI deals will come at higher gross margin than the traditional IT services as well. But at the same time, it's a business where we're investing a lot more as well. We're investing in our Blueverse ecosystem. We are investing on the talent transformation. We are investing on our go-to-market capabilities and so on. And today we announced a very strategic partnership with Anthropic as well. So that's also a strategic, focus area for us.
That's right. And so lots of areas that you're working on. But you mentioned about that Randstad acquisition. In which particular quarter will it start really impacting? Will be EPS accretive? And what is the percentage that we're looking at in terms of margin expansion once that really kicks in on your books?
We expect the closure to happen at the beginning of Q3. So, in Q3 onwards, either partly in Q3 or full of Q3, we will consolidate that post-closure. And as we announced it during the time of sharing this news, that we don't expect any material impact to the margin for this year, because we are far ahead in terms of how we have created the buffer to absorb that acquisition.
Right. When we talk about the output-based model impact, and this is the first time that you have also onboarded that particular bit, how is it going to impact your revenue, and what will this model really change in terms of numbers?
We announced a new pricing model called Blueworks Currency pricing model, which is essentially based on the construct on how do we start delivering services to our customers, where they pay us based on the output or the outcome that we deliver. So we already have one engagement that has started, which is measured based on outcome and output that we deliver. So the Blueworks currency is going to be applicable both in our enterprise AI kind of engagements and also on the other three types of AI that I spoke about: business AI, creative AI, and industrial AI, part of the work as well. So it's at the starting stage. We are ready for it as and when the clients start increasing their adoption, and when clients starts being a bit more open in experimenting with the output and outcome-based model, we'll be ready to serve them.
All right. So impact is still to be known while this particular model is disruptive in your sector. Now, when we talk about your mainstay business, the tech and BFSI space have really performed. Production segment is a drag. Can you give us an outlook for this quarter on the segments?
Well, the production segment is predominantly contributed because of one-off fall off that we had on our revenue, which is essentially related to the one-time revenue we get in Q4 of every year with one of the large Indian customer. That happens for us every year. So this time it was slightly more that contributed towards it. So it's nothing to do with the sectorial trend. It is more to the fact that there was one-off revenue that that did not appear in Q1 with regard to the production segment. But year on year, it grew by 5.3%. So, and then we got good demand traction going on both in manufacturing as well as in our energy and utilities part of the segment.
All right, so it was one-off impact, not a sector impact when it comes to production segment. Very quickly on the headcount, if you can give us a picture in terms of hiring, the momentum has been towards job losses. So is that attrition outlook as well, and increments, if you can give us a sense very quickly?
Last year we hired more than 6,000 freshers. This quarter we had 1,100 freshers. And as we speak today, I have a lot of open demand for different categories of AI skills. So our hiring engine has been reimagined. We are out there in the market to look for very talented engineers who come with a certain degree of AI skills, whether it is about in the AI-led software engineering or in the deployment capabilities or having a domain and contextual context, and also the data skills. We have a lot of demand on the data side that we want to hire. So I actually expect that during the year, you will see us making movements on lateral hiring beyond freshers as well. I can't put a specific number to it because it all depends on how much of talent is available for that particular skill sets. But if I look at the demand from our clients, we have a lot of demand on these category of skill sets. So the challenge for us today is about how do we train our people faster. At the same time, how do we create an ecosystem in India specifically, where we can play a role in enabling those skills for those who are looking for a job.
Well, that was the management of LTM and continues to be one of the key ones because you're seeing a very high growth across the stock prices of all the IT companies today. So LTM continuing to be up almost 3%. Let's quickly just look at the Nifty IT also before we start taking all your stock related queries, because it's been a good day for the markets. Recoveries from the bottom end of the spectrum now. Nifty IT up almost 1,000 points. Constituents also very quickly, with TCS as well as HCL Tech actually seeing the biggest moves that we are seeing today. Now, it's been a very long time since we've seen such a roaring interest coming back in the IT space, but continue to monitor all those factors. Let me welcome in our guest to talk about your stock-related queries, Vishnukant Upadhyay, AVP Research at Master Capital Services, and Radharaman Agarwal, Managing Director and CEO of Swayam Advisors. Gentlemen, both of you, thanks so much for joining in. Let me actually start, since we are talking about IT, with persistent systems, because Ram Iyer from Mumbai is asking if it's a good time to enter this particular counter right now. Vishnukant, good afternoon. Would you recommend that? Because after a really long time seeing a positive uptick on this counter, how are you looking at it?
Hi, good afternoon. Yes, definitely. This could be a good time to get enter in the persistent system. The entire mid cap IT is doing immensely well. Although stock is briefly below its 200 exponential moving average, but the way prices are gathering steam from the lower levels and also crossed above the short term moving averages, I believe on the card there would be a 5600, 5700 sort of level in a very short term period.
Got that view. But the next question, and viewers, you can also call us for your stock related queries as well. The number for that is flashing on the top of your screen. That's the landline number that I'm talking about. But second key query coming in on Clean Science. Now, our viewer Prakash from Chennai wants to enter this particular counter right now. And for that, he wants to sell out one of the names, HDFC, HCL Tech, Infi or ITC Hotels. Now, Radharaman, good afternoon. Welcome to the show. So two-part question here. Firstly, if it's a good time to enter Clean Science, and secondly, because you're already seeing some good moves on HCL Tech as well as on HDFC. So what would be a pick to exit, if any, from the four names mentioned?
First of all, good afternoon. I think one should enter Clean Science. Maybe the four names, you have to choose one of them. ITC Hotels can be one we can look at and then take a call on this. But Clean Science is a good stock to enter at these current levels.
Got that view. But the next one that's coming in, and this question is from Satish from Chennai. He's holding a massive 5,000 shares of MobiKwik, bought at 229, and asking a short-term view on the stock. So he's currently sitting on a loss. But Vishnu, how are you looking at the counter now? Because has seen some some bouts of good move and then those fizzle out. So is this one that is yet to see some uptake going forward? Do you expect that momentum to come back?
Yes, definitely. I believe this is a good time to build up fresh, long positions. In fact, he already have a 5,000 shares in the kitty. So he can also average this stock at a present levels. I believe the stock is forming a sort of inverse head and shoulder kind of pattern. And in today's trading session, prices penetrated the 200 exponential moving average. So I think it is the start of a fresh bull run, and that should be containing somewhere around 280, 290 sort of levels. While on the lower side, I believe stop loss should be placed below 206.
Got it. Well, as Vishnu is rightly highlighting, already you've seen two big bouts of buying come in on either side of the last 3 month chart, and then again today that move has started to build up. So it's something to watch out for you on your radar right now. Next one's coming in from Jayashri, who's from Coimbatore, wants to know bit in the pump stocks, so Shakti Pumps as well as Osal Pumps, if either of them are good to enter now for the medium to long term. Radharaman, would you recommend that? Because both have underperformed in the last year. Is it a good time to buy?
I think it's a good time to enter both the counters. There's a tailwind in terms of the orders flowing from the government. So I think it's a good time, maybe at the current levels. There's been underperformance in the past. But I think moving forward should be doing good.
Got that view. And the next question now coming in. And this one's again back in the IT space. It has to be one of the ones that we're covering today across the board. Sumant from Kolkata wants to invest into both those names that are doing well, TCS as well as HCL Tech. Radharaman, let me stick with you because you spoke about how this space is now shaping up yet again. Is it a good time to enter? Are they more beaten down? HCL Tech, of course, comes out with results today as well. What's your view?
So I think it's more of maybe stock movements which are coming in, and IT is getting back to traction. So it's more of valuation based thing. It's a good time to accumulate, but in tranches. So one should not be looking at the full investment at one go, but maybe taking in tranches and maybe slowly building the positions here.
And this one's for the long term, Radharaman, like is it a 1 to 2 year or a longer term contract? Because we've seen, of course, a massive correction since February. So what's the time frame?
I think it's 2 to 3 years. So medium term.
Okay, got it. Well, the next one coming in, and it's on a counter that's been beaten down, Sula Vineyards. And Raja from Chennai has been holding 50 shares, but for a really long time, from 600 odd, he's been holding. So let's look at the 1 year as well as the 5 year chart. He's asking if he should just continue to hold or just sell out of this position. So 12 months, of course, has been down 50%, and you see from those highs also almost of 600 odd, and has corrected massively in that particular time frame. But Radharaman, should he just cut out his losses and move out, or is it just so beaten down that just wait for some kind of days where it could show some up move and sell the rise?
I think he should cut down his losses and maybe move to a better stock.
Anything in a similar space that you like?
Maybe the spirits segment one should look at, maybe a Radico Khaitan or United Spirits, and maybe move out of this particular piece.
Got that view. The next one, this question, it's on ITC Hotels. Murthy from Vizag is holding shares at 170 odd rupees, and he's holding 250 shares, asking if he can still continue to hold for the long term. Again, Radharaman, results this week. Is it a good time to continue holding?
I think he can cut down ITC and maybe move to a ICL. So Indian Hotels could be a better bet and more diversified in terms of the product basket. So I think that's a better bet to get into.
Got that view. Now, the other one's from Jaya, who's from Coimbatore, wants to know if it's a good time to enter into L&T as well as Airtel. Either of those, Vishnu, that you like on the charts?
See, if we first talking about the L&T, so definitely the stock technically purely because there is again re-emergence of West Asia crisis. So I'm not just taking that development into account. Technically, in fact, the stock is trading in the proximity of very crucial horizontal support that aligns somewhere 3,800 sort of levels. So currently prices are taking support in this price zone, and I believe on the higher side prices are all set to extend the gains towards 4,100 and then 4,200. So from technical standpoints, yes, one can go long in L&T, Larsen and Toubro. And second stock you mentioned, which is stock?
The other one was Airtel, Vishnu.
Airtel. Well, so yes, technically Airtel is also looking good. Prices are forming a higher highs, higher lows kind of pattern. And the good thing is that prices are now currently taking support in the cluster of 21 and 200-day exponential moving average. So yes, from better risk reward point of the view, one can go along with keeping the stop loss below 1,840. While on the higher side, I believe 2,000 and 2,100 sort of levels can't be ruled out in short term.
Got it. Well, truncated session, this one of Ask Profit, but let's start with the rapid fire round and try covering all those stock related queries. Vishnu as well as Radharaman, you know the drill. The first one coming in, and this one's on Jupiter Wagons. Binoy has been holding this count. Radharaman wants an advice if he should continue to do so.
What is the entry point?
He's not mentioned the stock price, but mentioning that he's holding 1,000 shares close to the current market price.
I think he should hold on.
Hold on, got it. Next one that's coming in, this is on Triveni Turbines. Sagar Pathak is holding shares at 669, Vishnu. Stocks just starting to see some moves on Triveni. What would you recommend here?
Yes, definitely. One can hold, but maintain a stop loss below 575. That is the proximity of 200-day exponential moving average.
Also, Vishnu, between CDSL and Coforge, both different segments. But Vijay wants to know what's an ideal one for the short term to enter into.
I mean, both stocks are looking quite good, but yes, Coforge has overstretched currently. So I would prefer to go with the CDSL because the stock recently has given a breakout above 1,400. So I believe there is a more room to extend towards 1570 in CDSL.
1570, got that view. On IDBI as well, Lalita from Chennai has been holding on for the last 2 years at 78. Of course, Radharaman, there has been a lot of news flow on divesting that, and then no progress being made. Should she still continue to hold, or just book her profits and buy something else?
So she should continue to hold IDBI.
Okay, got it. The next one coming in is, and this one's an interesting one from Nandagopal. Between Sirma and Dixon, what is a better bet for the long term? Both have seen some up move from the lower levels here, Radharaman. What's your pick?
Dixon is a better pick among the two.
And the time frame as well?
I think 2 years is the time frame.
2 years, got it. Subhas from West Bengal is holding MCX at 3114. Vishnu asking if he should add more at the current price point. Would you recommend that? Should he average?
Do not add more, but maintain the position with the stop loss below 2440.
Got it. The other one's on Federal Bank. Murli holds shares at 116, so he's up almost 2 to 3 times Radharaman. Can he continue to hold?
He should continue to hold. There's a lot of momentum in this one.
On GAIL as well, Anil Kulkarni is holding 9,000 shares at 175. It's a short-term bet, Vishnu. How are you looking at the counter?
Yes, recently we have seen prices, just given a breakout from the following trendline resistance. So I believe 200-day moving average are still, positioned below the current market rate. So one can hold the position, maintain a stop loss below 167.
Got it. And Bharat from Vijayawada is holding on to Bajaj Consumers. I think they came out with results today, Radharaman. Good set of numbers, at least on the face of it. Can he continue to hold? He's bought shares at 676.
I think he should continue to hold. Numbers are quite good. Let's hear the commentary in the evening today. And maybe as of now, he should continue to hold.
Got it. Well, that was the last question of the rapid fire. Vishnu as well as Radharaman, thanks so much for joining in and helping us solve all these stock-related queries in a truncated Ask Profit. But viewers, out of time on this edition of the show, thank you so much for watching. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at various participants, and the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it. They had thought about change, they had thought about resilience in their own businesses. So the soft factors that they eventually chose the winners with is something that stood out for me. In fact, when we were actually doing the work, if there was a governance concern on any of the nominees, they were struck down. Or if there was something which was potentially in the grey zone, the jury was notified of it, etc., etc. In many cases, the jury themselves, very knowledgeable jury, they themselves were very, very aware of some of those situations.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. We're coming to you live from the NDTV Profit Suzlon studio. Let's take a check of how the markets are this Monday afternoon. We're at the high point of the day, or very close to it, and look at the ground that we've made up from what was a very wobbly start at the start of trade today, and we've made up quite a bit of ground. We're trading very close to that 24,200 mark, but we're holding above that for now. It's been quite the day for the Nifty 50, recovering as much as 225 points or thereabouts. Let's pull up the Nifty Bank as well. This is a great chart. Pull that up as well. So we're trading with gains of about 0.2%, but if we can pull up a similar gain from lows for the Nifty Bank, that'll be nice to look at, right? 655 odd points. But you know what? This isn't the best sectoral index. And for the next trick, let me pull up the Nifty IT index, because that really is the story of the day. Pull up the Nifty IT. It's trading as much as 1,200 points up from the low point of the day, which was at the start today, and it's trading with gains of well over 3%. Pull up the intraday chart and you will see that about 4% or thereabouts. And you have to talk about some of these frontline companies. We'll come to that in just a bit. 3.6% at this point, off the high point of the day, just a little bit off, but it's clearly by far and away the best performer. Pull up the heat map for the Nifty 50, and the top 5 performers will likely be in the IT space, and indeed 4 of them are certainly TCS, HCL Tech, Infy and Tech Mahindra, and not too far behind you have Bajaj Auto that's doing reasonably well. Wipro is slipping in and out of the top 5, but it's gaining about 1.6%. It has been traditionally the weakest of the 5 IT companies listed here. But a bunch of the Nifty 50 is trading in the red, including some heavyweights like Reliance Industries, down about 0.8%, Tata Steel, Nestle, down about 2% or so, Grasim, Indigo, on account of crude oil prices climbing up and heading towards that $80 per barrel mark, trading just shy of that. Pull up the contributors chart for the Nifty 50 as well, and you will see that the IT companies are front and center. Infi, TCS, HCL Tech in the top gainers, so too is ICICI Bank. Very quickly, the broader markets as well. The mid-cap index will be trading flat just about, and the small cap index just marginal gains here, 0.3%, and a pretty nice climb at the end of the session right now. And finally, let's look at the advanced decline ratio, because that's going to show you that it's switched a number of times, once here, once again here, and now with trading with advances leading at this juncture. So what are the fundamental factors that are at play right now? You're seeing a resuscitation or a restart of hostilities in the West Asia region, and of course strong buying seen in the benchmark led by IT names. You have gained close to 200 points from the low point of the day. You have a risk on sentiment that has come through 200 points or thereabouts from the low point of the day. As I was saying, you have a risk on sentiment that has come through, and that's despite the fact that crude has risen to $78 to the barrel. You have the Kospi and Nikkei that have lost ground considerably, something like an SK Hynix losing quite a bit of ground in trade today. 24,000 proving to be a strong support for the benchmark Nifty 50. Immediate resistance levels though are seen at 24,250, just a short distance from where we're trading right now, and beyond that close to the 24,300 mark. The broad resistance sits at the 24,280 to 320 zone. Let's also talk about the Nifty Bank, or rather actually you have 24,400 that needs to be broken for a sustainable path forward heading towards that 25,000 mark. But the immediate levels that you need to watch out for the Nifty Bank is 58,150 on the upside, followed by 58,250, and the support is seen around 57,700, followed by 57,540. So that's the long and short of it. But Mahima, what are the individual counters that are moving today?
So, Alex, if you take a look at some names that are under pressure, you have something like an MTAR Tech, which is down by about 5%. You also have the Jammu and Kashmir Bank, which is down by about 5%. You have Inox India, which is seeing a downtick of around 4%. Azad Engineering, Sangvi Movers, Bharat Dynamics, Gujarat Ambuja Exports. This one has remained under pressure for quite some time now. But on the flip side, you also have certain names doing fairly well. Just that, of course, on the back of numbers and good operational metrics, gaining 20% in trade. Nugent Software there's no stopping to this counter because it's up 14% in trade today as well. Sonata Software has been doing very well, up 12%. You have Purvankara, which is also up 11.5%. Meghmani Finechem also seeing gains for 10.8%. C Infosystems also up by about 8%. Kalyan Jewellers, yet another day of significant rally coming in on this one as well, up 7%. And of course, Happiest Minds also doing fairly well, up by about 7%. Route Mobile, Ethos Limited are also some of the other names that are gaining about that 6% mark. So that's with regards to where the markets go. But you know, in a recent development coming in, Iran-US exchange fresh strikes. In fact, weekend, you know, overall a tit-for-tat strike has resumed between US and Iran attacks, and that has escalated as Iran and US tussle over control of Strait of Hormuz. And Iran wants ships to use a northern route through its territorial waters. US wants ships to use a southern route through Oman's waters. Of course, this is the recent update coming in. Let's also try to take a look at how the crude looks like right now. Let's try to pull up and see as to where it's trading at right now if we can, and see as to what are the levels we are tracking. There you go, the Brent at 78 and you have WTI at 73. So both seeing a spike of around 2.8 and 2.7% each. So that's the recent update coming in, of course, with regards to the West Asia conflict. But let me also welcome in our guest for the day. We're joined by Hemen Kapadia of DHOC FinServe and Pashupati Advani, who's the founder of Global Foray, joining us now. Welcome to both of you, gentlemen, and a very good morning to the good afternoon to the both of you. Hemen, I'll take the first question with you with regards to where the indices go. The Nifty 50 and the Bank Nifty. They've shown resilience throughout the trade today, one thing for sure. VIX, of course, is up, indicating volatility. What is it that you're seeing on the levels for both of these?
A very good afternoon to you, Mahima. Thank you for having me on the show. It's always a pleasure. Frankly speaking, we were in a range between 23,800 on the downside, 24,200 on the upside. This range has now expanded a bit, 23,800 and 24,588. So, Mahima, we've been in this range for almost 17 trading sessions or so, approximately. And there is no trending bias yet. One thing is very clear, the swing high of 24,601 posted on 21st April needs to be taken out for a further upside. I believe the bias is more positive than negative. But after so many trading sessions of going nowhere, Mahima, I think a breakout is needed on either side. And I'd say 80% on the upside, 20% on the downside. The bias, like I said, is clearly on the upside. So levels, 24,588. Support, 24,150, 23,800. I think 2300, we've taken support multiple times. Now that should not break. It doesn't look like breaking, but we pay our respects. So I'd say about 24,588, I think we'd see more technical green shoots coming in, would mean a breakout, an intermediate uptrend, so on and so forth. As far as the Bank Nifty is concerned, we need to close about 58,712. Range is 56,600, 58,712. Almost same logic applies, Mahima. The medium-term picture is positive. The short-term picture has been range-bound since 15th of June. So it's the same thing. But yes, I believe maybe this week or next week, we would be seeing an attempt on a breakout on the upside. You mentioned VIX is up to 13.2, but till it's below 14 or something, I'd say yes, it's definitely up. I'd say it's okay. It's not a big deal. Controllable. So there is a promise of an up move. Stock specific, the mid-cap index made a fresh all-time high. The pharma index had made a fresh all-time high. Metals oversold, IT oversold. So things are looking more stable despite crude, which took support at Brent at $70 and has moved up. Mahima.
Heyman, quickly, the individual stocks that you're liking this afternoon?
Okay. I'd say individual stocks that I like is firstly a buy call on APL Apollo Tubes. I believe we are seeing positives over there. A close above 1840 would mean a mini breakout. So buy at 1830, stop loss 1790, target of 1810. The other one is DV's Labs. This is not a very short-term call, Alex. This would quantify as a 15-month time frame call, if not 18-month. We've been in a range between 6450, 6950, consolidating for almost a year. Looks good. Oscillators positive. On verge of a breakout. Buy DVs at 6915. Stop loss 6715. Target of 7315.
Mr. Advani, thanks so much for taking the time, and good afternoon to you. Pleasure as always speaking with you.
Likewise.
IT companies today in focus, and the index as a whole gaining as much as 4%, and quite a few of the frontline companies gaining between 4 and 5%. But the question we've been asking through the last few weeks is that you see fits and starts of this take place, but then the earnings is something that everybody has a question mark over. Is this again a situation where the pack as a whole will flatter to deceive?
No, so my hypothesis on the market has always been a function of supply of money versus supply of paper on the other side. So on the supply of paper on the other side, you've got IPOs coming, and you've got a couple of really large IPOs like NSE and the Geo one that is forthcoming in the next 30 to 60 days. So they're going to suck up a lot of the market, and a lot of those shares are offered for sale. So that money is going to leave the market. On the input side, we are actually waiting for, everybody's waiting for the FCNR to actually click. Because one of the challenges is that the dollar deposit you're getting is in 6%. And people are finding it very difficult to get fixed term money for 3, 4, and 5 years at the rate of 5.5%. And even at 0.5% spread, that is not a very good spread and quite a dangerous spread. So that is the reason why there's not been a flood in that market. If that market suddenly floods because the spread goes up, money will come into the system, it'll go into the markets, it'll find its way, and then there'll be stability. but there seems to be a lot of hesitation. Banks overseas are talking about offering to NRIs, but I've not seen a term sheet yet, which is actually a little worrying, because once the term sheets get out, then it will take X amount of time, maybe 25 days, 30 days to get it executed. And I think that's one of the main things that is stopping the market from going up. That's why we're floating. We've got uncertainties. That's why things are not moving, because we're waiting for a trigger. And the FCNR trigger is there and the IPO trigger is there. The IPOs are not stopping. They are coming. There's no question about that.
But the question, Mr. Advani, specifically is on the IT pack and on the Nifty IT, which is the top sectoral gainer, and the fact that some of these companies are gaining quite considerably. The question to you, though, because you've seen so many of these cycles play through, and you've seen these companies in different avatars over the course of the last 20, 25 years or so, is this a situation where people get in and it could be a value trap?
No, so what is happening is that I don't believe our IT companies have actually addressed the issue of whether how much AI is going to actually affect their businesses. They have made all the companies, the guidance seems to be lower, so that's a little bit of a danger. However, they've all got hit quite massively, 25-30%, and therefore you've got bottom fishers. IT is still about 15-17% of our indices, so therefore index players are going to buy. And so that's what's kind of holding the market up. I mean, Infosys is up $100, for example. I saw it in 3 figures. It's now at 1,100. So as an example, so there is some bottom fishing. I personally do not believe that the IT companies have solved the real problem, which is what products are they going to create now that is going to give them sustainable revenue. And that I've not seen an answer from any of them. All of them are just living off old contracts, according to me.
Fair. So some bottom fishing, but the real problem is yet to be solved for IT. But moving on and trying to focus on HEG, because it's set to split its graphite and green tech business into 2 listed companies. Existing shareholders, of course, will receive shares in both the companies, and Parth joins us with more details on this demerger happening. Parth?
That's right. So HEG will be demerging its graphite business and listing it separately, and this is actually an NDTV Profit khabar confirmed from the Hardor Street segment. Now this demerger has been announced, but the scheme is still awaiting that final NCLT approval to go through. Now let's understand how will this demerger work. So the current HEG shareholders, as you mentioned, will get shares in both of those businesses. The graphite business will move on to the HEG Graphite, which will later be renamed as HEG Limited, and the current HEG will be renamed as HEG Green Tech, which will have that clean energy and sustainability businesses. Now let's understand what will each of these companies do. So the first one will be the HEG Limited. It will still keep on manufacturing those graphite electrodes that we have seen HEG gain a leadership in, and the second one will be the HEG Green Tech, which will own those clean energy and sustainability businesses. Now why is the street excited about this demerger? If we talk about the estimates, then HEG Graphite is valued at around 9,200 crores right now. On the other side, HEG Green Tech is valued at 10,300 crores. So if we combine both the entities, they have a value of over 20,000 crores. Even if we apply a 20% holding discount, the total entity value comes out to be around 16,000 odd crores. Now, according to the current market cap of 11,000 crores, we see a value unlocking potential of almost 55%. So this is the main reason why the street is very excited about this demerger. If we quickly go through the triggers for both of those businesses, starting with the graphite businesses, the first one is that it is a very high entry barrier businesses because of the strict quality requirements and also the high complexity that is needed to build those products. If we quickly move on to the next one, the EAF steel making, which is electric arc furnaces, they are gaining market share because it only uses the 1/4 carbon emission versus the traditional methods. In the next one, HEG operates the world's largest graphite electrodes plants, which gives them a very big advantage. Also the capacity, they have a capacity of 100 kilotons per annum right now, which is expanding to 115 by the 2028 year. Also the next business, that the green tech entity that will be there, they will supply graphite anodes for both EVs and energy storage system. Both of these are very sunrise sectors. Also the battery production increase will be from 3 to 8 TWh by the year of 2035. Also the Chinese players, they hold 95% of the capacity in the world. So there's the scope of diversification as well. The domestic cell capacity will be increasing to 250 gigawatt hours by 2035 as well. Lastly, the The company is also investing in graphene-based anodes, which is the strongest material known so far in Earth. So this is the entire story about the HEG demerger and why investors should track it.
Okay, Parth, thank you so much for getting us those details on this entire demerger happening. Of course, stock gaining in trade on the back of that, up 5%, almost at the day's high point. But the other one that remains in focus is Lux Industries. Let's try to pull up the chart of the counter. Now, the company is set to invest around 600 odd crores in a manufacturing unit in West Bengal, and this is for the capacity expansion that they're doing. Not just that, I mean, in general, there's a multi-channel expansion that they've seen in terms of the overall growth. Also, FY26 saw an uptick of around 13% in terms of revenue, but margins continue to be under pressure, and so did the EBITDA. To discuss as to how things are shaping up in terms of capacity expansion, what competition is looking like, and what pricing is looking like, and what are the plans going ahead for the company, we are now joined by Saurabh Budolia, who's the Executive Director of Lux Industries, joining us now. Saurabh, a very good afternoon to you, and I hope I'm pronouncing your surname correctly. My first question to you is with regards to this huge expansion that you've planned in West Bengal. 600 crore is what you've planned. What is this going to do for you, one thing? And secondly, in terms of capacity utilizations, where do they stand at right now? And in what time period do you plan to do this capacity expansion in? Is it going to be in different phases, or what is the plan looking like?
So thank you and good afternoon to you. The Dankuni plant, anyway, in the existing capacity, if you'll see, we already have a plant in the size of around 8 lakh square feet. And adjacent to that, we are now planning to build another world-class plant, complete integrated plant, having a complete size of around 12 lakh square feet. The Dankuni plant, celebrated as one of Asia's premier automated hosiery facilities, will leverage this expansion to consolidate to manufacturing, eliminate regional processing bottlenecks, and drastically reduce the wastages using the advanced machinery and other stuff. The integration is expected to yield immediate operational efficiencies. Anyway, we are planning to have this manufacturing facilities over a period of next 5 to 6 years. And this facility will come up in definitely in 2 phases. The first phase will start in the operations by end of second year or in between third year. And the second phase should be ready and should be put for the operation by end of 5th year or mid of 6th year.
600 crore that you're planning to put into this investment, how is the funding going to fare like? Because you don't have any long-term borrowing as of now. Will it be completely via internal accruals?
No, strategically, we are planning to have a mix of internal accrual as well as the borrowings. We are in discussion with the multiple banker where we are looking forward that how the borrowing should come on the books. Largely, if you'll ask me, the way we are seeing that around 50% of the borrowing, 50% of the funding should happen through the internal accrual and balance should happen through the borrowing. Anyway, as I told you, like this complete funding requirement versus the plant should come in the operations over a period of 5 to 6 years. So every year the funding requirement will be in the range of 50 to 70 years. Towards the end of 5th and the 6th year, the funding requirement will go up in the range of 100 to 120 crore. So I believe the current company's balance sheet is quite healthy. We will start the funding through the internal accrual, and as and when we will progress, we will anyway take the borrowing at the right point of time to reduce the exposure on the interest and the borrowing cost.
Must have missed something. Hi, this is Alex joining in. I just want to ensure that I've gotten it correctly. So this the facility is going to be built over a period of 6 years, is what you've said. Right. And this is going to be done in phases. So am I right in assuming that there will be an increase in capacity starting from FY28? When will the first increase in capacity take place?
So by end of 28 or mid of 29, we can expect that the phase 1 should be put for the operations.
Okay, and what will the quantum of production increase be or capacity increase be?
So as of now, we are forecasting that around 5 crore pieces, the additional production we should envisage by the end of the phase 1. The balance 12 to 13 crore of the pieces should start the production once the phase 2 is done.
And the phase 2, there'll be how many phases totally?
Total, so we are planning to complete the entire project between the phase 1 and phase 2 only.
Phase 1 and phase 2. Okay, so you're currently sitting on 12 crore units. You will increase it by a further 5 crore in phase 1, which is N28.
Right.
And how much of this capacity is currently catering to export?
So see, as of now, if you see from the vertical A side of the company, we are doing an export of around 200 crore rupees. And in the number of pieces, if you see around 4.5 crore of the pieces, we do the export as of now.
Okay. Saurabh, the other aspect is that FY26 we saw supply chain disruption because of West Asia conflict. Just want to get a sense as to how much of that has already been penciled in, and what is the impact going forward as well. And the second aspect is that because of price hikes that you must have taken because of the supply chain disruptions, volumes might have been impacted. So what is the forecast that you have going forward? Is it going to be a volume-led growth or a pricing-led growth in the first half of FY27?
See, again, it will be a mix of the volume plus the price both, because anyway, we are seeing there is an increase in the fuel prices, and anyway, the supply chain cost has gone up drastically. In last couple of quarters, we have faced multiple bottlenecks because of this geopolitical issues. Largely now the issues are settling down. Again, we are seeing for the next couple of years, or let me just give you a short-term view that for the next couple of quarters, the order is coming on time. We are not seeing any kind of major issues to like cater the demand what we are getting from the export. Even for the future, we are very much hopeful that the export will be the another pillar of growth, and export we are seeing a huge potential to grow from here.
And then what happens to your margins? Because FY26, there was a slight blip in terms of where margins go. What is the blended margins that you're looking at, let's say, a year down the line?
See, again, the margin has gone down in last couple of quarters, largely because from the vertical A side, we have done a lot of investments in the marketing and the advertisement. In the last year itself, the entire investment in the marketing was around 100 to 120 crore. While we have grown the top line in last 8 quarters, if you see the growth was in the range of 20 to 25% quarter to quarter. So again, the way we are expecting that for the next couple of quarters, as we see that hosiery market should keep growing in the range of 10 to 12%. Definitely, our entire effort should be to beat the industry and to have a larger growth as compared to the hosiery segment. While the marketing investment largely will remain, the numbers should remain the constant. So definitely, it should add some value to the bottom line, and we are expecting that 100 to 150 basis point of the margin growth should come by keeping a control on the marketing and the advertisement spend.
Saurabh, I just want to come back to this facility, right? Because if I understand correctly, 20 crore units is what is going to be the total addition, right? And 5 crore in first phase. So when you're talking about the amount of money that will be spent over the course of 27 and 28, what will that amount be? And therefore, when will you have to raise this debt?
So see, again, as I told you, we will start the project with the internal accrual. Company's balance sheet is completely sufficient enough to start funding for this project. In the phase 1, we are expecting around 350 crore of the investment which would be required. And for the phase 2, the larger investment will come as part of the 200 to 250. And by end of year 1 or the start of the year 2, we should be in a position to start having the borrowing in the books of account.
Okay. And so therefore, can you give us a sense, based on the debt that you will have to raise, what sort of net debt to equity would you be comfortable with?
It will be largely a very comfortable position. So again, as we are talking about currently, my cost of capital or the debt cost is around 6.5 to 7%. And as of now, we are in discussion with the banker. Once the rates are closed, definitely we will come back, and at the right appropriate time, the numbers will come in the picture, or it will be in the public domain.
Saurabh, just looking at your financials, overall your 3-year CAGR for top line has been around that 7 to 8%. Considering that you're adding more capacity, there's UK FTA also in place, which is going to definitely benefit you. Do you think you'll be able to do more than that 8% mark in the next 2 to 3 odd years? And if yes, if there's a ballpark figure.
So one side is the company, another side is the vertical A, because as you know, the company is going for the restructuring and there will be trifurcation of the business subject to the regulatory approval. So let me try to focus myself on the vertical A. So largely this facility is coming for the vertical A of the company. And in the vertical A, since last year, again, we were having a growth of around 25%, out of which around 9% in the quarter has come through the volume, 7% has come through the revenue. Put together, it was around 15 to 17% of the total growth for the quarter for the vertical A of the company. And if you see the growth of last 8 quarters, we were growing at a pace of around 20 to 25%. Again, it's a blended growth between the volume and between the prices.
Saurabh, thanks so much for taking the time today. Wish you all the best and speak to you really soon.
Thank you. Thanks a lot.
Okay, Mr. Advani, I want to come to you on not just necessarily Lux, where there is a massive capacity addition that they're planning, as they've pointed out. They're currently at 12 crore units, and they want to take it to close to 32 crore units over the course of the next 5 to 6 years. But the hosiery space in general, if you were to talk about Page, you talk about certain other players, they're not exactly cheap, particularly Page. How do you treat them?
Well, the reality is that India is going through a demographic where the per capita income is going up. So therefore, underwear is one of the things that immediately gets bought as people get richer, and then it flies. So all these guys are perfectly positioned. It's heartening to see that someone is doing capacity expansion in any sector. And of course, this is an easy sector for them because they know the business and they know they're getting short. But, that I'm seeing heartening, because I'm not seeing a lot of capacity expansion in our small and medium caps, except a little bit in the defense space. But otherwise, I'm not seeing the capacity expansion that is required for us to actually grow to the next level and for the market to get more mature.
Right. Let's try to get in Somit now to tell us as to what's the chatter that he's been hearing in the dealing room today. Somit, what is it that you found out today?
Well, firstly, it's a couple of counters on fundraise. It's Bellrise and Ather Energy. Now, there's a buzz of a QIP opening soon in both these counters. For Bellrise, it is expected to open today or max by tomorrow. And for Ather Energy, the street is expecting the QIP will open this week. Bellrise QIP could be around 2,000 odd crore, which will also include the green shoe option. But it would remain to see what actual amount the company finalizes to raise from investors. The second stock on the list is ICRA. There are buy flows on the large HNI desk. There's a buzz of a potential buyback announcement that could come in when it comes to ICRA. For Tata Chemicals, there are buy flows on the PMS desk. Dealing rooms indicate a potential price hike in caustic soda prices. For CDSL, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade today, and delivery volumes are expected to be on the higher side. And lastly, when it comes to NetWeb Tech, there are buy flows on the large HNI and PMS desks. Dealers indicate a positive note to come in from a broking firm. Keep an eye out for NetWeb Tech as well.
Okay, so quite a few interesting stocks. Hemen, I want to come to you on the IT pack specifically, right? Because this is not something I asked you about. All of the frontline stocks are buzzing in trade. Is this signs that a bottom has been found and that you can buy at this point for further upside?
Alex, first, they were deeply oversold. Secondly, there was medium-term positive divergence. If you look at the Nifty IT index, Alex, it's come up from 46,000 to sub 26,000. That's huge. So even if you were to play for a dead cat bounce, I believe that is just beginning. And the level that we've taken support at, Alex, very interesting to know. And let's take 30 seconds more. July 22. We've not closed below this level since April 21. So we've come to multi-year lows, tested very strong supports, precipitous decline, oversold positives, but this is from a short to medium term view. The longer term view still remains grey, not very legible. And interestingly enough, we are also coming close to a resistance level soon. The way I see it, it's more of a trading bounce. Currently, even if it comes off a bit, I believe the next few weeks, it would be a buy on decline. The long-term picture we'll have to look at after this month is over, or probably the next. Too early to take that call. Alex.
Okay, the question always remains whether the entire space, IT as a space, will be a dark horse or not. But it's time to slip into a very, very quick break. On the other side, of course, we'll get you top buy today and sell tomorrow picks. So do stay tuned in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will...
Welcome back. You're watching India Market Close, and we're holding out at above 24,200 for the Nifty 50. The question is, do we hold that? Do we go higher? How much higher do we go? And we've more or less held very close to that 24,200 mark in the last half an hour or so. Osho Krishan, who's Chief Manager Technical and Derivative Research at Angel One, joining us on this leg, as well as Siddharth Khemka, Head of Research Wealth Management at Motilal Oswal Financial Services. Gentlemen, thanks so much for taking the time, and good afternoon to you. Osho, very quickly, first to you. We made quite the comeback in the day so far. The question is, do we hold this level? And what are the technical triggers that you're looking at for the benchmark right now?
Very good afternoon, Alex. Firstly, thank you for having me at the show. Well, yes, no doubt today's market sentiments has been very positive. Major of the parts from the IT have taken very strong momentum, and because of which we are witnessing a very strong movement in the benchmark index itself. But overall, if I have to quote on the higher end on the technical front, then 24,300, which is the bearish gap, is the first resistance for Nifty. And even the call writers have significant positioning around 24,300. So that should be seen as the first resistance zone for Nifty. While on the lower end, the maximum pain now has shifted towards 24,200. So I'm expecting that this will be a crucial juncture, because again, tomorrow will be the weekly expiry. So considering that, I'm expecting that undertone should be very much bullish. But in today's sentiment, today's market move, we have seen a strong momentum basically from the IT space, and other counters has given a supportive role in today's trading session. So we need to check whether there will be any follow-up movement in tomorrow's session or not. On the benchmark index, I'm expecting dips again are looking very positive. So one should wait for dips to get utilized. 24, 150, 120 on the spot levels is looking very positive. Any dip towards those levels can be seen as buying opportunity. And 24,300 is the first resistance level. A breakthrough above 24,300 can only provide a continued momentum in the market. But at present, for benchmark index, a cautious view is recommended at these levels.
All right. Siddharth, I want to come to you on a stock we discussed in the first half hour of this program, which is HEG. The stock is up about 5.5%. I'm not sure if you have coverage on this, and traditionally you've looked at it as a graphite electrode manufacturer with plays in the electric arc furnace area, right? But now the company is going to be splitting into two listed companies. So there's going to be a green tech business as well, and the prospects look good. So how do you look at HEG, if at all?
Yeah, hi, good afternoon, Alex, and thanks for having me on the show. I think definitely we don't have a coverage on HEG, but as you rightly said, so far this was the graphite electrode business that market used to look at. But with the new age businesses coming up, I think with the EVs, battery storage, the green revolution, I think that part of the business is something that will also be more exciting and will be less cyclical compared to the core business, which is largely linked to the metal cycle and hence commodity linked. So I think market should take that as a big positive, with especially the new age growth business, structurally growth business being hyped up separately and giving investors the choice between the electrode business and the green battery storage business.
Okay, just wondering, Osho, if you've taken a look at the charts for Bajaj Consumer, because of course it came out with its earnings. It's a strong set of numbers that have come in, but the stock, of course, is seeing a downtick of around 1%. I mean, if you take a look at the numbers, the top line growth of around 28%, EBITDA growth of around 101%, and PAT growth of around 84%. And operationally also numbers look very good, but seeing a downtick of around 1.2%. Is it just profit booking happening because it's seen a significant run up from its lows in June 25?
Definitely the technical setup for this counter is overheated. The counter has already been into a very strong movement since the zone of 400 has been broken out, and from there onwards there had been vertical momentum. The counter was hovering above the short-term moving average, so there is some kind of deviation that can be seen in the short-term period. But again, today's reflection is just kind of a profit booking for the counter. The technical setup is still positive, but again, on the higher end at these levels, risk reward is not favorable. So I expect that any kind of correction towards the zone of 610 to 620, which is near to the zone of 20-day exponential moving average, can be seen as a buying opportunity. But again, the counter has seen a very strong vertical rally of nearly 260 odd points. So some kind of respite or some kind of profit booking should not be ruled out. So if someone is already holding a position, 600 will be the advisable stop loss for the counter.
Got it. Okay. Pay attention to the news in the bottom of the screen. That is where you're getting exclusive information coming through on the companies or rather the banks where there could be an offer for sale. This is exclusive information that has been picked up by my colleague Shrimi Chaudhary. The government is set to launch an offer for sale in Indian Overseas Bank soon, and that's not the only bank in which there could be a stake sale. My colleague Shrimi is joining in with those details. Shrimi?
Yeah, that's right. What we are gathering exclusively that the government is preparing to launch an offer for sale in the state-owned Indian Overseas Bank very, very soon, perhaps in a day or two, as part of the ongoing efforts to reduce the holding in the public sector banks and meet public float norms. Do note that the centre currently owns 92.44% in IOB, well above the 75% ceiling prescribed under the public shareholding norm. But we don't know yet the offer size, but this is the second round of OFS after the government diluted 2.17% stake in December 2025 in IOB, which, received very strong response at that point. Now, sources indicating that Centre intends to continue stake dilution in select public sector bank in the coming month as it works toward complying the public float requirement. And after IOB, actually, we could expect OFS in Punjab Sind Bank as well as UCO Bank. And of course, both are significantly above the public float threshold. Now, it's important to note that proposed stake sales are expected to support the government disinvestment program. As we know, so far, government mobilized over 20,000 crore through disinvestment. So another 60,000 crore actually to come in to meet the target of 80,000 crore, which is, fixed for the current financial year.
Much, Shrimi, for that. Siddharth, what's your opinion on this? Because ultimately, this is one way in which the government can bolster its finances. It has kind of taken a bit of a hit, and it was calculated to do so because of the crude oil price spike that took place in the first quarter. So it would have to support that in some fashion, and everybody thought it would be in the form of divestment. What do you think about IOB, though?
Yeah, I think, Alex, as you rightly said, government is looking up to shore its financials, especially we have seen a lot of the public sector enterprises, PSCs, witnessing an offer for sale of blocks being offered in the past couple of months. And I think some of these banks, especially the small size banks, there was a lot of chatter on the street that there is more consolidation that is coming up, and government kind of merging some of these smaller banks and even further consolidation to what we have seen in the past. So I think some of these banks, PSU banks, have seen healthy financial growth. Valuations are on you can say have been attractive for the government to look to save off some of the shares stake that they have and raise money in this current financial year, where they are facing a lot of challenge given the high import bill. So I think we could see some more of the sale offer for sale and blocks coming in across several public sector enterprises in some of the months ahead as well.
Specifically, very quickly, as a follow-up to that, you saw the Indian Bank results at the end of last week and the kind of improvement that it showed in asset quality. NIMs also went up. In the pecking order, where does it rank and what's at the top of your list for public sector banks?
So, yeah, I think public sector banks, we have a limited coverage among some of the large banks only. So, Indian overseas banks, we don't have coverage. Our pecking order, clearly SBI at top, sits clearly at the top, followed by Punjab National Bank, Indian Bank and Canara Bank. I think these are some of the banks within the PSUs that we like.
I was asking about Indian Bank, not IOB. Yeah. Indian Bank posted numbers on Friday.
Yeah, so I can quickly comment. Indian Bank, a good set of numbers. There was a strong growth in other income as well. But if you look at the core business, NII grew about 70% and NIMs improved about 6 basis points, so largely stable. And the management has retained its NIM guidance about 3.15 to 3.25%. And looking at the healthy loan as well as deposits growth, we believe that it's a good bank, best in class PCR ratio, ROA is expected at about 1.3%. Valuation still comfortable, and hence we have a buy rating with a target price of 1025. But I would say that within the pecking order, SBI, because of its size, sheer size and growth, that's the preferred pick within the PSU banks, followed by something like a PNB and then maybe an Indian bank.
Right. Just because we are talking about PSU banks, interesting fact, because in FY16, the share of PSU banks, the market share was at 68.1%, which fell down to around 51.8% in FY24, and it's picked up in the last 2 years at around 52.9%. So it is public sector banks, just as a whole in terms of banking system, that had fallen quite significantly. The last 2 years is when we've seen a significant amount of market share gain coming in. So we have to see whether that trajectory kind of continues or not. So that's an interesting fact about PSU banks. But let's get in Shivam to give us a list of stocks that are either buzzing in trade on the back of news or volumes. Shivam, what's on your list?
The first stock in our list is Puravankara, which has posted a strong Q1 FY27 business update. And starting with the first metric, which is pre-sales, that has seen an increase of around 28% at 1400 odd crores. Also, the collections have surged up by 40% and sales area have increased by 9% to 1.3 million square feet. Additionally, the company has added 4 land transactions with a cumulative gross development value of around 5,200 crores, and management has also reiterated its FY27 pre-sales guidance of around 11,200 crores. Second stock in our list is JSW Infrastructure, which has incorporated a subsidiary named JSW Kolkata Outer Harbour Container Terminal. And with this new subsidiary, the company aims to execute the Outer Container Terminal and berth 1 to 5 project of Shyam Prasad Mukherjee Airport, and JSW holds around 100% of the subsidiary. Now, there are a few stocks on which are buzzing on the back of volumes too. So first one is the Exato Technologies, which has hit intraday record high, and also the volumes in this counter has been up above 11 times on the average. Now, if we talk about the second one is Kalyan Jewellers, which has hit 6-month high, and the stock has been gaining for the third straight session. The volumes have been up around 7 times the average, and the stock has gained around 51% in last 1 month.
Okay, all right. Shivam, thank you so much for getting us that entire list. Of course, it's the 4th day where we're seeing a significant game coming in on Kalyan Jewellers. But TCS is the other one which remains in focus as it's witnessing a strong up move in trade. Let's go across to Jasmeet to give us a perspective on the bull versus bear case on this one. Jasmeet, what are you picking up?
Well, Mahima, thank you for that. If you look at this particular counter, it has gained about 6% in today's trade, which is the single largest day gain in over a month. Now, we have dragged down and pulled out few bull and the bear cases for this particular counter. If you look at the bull case, Kotak Institutional Securities adds TCS into their model portfolio and sees an upside of 18% from here on, and also calls out the current levels seem attractive. On the other hand, the bear case, Kotak makes sure to add some notes stating that buying TCS is on the back of its underweight on the sector. It's not an endorsement of the overall IT sector, and it still sees a lot of fear around AI impacting the margins and the top line. If we look at the next bull case for this particular counter, we have also that the management expects a strong recovery into Q2 and they expect the H2 to be better than H1 going ahead, while on the bear case, the AI pricing pressure and the macro is still not clear. Though the management is clocking in the AI revenue, but how much of deflation is that impacting on the top line? Is that that's something which is not very clear. The third bull case is overall manufacturing and life sciences is expected to rebound from the Q2 onwards as per the management. On the other hand, the consumer segment has tanked nearly 4% and management expects consumer to get better as the geopolitical tension eases. Now, if we look at the next bull case, we also see that the hiring has been highest in last 15 quarters for the company. They have hired about 9,000 odd employees in the Q1 as they have noted during the Q1 result. On the other hand, the bear cases, increase in number of headcount will impact the margins again, and we could see some impact on the margins going ahead. As in the Q1, we have seen impact of roughly 130 BPS on the margins on the back of that wage hike. If we look at the next bull case, the overall AI annualized revenue for the company has seen an uptick of 13%. It has been rising and seeing a double-digit growth over last 3 quarters and forms about 2.6 odd billion for the annual revenue. The bear case is the revenue contribution is still small, and management calls out that the AI revenue is lumpy and short-term, unlike the traditional revenues is long term. So that's something which will be in focus of how that shapes up going ahead. If we look at the analyst recommendation of this particular counter, we have 30 buy calls. Most of the brokerages remain bullish on this counter, but the target price they have cut, and from current levels, the return potential is about 10 odd %.
Okay, Jasmeet, thank you so much for getting us those details. Siddharth, I'll come to you on TCS itself and, IT space as a whole, because I was speaking to an IT analyst, on Friday, and he said that most of these analysts are still looking at the mid caps and the small caps, not the large caps. But there's Kotak, which sees an upside potential of around 18 odd %. Where would your bets be, if at all, you're looking at the space?
Definitely, Mahima. I think the TCS results definitely puts the sector in spotlight. I think why? Because if you see the numbers, the results incrementally better than feared. But what it also does not do is that it does not change the broader sector narrative. What it means is basically that the deterioration has stabilized, but meaningful recovery is still elusive and needs some time away. So for example, while the management commentary saying that Q2 demand is likely to improve, but what we also note is that the management has been talking about a pent-up technology backlog for several quarters, and hence investors would really need to wait for the evidence before assigning a higher valuation. Now, AI, two fronts. The business on AI, that growth continues, but the AI-led deflation, that is becoming more structural, and hence we believe that growth is still concentrated in certain pockets, for example, BFSI, high-tech, but some of the other sectors like the consumer, retail, North America, parts of North America, that continues to remain under pressure. And key important factor that margins also for TCS fell to 24%. Obviously, there is a wage hike impact. So clearly, I think within IT, things are stabilizing, but we are not yet turning positive or constructive on the sector. Selectively, as you said, yes, some of the mid-cap names do excite us, but that's purely a bottom-up picking. And I think stocks which figure among our top picks is Coforge, consistently strong order deal wins plus execution. And now with the stock price correction, I think valuations also have stabilized. So that is one stock that I would like to pick within the IT space.
Any quick view on the space? Anything that you're liking now, attractive on the charts?
On the charts, some counters are looking very positive. The first one is HCL Tech. HCL Tech has given a very strong momentum in today's session, approximately 5% higher. That has been backed by volume. So I expect the momentum to be continued on the higher end. 1260 should be the first target as a BTST candidate for the counter. So one can look for buying opportunity in TCS, and 1195 will be the advisable stop loss for HCL Tech. Other counter, Coforge, is also looking very positive on the technical chart, but currently it is hovering at the neckline of breakdown. So 1535 to 1540 is a very crucial juncture. if there will be a follow-up buying traction from current levels, then in the coming period, we can see a very strong momentum in the counter. And in the short-term period, 1640 followed by 1680 is the positional target for Coforge, while on the lower end, 1470, 1460 is a very strong support level. So one should look, or one should keep this counter in the radar list. If there will be a follow-up buying traction in tomorrow's session, one can look for buying in Coforge as well.
All right. And speaking of HCL Tech, because it's set to announce its Q1 numbers today, and we've Jasmeet joining us to give us as to what the street is penciling in from this particular counter in terms of where earnings go. Jasmeet?
Well, Mahima, thank you for that. For HCL Tech, we are penciling in a slight negative to flattish quarter. If you look at the revenue, they expected to take an uptick of nearly 2.2%, while the margins could expand by 40 basis points. And the margin expansion is on the back of that lower restructuring cost we're seeing in the Q1 and lower base in the Q4. Now, if you look at the other key highlights, the net profit could see an uptick of 2.3%. Now, moving on, understanding the key highlights and key commentary that will be in focus for this particular counter. The first one is CC growth. We're penciling in a negative 1.1 to positive 0.8% of CC growth for this particular quarter. The second focus will be on the guidance. After Accenture has cut its upper end of the guidance, a lot of brokerages are penciling in. Even HCL Tech might cut its upper end of guidance from earlier 4 to 3.5%, which will be a key focus to watch out for. The third aspect is the overall commentary in terms of the client-specific issue, which the company saw in the Q4, and the delays coming on the back of that slowdown in the deal win. That will be a key focus of how that has shaped up in this particular quarter. And lastly, the AI revenue also will be in focus of that has grown from Q4 to Q1.
All right, thanks so much, Jasmeet, for that. Siddharth, view on HCL Tech specifically, and of course, I think the street is now already priced in that there's going to be a muted set of numbers for the first quarter. It's more the outlook that they're going to be focused on than anything else. What do you think about what the path ahead in FY27 is going to look like?
Sure, definitely. I think among the names, HCL Tech and Infosys, there are two stocks where we are expecting some margin improvement, and that should be positive, while some of the other larger ones are likely to report weak numbers. I think HCL Tech, the numbers are there, but key, as you rightly said, key monitorables are commentary on demand, margin outlook, the AI-led deflation, which could impact about 2 to 3% of the overall portfolio, and hence, is there any revision to the FY27 growth guidance? That is also key, because what we are expecting is both HCL Tech and Infosys could lower their guidance for FY27 towards the lower part of the band, which they started with at the end of last quarter. And hence, I would say that among the large caps, HCL Tech is one which is a better place given its diversified product suites as well as its differentiated business model. And I would say that among them, the growth in HCL Tech is expected to be a little bit resilient. And if the management outlook is stronger, valuations are comfortable, and hence, again, as I said, within the large cap, the other tier 1 IT players, HCL Tech is a better place compared to others. And currently, we have a positive view and a buy rating on HCL Tech.
Okay, all right. Let's focus in on the realty pack as well. And this is a pack of stocks that has not done particularly well in trade today. But if you look at last week, oh wow, look at that. It's seen a significant recovery. Pull up the intraday chart for the realty index. It was down about 1% at the start of India market close. It's now flat. So look at the kind of recovery that it's had. Just pure sentiment that has shifted for this particular index as well. But let's talk about what the trends are right now and why it's done so particularly well, and which stock in this list has the biggest return potential even as things stand right now. Parth is joining in to tell you that. Parth?
Absolutely. So the Nifty Realty Index has performed really well in the recent time, but there's one hidden gem that investors need to watch out for within the index. If we can first quickly pull up the sectoral performance for the last month, we'll see that Nifty Realty is the top gainer at 19%, followed by Nifty Pharma and Nifty IT. The Nifty Realty has gained over 3 times the second best performing index. So that's how big the outperformance has been. But now you might think that because Nifty Realty has run up a lot, so maybe all of the constituents are really really expensive, but that's not the case with Brigade Enterprises. Almost 17 analysts track the company. Out of them, 16 have a buy rating with a return potential of 33%. That's still pretty huge even after the run-up that the entire index has seen. So let's look at the reasons why this might be the case. Well, in FY26 for Brigade, even if the pre-sales were down 5% year on year to reach 7,420 crores, management in their commentary had said that this was due to the delayed approvals and back-ended launches. But in FY27, what they have guided for is really interesting, because they're targeting for 9,000 crores of pre-sales, which implies a growth of 20% year on year. So even if the FY26 performance was not that great, in FY27 they are expecting things to recover. If we can look at the overall GDV as well, the pre-sales, as I said, that they will reach 9,000 crores in FY27, but the GDV will also improve from 10,000 crores in FY26 to almost 12,000 crores in FY27. So this is one of the reasons why Brigade is seeing such a high return potential among the broker estimates. Also about their launch pipeline, there are 3 major cities where they have a huge pipeline, starting with Bangalore, 45 lakh square feet, Chennai, 30 lakh square feet, also Hyderabad, where they have a pipeline of 30 lakh square feet. In total, they have a pipeline of over 1.16 crore square feet. So that is a huge number as well. And lastly, if we can check out the valuations as well, the company has a 5-year average of 75.8 times the PE ratio, but currently it's trading at a significant discount to that at just 26. Also the 1-year forward, that's just 16.7 times as well. So a huge discount is what we are seeing, and that's what is driving that return potential up to almost 33%. And this is why you should keep Brigade Enterprises in your watch list going forward.
Certainly, Par, thank you so much for getting us that entire perspective on Brigade Enterprises as well as the space. Siddharth, I'll quickly come to you, because a 20% plus growth for pre-sales is what they had guided for. And valuations, I mean, it's looking very attractive as compared to the 5-year average. Do you think it calls for or screams for a buy right now?
So, Mahima, I think the entire real estate pack definitely looks attractive. We are seeing the demand momentum improving with the pre-sales data for most of the large nationalized players in the real estate space reporting strong numbers. And I think what is happening is that the larger national level players, they are gaining market share amid consolidation, while the smaller players are losing market share. What is also helping is that there has been a disciplined launch pipeline, and which has helped sustain not only demand but improve the realization as well. And now with the cost of raw materials coming down, I think margins are improving. Valuations have become attractive. Some of the stocks especially are trading at 10 to 35% kind of a discount to the residential NAV, despite healthy cash flows and strong growth visibility. So we are largely very positive now on the entire real estate pack. Our preferred picks within the real estate, within the large cap space, is Lodha, Godrej Properties and DLF. And in the mid cap space, Aditya Birla Real Estate is our preferred pick.
All right, Siddharth and Osho, thank you so much for taking out the time and giving us all those insights on all the stocks that we talked about. But we're just a minute away from markets being closed. Let's try to pull up as to where we're seeing the benchmarks ending at, the Nifty 50 and the Bank Nifty, if we can see on the screen, and then also take a look at how the broader end of spectrum has done throughout the day today. Of course, closing completely flat on the Nifty 50 right now, about the 24, just about the 24,200 levels is what we're seeing. Let's see if we're able to maintain those 24,200 levels on the benchmarks. But the Bank Nifty closing around 0.13% higher, about the 58,100 levels. We started below the 58,100 levels, so it's a good gain, and it's picked up during the day for the Bank Nifty. At least for advanced decline ratio, it's been a tough day because we've seen a crisscross situation for the entire day. If you can try to pull up the chart for the advanced decline ratio, that will help our viewers to see as to how that chart has looked like and how the broader end of spectrum has been topsy-turvy. There you go. So many times it's crossed, right? It's almost 7 to 8 times that we've seen the charts crossing each other, but by the end of the day, we're closing in with 1,400 odd advances versus that of 1,200 odd declines. So slightly in the favors of the bull is what we're seeing, and that's reflected in the mid cap 150 and the small cap 250 as well. Let's try to pull pull up the mid cap 150 and the small cap 250 up by about, it's almost flat, but slightly off from the day's high point, but it's turned from red to the green, and that's the positive aspect for the mid cap 150. The small cap 250 gaining by about 0.3% almost at the day's high point. Let's also quickly pull up the Nifty 50 heat map and see as to how things have fared there, because we'd seen more red on the screen at the start of the trade, but now we're almost even Stevens with tech names doing very well. TCS, HCL Tech, Mahindra, Infosys, all four tech heavy names have led the gains in the trade today, and Bajaj Auto also up by about 2.5% and NTPC and Kotak Mahindra also have done well. But Grasim, Tata Steel, Nestle, Eternal, Interglobe Aviation and some of the other names that continue to be under pressure. Lastly, the sectoral heat map, if you can try to pull that up and see as to where the chart is ending at. Of course, Nifty IT has to be the top gainer, up by about 3.6%, followed by media. But FMCG continues to take a knock, down by about a percent or so. Nifty Defense also did see profit booking, down by about 0.8%. Metals and consumption also continue to be under pressure. So that's with regards to where the markets go for the day. But with that, we're completely out of time on this edition of India Market Close. From me, myself and everyone who puts the show together, thank you so much for watching. Do stay tuned in for more news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूम
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Well, the Bitcoin is near that $63,000 mark as geopolitical tensions rise. Bitmain chairman Tom Lee predicts Ethereum will unite Wall Street and crypto. Hyundai introduces internal stablecoin transfers. And lastly, hyperscale data raises Bitcoin holdings above 1,000 Bitcoins. So today we are having a myth buster. Now the question is, does 1% TDS mean you have paid your crypto tax? Well, it's a common misconception amongst the crypto investors is that just 1% TDS deducted on every transaction is their final task. That's not the case. Now, the 1% TDS is simply a tax deducted at source. Its primary purpose is to record and track the transactions. Now, this is similar to the TDS provisions also which exist in other financial products. This of course includes equity transactions, although the rules and the rates are different. Let's understand this with a simple example. Suppose you buy a Bitcoin for say 50,000 rupees and later sell it for 60,000 rupees. You have made a profit of 10,000 rupees. Now, at the time of the sale, 1% of TDS is deducted on the total transaction value of 60,000 rupees. So, 600 rupees is deducted and deposited with the government. However, your tax calculation doesn't end there. Under the current tax rules, the profits from virtual digital assets are taxed at a flat 30%. Now in this example, your tax on 10,000 rupees profit would be 3,000 rupees since 600 has already been deducted as TDS. You generally need to pay the remaining 2,400 while filing your income tax return. Another important point to remember is that TDS can be deducted even if you sell at a loss. That's why it's important to maintain proper records of all your transactions and reconcile the TDS reflected in your tax statement while filing your return. The key takeaway is simple. 1% TDS is not your final tax. It's an advance tax deduction. Always report your crypto transactions accurately in your income tax return under Schedule VDA and reconcile the TDS deducted to stay compliant. Well, As we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can contact with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Goodbye. That's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com.
Hello and welcome. You're watching Market Express and I'm Gargi Shetty. Let's get straight into the show. The benchmark indices Sensex and Nifty recovered early losses to trade in the green as investors resorted to buying at lower levels. Nifty rebounded after testing the 24,000 level intraday, while Sensex also recovered near 1,000 points from day's low. And IT stocks extended their rally for a second straight session, with the Nifty IT index gaining over 4%, emerging as the top sectoral performer. PCA surged nearly 6% after expanding its long-standing partnership with ABB through a multi-year global network operations deal. Other major IT names including Infosys, LTM, HCL Tech and Tech Mahindra also posted strong gains, supported by stable June quarter earnings and continued optimism around AI-driven deal momentum. The rally marks a sharp rebound for the sector after recent weakness. LTIMindtree was in focus after reporting a steady set of June quarter numbers. The company's net profit rose 5.9% sequentially to 1,468 crore rupees, supported by stable execution and improved operational performance. Revenue growth remained resilient despite a challenging demand environment, while the company continued to see healthy traction in AI-led and large transformation deals. Avenue Supermarts, the operator of D-Mart, slipped in trade despite reporting a healthy rise in June quarter earnings. Investors were disappointed by flat like-for-like growth at its metro stores, raising concerns over demand in key urban markets. Now, while the company continued to expand its store network and delivered steady revenue growth, the muted performance at mature stores weighed on sentiment. Deal making in India's automobile sector has slowed to its lowest level in 3 years, reflecting a cautious investment environment. However, capital continues to flow into electric vehicle and mobility businesses, with investors favoring future-focused technologies over traditional automotive segments. Now, industry experts say funding is increasingly being directed towards EVs, battery technology, charging infrastructure, and mobility solutions, even as overall mergers and acquisitions activity remains subdued. Kalyan Jewellers extended its rally for a fourth straight session, with the stock gaining nearly 47% over the period after a strong June quarter business update. The company reported robust revenue growth across both domestic and international markets, driven by healthy festive and wedding demand. Investor sentiment was further supported by expectations of another strong earnings quarter and continued market share gains. Just Dial shares surged nearly 15% after the company reported its fastest sequential revenue growth since the COVID-19 pandemic. The strong performance was driven by higher collections, improving demand from businesses, and continued growth in digital services. The company also delivered healthy profit growth and margin expansion, reinforcing confidence in its turnaround strategy. Oracle Financial Services Software has been on a remarkable run, with the stock surging 92% from its March low to hit a fresh record high. The rally has been driven by strong investor interest in the IT sector, optimism around AI-led spending by global banks, and expectations of healthy earnings growth. Analysts also point to the company's strong cash flows, high margins, and robust order pipeline as key positives. Oil marketing companies came under pressure after a sharp rise in global crude prices renewed concerns over margin pressures. Shares of HPCL and IOC fell more than 2%, while BPCL also traded lower as investors assessed the impact of higher input costs. Crude prices climbed on fears of supply disruptions in the Middle East, raising concerns that state-run fuel retailers could see marketing margins come under strain if retail fuel prices remain unchanged. Interglobe Aviation, the parent of Indigo, came under pressure after the stock slipped nearly 3% amid a sharp spike in global crude oil prices. Aviation turbine fuel is the airline's single largest operating expense, and higher crude prices could weigh on margins if the rally persists. Now, analysts said the recent surge in oil, driven by concerns over Middle East supply disruptions, has raised near-term cost pressures for airlines. Despite the decline, most brokerages remain constructive on Indigo, citing stronger passenger demand, healthy capacity growth, and its market leadership. Bharat Heavy Electricals extended its winning streak, rising for a fourth consecutive session and gaining around 4% in trade. The rally has been driven by strong order inflows, improving execution, and optimism around the government's continued focus on power and infrastructure spending. Investor sentiment has also been supported by expectations of healthy earnings growth, backed by a robust order book and strong demand for power equipment. The stock has outperformed the broader market in recent sessions. The Laser Power and Infrastructure IPO closes for subscription today, with strong demand from non-institutional investors leading the response. The issue has seen healthy interest across investor categories, while the grey market premium indicates a potential listing gain of around 13%. The company plans to use the proceeds to support business expansion and meet working capital requirements. Investors will now watch the final subscription numbers and allotment timeline ahead of the expected market debut. And the Delhi High Court has directed Meta to take down specific Facebook URLs that allegedly host pirated content owned by Zee Entertainment. Zee had approached the court claiming its content was being used and monetized illegally on several Facebook pages without authorization. Now, while the court ordered the removal of the identified URLs, it declined Zee's request to block the Facebook accounts at this stage, saying that the account blocking plea will be considered only after hearing Meta's response. India's trade picture showed a mixed trend in June, with exports rising 15.5%, but the trade deficit widening to $30.43 billion. The increase in the deficit came as import pressures remained elevated, even as outbound shipments showed improvement. The data highlights the challenge of sustaining export momentum while managing higher import costs. Analysts say global demand conditions, commodity prices, and ongoing trade negotiations will remain key factors shaping India's external sector outlook. The Maharashtra government has removed over 92 lakh beneficiaries from the Mukhyamantri Majhi Ladki Bahin Yojana following a statewide verification drive. Government records show the beneficiary list has shrunk by nearly 38%, with the largest number of deletions linked to incomplete eKYC verification. Other reasons include income exceeding eligibility limits, duplicate entries, government employees, and beneficiaries receiving overlapping welfare benefits. The exercise is aimed at ensuring the financial assistance reaches only eligible women and improving transparency in the scheme. On to some international news now. Tensions in the Middle East have escalated sharply after the United States launched fresh strikes on Iranian targets, raising fears of a wider regional conflict. The latest military action comes as the standoff over the Strait of Hormuz intensifies, fueling concerns over global oil supplies and shipping disruptions. Iran has warned of retaliation, while global markets are closely monitoring developments amid fears of prolonged instability. Investors are also assessing the potential impact on energy prices, inflation, and global trade. A devastating fire at a pub in Bangkok has claimed at least 27 lives, making it one of Thailand's deadliest entertainment venue disasters in recent years. Authorities are investigating the cause of the blaze, with early reports pointing to a possible electrical fault and concerns over blocked emergency exits. The tragedy has once again put the spotlight on fire safety standards at public venues. It also revives memories of some of the world's worst nightclub fires, where overcrowding, flammable materials, and inadequate escape routes led to heavy loss of life. The Maldives is looking at deeper economic ties with India, with free trade agreement talks expected to open new opportunities for its marine industry. Maldives Economy Minister Mohammed Saeed said the pact could boost sectors including fisheries, marine products, and local businesses by improving market access and reducing trade barriers. The agreement is also expected to support wider cooperation in areas such as tourism, logistics, and investment. Both countries are working towards strengthening economic engagement through greater trade and business activity. On to some sports news now. Yannick Sinner has successfully defended his Wimbledon crown, beating Alexander Zverev in a gripping 4-set final. The world number one recovered after losing the opening set to win the rest of the sets, claiming his second straight Wimbledon title and fifth Grand Slam crown. Sinner's powerful serving and composure under pressure proved decisive as he took control from the second set, the break onwards. The victory further cements the Italian's place at the top of men's tennis and extends his dominance on the biggest stage. Aston Villa have reportedly hijacked Newcastle United's move for Freiburg's midfielder Johan Manzambi, dealing a setback to Eddie Howe's side in the transfer window. Villa have moved quickly to secure the highly rated Swiss youngster, who has attracted interest after an impressive breakthrough season in Germany. The 20-year-old midfielder is seen as a player with significant potential, with clubs across Europe monitoring his progress. Newcastle will now have to explore alternatives as they look to strengthen their squad ahead of the new season. In some sad news, veteran actor Sir Sam Neill, best known for his iconic role as Dr. Alan Grant in the Jurassic Park franchise, has passed away at the age of 78. His family said the actor died suddenly and unexpectedly in Sydney, surrounded by his loved ones. Neill had recently revealed he was cancer-free after undergoing treatment for a rare blood cancer. Over a career spanning more than 5 decades, he starred in acclaimed films including The Piano, The Hunt for Red October, and the Jurassic Park series, earning global admiration for his versatile performances. And as we wrap up today's edition of Market Express, let's leave you with a conversation with Tahir Badshah, CIO of Invesco Mutual Fund. He believes investors need not be overly concerned about the US-Iran conflict at this stage and says the focus should remain on fundamentals. Let's take a listen.
Tahir Badshah, CIO of Invesco Mutual Funds, joining us this morning. Tahir, great to speak with you. As always, are you feeling
As always, good to be on your show as well.
Likewise, I think the feeling's mutual. Are you feeling a little more optimistic right now, considering that we've had a resumption of attacks and warfare, etc., in the Strait of Hormuz since that peace deal and that MOU was signed, but there hasn't been a sharp reaction to it? Is that giving you some comfort?
Well, Tamanna, to begin with, actually, so unfortunately, we've not had a chance to speak in a while, but I think we've been maintaining a positive outlook over the last month or two, especially after the first ceasefire was announced. And we have been of the view that, this is probably going to be somewhat, quick to resolve in some manner or the other. And more importantly, I think from an India standpoint, the West Asia conflict, basically from a crude standpoint, seems to now is now probably behind us. I think during the course of this conflict, it is a couple of things have been probably proven. One is that beyond a particular point, I think the oil market is somewhat fundamentally weak. I mean, when we look at it from a supply demand standpoint, there is a fair bit of supply in the market available. And then there are other avenues of supply which can come about, probably from the OPEC bloc, or maybe even from the point of view of US's ability to pump in more oil. So supply is relatively easy, and then perhaps the oil industry or the oil market has not been able to kind of come to grips with the fact that China can be a fairly important lever in terms of controlling demand. And I think they have probably been on this course of adopting more and more of electric and reducing the consumption of oil over the years. So I think from an India standpoint, therefore, if oil supply demand balance remains positive, then by and large, I think we don't need to worry as much about the West Asia conflict as we probably had to before. So I think that was one level of confidence that we were holding, apart from the fact that for India, incrementally, a few things could start getting better in terms of things like earnings, probably flows, the rupee having meaningfully depreciated now, foreign investors having significantly sold off. And, last but not the least, probably a little bit of the slowing as far as the AI trade in the US is concerned. So the mix of all this would probably start being beneficial for India. That is how we had been thinking about things, and I think that is how it has panned out.
Is it giving you confidence to deploy? Have you been a buyer in recent dips, Tahir? And where has that interest come? Which sectors have you found most exciting?
Yes. So I think we've been amongst the flows. That's been the good part of it over the last few months, despite the fact that the markets have been somewhat on the weaker curve. And I think by and large, our deployment strategy has probably not changed meaningfully over the last some time. We've acknowledged the fact that in India at this stage, we are still in a somewhat bottom-up market or a somewhat narrower market, which I of course expect will broaden as we go along. But for the next some quarters, it is still going to be somewhat narrow in nature, and markets focus and our focus has been on pockets where we believe relative growth is better. So I think we've been focusing on areas like industrials, especially the power segment, select consumer discretionary, consumer tech. Healthcare is another area where we have been very positive, and real estate. I think these are some of the domains where we have been incrementally deploying money.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में.
PMark, the mustard specialist since 1933.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will... As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your.
Markets ended with modest gains today after a volatile session, extending their winning streak to 3 days. IT stocks lifted the market today. The rupee weakened 0.3% to settle at 95 rupees 62 paise against the US dollar. IT stocks jump led by TCS after strong earnings and AI-infused growth plans. Focus on HCL Tech's Q1 results, with the sector hoping for another strong performance. Commerce Secretary Rajesh Agarwal says that trade negotiations with the US are progressing well and it will be signed at the right time, but clarifies that under trade deal all aspects will be taken care of. Government examines WhatsApp signal response on username feature. Meanwhile, Methi says access to Mythos is a priority, but government is planning to build a sandbox model offering nearly 60 to 70% of Mythos capabilities. Sources tell NDTV Profit that government will soon launch OFS for Indian Overseas Bank. Government likely to continue PSU bank stake sales to meet public float norms. Zee Entertainment scores an interim win in its copyright battle with Meta. Delhi High Court directs Facebook to take down specific URLs that allegedly host pirated Zee content. Oil prices jumped nearly 2% as tensions between US and Iran intensifies over Strait of Hormuz, and US CENTCOM confirms it hit Iranian military targets. Hello and welcome. You have joined us on Profit 360. I'm Nisha Poddar. And apart from the top headlines, it's CPI data which is just getting released at the current moment. Let's take you through the important numbers coming in those inflation figures. For the month of June, they are out and they are at 4.38%. Now, may remember CPI was at 3.93%. In fact, we have to take a look at the internals on such a big jump that has been seen on a month-on-month basis when we talk about the CPI numbers. But of course, needless to say that the crude prices were on the higher side on account of the crisis between the US and Iran, and that had inflated the prices for crude for us and therefore the intermediaries as well. And therefore, that could be one of the big push really coming in. Now, let's take it across to an expert joining in on to talk about the CPI numbers. Garima Kapoor, who's the Deputy Head and Research and Economist at Elara Securities, joins in. Garima, good to have you on NDTV Profit. First to the headline number of the CPI data, and looking at above 4%, not just that, elevated at 4.38%. How do you assess these numbers?
Hi. While I think the consensus expectations were that you should get a print in the range of 4.1 to 4.2, the numbers which have come out, of course, are higher than expectations. My hunch is more than the obvious transmission mechanism that we knew, that the fuel prices were higher, petrol, diesel was hiked, you had certain gas prices that were also up, your LPG prices that were increased. I think the second leg of transmission of these prices into eventual outcomes in terms of your processed food or eating out at restaurants, etc., would be actually the data that would have driven the numbers upwards. But at the first print, as it indicates, the numbers look higher than expectations for sure.
Right. If we really take a look at the food inflation data, that has seen a strong escalation on a month-on-month basis. What could be the reasons, and is it here to continue?
Food itself is going up even before the month of June. Now, normally, if you see, the seasonality for food is very strong during this period. So the summer months are normally see an increase in food inflation. So there is a seasonality aspect. The second aspect is that when your fuel prices tend to increase, your energy prices tend to increase, it automatically tends to create a second leg of impact in terms of food prices, especially the food that is in terms of cost of transportation, processed food, and where energy is an input area. The third element that happens is that because of the US-Iran conflict globally, you had started to see increase in commodity prices, including that of food. You started to see increase in palm oil prices. You started to see increase in prices of sugar and so on and so forth. So there was an element that was also global led. So there was an expectation the footprint in the month of June will also see a significant hike.
All right. So in the month of June, we have seen that hike come in food and beverages, actually over 5%. Now, Garima, with the crude oil prices reducing at the moment when the US-Iran tensions had really ebbed and had become much more peaceful in the middle, the crude oil prices had really substantially reduced. Do you think that that translation on the ground on our overall inflation numbers will already be visible in the month of July? And it's also going to be a mix of the higher and lower numbers, and the average could be higher than what we had anticipated because of the flare-up of the war again.
See, there's one element to the fact that your wholesale prices, which indicate or reflect a significant part of your importables, will certainly start to show a significant dip. But when we talk about consumer price indices, the transmission from WPI to CPI takes a lag, number one. Number two, the increase in commodity prices and hence the transmission to consumer prices of the previous hikes has yet not got completed. So you will actually continue to see the impact of previous hikes continuing well into another July and August before you start to see some bit of moderation kick in. And more importantly, realize that when demand is robust in the economy, any increase in price that has been taken is normally not likely to get reversed back. So while you will see some elements where importables, etc., will see a correction, I don't see a widespread correction in commodity prices or inflation for commodities where hikes were taken. Also, remember with regards to fuel, that is petrol and diesel, the oil marketing companies have to still recover the losses that they made in Q1. So it's unlikely that until there is a foreseeable decline in price of Indian basket of crude, which is in the range of 70 to 75, at least for a foreseeable future, you do not see or should not anticipate any reduction in pump prices. Also remember, in all of this, government has also cut excess duty. They also need to recoup that kind of losses.
Garima, in fact, it will take a lot of time for the crude-led inflation to go out of the system. So looking at a higher than estimated CPI inflation figure of 4.38% in the month of June itself, what is the projection coming in for July and August where the high prices may trickle down, and will it be comfortable levels when it comes to the RBI's numbers as well?
Going forward, clearly the CPI inflation will continue to inch upwards. Remember, quarter one will be the lowest that you will see in the entire financial year. However, if the price correction that is taking place globally continues, and notwithstanding the recent skirmishes and recent flare up between US and Iran, we do revert back to a more moderate price level globally in terms of commodity prices. You're likely to see a peak out somewhere towards the end of the third quarter and early fourth quarter of the current financial year, where I think the inflation will be in the vicinity of 5.6 to about 6%. But the full year numbers, in my estimates, if the correction that is taking place ever since the truce has been announced continues, then I do think the full year inflation estimate for CPI should be in the handle of 4.9 to 5%, which in my view should be something that RBI should be comfortable with.
All right, Garima Kapoor, thank you so much for your insights on the CPI data. Thank you so much for joining us on NDTV Profit. All right, moving on to the markets. The Indian market shrugged off the early losses to end marginally higher for a third straight session today, led by the gains seen in the IT sector. IT heavyweights like TCS and Infosys were the ones which gained the most, and the Nifty really closed above 24,200 levels, while the Sensex added 44 points. Meanwhile, the rupee weakened 0.3% today to close at 95 rupees 62 paise against the US dollar. In fact, Parth joins in for a complete roundup of what really transpired in the market today. Parth, tell us.
So Nifty has closed flat today with TCS and HCL Technologies being the top gainers, both seeing an uptick of over 5%. On the other side, Tata Steel and Nestle India were the top losers of the index, both seeing a downtick of over 2% for the day. On the broader market side, we saw Nifty Midcap 150 ending flat as well, with Kalyan Jewellers and JSW Infra being the top gainers, gaining over 7%, while with Kalyan gaining over 7%, while JSW Infra saw an uptick of over 6%. On the bottom side, we saw NLC India and Indian Bank both were the top losers of Nifty Midcap 150 for the day, both seeing a downtick of over 3%. On the other broader market index, which is Nifty Small Cap 250, we saw it outperforming the benchmark as well as Nifty Midcap 150. Nifty Small Cap 250 gained over 0.3% today, and this was mainly led by Newgen Software Technologies and Sonata Software, both of which were the top gainers, with Newgen gaining almost 15% for the day and Sonata Software gaining over 10% for the day. On the sectoral side, all of the sectors have ended on a mixed note, with Nifty FMCG being the top losing sector, seeing a downtick of almost 1%, and this was led by Nestle India and Varun Beverages, both of which were the top losers in the index, both seeing a downtick of over 2%. On the other side, Nifty IT was the top gaining sector, up over 3.5% today, led by TCS and HCL Technologies, both of which saw an uptick of over 5%. On the trend side, we saw Nifty IT and Nifty Auto being ending in green for the second day in a row, while indices like Nifty Bank, Nifty Financial Services and Nifty PSU Bank were up for the third consecutive day as well. Also, Nifty Oil and Gas, Nifty Realty, Nifty Pharma and Nifty Metal have snapped their two-day gaining streak, while Nifty FMCG has closed in red for the second day in a row.
All right, thanks so much, Parth, for getting us all the highlights coming in from the equity market trades today. HCL Tech is set to announce its Q1 numbers today. Jasmeet is here on what the street is really penciling in from the company. Jasmeet, tell us, what are we looking at? And of course, AI push by most of the IT companies has really given fillip to this sector today. Nothing short is expected from HCL Tech as well.
Well, Nisha rightly said, but thank you for that firstly. And if you look at the result, we're expecting slightly negative to flattish quarter for the company. Though we have seen the Q4 was a weak quarter, and we're expecting similar trends continuing in the Q1 as well. In terms of the key numbers, we are estimating the revenue to rise by 2.2%, while margins could see an uptick of nearly 40 basis points. In terms of net profit, even that could see an uptick of nearly 2.6%. While the key things which will be in focus is the CC growth, where we are estimating a CC growth between negative 1.5 to a positive of 0.8% for the quarter. Now, secondly, the margins. Though the margins had a low base in the previous quarter, but margins for the Q1 will see an impact coming in due to lower restructuring costs, which will be a tailwind for the margins. And also on the back of that, forex tailwind, which we are seeing, will also be a tailwind for the margins. The second thing which will be in focus is the guidance, where a few brokerages are penciling in a guidance cut on the upper end, given the Accenture had cut its guidance on the back of that weak commentary. So even brokerages are dividing. Some feel there will be a margin cut, while some other feel that there won't be any unchanged guidance for this particular quarter. If you look at the last aspect, the deal wins, we're estimating a deal win between 2.2 to 2.6 odd billion for the quarter. Apart from that, the key focus remains on the AI revenue, of how much of that has increased from the Q4 to Q1.
All right. Thank you so much. And HCL Tech numbers expected very soon. Thanks, Jasmeet, for all the details. Now, earlier today, I spoke to Venu Lambu, who's the CEO and MD of LTM, on the company's AI revenue roadmap. And he says that AI is expected to play a bigger role in the business going ahead, with the company really aiming for AI revenue to contribute 50% over the next 3 to 5 years. Listen in.
Part of our 5-year plan, we expect that the AI revenue to be 50% of our AI revenue mix. And in order to do that, we're doing a lot of things, right? Whether it's in talent and transformation, reimagining partner ecosystem, and so on.
Right. So you mentioned it will be 50% by which quarter and which financial year you are saying?
Yeah, we expect this 50% to be somewhere between 3 to 5 years of our plans.
SBI Mutual Fund MD and CEO Debashish Mishra has spoken about the company's distribution strategy and the government's push for banks to really focus on core banking products. He also says that there is no risk of mis-selling with products going through internal approvals processes. He also highlighted SBI Mutual Fund's wide distribution network ahead of its IPO. Listen in.
So we have largely 5 to 6 distribution channels. SBI is the banker channel, then we have got mutual fund distributors, whose number is 130,000. We also have national distributors, we also have robo, like all the fintech partners. We also have other banks who are our distributors of products. So SBI as a channel is, as Mr. Singh earlier mentioned, is 20-25%, but will largely depend on other channels also.
All right, remember that's a big IPO that is set to launch for the public markets very soon. $1 billion to be garnered from the market. Now, India's trade deficit has really widened to $30.4 billion in the month of June as merchandise imports really outpaced the exports, even as the country's total exports during the April to June quarter really touched a record high. In fact, Commerce Secretary Rajesh Agarwal also said that the US-India trade talks are progressing well and will be really signed at the right time. My colleague Rishabh explains the trade data dynamics and what really transpired. Tell us, Rishabh.
Well, absolutely. The trade data for the month of June is out, and what we're picking up is that healthy growth has been recorded for India's exports, roughly 15%, both in the quarter one, that is the April to June quarter for the current financial year, as well as the month of June is what we're seeing, roughly 16% growth when it comes to India's exports. What we're picking up is the fact that for June, India's merchandise exports are at roughly $40.4 billion. Services exports are roughly at $33 billion. But what is also interesting is that India's merchandise imports have really gone up. That's about 70.8 billion for the month of June. That is up about 31%, and that's a very high increase that we're seeing. The ministry has explained this as well, and it is largely due to the imports of petroleum products as well as electronics parts that come into India and then are essentially used as components, and then those parts are then sent across to various countries as in the form of a finished good. So those are the ones that are contributing largely to this trade deficit that has widened. What we're picking up very interestingly on the US trade deal is, of course, that a framework deal is ready. That's what the Commerce Secretary has said. Earlier, you've had various officials state that about 99% of the deal is done, but now Rajesh Agarwal has said that the framework deal is is ready, and what the two countries are waiting for is the correct time to sign off on this deal, and that is something that the work is on both sides of this particular trade table. What we're seeing is that you already have the two investigations that the US is conducting when it comes to forced labor as well as overcapacity. Forced labor, that investigation is nearly done. The draft report is expected shortly. On the overcapacity front, there's still some time that the US will take to finalize the draft report on that. So that's where we are at. What the Commerce Secretary has also said is the fact that once this trade deal comes in, it will take care of all the other challenges that India and the US have been having on the trade front. That means that there will be no new tariffs that will be coming in. There will be assurance that there will be no new tariffs. What this essentially means is that there will be a pathway for every challenge that comes up in terms of trade between both the countries. So that's what you have coming in when it comes to the India-US trade deal.
All right, Trade in Focus. Thanks, Rishabh, for all the details. Now to an NDTV Profit exclusive. Well, the government is set to launch an offer for sale in Indian Overseas Bank soon, according to official sources. After IOB, Punjab and Sindh Bank and UCO Bank could also see stake dilution as the centre really looks to meet the minimum public shareholding norms while also accelerating its divestment program. Let me bring in my colleague Shrimi, who's getting us all the exclusive details. Tell us, Shrimi.
Yeah, that's right. What we are gathering exclusively that the government is preparing to launch an offer for sale in the state-owned Indian Overseas Bank very, very soon, perhaps in a day or two, as part of the ongoing efforts to reduce the holding in the public sector banks and meet public float norms. Do note that the centre currently owns 92.44% in IOB, well above the 75% ceiling prescribed under the public shareholding norm. But we don't know yet the offer size, but this is the second round of OFS after the government diluted 2.17% stake in December 2025 in IOB, which, received very strong response at that point. Now, sources indicating that centre intends to continue stake dilution in select public sector bank in the coming month as it works toward complying the public float requirement. And after IOB, actually, we could expect OFS in Punjab Sindh Bank as well as UCO Bank. And of course, both are significantly above the public float threshold. Now, it's important to note that proposed stake sales are expected to support the government disinvestment program. As we know, so far, government mobilized over 20,000 crore through disinvestment. So another 60,000 crore actually to come in to meet the target of 80,000 crore, which is, fixed for the current financial year.
All right, thanks, Shrimi, for that. More bank papers to be really coming into the equity markets as stake sale. All right, moving on, the Indian banking story in spotlight as the big bank CEOs are not just billing accounts, but also some big fat paychecks as well. Now, to understand who tops the list of the highest paid banker, we have Piyush giving us the entire list and the lowdown. Piyush.
Ashok Vaswani, the MD and CEO of Kotak Mahindra Bank, continued being the highest paying domestic banker for the second year in a row. In FY26, Mr. Vaswani earned rupees 17.23 crore in annual pay versus 12.95 crore in the last fiscal. Mr. Vaswani was also granted 3.55 lakh bank stock options for FY26. On the other hand, Mr. Sashidhar Jagdishan, the CEO of country's largest private bank, HDFC Bank, earned around 15.12 crore rupees as annual pay in FY26, which is 19% higher than the last year. Jagdishan also got around 4.28 lakh bank stock option. Very interestingly, Deputy MD of HDFC Bank, Mr. Kaizad Barucha, actually ended up earning more than Mr. Jagdishan. He took home around 17.13 crore rupees for FY26 and was granted around 6.5 lakh bank stock options. Axis Bank MD and CEO Mr. Amitabh Chaudhary, on the other hand, earned around 8.5 crore rupees in FY26, excluding, of course, the bonuses. Among the PSU banks, country's largest, public sector bank and the largest bank, in fact, State Bank of India chairman earned only rupees 43 lakh in FY26, whereas Bank of Baroda's MD and CEO, Mr. Devadatta Chand, earned around 73 lakh rupees in FY26. PSU Bank, this has been an issue at PSU Bank where the top management does not come anywhere when it's compared with the private peers in terms of annual compensation.
All right. Thanks, Piyush, for accounting for all of that. Big bank CEOs making big bucks there. All right, moving on, the Supreme Court has directed the centre to submit the rules framed to regulate the airfares in the sealed cover within 2 weeks. In fact, the government told the court that the rules are ready and will be placed before the parliament within 30 days. In fact, the case stems from concerns over steep airfare spikes during the festivals and major events. In fact, Nupur Dongra is really getting us all the details of this very consumer-friendly step being taken by the government. Nupur, what exactly has the Supreme Court asked the centre to do, and what could these proposed rules really mean for air travellers, and how will it really help the air travelling, the private airline space at all? Nupur.
Well, in a big development, the Supreme Court has directed the central government to place before it in a sealed cover the rules that have been framed to regulate fluctuating airfares in the country. Remember, from time and again previously, the court has expressed concern about inflated airfares across the country, especially during special occasions or festivals or during holidays. The Supreme Court has today asked the centre to place before it in a sealed cover within 2 weeks the rules that it suggests to bring forward to regulate airfares and to ensure that consumers are not exploited whenever there is a rise in demand for the airfares, especially on occasions like festivals and holidays. Remember, in the previous hearing, the top court had remarked that during the Kumbh Mela, the users were exploited, the consumers were exploited by the airlines given the steep hike in the airfares around those time for that destination. And citing the same example, the top court had in fact asked the centre to bring in rules to regulate airfares. Now the centre told the court that the airfares are ready and it will be placed before the parliament within 30 days. But still the top court insisted that within 2 weeks those rules should be placed in a sealed cover before the Supreme Court.
All right, so an important development there when it comes to the aviation space. Now let's move on to the sporting action, and all of us who really enjoyed the Wimbledon's men's finals, well, it's time to relive that excitement once again. Yannick Sinner has successfully defended his Wimbledon crown, beating Alexander Zverev in a gripping fourth set final. Now, the world number one has also recovered after losing the opening set to win the rest of the sets, claiming his second straight Wimbledon title and fifth Grand Slam crown. Now, Sinner's powerful serving and also composure under pressure proved decisive as he took control from the second set tie-break onwards, which was very exciting. And the victory really further cements the Italian's place at the top of men's tennis and extends his dominance on the biggest stage. So what a sporting weekend that it has been. And with that, it's a wrap on this edition of Profit 360, but do keep it with NDTV Profit. Thank you.
पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also what the news is flowing and will it create alpha for your portfolio or not. Today also I have got a very interesting company for you, and the company has been recently announcing a lot of announcements. It's a Bengaluru based infra and energy solutions company. Of course they have BESS as well as telecom segment. That's where they are actually functioning, and they recently announced an MOU with Bondada Group for battery energy storage system. It's a recently listed company. It was listed last year October 6th, and also from the March lows, if you look at the stock, it's up 53%. Now we are talking about BESS segment, and we have been hearing about these announcements for the last 2 weeks. I'm sure you must have guessed by now. The company in focus is Space Digitech. This is the company which we are talking about, and everybody is talking about it. Is there a first mover advantage at play for this company? That's what we'll try to understand. But what are the key questions? Why are we getting this company? Recently, large announcements coming in. Street is very bullish on this theme, and this theme itself, including the ancillaries, have picked up. Let's look at the second key question. Why are we calling this company? It's the growth outlook for the lithium products. They have started, a lot of announcements and JVs coming up. Also the telecom EPC business. Is there a structural change here, or is this a kind of a legacy business? That's what we'll try to understand. Also, important question to be asked to the management includes the progress on the capacity expansions, from that 2.5 gigawatt to 10 gigawatt of BESS. What's the timeline? Is it going in the right time frame or not? Apart from this, another question we will be asking the management would be, what are the risks associated with the BESS or the telecom segment? Because not everything can be rosy, and that's what at KYC we try to give you the other side. Also, international tie-up and JVs on the anvil. If there is any tech kind of or IP kind of a JV, that is something which the street will be watching out for. And of course the export potential. What's next? Is it Middle East? Is it Africa? We'll get you all those details in KYC. But these are the important questions to be asked, and Venugopal Rao Madisetti, the chairman and MD, will be answering our queries. But let's try to understand ये company करता क्या है. एक साल भी नहीं हुआ इसको IPO में आए हुए.
लेकिन पेस डिजिटेक न्यूज़ पे न्यूज़ आ रही है. बट व्हाट्स द कॉल कंपनी अबाउट? Bengaluru based integrated infra and energy solutions company. Now let's divide that into two parts. One is of course the telecom, other is in the energy segment. This is what we talk about, telecom and ICT and the energy segment. Also let's get into much more details about what happens next. They undertake BESS, battery energy storage systems, design, integration and this deployment. यानी कि पूरे ecosystem पे जो है इनका काम होता है. They have an arm for it. It's called Lineage Power that has made over 260 BESS containers in the last 1 year. That was a recent filing which I picked up. And the telecom segment, they manufacture the telecom power systems, EPC services and O&M. O&M is operation and maintenance for telecom infra, and yes, India's telecom infra is on a big uprise. But for India, let's look at the industry कितना बड़ा है. BESS additions to scale from 7 gigawatt in FY27 to almost 47 gigawatt by FY32. This is India's overall data, which we getting it from the reports, and also 90% decline is expected in the battery storage costs, which are driven by solar and BESS adoption. So you can understand how big this opportunity is in India. But of course the company, if you look at the expansion plans, there are 3 important expansion plans. 2 BESS से हैं और एक जो है it's on the container. It's like a fabrication, basically backward integration, and these are the date lines. So FY27 is very much important. Q2, Q3, a lot of things are happening when it comes to Pace Digitech. How does the order book look like? 11,400 odd crore rupees is the order book. 78% comes from the energy segment, and the remaining 22% talk about it comes from the telecom and the ICT segment. Let's get to more details. Recent announcement, 3 of them coming in. MOU with Bondada Group for BESS, that's what we have been talking about. Also, let's pull out the second MOU which has been signed, and this is also from the BESS segment. This is from Onward Solar Power and Kalpa Power. This is what I'm talking about. And interestingly, for lithium, they have tied up with RG Tech. It's a Chinese company for lithium ion battery cells. So a lot of future forward sectors the company is pushing forward, and perhaps that's why there's a lot of interest in the counter, and that's why we have got you this in KYC. But moving on from the recent announcements, what are their key customers? Telecom के धंधे में देखिए BSNL है, Industar है, Bharti Airtel है, and we have all the major players also coming in. We have Reliance Jio, we have BL and Tata Teleservices as well. So one side telecom, other side energy. Look at the larger names. NTPC is there, L&T is there, Bondada Group is there, and if you look at the other key sectors or the companies, this includes Advait Energy, NLC India and Mahagenco as well, and these are large customers. So yeah, revenue visibility or order book visibility ज़्यादा दिखती है यहाँ से. But what may work for the company? That's very much important, and I have made it into 5 concise points so that you don't have to research so much. 10 gigawatt BESS manufacturing capacity they're expanding, and that is where Street is quite bullish on. Large order wins are expected, and it's a strong executable order book. Third important point should be in your radar: Saudi Arabia, Kenya and other African markets. That's where they're trying to expand, and this is of course having a big market potential if you talk about it. They are positioning themselves as a renewable energy platform, and remember, platforms at times do have premium valuations from the market perspective, and the structural demand coming in from renewables, grid, rail and digital infra. These are the key reasons what it may work for Pace Digitech. But what may not work? Return ratios might be suppressed because you are expanding. तो आपके ROC number में गिरावट देखने वाली है, and I'm going to get you those numbers also in a while. The balance sheet may remain stressed despite IPO coming in. They're reducing their little bit of debt, but nevertheless the execution risk, खास करके EPC business में, that remains there. And of course, if that happens, the receivables might be rising. So that's a little bit of concern in my analysis for Pace Digitech. But nevertheless, right now the street is awarding this counter. But let's understand the KYC ratings on which we'll be judging Pace Digitech. Of course, this includes income statement, balance sheet, cash flow. These are the basics. Return ratio, we'll try to understand what's happening. Remember, companies under expansion, and shareholding street trade just from October 6 till now, एक साल के नीचे इनका time period है, so take things with a pinch of salt. Valuation we'll try to compare, is it cheap right now also, and the outlook we'll try to understand what are the important guidances which the company is giving. Let's start with income statement to show you the entire picture, what's happening here, and very strong CAGR growth coming in for revenue, EBITDA, PAT, and this is what you can see on my left hand side, a good growth coming in. Q4 numbers also, if you pull it out, we see a good set of jump coming in, and remember, compare these numbers on a year-on-year basis. Let's look at the margin profile also. Is there any kind of moderation? And yes, there seems to be a little bit of moderation coming in. खर्चा बढ़ रहा है, finance cost भी थोड़ा है, और कंपनी एक्सपैंड कर रही है. दैट इज व्हाई वी आर सीइंग दैट मार्जिन्स एक्चुअली गेटिंग compressed. So this is income statement, largely net I'll still give it positive if I'm looking at a long term basis. But let's talk about the balance sheet also to give you the entire picture. And a little bit of concern for me definitely comes. Why? I'll tell you that because the borrowing levels, the way company is expanding into BSS, and also a lot of working capital is being used, and that is why a little bit of concern is coming in. So yes, the numbers might look stretched for a couple of years because the way they are expanding, there will be a little bit of stress on the balance sheet, but they try to negate it from the IPO proceeds. So it's a neutral rating right now. And let's move on to the cash flow segment. And remember, these type of businesses, at times the cash flows are lumpiness. There's a B2G exposure also, and that is why you need to take things with a pinch of salt. A big cash flow outflow coming in FY26, a cash flow from net operations 920 crores. EBITDA conversion was pretty decent. Net cash flow still on the positive. So let's take it with a pinch of salt, give it more time to judge the company, and I'm going to give this a neutral rating. Return ratio, that's where the concern is coming in. That's what I was talking about. Company expand करी तो return ratios में pressure तो आएगा. March 24 it's around 53%, and see the downtick coming in. 25 it's 41, and now another fall around that 21%. So this is something which, as per this parameter, is on the negative side. So I'm going to give this a neutral rating. Let's talk about shareholding. What's the story looking like? And remember, the story is very short as of now. Nothing major has changed. The FIs, DIs still holding up their positions. DI is actually increasing it, while FI slight decrease coming in, but promoter stake and public stake largely unchanged. So let's give it this a neutral rating. But let's talk about the street cred. From the IPO prices, has the story moved? I mentioned you about the March lows momentum. The stock is up 53%, but to be honest, if you are there from the IPO, nothing much has changed. It's largely flattish or slightly dipping, be it IPO price or listing price. And this year itself around 15% growth has come in. So if people have entered in the dip, congratulations. The ones who are already there in the IPO, right now nothing much has happened, but you need to give it more time if you're a long-term investor. So it's a neutral rating as per my analysis. Valuations, let's have a look. The company is going into future right now. The lowest valuation was 13 times. The peak and current are coming at a 12-month P ratio of 16 times. Largely it seems the way the company is going at it, it's fairly priced right now. IPO के भाव पे जो है आया हुआ है, and valuations do seem attractive a bit if you compare that with the global peers. So I have given this a thumbs up. The last one, but not the least, is the outlook. This is where we look at the numbers, what the company wants. The larger orders is expected in BSS segment, more is expected. That's what the street is also factoring in right now. And looking at the guidance, it's around 3,200 to 3,400 crore rupees for FY27, and this number goes up for FY28. If you could show that number, it's between that 4,000 to 4,200 crore mark. And lastly, another important outlook would be the backward integration at play. Now, how much does that help the margins, and by when does that happen? That's the important question. But as of now, outlook is strong, so I've given this a thumbs up. Let's do a revision of the KYC ratings for Pace Digitech. Where does it stand? Largely, income statement has been good, but return ratios under pressure on expansion. These are neutral points which I'm talking about. On the other hand, if you look at the shareholding and street cred, it's neutral, but the valuations and outlook seem strong. So a total KYC rating finally comes to 5 out of 8. It's largely in line to slight positive for the average numbers which we generally give in KYC. But to take forward this conversation, we'll be joined in by the speaker of the company. He's the CMD, Venugopal Rao Madisakti. He's the chairman and managing director at Pace Digitech, and he founded this company, the Pace Power Systems, in the year 2007. And interestingly, a very important acquisition was there from the GE Power in 2014, and this is where the BSS comes in, which is the wholly owned arm. So it'll be a very interesting conversation with the management. We are joined in by Venugopal Rao Madisetti. He's the chairman and MD at Pace Digitech. Good afternoon, Venugopal sir. It's always a pleasure to have you with us at NDTV Profit, and of course, first time coming in KYC also this year. Just wanted to understand, sir, a lot of announcements coming in the BSS segment. How are these announcements looking like? Any key timelines for it? And yes, the order book outlook, at least for this segment.
Yeah, good morning. Yes, a lot of announcements are coming because BESS is an evolving subject, and there's a lot of traction to it. And as late as last week, we had participated in India Energy Storage Week. It was an event and exhibition in Delhi. So we had the Minister for Power and the Minister of MOS for the MNRE. They had visited this event and they visited our stalls. And during their speech also, they mentioned that energy storage is very, very critical for the country. And out of that, battery energy storage system is gaining a lot of traction because of the faster implementation as well as the prices that have come down in the last 2-3 years. So that makes battery systems as the prime source of energy storage for the renewable energy now. So yes, we do have a lot of a lot of announcements, a lot of partnerships, a lot of MOUs getting signed. Yeah.
Right. So there is a bullish sentiment coming in, especially on the order outlook front for BSS segment. But I want to get a little bit more into the details about it. There's a lot of capacity expansion at play. Around 2.5 gigawatts of current capacity, it seems like it's there, and you're expanding. Each quarter there's an expansion coming in. I wanted to understand, the timelines which you have given. Are you sticking to that? The expansion will happen as per the timelines, and if yes, by the end of FY27 or beginning of FY28, what will be the overall capacity? And I'm talking about the BSS segment only.
Yeah, the capacity expansion is already in place now. From 2.5, we have expanded to 5, which is just getting commissioned probably in this month itself. And then we are already constructed the factory for the 5 to 10 gigawatt hour capacity. Equipments have been ordered, and the equipment is delivery is expected in October. So yes, before December itself will be 10 gigawatt hour capacity. That will be the biggest operational capacity in the country for the BESS systems.
So this market definitely becomes very big in the BSS segment, and the street is actually factoring in that you are a first mover advantage, and that's what the company is also claiming. I wanted to understand the lithium product angle also. There was a tie-up with a Chinese company, just after your earnings. I have been tracking that. But how big this market is, and can we expect more of these tie-ups in this segment as well?
Yes, we need that because the lithium is the prime, source or the prime input for this energy storage systems. And unfortunately, as of now, we do not have the cell manufactured in India. So we obviously depend upon the suppliers outside the country. And we need to have a strong supply chain built to have this kind of large capacities to be executed. So keeping that in mind, we are continuously working on strengthening our supply chain. As part of that, we had announced that 3 gigawatt hour from one good supplier after almost 6 months of evaluation by our technical teams and the supply chain teams. We have finalized that. So the supply chain becomes very critical for the lithium-ion battery systems because we depend upon them. So obviously we need to secure our supply chain as well. So we are in that direction, finalizing those partnerships with good suppliers for us.
Let's get our discussion on the telecom segment also. How are the EPC works looking like? How's the order book, client confidence coming in the telecom segment? I presume you also have your operation maintenance work as well. And there's a lot of announcements coming in the telecom infra for India as well. We are at a point of an inflection. But how does your company position yourself in this telecom segment?
In the telecom infrastructure, we are a quite strong player, and we have been in the telecom business right from the beginning. So that's our where I started my journey as an entrepreneur. We do have a healthy order book, and for us, telecom is ongoing. So we generally, we are in the telecom tower side as well as the telecom, the fiber optic cable network side, and we are the end-to-end, network builder. and then we also manage those networks under operations and maintenance contracts. So telecom is doing well, but then telecom cannot give us the kind of target, the plans what we have for our expansions or our revenues. So that's where the energy storage also will complement with telecom, so that both put together give us the required numbers for us. So that's what is we are driving both of them parallelly, and both of them are quite strongly in terms of the complete value chain, right from the manufacturing of the products to the the projects and then the services. So we are in the complete value chain of these two business verticals.
And Venugopal sir, what about the international tie-ups? Because this requires a lot of IP, this requires a good tech support, and maybe you are also going after some new markets, the exports, especially in the Middle East or Africa. Wanted to understand the international angle to it, the export angle as well as the tie-up or a JV angle.
See, obviously, when we are building large capacity of 10 gigawatt hour capacity, so we do also need to secure the long-term businesses and partnerships. So that's where we are working with there's a good partner based in Saudi Arabia. We already got some sample orders. That market is also quite promising over the next 3 to 5 years. Similarly, we have our office based in Africa, that is Nairobi. So Africa also needs a lot of energy storage because it's again a power-starved continent. So we do look for these areas where we have been already there. The good thing about us is that we have already tasted these markets over the last 15 odd years because of the telecom. So for us, it's natural to expand into the energy sector as well in these regions. So that's where our teams are working in the energy storage as well.
Right, Venugopal sir, I just wanted to understand a little bit about the model of this front. Of course, you have two segments, you have BSS and telco, but what are the risks associated with it? If somebody wants to study, there are some risks like the execution risk, or you could say some technology risk. So if you could just give us that example, from your experience itself, what are the risks associated with this kind of businesses?
The telecom, it's for us it is our more than 20 odd years since we are in this game. So telecom, we do not see any challenge or the risks. We have already gone through this many number of cycles in that segment. Coming to the battery energy storage systems, the risks I would perceive it as that we are depending on China for most of our raw materials at the moment. While we are trying to localize this, other than the cell manufacturing, at least in this year itself, we are working in the direction towards localizing the most of the components. But the cell remains still, kind of, product that we depend upon China. That's a risk for us. So for us to mitigate that risk, obviously we have to get into the cell manufacturing as well. We are also waiting for the government to announce some, kind of incentives or some policy decisions towards, the cell manufacturing in India. For example, when I met the minister last week during this event, we were promised that PLA scheme for the energy storage, grid level energy storage is expected next 10 days. So we obviously will wait for those kind of schemes to come in. And that would encourage us to further do the investments in the cell manufacturing. So that is the most important critical. Today we depend upon somebody. So I think we will have to plug that. Even we seek government support in that direction.
Nicely stated. Thank you very much, Venugopal sir, for taking out your time and giving your views to NDTV Profit at KYC. It's always a pleasure to have you with us. So that's a very interesting take coming in from the management of Pace Digitech. A lot of BSS orders coming in. Of course, there's a B2G exposure also, but a little bit of concerns definitely are there on the execution risk. But the stock has moved up more than 50% from March lows. Interesting, right? For stories like this, keep watching NDTV Profit at KYC. Thank you.
किससे हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can become.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani and this is a show that talks about personal finance. Today, I think we've chosen two very interesting topics. The first one that we're going to talk about is going to be about who safeguards your mutual funds, who is a trustee, who's a custodian, what should you consider while transferring a mutual fund, and all of those things combined together. And I think it's important to understand the concept of safeguarding your mutual funds and who actually safeguards your mutual fund. To discuss all of this, we are now joined by Himanshu Kohli, who is the co-founder of Client Associates, joining us now. Himanshu, thank you so much, first of all, for taking out the time and always a pleasure speaking with you. I think I'll start with a very basic question first. For a viewer who does not know as to how your mutual funds are safeguarded, what should he or she know about it?
So first of all, Mahima, it's very important to understand when we select a mutual fund, we are paying the money directly into the mutual fund scheme.
Correct.
We are not giving it to the asset management company. So it's money which is going into the mutual fund scheme. Scheme basically purchases securities as per the investment objective or the mandate of the mutual fund. Those units basically gives the proportionate ownership to the investor in the scheme's assets. So the AMC is only managing the portfolio on behalf of the investors. So investors own the assets and AMC manages them. So this is how actually this entire mutual fund industry works. There are various safeguards. Regulations are very, very good. And I think Indian regulators have done a phenomenally good job because there are 4 different entities besides the mutual fund scheme. So there's an AMC, there is a trustee, there is a custodian, and there is a registrar. So all these are playing a very, very important role just to ensure that investors' money is safeguarded.
Fair. The other aspect is, Himanshu, that while transferring a mutual fund, what are the things that one needs to keep in mind? Because a lot of times there are certain mistakes that repeatedly happen. So what are the things that one needs to keep in mind from safeguard point of view?
So I would say basically the safeguards are as follows. So AMC is just taking the investment decisions, but cannot use the investors' money for its own business. So let's say HDFC Asset Management Company is managing the money, but cannot use it for their own balance sheet purposes. Trustees over here, they represent the investors and oversees the AMC's compliance with regulations and the scheme mandate. Custodian also plays a very, very important role that they are holding the securities and ensure settlement and safekeeping happens. And registrars, basically they are playing a very important role in terms of regular updating, NAV, all those things which are being communication with the clients or the investors per se. That is something which is there. From an investor's point of view, they just need to see what is the mandate of the scheme which they are investing. What is the stability of the house? What is the performance or the rolling performance of the schemes which they are selecting? So that is what they need to take into consideration, and they should not worry too much what will happen to the money in case they have just gone ahead with the mandate of the scheme per se.
Okay. The other concept that a lot of people are confused about is trustees and custodians. What are these two terms? What should one exactly know about this? And what role does it generally play, in protecting an investor?
So very simply, custodian is actually independently holding the securities and ensures that settlement and safekeeping is happening. So typically a bank could be a custodian of the securities. Trustees are basically, there is a trust which is created and trustees are appointed to represent the investor's interest and oversee whether the AMC's compliance with regulations and whether they are following the scheme mandate or not. So they play a very, very important role over there. And as I mentioned, registrar and transfer agents, they maintain investors' records, process purchases, redemptions, and servicing to them and give them a regular update. So this is something where I would say one is not dependent on one particular entity. There are multiple entities. That also brings a lot of checks and balances and safeguards for the investor's money.
Got it. So then Himanshu, I think the natural question that comes to my mind and probably our viewers' mind as well, that if an AMC shuts down, then what is the recourse available? What happens to the holdings of the investor?
So first of all, investors' holdings are in the mutual fund. They are holding the units over there. So first of all, they are very, very safe.
Right.
Because AMC's balance sheet is not linked to the investors' units or investors' investment in the particular scheme. So schemes remain separate from the AMC's balance sheet. I would also say creditors of the AMC cannot claim any investor securities. Trustees, they play a very important role as they see everything is followed as per the regulation. They may appoint another AMC to manage the schemes. So investors' interest is fairly well taken care of. So there is a myth, if an AMC closes down, would you lose your investments? Answer is no. They are just managing the investment. Some other manager will come into picture over there.
Okay. The other aspect is that if, let's say, two AMCs are merging, then what should one keep in mind in terms of knowing as to once the investment is either transferred or being merged, what are the key things that one needs to keep in mind?
So first of all, I would say, Mahima, investors' interest is taken care of, so their money is safe. Now they need to see whether after the merger, who is going to be the fund manager, what's the track record of the fund manager, what's the stability of the fund management team over there. They need to see all those things, and are they comfortable being with the new manager or not. So if they are not, there is also a window which is provided that investors can take out the money without any exit penalties over there. So they can also redeem the money in case something like that happens. So I would say investors' interest is taken care of. Regulators have done a fantastic job over here. And investors do not need to be too much concerned. If it happens, then one can always take a call. Am I willing to continue or can I move out? And if I'm moving out, is there any penalty over there? And there is a window which is provided where you can just exit without any penalties over there.
This is one aspect of it, right? But the other aspect is also that, when you choose a particular fund house or a particular, mutual fund that belongs to that fund house, there are certain things that you always look at, right? There's governance, there's risk management, there's also an investment process that each fund house follows. How important are these to analyze before choosing a mutual fund, especially because at the end of the day, these are the factors that will help you realize as to how safe is a mutual fund, right?
So these are, Mahima, some of the most important aspects which you have mentioned. So whether it's the governance standards being followed, what is the stability of the fund management team? Is there a risk management processes which is being followed? What is the experience and scale of the business? Is there a transparency or communication which is adequately happening over there? So investors should focus on the long-term performance and consistency of performance through different market cycles. They should avoid choosing a scheme or an investment purely on the basis of the recent performance or recency bias. So this is something which I would say. So all these things, governance is very, very important. Transparency is very important. Communication is very important. Consistency is very, very important.
So then, Himanshu, the other question is that should an investor focus more on the fund manager or fund house, or both of them are equally important?
Both of them are equally important. Fund manager in terms of the performance, fund house in terms of governance, transparency, communication. So those are some of the things which are extremely important.
Have there been any cases where there has been a misuse of your mutual fund, or in terms of any frauds that have happened that one needs to keep in mind ever? I mean, if there has been an instance.
So I would say in India, mutual fund industry has done very, very well in terms of transparency, in terms of communication, in terms of governance. So I would say both the regulators as well as the asset management companies, they played a very important role to ensure that all these best practices are being followed over here. And being in the industry for about 30 years, I would say there has been ups and downs because of the market conditions, but otherwise in terms of insurance or governance, everything is top class over here. And if there is some smell which happens, I think people do come forward, as I mentioned, custodians or maybe the trustees come forward and take an immediate action. So in 30 years, I have not seen any major such challenges across the industry. And that's the reason industry has grown quite well over last 10, 20, 30 years.
Got it. Just one last question from my end, Himanshu. If there was a checklist for investors to kind of understand as to how safe is their mutual fund, what would that checklist look like? Maybe the top 5 pointers to this one.
So I would say what is the governance which the institution is following? What is the stability of the team? What is the track record of this team in terms of the consistency of the performance? How is the transparency and communication being maintained? And whether they have the diversified pool of investors or it's just few investors who are over there. I think these are some of the important things besides seeing the fund manager experience, education, background, experience overall. Those are some of the things which are very, very important.
All right. Okay. Himanshu, thank you so much for taking out the time and giving us those insights, because I think this is a very important topic for our viewers to also understand as to where these safeguards come from and how safe are the mutual funds. So thank you so much for taking out the time and helping us, taking through the entire concept.
Thank you, Mahima. Thank you for having me.
All right, viewers, with that, it's time to slip into a very, very short break, but don't go anywhere, because in the next segment, we're going to talk about what are the right uses of a credit card, whether you can pay rent via credit card or not, and that will be discussed in the next segment, so do stay tuned.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
PMAC, the mustard specialist since 1933.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate
Welcome back. You're watching Your Money Matters here at NDTV Profit. As promised, the other concept or topic that we're going to discuss today is about credit cards, whether you should pay your rent via credit cards, what are the transactions that you should do via credit cards, what are the transactions that you should completely avoid, and all of this, we're going to take up with Adil Shetty, the CEO of Bank Bazaar, who is joining us now. Adil, first of all, thank you so much for taking out the time. My first question to you is with regards to, the rent aspect that we were talking about. There have been mediums through which now you can use your credit card to pay rent, but like we were talking earlier about this when you mentioned that there are a lot of regulation changes also happening around this. One, should you do that? Secondly, what should you keep in mind if you do it, and what are the regulatory changes that are happening?
So Mahima, we have a ringside view with our co-brand credit card business in terms of what's happening with rental payment. And largely the window for rental payment by credit card is closing or has closed in India. So let me just cover both what has happened and why it's happened. So what has happened, right, is if consumers today go to the same fintech apps that they used to pay rental with 1 year ago, now the rental pay option would have disappeared. If 1 year ago, the bank was allowing them to collect reward points on rental payment of 50,000 a month, those reward points have now disappeared. And in fact, the bank might be charging a 1% processing fee if you use the credit card for rental, which is over and above what the fintech platform charges you. So broadly, I think the window has closed. Now the question is, why did that happen? The reason it happened, Mahima, was there was a lot of misuse of rental payment to do peer-to-peer payment, right? So one might say they're paying their landlord, but they're paying a friend. So this problem started to become fairly large, and a lot of strict rules started to come in where, apps had to collect the rental agreement, had to validate the KYC for the landlord. And today, very, very few apps allow this kind of rental payment. There are charges on the rental payment. So today, I think there's very little reason or very few people who I would advise to make their rental payment via the credit card.
In this, a lot of people argue that, the charges that they're paying against this versus the rewards that they get is something that, you should keep in mind. Do you think that the rewards that you get outweighs the charges that you kind of pay, or it is not at all viable?
So your question, I would have answered very differently if you asked me 1 year ago.
Yeah.
So what has happened in the last 1 year is rewards are very dynamic, Mahima. So today, right, a lot of banks have come and said two big changes. So they've said, if you're making rental payment, we're not either giving you any reward. A lot of banks have said that, or they're saying that the reward has been reduced. So firstly, that reward value has gone down, and it's a very dynamic situation where what was available 1 year ago on rental payment is not available today. But even more importantly, right, new costs have come in. So there are examples where the bank has said, if you're paying rent via the credit card, I will charge you a 1% processing fee. Now, let's say I'm making a rental payment of 1 lakh, right? 1%, even if I pay my bill back in full at the end of the month, which by the way, is an even more important requirement, right? Always pay your credit card bill in full every month. But even if I pay that 1% processing fee, that's like 12% per annum that I'm paying on that amount, right? Saving that amount and investing it anywhere, there's no way risk-free to make more than 12%. So the situation has changed in the last 12 months. Maybe 12 months ago, I would have said that, yes, you can make good reward. But today it's difficult, Mahima.
Got it. Now then, this brings me to the question key. What are the transactions that you should definitely avoid doing via credit cards if there's a checklist in place? Because, at the end of the day, people need to understand that credit card at the end of the day needs to be paid after some given point of time. And it's not viable for certain transactions. So what are those transactions if there's a list?
Right. I'll focus on two big things that one should avoid on their credit card. And then I'll talk to you about maybe 2 or 3 things where it makes eminent sense, right? I'm a credit card user. All my payments whether it's in a restaurant or whether it's my utility or my insurance, I pay with the credit card. So, but let me tell you what not to do, then I'll tell you what to do to save money, right? So what not to do, right, is I would say avoid cash withdrawal. Your cash withdrawal comes with a processing fee, which can be as high as 2-3%. So don't use your credit card to go to an ATM and take cash out. So this is one transaction I would say one should avoid. Secondly, right, always pay your credit card bill in full, or if you can't pay it in full, convert it into EMI. Don't do a minimum payment and continue. So I'll give you an example. So while I'll talk to you about how we tell people at Bank Bazaar how you can earn 20,000 rupees a year by using your credit card wisely, when you don't pay your bill in full, right, you typically end up paying an APR of about 3% a month. So it's very easy, if you don't pay your bill in full, only pay the minimum, to end up paying, on a 50,000 rotating balance, you can end up paying 20,000 rupees as interest also. So the two things not to do are, don't withdraw cash on a credit card at an ATM. And secondly, always pay your credit card bill in full. Don't stop at paying the minimum. And if in case you can't pay the full amount, you can convert it to an EMI, which is very easy. You can do it on the bank app by just requesting that transaction or that balance. Most banks offer it. All the Bank Bazaar co-brand cards offer it. You can convert it to EMI. Now let's focus on how to save money on a credit card. Like I said, every expense and most transactions I pay with a credit card at a restaurant, at a store, or online, right? So I think online dining, online groceries is a great category. A lot of cards give great discounts and rewards. So on a Bank Bazaar credit card, typically co-brand credit card, you can find that you can make 300-400 rupees off when you pay your online dining, online grocery bill using the credit card. You get accelerated 2x reward points, which you can then claim for e-commerce vouchers. So online dining, online groceries has become a big category, Mahima. One of the fastest growing categories. It really makes sense to make use of a good credit card if you have one there. The second is no cost EMI. So today, let's say I'm watching the World Cup and I want a new TV. I can pay on UPI and pay 40,000 rupees for a credit card and pay in full. Or I can buy using a no cost EMI on my credit card, where I pay the same 40,000, but I get 6 months to pay it off. So it's like an interest-free PL, which is great, right? Imagine a 12-14% PL, but someone is giving to me interest-free on my credit card. And obviously the money for that is coming from the manufacturer of the TV, right? So it's a great no-cost EMI product, and it's only available on top of a credit card. So that makes sense. The third I'd say is fuel. So on credit card, typically you can get reward points, or you can get cash back on fuel. So a lot of our brand credit cards are great for fuel. So I think these are three categories which are weekly use case categories, which is online dining, online groceries, fuel. Make use of it for that. And I think no cost EMI is also a very, very good product.
Perfect. Adil, if there was a checklist or a thumb rule in place as to what are the transactions that you do via credit cards and what are the transactions that you directly do via bank accounts, what would that be?
So I think we've covered it in detail. You've done a good job of asking the right questions. So avoid rental today on your credit card because there is a processing fee, rewards are minimized, and there's a charge the fintech app will also offer. And most fintech app have stopped doing rental. So avoid that. Don't withdraw cash at an ATM with your credit card. There's a 2-3% processing fee. Third, always pay your bill on time in full. If for whatever reason you can't pay your bill in full, right? Convert it into an EMI. Don't rotate or pay the monthly 3% APR. Much better to do it via EMI. These are three do's. Three do's, right? Online dining, online groceries, fuel, and no cost EMI. These totally make sense to save money and use your credit card smartly.
Okay, got it. Just one last question, and this even I am confused with because I've never seen anybody do it, or I myself has never done it. But I'd received this question, I remember, in one of the YouTube comments, whether you can use your credit cards to make your investments. I mean, if you want to invest in a mutual fund, can you? I'm not sure if you can actually do that. And if you can do that, is it advisable?
Right. So, we get this question a lot at Bank Bazaar, right? And people are trying to improve their credit score. So we get a lot of, AI-based questions where they say, can I invest using my credit card? So the answer is no, right? So typically, if you go to your mutual fund app and try and pay, right, the only options that will come are net banking, debit card. So you won't even get the option of paying via credit card because the regulator wants to avoid people taking debt, right? In order to invest it in the market. In fact, when you take a personal loan, it comes into your bank account. So the lender can't control what you do with it. But typically, you look at your contract, you will give a warranty or you will self-submit, right? That I won't use this money of a personal loan to invest in the market. Same thing will happen even in a gold loan contract. So typically, right, it's not advisable at all to borrow to invest in the stock market. And with credit card, the controls are in place that you can't pay in a payment gateway using your credit card for mutual funds.
Got it. Okay. All right. Thank you so much, Adil, for taking out the time and making it very clear for us as to what are the transactions that you should do via credit cards and which you should avoid. And of course, for taking out the time and speaking with us at NDTV Profit.
Thanks, Mahima. Look forward to being in touch. Cheers.
Cheers. So that's, of course, viewers, with regards to how your credit card transactions should be. But, there's a very interesting update that's come in, and that's with regards to NSE launching a new indices. Now, this is basically Nifty 500 Ahimsa index that they've launched. This particular index is going to track companies which are completely into the non-violence segment. It's an interesting one, and we have Parth joining by to give us a more detailed version of what this index consists of.
Nifty has launched a new index called Nifty 500 Ahimsa. This is a thematic index that selects stocks from the broader Nifty 500 universe based on the Ahimsa or non-violent principles. The screening process for this index is that companies are evaluated and classified into green, orange or red bands which are given by the Ahimsa Foundation. Only the green band stocks which are aligned with Ahimsa are included in the index, while the orange or the red ones, which are the companies involved in meat, leather, gambling, tobacco, alcohol or harmful pesticide business segments, are excluded from the index. The methodology for this index is that it is a free float market cap weighted index and it will be reviewed semi-annually, which is in the months of March and September. The purpose for this index is that it offers an ethical investment option for investors that are seeking exposure to companies which follow the non-violent and compassion principles, while they'll be able to track the broader market segments as well. This index will cater to value based or ethical investing, which is similar to the Sharia compliant or ESG indices that have been already offered by the National Stock Exchange.
All right, Parth, thank you so much for getting us those details on Ahimsa Index. Of course, no new mutual fund has been launched around this, but we'll wait and watch if there is any mutual fund that comes up with a fund that replicates this particular index. But with that, we're completely out of time on this edition of Your Money Matters. Do stay tuned in for more news and updates on the other side.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The entrepreneurship in India is currently defined by innovation, technology, more customer orientation is something what is visible today. And those companies who innovate, collaborate more importantly, are the ones who are going to be more successful in the decade to come. And the formalization also had helped in terms of expanding the entrepreneurship across the geography of the country.
India's unshakable news habit. NDTV.com is India's #1 English news website. India India Inc.'s most respected names, chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertising.
LTM is gaining in trade today, and this IT services company has delivered a flat set of numbers in this quarter, which is in line with the estimates. Venu Lambu, who's the CEO and MD of LTM, joins in now. So good to have you on NDTV Profit. Good set of numbers when it comes to the market reaction, and a large part of that really comes in from the artificial intelligence revenue that has been stated for the first time by the company. Give us a sense on how this is going to grow and what is the aspect that the company is focusing on in the artificial intelligence revenue stream.
Firstly, thanks for having me here. Good to be here. Yes, our first quarter was a good start for the year. Especially if we look at in the context of two of our large industry segments. Have navigated the AI productivity headwind. We were pretty much ahead of that topic. That's behind us now. So both these, large segments of ours reported more than 3% sequential growth. The softness on other sectors predominantly came in because of the delayed ramp up in India and the impact on the Middle East conflict, that was pretty much there in Q1. And the most importantly, for the first quarter, we announced a baselining of the types of AI work we do. We do AI work in business AI, enterprise AI, creative AI, and industrial AI. And the three types of work within that four is what we call it as AI native revenue, and that came about $150 million on a quarterly run rate. And I expect that over a period of time, it will only grow faster. It will grow faster than the company average. And as part of our 5-year plan, we expect that the AI revenue to be 50% of our AI revenue mix. And in order to do that, we're doing a lot of things, right? Whether it's in talent and transformation, reimagining partner ecosystem, and so on.
Right. So you mentioned it will be 50% by which quarter and which financial year you are saying?
Yeah, we expect this 50% to be somewhere between 3 to 5 years of our plans, 50% of our overall revenue mix should be.
Good you mentioned that percentage mix as well, because yours is over 12% versus other industry leaders who are lower in terms of the overall contribution. So that's the path in 3 to 5 years. But a short-term view on this particular year, is the 12% run rate going to be maintained? And second, TCS has said that most of their deal wins in AI space are more on a quarter-to-quarter basis. Are yours more long-term in nature or short-term?
Firstly, on the quarterly run rate and 12% part of it, I expect that to continue for the year as well. If at all, I would expect that to get better, from quarter to quarter, because we have a very focused approach in terms of how do we go about for the three types of AI work. And the second is with regard to the nature of engagement cycle for the AI revenue. Yes, it has elements of the short-term projects, which is about 3 to 4 months types of work. But we're also seeing clients engaging with us by selecting as a strategic AI partner. We did announce that one of the leading manufacturing customer in US selected as a strategic AI partner. We also announced a very large deal in Q1 at the back of the vendor consolidation, where AI will be infused a lot. So when you look at these engagements, it gives us an opportunity to have a slightly longer term revenue visibility at the back of this engagement, because the AI adoption is not one switch approach. It's going to be iterative in nature. You engage with them as an AI partner, then you keep working on starting with one process, expanding into the second one and third one, and so on. So we're looking for that kind of an approach to accelerate our AI revenue.
All right, so mix of both short-term and long-term, and you're saying that 12% run rate, at least for this financial year, will be maintained in terms of contribution to the revenue. But when we talk about the margin contribution, how is this 12% piece of artificial intelligence really adding to the margin picture?
Firstly, we said about that we will continue to have the margin expansion even in Q2 and for the full year, even post the closure of our Randstad acquisition, the technology and consulting business that we announced. Post that as well, we will maintain the margin position as what we had planned at the beginning of this year. So that's the positive news of it. And that's been contributed with the New Horizon program, because we're reimagining quite a few things. We're reimagining how do we manage our overheads. We're reimagining, essentially we're redefining what I call as a cost of delivery through a program of New Horizon that we have launched, where it's all about changing the mindset of creating a new horizon for ourselves on the cost of delivery. So that's going to contribute to that. And second is the AI deals will come at a higher gross margin than the traditional IT services as well. But at the same time, it's a business where we are investing a lot more as well. We are investing in our Blueverse ecosystem. Yeah, we are investing on the talent transformation. We are investing on our go-to-market capabilities and so on. And today we announced a very strategic partnership with Anthropic as well. So that's also a strategic, focus area for us.
That's right. And so lots of areas that you're working on. But you mentioned about that Randstad acquisition. In which particular quarter will it start really impacting? Will be EPS accretive? And what is the percentage that we're looking at in terms of margin expansion once that really kicks in on your books?
We expect the closure to happen at the beginning of Q3. So, in Q3 onwards, either partly in Q3 or full of Q3, we will consolidate that post-closure. And as we announced it during the time of sharing this news, that we don't expect any material impact to the margin for this year, because we are far ahead in terms of how we have created the buffer to absorb that acquisition.
Right. When we talk about the output-based model impact, and this is the first time that you have also onboarded that particular bit, how is it going to impact your revenue, and what will this model really change in terms of numbers?
We announced a new pricing model called Blueverse Currency pricing model, which is essentially based on the construct on how do we start delivering services to our customers, where they pay us based on the output or the outcome that we deliver. So we already have one engagement that has started, which is measured based on outcome and output that we deliver. So the Blueworks currency is going to be applicable both in our enterprise AI kind of engagements and also on the other three types of AI that I spoke about: business AI, creative AI, and industrial AI. Part of the work as well. So it's at the starting stage. We are ready for it as and when the clients start increasing their adoption. And when clients starts being a bit more open in experimenting with the output and outcome-based model, we'll be ready to serve them.
All right, so impact is still to be known while this particular model is disruptive in your sector. Now, when we talk about your mainstay business, the tech and BFSI space have really performed. Production segment is a drag. Can you give us an outlook for this quarter on the segments?
Well, the production segment is predominantly contributed because of one-off fall off that we had on our revenue, which is essentially related to the one-time revenue we get in Q4 of every year with one of the large Indian customer. That happens for us every year. So this time it was slightly more that contributed towards it. So it's nothing to do with the sectorial trend. It is more to the fact that there was one-off revenue that that did not appear in Q1 with regard to the production segment. But year on year, it grew by 5.3%. So and then we got good demand traction going on both in manufacturing as well as in our energy and utilities part of the segment.
All right, so it was one-off impact, not a sector impact when it comes to production segment. Very quickly on the headcount, if you can give us a picture in terms of hiring, the momentum has been towards job losses. So is that attrition outlook as well, and increments, if you can give us a sense very quickly?
Last year we hired more than 6,000 freshers. This quarter we had 1,100 freshers. And as we speak today, I have a lot of open demand for different categories of AI skills. So our hiring engine has been reimagined. We are out there in the market to look for very talented engineers who come with a certain degree of AI skills, whether it is about in the AI-led software engineering or in the deployment capabilities or having a domain and contextual context, and also the data skills. We have a lot of demand on the data side that we want to hire. So I actually expect that during the year, you will see us making movements on lateral hiring beyond freshers as well. I can't put a specific number to it because it all depends on how much of talent is available for that particular skill sets. But if I look at the demand from our clients, we have a lot of demand on these category of skill sets. So the challenge for us today is about how do we train our people faster. At the same time, how do we create an ecosystem in India specifically, where we can play a role in enabling those skills for those who are looking for a job.
All right, so that's an important part. And of course, Venu Lambu, the company is really taking on the AI challenge pretty emphatically. All the best for that. And thank you so much for joining us on NDTV Profit.
Thank you.
Hello and welcome. HCL Q1 earnings have just broken, and as we can see, the Q1 earnings are in line. As for the net profit, it is up 3% at 4,624 crore rupees versus an estimate of 4,549 crore rupees. The profit is at 4,624 as we said, and as for revenue is at 34,579 crore rupees versus an estimate of 34,226 crore rupees. The EBIT margin is at 17% against an estimate of also 17%, reporting the inline earnings. And the EBIT is at 5,831 crore rupees versus an estimate of 5,808 crore rupees. I now have Jasmeet on standby with me, and Jasmeet is going to bring us more on these earnings. Tell me, Jasmeet, how are these earnings looking?
Well, Gargi, thank you for that. What we are seeing here is the numbers have come in line with the estimates. Now, if you look at the revenue, it's up nearly 1.7%, and that's what we were estimating the overall numbers to see an uptick of 1.7%. While if you look at the EBIT, it's up 3.7%, again in line with the estimates, but the margin here is something that will be in focus. We were estimating an uptick of 40 BPS, and margins have come in at an uptick of 32 BPS, and and the margin uptick is mainly on the back of the overall lower restructuring cost in this particular quarter, as well as the forex tailwind. Now, what's interesting is the net profit, which is up nearly 3% in the quarter, again in line with the estimate. So what we had seen in the Q4 is the Q4 had a low base. So any up move from here on would be a positive sign for the company, and the main focus remains on the guidance. We'll be soon into the pressure of HCL Tech and get more understanding and details on what the management has the outlook for the future. But so far, numbers look in line with the estimates, Gagi.
Right, Jasmeet, and just to better understand from these earnings that we've seen, what do you think is the single biggest monitorable today?
When we look at this earning, the main focus would be on the overall guidance by the company. And we were estimating, brokerages were divided in terms of the overall guidance. They were estimating an uptick cut of the overall guidance cut in terms of the upper end. But now it's a wait and watch how the guidance have panned out. Now, if you look at JP Morgan, they were penciling in the service guidance of the company to see a downtick on the upper end. That's the current service guidance is between 1 to 4%, and they were estimating it to see an downtick for about 0.5% on the upper end and see a again 0.5% downtick in the bottom end. So earlier 1.5 to 4.5 would be something around 3.5 1 to 3.5, but as of now it's a wait and watch of how does the overall guidance pans out. But also the headcount addition will be very interesting to watch out, given TCS had added 9,000 employees. So how is that going for HCL Tech, and what are their views on that would be a key focus. But apart from that, just to take you all again with the numbers, the revenue is up 1.75% in line with the estimates at 34,579 crore, while if you look at the EBIT, it's up 3.7% at 5,831 crore, and the margins is at 16.86. We had a low base of margin in the Q4 because of the downtick and the client slowdown, where margins had suffered in the Q4, but in the Q1 the margins are back to that 17% range, that's 16.86%, and the net profit is up 3%.
Jasmeet, as we saw, TCS itself had a 6% uptick today, and now we have HCL earnings as well. As for the upcoming earnings like Wipro and Infosys, what do you think investors should look out for?
Well, in terms of earning, we did see LTM come out with this number. So as the TCS, where the guidance for numbers were in line with the estimate, and even the street was penciling in a better H2. So as the managements have guided, now TCS guides for the Q2 to be a turnaround quarter for the company, while the H2 to be a better than the H1. So as the FY27 is the entire year. So as for LTM, that's why we did see a bit of positive momentum in the today's trade, and where we saw a lot of buzz across the area. But for HCL Tech per se, the focus would be on the AI revenue. If you look at the AI revenue history for the company in the Q2 of FY26, this was the first company to report its AI revenue, which was roughly at $100 million. From there, it saw a jump of nearly $46 million, and for the Q3 of FY26, it reached that $146 million mark. But for the Q4, the overall AI revenue came in at $155 million, and right now it's a wait and watch. We're still waiting for the presentation by the management to get more clarity on how much is the AI revenue for the company and how that is panning out from here on. While LTM also reported its first ever AI revenue, which was at roughly $150 million, but for HCL Tech, as of now, it's a wait and watch of how does the AI revenue has panned out from Q4 to Q1.
Right, and Jasmeet, just to go back to AI, in your opinion, what do you think, how can the revenue meaningfully translate to anything?
Well, as of now, it's again a question across the industry that how much of a margin comes from the AI-based revenue. We did see that the overall AI revenue is something that the companies have been reporting, but the margin aspect becomes a key crucial. Now, just to take you all across the numbers again for Q1 of FY27, we have seen that the overall revenue is an uptick of nearly 1.75%, currently at 34,579 crore, versus in the previous quarter we had that 33,981 crore, while the EBIT saw an uptick of 3.5%, the margins are at 16.86%, and the interesting aspect, what's really helping the margin grow in this particular quarter is the overall finance cost. Well, that has come down in this quarter from earlier across 240 to 50 crores. So in this quarter, the overall finance cost sits at 40 crores. Well, that's something that's helping out the overall margins stay in line. But again, it's wait and watch for the overall commentary of how has margins panned out from here on and what's their outlook. Any change in the guidance for FY27, because in the Q4 they had already penciled in a weak Q1, but so far the Q1 has come in line with the estimates, though it's weak than what was estimated earlier in the previous year, but now it has come in line with the estimates, which is a key positive trigger for this particular counter. But again, the guidance and the margin and overall commentary on the demand becomes a key.
Right, and Jasmeet, HCL Tech has traditionally commanded quite a premium valuation. So in your view, what do you think will justify the premium going forward? You've obviously taken us through the earnings that they've been in line. Do you think it would be stronger growth, better margins? Just let me get your take on that.
Well, now in terms of the overall revenue and margins for the valuations, the entire IT pack has seen a degrowth in terms of the overall valuations, as we have seen. Currently, top 5 IT companies are trading at a valuation between 11 to 13x versus 1 year ago it was somewhere between 15 to 20 odd times. But as of now, it's a weight of how does meaningful shift we see from this AI-based sources and how that helps out the overall growth. Now, well, we also have the press release of HCL Tech where we would get more clarity on how the quarter has gone by. Now, if you look at the overall revenue in rupee terms, it's up 1.8% on QOQ basis, while in terms of the constant currency, it's a degrowth. The overall CC growth for this quarter is at negative 0.5 odd percent, while we were penciling in similar, we were penciling in a negative degrowth of 1.5% to a positive 0.8%, but the CC growth for this quarter has come in at negative 0.5 odd percent. Well, the key positive with regards to the overall advanced AI revenue, well, that's at $171 million versus in the previous quarter, the overall advanced revenue was at 155. So that has seen a major uptick in this quarter, which roughly up about 10.6 odd percent in the CC terms. While the company is maintaining its double-digit growth, becomes a key positive. Apart from that, if you look at overall cycle in terms of margin, again, that has come in line with the estimates.
Right, thanks so much, Jasmeet. And now we have Manav Medewala, who's a research analyst at Mirae Asset. Manav, just to get you in on this, as we've seen the earnings have been in line, I'll ask you again, what do you think is the biggest monitorable in today's earnings?
See, so when you look at the earnings are most likely in line. One thing that I liked is the margins that came in stronger than what I anticipated. I anticipated a 30 to 40 basis point of increment in IT and business services margins, but it is close to 17% is something that is favorable. The other things to look out would be what is the guidance. I think the disclosures are yet pending, and how and about the $1.14 billion deal that the company signed on July 3rd. How are they expecting it to ramp up, and if it could at all help them in achieving the upper end of the guidance, which right now seems a little difficult for the company to achieve.
Well, hello, Mr. Manam. Jasmeet Singh joining in here. As rightly said, the focus would be on the margin, and that has come in line with the estimates. But I would like to get your takes on the overall guidance, where the street was divided, with some brokers estimating that they would cut the upper end of the service guidance from earlier 4.5 to 3.5. But as we are seeing, the management has stayed with the earlier guidance, where the overall company guidance is 1 to 4%, service guidance is between 1.5 to 4.5%. So what do you make out of this? Do you think they're confident about the FY27? That's why the guidance remains unchanged?
One possible figure would be the $1.14 billion deal that they signed right now, what I spoke about. Right? And with how both TCS and LTIMindtree suggested that from Q2 the margins and the demand is going to improve, right? I assume the same is happening with HCL Tech also. Obviously, we have to look at the commentary that they give on the phone call, but I would assume that from Q2 things would start, demand would start improving.
Got that view. Now, in terms of the advanced AI revenue, well, HCL Tech was one of the first companies to report its advanced AI revenue, the AI revenue aspect, and we have seen that growing in a healthy double digit. And even in this quarter, they have reported a $171 million, which is up roughly 10.6% on QOQ CC terms. How do you see this going ahead, given that overall, as a company, it's a CC degrowth of 0.5%, but the AI revenue has stayed strong and grown by 10.6%?
As in when we move forward, in the medium term or also in the short term, the AI revenue will improve, right? But it also depends on how well the company is able to integrate it in their normal deal as well. And going forward, I believe it's going to be different and difficult for the company to bifurcate between let's say, outcome-based revenue and a transaction-based deal, right? Because it's going to be a bunch of, or it's going to be a combination of both the deals. But going forward, yes, the AI revenue will keep on increasing.
Got that view. As rightly said, the AI revenue is expected to increase from here on, but I would like to throw some light on the segment-wise split, where we do know that the Q3 is the strongest for the software companies, and the Q4 we saw a big downtick for the overall software business for the company. But even in this quarter, we are seeing the overall software business is down about 5.3 odd percent, despite Q1 being a stable quarter for the company. So what do you make of the software business altogether?
The company highlighted is that in Q4 there were a couple of headwinds that the company faced, especially when it came to in the software business. Two large US telecom clients sharply cut discretionary IT spend, right? And there were two SAP transformation programs that were discontinued. And again, then there was one deal with retail and another deal with manufacturing that, saw a significant scale down in terms of IT budget. So those things have kind of, led to a drawdown in Q1. But eventually, this should the new deals and the deals that the company has signed in the previous quarter and on the 1st week of July should start ramping up.
Well, got that. Even in the Q4, as we had noticed that the management's commentary being the telecom sector would see a weakness in the Q4 as well as in the Q1. And we have seen in the Q1, they have reported a roughly 11% degrowth in the telecom sector. So what are your views on that? Do you see Q1 is the mark where it has bottomed out and you see expected recovery from the Q2 onwards? Or do you see the overall telecom overhang to continue further?
I believe the overall telecom hang would be there at least for the coming quarters, but it also depends on how on the company's commentary. Do they feel that things are bottoming out, or it's gonna take a while, or let's say Q2 or Q3 before things start bottoming out and gradually start ramping up?
Got that take of yours, but I would like to focus on a bit macro level of data here. I would also like to understand your views on the ER&D segment. Now, something like KPIT Tech and Tata Tech, KPIT Tech basically is facing a lot of issues from its European clients. Now, for HCL Tech, we have seen the ER&D space has stayed healthy, and in this quarter has grown by 0.3%, roughly flattish on what it was in the previous quarter. So, what's your take on the overall ER&D as a space and for HCL Tech per se?
On the overall ER&D sector per se, I would believe it's going to take a while now before the ER&D sector actually bounces back. There were a few tailwinds of few green shoots that the company talked about in Q4, especially when it came to North America, right? But given how the European sector is covering, it's going to take a while for the ER&D sector to bounce back, is what I can say.
Well, got that view. Now, in terms of geographies also, they did note that two of the clients are facing issues in America. The deal closure was a bit overhang and has still continued. But in this quarter, we do note that the overall US geography has grown by 2.9%. And this quarter, I haven't given discussion, but the US as a geography has grown by 2.9%. Do you think the overall delays which they saw in the Americas as a geography has been worked out its way out and now it's on a healthy stage of growth?
See, again, it would depend on client specific deals. Yes, the company has said that it's going to take longer to convert the deal win, but I believe they should be able to close the deals by Q3, and it should start ramping up in FY27.
Got that view about the overall deal wins and in the Americas geography. I have last question talking about the overall IT as a space, right? We have seen overall valuations bottoming for the companies at roughly 10 to 12 times, and even the stock prices down for a lot of IT companies. Nifty is on 30% on YTD basis. And now, given in last couple of days, we have seen LTM and TCS meeting their level of expectation and being in line with the estimates. Now, even the HCL Tech numbers have come in line with the estimates, and there's no negative surprise so far. So, how do you see the movement of Nifty IT and HCL Tech tomorrow morning?
With respect to Nifty IT and HCL Tech, given the basic and the surface level results, I believe it should start at flat to positive sentiment. But again, I believe these are just short-term, ups and downs that the sector is focusing on, and we should rather look at the long-term and the medium-term story. Yes, given the fact that IT sector is trading at a decade low valuations with the earnings yield and the dividend yield they are offering, if IT companies are able to pivot themselves and are able to generate enough of the AI revenue, it can easily give you a 60 or 70% returns in the 3 to 4 years time.
Right. Thank you so much, Mr. Mana, for joining us and helping break down the earnings. Thanks, Jasmeet, as well, for breaking that down for us. Viewers, we're going to take a short break now, but stay tuned to NDTV Profit for more news and updates.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are quantifiable numbers which can be compared. So these are comparable, these are quantifiable. So that is the more important thing. So an investor now can know how a company is doing and he can make comparison between one company and the other and also over a period of time. So far as the other players are concerned, the proxy advisory firms, they are also helping the investors in evaluating the companies, how they are doing. And in doing this, India has reached at a level today where we can claim that we are one of the best in the world.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards from the jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hello and welcome to The Big Question. I'm Vikram Oza, and tonight we're asking a very simple question. Can you trust what's on that plate of food that you consume? Because from restaurants and bakeries to milk suppliers to medicines, cosmetics even quick commerce platforms, India's food safety system is suddenly hugely under the scanner. In Maharashtra alone, the FDA's crackdown has led to these raids. They're taking place across the state. Crores worth of adulterated and banned products have been seized. Businesses have been shut down as well. Licenses have been suspended. And even more than 37,000 liters of adulterated milk has been destroyed. The rumors of inspections have been enough to trigger all that panic. There has been this dumping of milk in some areas as well. And yet at the same time, the FSSAI has sent 9 notices that have gone out to Swiggy Instamart over these complaints that range from expired protein supplements and spoiled food to concerns over licensing and concerns over traceability. And here's another telling statistics, if we can draw that up as well. A local circle survey has found that 48%, no less than 48% of consumers cannot find the best before date when they shop online. And from that very survey, we learn that 5 out of 8 major platforms, they do not display the best before date at all. So it makes us ask if India's convenience economy is moving faster than its safety checks. With this kind of crackdown that we are hearing about day in and day out today, are we to assume that it is only now that regulators have decided to get serious about this? Because we're talking about food, and if food and medicines and even cosmetics are all under scrutiny, then do we have a much larger public health challenge on our hands? What will it take to get unadulterated food on our plates going ahead from here? So which is why our big question tonight, FDA and FSSAI doing this crackdown in a big way, but now can it really clean up India's food chain? It's an important question to ask. In fact, it's the man in question right now, the Maharashtra FDA Commissioner, is someone we spoke to at length, asking him exactly why it is happening at such ferocity, at such aggression right now. We came away with this reply.
If we are speaking about food sector, so they have got what we call a cloud kitchens concept is there, dark kitchens concept is there. Once the platform gets the order, they provide the service there. In my order, I have made it very, very clear. Whatever platforms they have to identify and declare which source they are purchasing from. Whatever they call dark cloud kitchen or whatever, they have to source. It has to be registered. It has to follow all the norms and standards which are there for restaurants and hotel, whatever those are there. They have to follow it, and they have to be transparent about it. In recent one of my investigations in B1D, you might have heard about it, we were able to unshackle big sort of a racket where expired food items were tried to be brought again in the market. So whether it's dark cloud kitchens or dark kitchens, we are after that, we are identifying, getting the information. Those platforms who are serving from these without following these standards, not only the kitchen will be held responsible, but those platforms who are serving will also be held responsible. They are equally responsible as per the Act.
There you heard the Maharashtra FDA Commissioner Tukaram Munde, the officer at the center of this crackdown. He's making it clear that nobody is off limits as well, that the law applies equally, whether it's a 5-star hotel, a roadside eatery, a quick commerce dark store. It's all the same. So yes, you heard him. Let's take this across to our panel. Pradeep Chakraborty is joining us. He's former Director for Food Safety and Standards Authority of India, FSSAI. Pradeep Chakraborty is with us. Sachin Thapara is also with us, founder and chairman of Local Circles. Supreme Court lawyer, Mr. Jotwani, Mr. Dinesh Jotwani here with us as well. And joining us here is Dhruva Karunakar Shetty. He is, of course, an actor and a producer, but also he is the CEO of Srinathji's Cuisine. It runs several eating joints like Govinda's, Anna's Kapi. Great to have you, gentlemen. But let me begin by asking you, Mr. Chakraborty, now that we're seeing these raids, Maharashtra's FDA conducting them, seizing crores worth of adulterated food, they're suspending licenses, they're destroying liters of adulterated milk. There's this major crackdown on restaurants, even pharmacies and manufacturers. So would you say that this is evidence that violations are widespread? Or do you think this is evidence that enforcement today has simply been missing, and it has been missing for far too long?
No, enforcement was there earlier also, but this time actually, particularly Maharashtra FDA, they have taken the initiative. As per our FSS Act 2006, this section 29, authorities responsible for enforcement of the act are both State Food Safety Commissioner and the FSSAI, Government of India. So, but earlier also we did some enforcement, but this time there is enforcement drive, not only by FDA Maharashtra but also by other food safety commissioners like like Rajasthan and Chhattisgarh and other state governments also. But it is in the limelight because Maharashtra is the leading state in the country in food products, manufacturing and sale. So this time it is in the limelight, and FSSI as well as FDA Maharashtra also, they took a special initiative.
Yes, but Mr. Chakraborty, you're saying that it is in the limelight now in Maharashtra, and Maharashtra being that much more in the spotlight, that's why we are hearing and it's grabbing headlines. But why does it still take raids? Why does it take raids to uncover expired stock and unhygienic kitchens and adulterated products? The routine surveillance, would you say that is breaking down? If it has been an ongoing system, then would we have so many such cases where we are finding so much expired stock and rodents in kitchens, etc.?
Of AI-related market opportunities in pursuit of becoming the world's best AI solutions provider. Our intent is to benefit disproportionately from the AI native and AI amplified opportunities, which together represents the fastest growing pool of enterprise spend. While in AI disrupted services, we intend to innovate faster than the market to stay ahead of the deflationary curve rather than be defined by it. The fruition of this is reflected in our growing advanced AI revenue. Our advanced AI revenue for the quarter stood at $171 million, marking a 10.6% quarter-on-quarter increase and a 62.1% year-on-year increase. Our annualized advanced AI revenue now stands at $688 million. Let me delve into the business performance for the quarter. AMJ is typically a weaker quarter for us due to planned revenue declines driven by productivity commitments in certain large managed services contracts. Despite the seasonal headwinds, we delivered a good all-round performance. Our revenue declined by 0.5% sequentially and increased by 2.6% on a year-on-year basis in constant currency. Our operating margin stood at 16.9%, an improvement of 40 basis points quarter-on-quarter and 56 basis points year-on-year. All growth rates referred to here are in constant currency. Our services business grew 3.5% year-on-year and declined by 0.7% sequentially. Our IT and business services grew 4.2% year-on-year and remained flat sequentially. Our engineering and R&D services grew 0.3% year-on-year and declined 3.7% sequentially. HCL Software annual recurring revenue now stands at $1.063 billion, a 2% increase year-on-year in constant currency. Revenue grew 2.2% sequentially while declining 5.3% year-on-year. Recently, we've completed the acquisition of JasperSoft. This adds the visualization layer to our data management portfolio. What was missing was the visualized layer, the capability that takes governed, trusted data and delivers it as actionable insight to business users who need it. From bookings perspective, the quarter was very good. It was well balanced across verticals, segments, and geographies. Our net new booking for the quarter was $2.4 billion. This is our highest ever Q1 booking till date. Of course, this $2.4 billion excludes the recent mega deal which was signed in early July and so not part of Q1 booking. We were selected by a Europe headquartered Fortune Global 50 firm as the technology partner to accelerate AI-led transformation and management of their global digital workplace and enterprise networks. On the people front, we are 223,889 people as of 30th June 2026, which is a net decrease of 3,292 compared to the previous quarter. Our attrition stands at 12.7% on LTM basis. Our AA strategy execution is showing up in a 3.3% year-on-year increase in revenue per employee, which has gone up every quarter for the last 5 quarters. With respect to our AI updates, as you know, our AI strategy is anchored on 5 strategic pillars. On each of these pillars, proactive transformation of our services, building differentiated IP, expanding AI-led services, scaling AI partnerships, and developing AI talent, our progress has been very impressive, and you would find several evidence of this in our investor release. I also want to spend a minute to comment on a recent strategic investment of $151 million in Sarvam, India's full-stack sovereign AI company. This investment reinforces HCLTech's position as an AI innovator, not just an adapter, underscoring our commitment to building, co-innovating, and shaping the next wave of AI. By combining Sarvam's research depth with HCLTech's global enterprise relationships, our engineering expertise, and software IP, we are creating a differentiated full-stack AI platform spanning models, platforms, applications, and managed services. This meaningfully opens up the Indian sovereign AI market for us across industries and government sector. While the world's attention has been captured by the ever larger general purpose models, the real value for enterprises often lies in smaller specialized models trained deeply on the language, data, and workflows of a single industry or a client. These models are faster, more cost efficient, and more accurate where it matters, and the window to establish leadership here is open now. I would also like to share an important strategic initiative of HCLTech, full stack AI offering powered by AI data centers. Global data center demand is set to nearly triple by 2030 thanks to AI, and in India that growth is expected to happen at an even faster rate. Sovereign data requirements are increasingly mandating that workloads for governments, enterprises, and even global consumer platforms be delivered in country. The business is shifting from physical infrastructure to higher value AI-ready full-stack solutions, one we believe will be a new growth vector for HCLTech. We will combine our capabilities across AI data center design, DevOps and cloud operations, as well as our software portfolio with a new AI data center business for this. In this regard, we will make a strategic investment up to rupees 3,500 crores and with the potential to scale to 50 megawatt of capacity. Next topic is our pipeline and market trends. Pipeline remains healthy. Looking at the broader market, on one side, we are seeing strong sustained growth in both AI native and AI amplified services. And on the other side, where AI disrupted services, which is the more traditional commoditized work, continues to be optimized further as AI-enabled automation takes hold. We are well positioned to grow our business further through very clear strategies to address each of these 3 segments. Looking ahead, we are retaining our FY27 guidance of 1 to 4% at a company level revenue growth and 1.5 to 4.5% for services, both in constant currency. Margin guidance is also retained at 17.5 to 18.5%. And for clarity, this guidance is for organic growth and does not include acquisitions, including the recently concluded the JasperSoft acquisition. With this, I will now request Shiv to share more details on our financial performance.
Thank you, CVK. Good evening, everyone, and thank you for joining our Q1 financial year 27 earnings call. I will begin with an overview of our financial performance for the quarter, starting with the revenue performance. Total revenue for the quarter is rupees 34,579 crores, which is up 1.8% quarter-on-quarter and 13.9% year-on-year. Services revenue is at 31,748 crores, growing 1.7% quarter-on-quarter and 14.9% year-on-year. Software revenue was at rupees 2,960 crores, which is up 3.6% quarter-on-quarter and 4.7% year-on-year. In terms of profitability, our EBIT came in at rupees 5,831 crores, representing 16.9% of revenue, and this reflects growth of 3.8% quarter-on-quarter and 18% year-on-year. Net income came in at rupees 4,624 crores at 13.4% of revenue, up 3% quarter-on-quarter and 20.3% year-on-year. In terms of update on return on invested capital, ROIC, our ROIC continues to improve, supported by our focus on profitability and efficient capital management. Company level ROIC for the last 12 months is at 40.7%, up 257 basis point year-on-year, and services ROIC is at 47.8%, up 260 basis point year-on-year. And HCL Software ROIC is at 21.6%, up 75 basis point year-on-year. Now an update on cash generation and balance sheet. Our cash generation remained healthy. Over the last 12 months, free cash flow was at rupees 17,843 crores and operating cash flow was at 19,258 crores. The balance sheet remained strong with gross cash at rupees 27,058 crores and net cash as of 26,907 crores as of 30th of June 2026. Operating cash flow to net income conversion was at 107%, while free cash flow to net income conversion was at 99% for the last 12 months. Our total DSO, including unbilled receivables, was at 86 days, an increase of 2 days quarter-on-quarter. Now moving on to shareholder returns. Our normalized diluted EPS for the last 12 months was at 66.99 rupees, up 4.5% quarter-on-quarter and 6.9% year-on-year. Including the one-time impact of new labor codes, diluted EPS was at rupees 64.25. The board has declared an interim dividend of rupees 12 per share for the quarter. The record date is 17th of July 26 and the payment date shall be 27th of July 2026. This brings the last 12 months payout to rupees 60 per share, effectively distributing 93.2% of our net income. That concludes my update. I would now like to hand over to Ram for an update on HR matters. Over to you, Ram. Thank you.
Good evening, everybody. I think CVK has already called out the closing headcount and attrition. I'll probably not try and repeat that. You need to look at the quarter-ending headcount in line with the revenues. You will see the productivity improvement. Revenue per employee has improved. We added 1,056 freshers this quarter. That again is in line with the plan for Q1, which again usually is a soft quarter, so everything gets reflected accordingly. Attrition again, if you see, it's pretty stable now for a good 10 quarters. If you see for the last 10 quarters, attrition is stable at 12.7. I probably will stop there and maybe we'll open the floor for questions.
Anyone who, yeah, please identify yourself.
Hi, good evening. This is Shubhan Chakraborty from the Economic Times. I would just move to the very interesting announcement that you made with regards to the 3,500 crore. The 3,500 crore being moved to this new data center business. If you could just give a little bit of color as to what the financing aspects of that would be, and if you are partnering with some of the established players.
This is a AI data center investment which we will make. Obviously, we are in conversation with several clients, and we are very close to establishing our first client with some committed capacity. So we're starting with the initial investment of 3,500 crores, but our bigger vision is to grow it to a 50 megawatt. But the most important element here is, while it is AI data center business, we are playing fundamentally a different game. Normally, this is, you look at this data center capacity in megawatts and gigawatts, and that becomes the product, right? Megawatt and gigawatt becomes the product, and that's for infrastructure companies. For us, the megawatt is just the anchor. Our whole value is in delivering full stack AI services, which means it's data center, it's the GPUs, it's the models, it's the applications that we will deliver on top of it. So the overall value creation is significantly of a very different magnitude when you really look at this as a full stack. And that's really what we want to play. And we are also looking at leveraging the data center that we are building for delivering managed services and outcome-based contracts for global clients. Because today token costs are a very important component of the overall delivery. So we having our own capacity and our own models and solutions to deliver managed services and fixed price contracts is another very big advantage for global clients.
Hi, I'm Shashank from Outlook Business. HCL Tech is one of the first IT services companies in India who have invested in a native foundational LLM company like Servam. So my question is, how do you plan to monetize this investment? Are you planning to offer go-to general purpose model with collaboratively with Servam, or you're planning to go towards the enterprise AI solutions?
I think, as I said, there are four significant opportunities. And first and foremost is the opportunities in India, both in the enterprises and in the governments, both state and central and public sector undertakings. So that's a big opportunity. Each of these large entities are looking at leveraging AI in a very meaningful way to really transform their businesses, especially in the financial services, insurance, and these kind of verticals. So while Servam will provide the models and the full stack capability, we will be the system integrators. So we think there is a good opportunity there, both with the government and enterprises. And globally, today the entire AI space is evolving with two broad principles. One is a zero trust kind of a principle, where no data leaves any enterprise for either data transfer, prompting, reasoning. The data remains within the enterprise. So there's zero trust model. And it is also going to be a tiered model. Tier 1 will be a model which could be an SLM, which is within your enterprise, which can be used to train your own enterprise. Data can be used to train the model, which can do most of the work that you want to do within your enterprise, and only go to a frontier model on things which really need. That's a tier 2. So I think it's a hybrid tiered approach. That's what is going to happen in the global enterprises. And here, having a partnership with a foundational model firm will help us. So we have enterprise relationships globally, and we have very deep engineering capability and a lot of software products. this along with Sarvam will become an excellent solution for global markets. And some countries will also be looking at creating their own sovereign AI. So we can kind of do this together with Sarvam. So these are the 4 opportunities we are looking at.
Good evening, gentlemen. I'm Sakshi Jain from Informist Media. One question for Mr. Vijay Kumar. If you could offer some commentary on demand across segments as well as geographies, if there was any impact of the West Asia war seen in Q1, and how do you see things going forward? Also, you did mention the company aims to stay ahead of the AI deflationary curve. If you could elaborate on that. One question for Mr. Sundarajan as well. If you could give us some insight into the company's lateral hiring strategy for FY27. Last quarter, you mentioned fresher hiring numbers would be similar to FY26. Now, in this other segment, right, mid and senior talent pool, if you plan to exit FY27 with a net addition in headcount. Also, FDEs, what...
आपका पार्सल फिर से हमारे घर पे आया है। कुछ तो बात है इस दिल में।
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term way, without harming the environment and the climate.
Presented by Suzlon, good energies that work.
Hello and welcome. You're watching Market Express and I'm Gargi Shetty. Let's get straight into the show. The benchmark indices Sensex and Nifty recovered early losses to trade in the green as investors resorted to buying at lower levels. Nifty rebounded after testing the 24,000 level intraday, while Sensex also recovered near 1,000 points from day's low. And IT stocks extended their rally for a second straight session, with the Nifty IT index gaining over 4%, emerging as the top sectoral performer. PCI surged nearly 6% after expanding its long-standing partnership with ABB through a multi-year global network operations deal. Other major IT names including Infosys, LTM, HCL Tech and Tech Mahindra also posted strong gains supported by stable June quarter earnings and continued optimism around AI-driven deal momentum. The rally marks a sharp rebound for the sector after recent weakness. LTIMindtree was in focus after reporting a steady set of June quarter numbers. The company's net profit rose 5.9% sequentially to 1,468 crore rupees, supported by stable execution and improved operational performance. Revenue growth remained resilient despite a challenging demand environment, while the company continued to see healthy traction in AI-led and large transformation deals. Avenue Supermarts, the operator of D-Mart, slipped in trade despite reporting a healthy rise in June quarter earnings. Investors were disappointed by flat like-for-like growth at its metro stores, raising concerns over demand in key urban markets. Now, while the company continued to expand its store network and delivered steady revenue growth, the muted performance at mature stores weighed on sentiment. Deal making in India's automobile sector has slowed to its lowest level in 3 years, reflecting a cautious investment environment. However, capital continues to flow into electric vehicle and mobility businesses, with investors favoring future-focused technologies over traditional automotive segments. Now, industry experts say funding is increasingly being directed towards EVs, battery technology, charging infrastructure, and mobility solutions, even as overall mergers and acquisitions activity remains subdued. Kalyan Jewellers extended its rally for a fourth straight session, with the stock gaining nearly 47% over the period after a strong June quarter business update. The company reported robust revenue growth across both domestic and international markets, driven by healthy festive and wedding demand. Investor sentiment was further supported by expectations of another strong earnings quarter and continued market share gains. Just Dial shares surged nearly 15% after the company reported its fastest sequential revenue growth since the COVID-19 pandemic. The strong performance was driven by higher collections, improving demand from businesses, and continued growth in digital services. The company also delivered healthy profit growth and margin expansion, reinforcing confidence in its turnaround strategy. Oracle Financial Services Software has been on a remarkable run, with the stock surging 92% from its March low to hit a fresh record high. The rally has been driven by strong investor interest in the IT sector, optimism around AI-led spending by global banks, and expectations of healthy earnings growth. Analysts also point to the company's strong cash flows, high margins, and robust order pipeline as key positives. Oil marketing companies came under pressure after a sharp rise in global crude prices renewed concerns over margin pressures. Shares of HPCL and IOC fell more than 2%, while BPCL also traded lower as investors assessed the impact of higher input costs. Crude prices climbed on fears of supply disruptions in the Middle East, raising concerns that state-run fuel retailers could see marketing margins come under strain if retail fuel prices remain unchanged. Interglobe Aviation, the parent of Indigo, came under pressure after the stock slipped nearly 3% amid a sharp spike in global crude oil prices. Aviation turbine fuel is the airline's single largest operating expense, and higher crude prices could weigh on margins if the rally persists. Now, analysts said the recent surge in oil, driven by concerns over Middle East supply disruptions, has raised near-term cost pressures for airlines. Despite the decline, most brokerages remain constructive on Indigo, citing stronger passenger demand, healthy capacity growth, and its market leadership. Bharat Heavy Electricals extended its winning streak, rising for a fourth consecutive session and gaining around 4% in trade. The rally has been driven by strong order inflows, improving execution, and optimism around the government's continued focus on power and infrastructure spending. Investor sentiment has also been supported by expectations of healthy earnings growth, backed by a robust order book and strong demand for power equipment. The stock has outperformed the broader market in recent sessions. The Laser Power and Infrastructure IPO closes for subscription today, with strong demand from non-institutional investors leading the response. The issue has seen healthy interest across investor categories, while the grey market premium indicates a potential listing gain of around 13%. The company plans to use the proceeds to support business expansion and meet working capital requirements. Investors will now watch the final subscription numbers and allotment timeline ahead of the expected market debut. And the Delhi High Court has directed Meta to take down specific Facebook URLs that allegedly host pirated content owned by Zee Entertainment. Zee had approached the court claiming its content was being used and monetized illegally on several Facebook pages without authorization. Now, while the court ordered the removal of the identified URLs, it declined Zee's request to block the Facebook accounts at this stage, saying that the account blocking plea will be considered only after hearing Meta's response. India's trade picture showed a mixed trend in June, with exports rising 15.5%, but the trade deficit widening to $30.43 billion. The increase in the deficit came as import pressures remained elevated even as outbound shipments showed improvement. The data highlights the challenge of sustaining export momentum while managing higher import costs. Analysts say global demand conditions, commodity prices, and ongoing trade negotiations will remain key factors shaping India's external sector outlook. The Maharashtra government has removed over 92 lakh beneficiaries from the Mukhyamantri Majhi Ladki Bahin Yojana following a statewide verification drive. Government records show the beneficiary list has shrunk by nearly 38%, with the largest number of deletions linked to incomplete eKYC verification. Other reasons include income exceeding eligibility limits, duplicate entries, government employees, and beneficiaries receiving overlapping welfare benefits. The exercise is aimed at ensuring the financial assistance reaches only eligible women and improving transparency in the scheme. On to some international news now. Tensions in the Middle East have escalated sharply after the United States launched fresh strikes on Iranian targets, raising fears of a wider regional conflict. The latest military action comes as the standoff over the Strait of Hormuz intensifies, fueling concerns over global oil supplies and shipping disruptions. Iran has warned of retaliation, while global markets are closely monitoring developments amid fears of prolonged instability. Investors are also assessing the potential impact on energy prices, inflation, and global trade. A devastating fire at a pub in Bangkok has claimed at least 27 lives, making it one of Thailand's deadliest entertainment venue disasters in recent years. Authorities are investigating the cause of the blaze, with early reports pointing to a possible electrical fault and concerns over blocked emergency exits. The tragedy has once again put the spotlight on fire safety standards at public venues. It also revives memories of some of the world's worst nightclub fires, where overcrowding, flammable materials, and inadequate escape routes led to heavy loss of life. The Maldives is looking at deeper economic ties with India, with free trade agreement talks expected to open new opportunities for its marine industry. Maldives Economy Minister Mohammed Saeed said the pact could boost sectors including fisheries, marine products, and local businesses by improving market access and reducing trade barriers. The agreement is also expected to support wider cooperation in areas such as tourism, logistics, and investment. Both countries are working towards strengthening economic engagement through greater trade and business activity. On to some sports news now. Yannick Sinner has successfully defended his Wimbledon crown, beating Alexander Zverev in a gripping 4-set final. The world number one recovered after losing the opening set to win the rest of the sets, claiming his second straight Wimbledon title and fifth Grand Slam crown. Sinner's powerful serving and composure under pressure proved decisive as he took control from the second set, the break onwards. The victory further cements the Italian's place at the top of men's tennis and extends his dominance on the biggest stage. Aston Villa has reportedly hijacked Newcastle United's move for Freiburg's midfielder Johan Manzambi, dealing a setback to Eddie Howe's side in the transfer window. Villa have moved quickly to secure the highly rated Swiss youngster, who has attracted interest after an impressive breakthrough season in Germany. The 20-year-old midfielder is seen as a player with significant potential, with clubs across Europe monitoring his progress. Newcastle will now have to explore alternatives as they look to strengthen their squad ahead of the new season. In some sad news, veteran actor Sir Sam Neill, best known for his iconic role as Dr. Alan Grant in the Jurassic Park franchise, has passed away at the age of 78. His family said the actor died suddenly and unexpectedly in Sydney, surrounded by his loved ones. Neill had recently revealed he was cancer-free after undergoing treatment for a rare blood cancer. Over a career spanning more than 5 decades, he starred in acclaimed films including The Piano, The Hunt for Red October and the Jurassic Park series, earning global admiration for his versatile performances. And as we wrap up today's edition of Market Express, let's leave you with a conversation with Tahir Badshah, CIO of Invesco Mutual Fund. He believes investors need not be overly concerned about the US-Iran conflict at this stage and says the focus should remain on fundamentals. Let's take a listen.
Tahir Badshah, CIO of Invesco Mutual Funds, joining us this morning. Tahir, great to speak with you. As always, are you feeling
As
slightly...
always, good to be on your show as well.
Likewise, I think the feeling's mutual. Are you feeling a little more optimistic right now, considering that we've had a resumption of attacks and warfare, etc., in the Strait of Hormuz since that peace deal and that MOU was signed, but there hasn't been a sharp reaction to it? Is that giving you some comfort?
Well, Tamanna, to begin with, actually, so unfortunately, we've not had a chance to speak in a while, but I think we've been maintaining a positive outlook over the last month or two, especially after the first ceasefire was announced. And we have been of the view that this is probably going to be somewhat quick to resolve in some manner or the other. And more importantly, I think from an India standpoint, the West Asia conflict, basically from a crude standpoint, seems to now is now probably behind us. I think during the course of this conflict, it is a couple of things have been probably proven. One is that beyond a particular point, I think the oil market is somewhat fundamentally weak. I mean, when we look at it from a supply-demand standpoint, there is a fair bit of supply in the market available, and then there are other avenues of supply which can come about, probably from the OPEC bloc, or maybe even from the point of view of US's ability to pump in more oil. So supply is relatively easy, and then perhaps the oil industry or the oil market has not been able to kind of come to grips with the fact that China can be a fairly important lever in terms of controlling demand, and I think they have probably been on this course of adopting more and more of electric and reducing the consumption of oil over the years. So I think from an India standpoint, therefore, if oil supply-demand balance remains positive, then by and large, I think we don't need to worry as much about the West Asia conflict as we probably had to before. So I think that was one level of confidence that we were holding, apart from the fact that for India, incrementally, a few things could start getting better in terms of things like earnings, probably flows, the rupee having meaningfully depreciated now, foreign investors having significantly sold off, and last but not the least, probably a little bit of the slowing as far as the AI trade in the US is concerned. So the mix of all this would probably start being beneficial for India. That is how we had been thinking about things, and I think that is how it has panned out.
Is it giving you confidence to deploy? Have you been a buyer in recent dips, Tahir? And where has that interest come? Which sectors have you found most exciting?
Yes. So I think we've been amongst the flows. That's been the good part of it over the last few months, despite the fact that the markets have been somewhat on the weaker curve. And I think by and large, our deployment strategy has probably not changed meaningfully over the last some time. We've acknowledged the fact that in India at this stage, we are still in a somewhat bottom-up market or a somewhat narrower market, which I of course expect will broaden as we go along. But for the next some quarters, it is still going to be somewhat narrow in nature, and markets focus and our focus has been on pockets where we believe relative growth is better. So I think we've been focusing on areas like industrials, especially the power segment, select consumer discretionary, consumer tech, Healthcare is another area where we have been very positive, and real estate. I think these are some of the domains where we have been incrementally deploying money.
आपका पार्सल फिर से हमारे घर पे आया है। कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next?
LTM is gaining in trade today, and this IT services company has delivered a flat set of numbers in this quarter, which is in line with the estimates. Venu Lambu, who's the CEO and MD of LTM, joins in now. So good to have you on NDTV Profit. Good set of numbers when it comes to the market reaction, and a large part of that really comes in from the artificial intelligence revenue that has been stated for the first time by the company. Give us a sense on how this is going to grow and what is the aspect that the company is focusing on in the artificial intelligence revenue stream.
Firstly, thanks for having me here. Good to be here. Yes, our first quarter was a good start for the year. Especially if we look at in the context of two of our large industry segments. Have navigated the AI productivity headwind. We were pretty much ahead of that topic. That's behind us now. So both these, large segments of ours reported more than 3% sequential growth. The softness on other sectors predominantly came in because of the delayed ramp up in India and the impact on the Middle East conflict, that was pretty much there in Q1. And the most importantly, for the first quarter, we announced a baselining of the types of AI work we do. We do AI work in business AI, enterprise AI, creative AI, and industrial AI. And the three types of work within that four is what we call it as AI native revenue, and that came about $150 million on a quarterly run rate. And I expect that over a period of time, it will only grow faster. It will grow faster than the company average. And as part of our 5-year plan, we expect that the AI revenue to be 50% of our AI revenue mix. And in order to do that, we're doing a lot of things, right? Whether it's in talent and transformation, reimagining partner ecosystem, and so on.
Right. So you mentioned it will be 50% by which quarter and which financial year you are saying?
Yeah, we expect this 50% to be somewhere between 3 to 5 years of our plans. 50% of our overall revenue mix should be.
Could you mention that percentage mix as well, because yours is over 12% versus other industry leaders who are slower in terms of the overall contribution. So that's the path in 3 to 5 years. But a short-term view on this particular year, is the 12% run rate going to be maintained? And second, TCS has said that most of their deal wins in AI space are more on a quarter-to-quarter basis. Are yours more long-term in nature or short-term?
Firstly, on the quarterly run rate and 12% part of it, I expect that to continue for the year as well. If at all, I would expect that to get better, from quarter to quarter, because we have a very focused approach in terms of how do we go about for the three types of AI work. And the second is with regard to the nature of engagement cycle for the AI revenue. Yes, it has elements of the short-term projects, which is about 3 to 4 months types of work. But we're also seeing clients engaging with us by selecting as a strategic AI partner. We did announce that one of the leading manufacturing customer in US selected as a strategic AI partner. We also announced a very large deal in Q1 at the back of the vendor consolidation, where AI will be infused a lot. So when you look at these engagements, it gives us an opportunity to have a slightly longer term revenue visibility at the back of this engagement, because the AI adoption is not one switch approach. It's going to be iterative in nature. You engage with them as an AI partner, then you keep working on starting with one process, expanding into the second one and third one, and so on. So we're looking for that kind of an approach to accelerate our AI revenue.
All right, so mix of both short-term and long-term, and you're saying that 12% run rate, at least for this financial year, will be maintained in terms of contribution to the revenue. But when we talk about the margin contribution, how is this 12% piece of artificial intelligence really adding to the margin picture?
Firstly, we said about that we will continue to have the margin expansion even in Q2 and for the full year, even post the closure of our Randstad acquisition, the technology and consulting business that we announced. Post that as well, we will maintain the margin position as what we had planned at the beginning of this year. So that's the positive news of it. And that's being contributed with the New Horizon program, because we're reimagining quite a few things. We're reimagining how do we manage our overheads. We're reimagining, essentially we're redefining what I call as a cost of delivery through a program of New Horizon that we have launched, where it's all about changing the mindset of creating a new horizon for ourselves on the cost of delivery. So that's going to contribute to that. And second is the AI deals will come at higher gross margin than the traditional IT services as well. But at the same time, it's a business where we're investing a lot more as well. We're investing in our Blueverse ecosystem. Yeah, we are investing on the talent transformation. We are investing on our go-to-market capabilities and so on. And today we announced a very strategic partnership with Anthropic as well. So that's also a strategic, focus area for us.
That's right. And so lots of areas that you're working on. But you mentioned about that Randstad acquisition. In which particular quarter will it start really impacting? Will be EPS accretive? And what is the percentage that we're looking at in terms of margin expansion once that really kicks in on your books?
We expect the closure to happen at the beginning of Q3. So, in Q3 onwards, either partly in Q3 or full of Q3, we will consolidate that post-closure. And as we announced it during the time of sharing this news, that we don't expect any material impact to the margin for this year, because we are far ahead in terms of how we have created the buffer to absorb that acquisition.
Right. When we talk about the output-based model impact, and this is the first time that you have also onboarded that particular bit, how is it going to impact your revenue, and what will this model really change in terms of numbers?
We announced a new pricing model called Blueworks Currency pricing model, which is essentially based on the construct on how do we start delivering services to our customers where they pay us based on the output or the outcome that we deliver. So we already have one engagement that has started, which is measured based on outcome and output that we deliver. So the Blueworks currency is going to be applicable both in our enterprise AI kind of engagements and also on the other three types of AI that I spoke about: business AI, creative AI, and industrial AI. Part of the work as well. So it's at the starting stage. We are ready for it as and when the clients start increasing their adoption, and when clients starts being a bit more open in experimenting with the output and outcome-based model, we'll be ready to serve them.
पार्सल फिर से हमारे घर पे आया है। कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India's unshakable news habit. NDTV.com is India's #1 English news website.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you're truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next?
Good evening, I'm Vikram Moza, and you're joining us on the show that takes you right from the headlines down to the bottom line, and we get you the full picture. These are the headlines we are tracking tonight. The Commerce Secretary Rajesh Agarwal saying that trade negotiations with the US are progressing well and it will be signed at the right time. But he clarifies that under the trade deal, all aspects will be taken care of. Oil prices jumped nearly 4% as tensions between the US and Iran intensify over the Strait of Hormuz. US CENTCOM confirming that it hit Iranian military targets. Markets end with modest gains after a volatile session today, extending that winning streak to 3 days. IT stocks have lifted the market. The rupee has weakened 0.3%, settling at 95.62 against the US dollar. HCL Tech's first quarter numbers in line with estimates. Profits rising 3% quarter on quarter. Revenue up 1.8%. And the company is planning up to 3,500 crore rupee of investment in data centers. HCL Tech is aiming to offer full-stack AI services from GPUs to applications. As India sets its eyes on attracting stable foreign currency inflows, Finance Minister Nirmala Sitharaman is urging banks to roll out innovative deposit products for NRIs and make greater use of GIFT City to mobilize overseas funds. Sources tell NDTV Profit exclusively that the government will soon launch an offer for sale for Indian Overseas Bank. The government is likely to continue PSU Bank stake sales to meet public float norms. India's June trade deficit has widened to $30.4 billion as merchandise imports outpace exports. Total exports during the April to June quarter touching a record high. Zee Entertainment scores an interim win in its copyright battle with Meta, the Delhi High Court directing Facebook to take down specific URLs that allegedly host pirated Zee content. Commerce Secretary Rajesh Agarwal is saying that India-US trade negotiations are moving in the right direction with the framework for a trade agreement now ready. So that message from the government is coming through. That talks are progressing well, that the deal is going to be signed when the timing is right. And Rajesh Agarwal is saying that the pact is expected to address tariff concerns for one, also market access issues and provide this roadmap to tackle future trade challenges. And at the same time, Section 301 investigations by the United States, and that includes those related to forced labor and overcapacity, those remain under watch. While the forced labor probe is at an advanced stage, discussions between the two countries continue alongside these efforts to finalize the broader trade framework. Now, the bigger picture is that both India and the US appear keen to avoid fresh trade frictions and create a more predictable trading environment. So now the focus is shifting from negotiations to actual execution, with markets and industry waiting for clarity on when the agreement is finally going to be signed, and that remains on our radar very, very closely. Meanwhile, what is on our radar is the growing tension between the US and Iran, that conflict once again intensifying, both sides exchanging fresh strikes, and the Strait of Hormuz is emerging as the latest flashpoint. The US military has confirmed that it has carried out strikes on multiple Iranian targets that are aimed at degrading Tehran's ability to disrupt commercial shipping through that vital waterway, which is the Strait of Hormuz. And the US President Donald Trump has struck this aggressive tone. He's saying the US has hit Iran very hard, and even suggesting that Washington could effectively run the Strait of Hormuz and act as its guardian. Remarks come as both countries now continue to stake competing claims over the strategically crucial route through which a significant share of the world's oil trade passes. And for markets, the biggest concern remains energy supplies. So crude prices have surged around 4% amidst fears that any prolonged disruption in Hormuz could impact global oil flows and push up energy costs worldwide. So the bottom line now is that the conflict is shifting beyond military strikes, and it's moving into a battle over control of that key global trade artery. While diplomatic efforts to prevent a wider war continue, every kind of escalation around the Strait of Hormuz raises the risk of fresh volatility in oil markets. Inflation concerns also renewed pressure on energy importing nations like India. So that's going to be closely watched. There's no doubt about that. Meanwhile, as we watch what's happening between Iran and the US, closer home, we're looking at corporate numbers. And within the IT pack, we are looking at HCL Tech, which has kicked off IT earnings season on a strong note. The company reporting a 20% year-on-year jump in their first quarter net profit, which is clocked in at 4,624 crore rupees. The revenue also pretty much in line with expectations. It's supported by growth in its financial services, technology, and retail verticals. So HCL Tech has announced this interim dividend of 12 rupees a share. Investors are closely now tracking management commentary on demand and AI-led growth. But let's find out what they've said about this. And there are key takeaways from what we've heard. Jasmeet is joining us from our research team. Jasmeet, pretty much in line with expectations, but those announcements around AI and data centers going to be very closely watched by investors.
As rightly said, the overall numbers for the Q1 has come in line with the estimates. If you look at the key numbers, the revenue saw an uptick of roughly 1.8%, while the EBITDA expanded by 3.8 BPS. Now, in terms of the overall margin, we do see an uptick of 32 basis point, again in line with the estimate. Now the key watch out would be the CC growth. Now the CC growth in this quarter has come in at a negative 0.5% while we were estimating a negative 1.5 to a positive 0.8. So even the CC growth has come in line with the estimates. Now when you look at the overall AI revenue for the company, well, that is something very unique and interesting to watch out for. HCL Tech was one of the first companies to report its AI revenue, and for AI revenue for Q1 stands at roughly $177 million, which is up about 10.9% on in CC on QOQ basis, which is again growing at a very healthy pace compared to other competitors as well. Now in terms of deal win, that has come in at $2.4 billion, again in line with what we were estimating with the street of roughly between $2.2 to $2.5 billion. Now in terms of segmental split, we do see a flat. There's no change and no growth in terms of the IT services, the biggest segment for the company. But ER&D space is seeing continued degrowth. It's down about 3.7% in this particular quarter, and there are a few delays from the client side. While the interesting commentary coming in from the Q1 is the data center business investment. While companies investing 3,500 crore into the data center business, and they call the overall phase as bottlenecking, where they expect the data center investment will help the company grow their services model.
We'll have to see exactly how this reflects on the stock when we open for business tomorrow. But thanks very much for giving us a good perception of how it's turned out for HCL Tech in the quarter gone by. And my colleague had a chance to speak to my colleague Rishabh actually was speaking at that management meet with C. Vijay Kumar, the Managing Director and CEO of HCL Tech, about the discretionary spending as far as telecom goes and the trends that are panning out, and whether budget cuts in manufacturing and retail continue in the first quarter. And to that, Mr. Vijay Kumar is saying that telecom spend pressure remains while retail is doing well and manufacturing continues at this point in time, at least, to face those kind of challenges. But listen into exactly what he said about it.
Telecom discretionary spending was, the weakness was expected throughout the calendar year. Have spending trends improved in the first quarter? What have you seen on that front? Secondly, did the manufacturing and retail clients, those budget cuts, did they continue in Q1? Do you have any visibility on that? Also, are procurement delays and slower decision making, are they still impacting deal closures?
Yeah, telecom, as we had called out last time, there is certainly a reduction in the discretionary spending, and that continues. We don't see the situation improved in the last 3 months. And retail and consumer business, I think our retail and consumer business is doing very well. It's grown 10% year on year. This quarter, we've grown 5%. On the back of, we had announced a very large win two quarters ago with a large global retail apparel company, and that client is ramped up fully. We've executed that well, and that's causing the good growth in revenue. Manufacturing has some challenges due to different reasons, and some like automotive and all are under stress. So that situation I don't think has changed, even though we won some good engineering services opportunities in the automotive sector as well.
Now, on the policy front, as India is looking at strengthening its external sector amidst all the global uncertainty around us, the focus is on attracting stable foreign currency inflows. So the Finance Minister Nirmala Sitharaman is asking banks to roll out innovative deposit products for NRIs and make greater use of Gift City to mobilize overseas funds. The RBI has assured full support for deposit mobilization and eligible borrowings. My colleague Shrimi is joining us on the phone line to tell us more about this. So that push towards garnering more foreign currency, Shrimi, tell us exactly what this push is all about.
Absolutely. In fact, she asked banks to intensify their outreach to non-resident Indians and introduce innovative deposit products to sustain the momentum in the foreign currency inflows under the RBI special swap scheme. And direction came during a meeting which we reported and we've been chasing since morning with the heads of PSUs reviewing the progress under RBI FCNR, banks, external commercial borrowing as well as overseas foreign currency borrowing swap initiative. And banks actually in the meeting, highlighted that scheme have received an encouraging response. and strong interest coming from NRIs in US, UK, Singapore, Hong Kong, West Asia. Lenders also kind of reiterated that they're seeing increasing traction in the SCNR deposit and expect ECB mobilization to gather further space in the third quarter of the current financial year. But Sitharaman, in the meeting, underlined that banks, make a greater use of financial ecosystem at GIFT City, mobilize for overseas fund and expand their engagement. And RBI also, RBI Deputy Governor was a part of that meeting. He assured that bank to get the continued support in mobilizing deposit and facilitating eligible borrowing under the scheme. So it's interesting as we see that this all these special measure has been implemented from June 5th, and this is the first review meeting happened. So we will see a lot of action actually post this meeting.
All right, Shrimi, of course, this effort to kind of shore up foreign currency is going to be very closely watched. We'll keep our eyes and ears open for more information as it comes through. But thanks very much for filling us in. Now, let's turn to the business of telecom, and we've got our latest business update on BSNL. In fact, my colleague Shesha Sen had posed a question to the Communications Minister, Jyotiraditya Scindia, about BSNL and its performance, also its capex plans. And he says that BSNL has grown 10% year-on-year in the first quarter of FY27. And it means that the company has closed the quarter with services revenue of 4,418 crore rupees. Just listen in to what he told her.
I'm very glad to report to you that we have three engines within BSNL, and we are firing on all three engines. As far as our total revenue is concerned, directly from business operation, we have posted close to about a 10% increase in revenue over last year. Last year, we closed quarter one at 4,017 crores. This year, we've closed quarter one at 4,418 crores.
That's the word that we got from Jyotiraditya Scindia about BSNL and its performance on the first quarter of FY27. Meanwhile, the Delhi High Court has temporarily restrained the supply of Zydus Life Sciences cancer drug ICRA. And this is as part of the patent dispute with the global drug maker AbbVie. While the court allowed manufacturing of the drug to continue, it has barred the supplies by the manufacturer to Zydus, or in fact any third party, from the 14th of July until the matter is heard further. My colleague Nimit knows more about this. He's joining us with that information. Nimit, do tell us about this ongoing case.
Yes, the Delhi High Court has in fact restrained the supply of the drug ICRA, which is a cancer drug, to Zydus Life Sciences, which is the distributor and the brand name behind the drug. Now, this is a patent infringement suit filed by AbbVie, the global healthcare and pharmaceutical giant. Now, in this case, what the Delhi High Court has said is it's not going into patent infringement today. What it simply said is there's a long process before it comes to a finding, and since the drug has been recently launched on July 2nd as per Zydus Council's own admission, then in that case they can temporarily halt the supply of that drug from the manufacturer. So while the manufacturing of the drug itself has been allowed, what the court has said that the manufacturer can no longer supply that drug to Zydus or anybody else until the parties are then heard. The next date of the hearing is put on 24th July, where claim mapping will be decided on. It's an important part of patent infringement suits to see how much of a drug is infringing on another, and both parties are supposed to send their terms of reference for this claim mapping as well as their proposed experts for this, and there's a huge process. But for now, the important news and the takeaway is clearly that the supply of the Zydus drug ICRA has been halted temporarily by the High Court.
Right. Thanks very much for filling us in. It's an important story in the pharma world. Also, what we're tracking is the banking universe. And when we're talking about the banking universe, that story is in the spotlight because the big bank CEOs, they're not just billing accounts, but they're also getting some big fat paychecks. And to understand who tops that list of the highest paid bankers in the country, we have my colleague Piyush. He tracks the banking sector. very closely. Piyush, give us an understanding of how the paychecks are panning out when I talk about the top bankers here.
Ashok Vaswani, the MD and CEO of Kotak Mahindra Bank, continued being the highest paying domestic banker for the second year in a row. In FY26, Mr. Vaswani earned rupees 17.23 crore in annual pay versus 12.95 crore in the last fiscal. Mr. Vaswani was also granted 3.55 lakh bank stock options for FY26. On the other hand, Mr. Sashidhar Jagdishan, the CEO of country's largest private bank, HDFC Bank, earned around 15.12 crore rupees as annual pay in FY26, which is 19% higher than the last year. Jagdishan also got around 4.28 lakh bank stock option. Very interestingly, Deputy MD of HDFC Bank, Mr. Kaizad Barucha, actually ended up earning more than Mr. Jagdishan. He took home around 17.13 crore rupees for FY26 and was granted around 6.5 lakh bank stock options. Axis Bank MD and CEO Mr. Amitabh Chaudhary, on the other hand, earned around 8.5 crore rupees in FY26, excluding, of course, the bonuses. Among the PSU banks, country's largest, public sector bank and the largest bank, in fact, State Bank of India chairman earned only rupees 43 lakh in FY26, whereas Bank of Baroda's MD and CEO Mr. Devadatta Chand earned around 73 lakh rupees in FY26. PSU Bank, this has been an issue at PSU Bank where the top management does not come anywhere when it's compared with the private peers in terms of annual compensation.
It's very interesting, Piyush, to see Kotak Bank CEO Ashok Vaswani right at the top, and that kind of reign, if you can call it that, continues. Meanwhile, we're talking about Zee Entertainment, which has scored this interim win in their copyright battle with Meta. The Delhi High Court directing Facebook to take down specific URLs that allegedly host pirated Zee content. But the court has stopped short of blocking entire accounts for now, and will take a call after hearing all the parties. In fact, let's bring in Nimit again. He's got the details of this case too. So Nimit, you've been tracking this case around Zee. Tell us what the latest situation is and where it stands.
As copyright battles move into the digital realm, the real question is that these social platforms, which Meta runs, for example, Facebook in this case, how responsible is a social media platform over content posted by anonymous people on its platform? That is the question before the court today, and Zee Media has moved against Meta, saying that there is a certain accounts and a bunch of different accounts which are posting copyrighted material from Zee's portfolio onto their platform, and these are multiple posts, and they've moved Meta, saying that Meta as a platform is liable for this. Now the court has not allowed the blocking of these accounts without hearing Meta and all these other account owners, but the court, as you rightly said, Alex, has shut down these URLs. It's asked Meta to intervene and step up and specific URLs be closed down, and a takedown order has been passed. The case is of course ongoing, and we're going to understand how much Meta is liable for illegal activity being done on its account. That has not yet been decided, but it's a question being run across forums and across these different social media intermediaries. It's in a very interesting space on the legal front.
All right, now on the market front, India's retail inflation moving back above the Reserve Bank's 4% target in June. The headline CPI rising to 4.38%. So that's the kind of story emerging, which means that now that headline CPI has risen to the level of 4.38%, it has moved up from that 3.93% mark in May, and it means it's higher than market expectations of 4.2%. So that rise is driven primarily by food prices. Food inflation accelerating 5.32% from what was 4.78% a month earlier. And rural inflation has also picked up 4.74%. It reflects broader price pressures right now. And the June print marks the first time in 17 months that retail inflation has breached the RBI's 4% target, although it does remain within the central bank's 2 to 6% tolerance band. The latest data now likely to keep the inflation outlook firmly in focus, and this is even as the markets assess the RBI's policy path in the months to come. But meanwhile, even as we see what the RBI could do with the kind of macro data that's now available, India's trade deficit remains in focus too, which has widened. It's widened to $30.4 billion in June, And this is as merchandise imports have outpaced exports. Even as India's total exports during the April to June quarter has touched that record high, the Commerce Secretary Rajesh Agarwal is also saying that India-US trade talks are progressing well and will be signed at the right time, like I told you at the top of the show. But my colleague Rishabh is joining us from Delhi to explain that trade data to us. So Rishabh, on the trade deficit front, how are we doing now?
Well, absolutely. The trade data for the month of June is out, and what we're picking up is that healthy growth has been recorded for India's exports, roughly 15%, both in the quarter one, that is the April to June quarter for the current financial year, as well as the month of June is what we're seeing, roughly 16% growth when it comes to India's exports. What we're picking up is the fact that for June, India's merchandise exports are at roughly $40.4 billion. Services exports are roughly at $33 billion. But what is also interesting is that India's merchandise imports have really gone up. That's about 70.8 billion for the month of June. That is up about 31%, and that's a very high increase that we're seeing. The ministry has explained this as well, and it is largely due to the imports of petroleum products as well as electronics parts that come into India and then are